Of the session. That was caused by the oil price coming down. Europe priced that in, actually, so it doesn't have to price that. The rest of the session actually was fairly quiet. I think the rest of the session was basically waiting to find out exactly what was happening in terms of the NVIDIA story. We had to wait for that a little bit later, Tom.
Yeah, a turn for European stocks then after 3 days gains. European futures pointing lower on the Stoxx 50 futures by around 0.3%. Some heavier losses coming through or being flagged for the FTSE 100, pointing lower by almost 0.5%. Oil prices then currently higher by 1% on Brent at 106, but commodities broadly in terms of copper, iron ore, gold and silver all weaker. That could weigh on the miners here. DAX futures pointing lower by 0.3%.
Let's have a look at some of the stocks and sectors in focus then this morning, Tom. And of course, we start with EasyJet. We spoke to the CEO a little bit earlier on today. They're talking about summer bookings trailing last year's levels as consumers are holding back and booking a little bit later. They're trying to reassure the market and potential customers about jet fuel supply. That seems to be the new strategy from the sector. We're hearing a lot of that messaging. Tech stocks very much in focus. The Kospi has been doing really well on the back of, as we heard from Mark earlier, the Samsung resolution of the strikes, the NVIDIA numbers, all of that comforting to the tech sector there. Does that translate into another day of gains for tech here in Europe? It was strong yesterday. And we're also watching BT forecast declining revenues. And it's actually the forecast here that seems to be coming in a little lower than had been expected in the midst of a transformation plan. Guy?
I think there's plenty of ex-dividends to factor into your thinking as well first thing this morning, so just be aware of that when you watch the market open, particularly the FTSE 100, which I'm going to show you now. Let's talk about this opening price here in Europe. So you've seen a cracking session out of Asia, largely driven by the technology story. That doesn't translate here in Europe this morning. The FTSE 100 is opening. We are down by 0.1%. So we're not getting that tech bounce that Asia has enjoyed. Plenty of other things and factors to think about, Tom.
Across your sectors, just 3 in positive territory so far. The read across is not there, as you say. We're looking at tech. It was one of the better performing sectors yesterday. Today, tech so far not coming through with a particularly strong pin, a little weaker by 0.1%. Autos on the upside right now. It's the best performing sector. But again, after and over just 4 sectors in positive territory. Autos up 0.7% on the downside. Telecoms, BT is part of that story, of course. Amongst the biggest losers across your sectors. Telecoms down 0.5. Travel and leisure after gaining yesterday down 0.5. EasyJet, of course, fits within that sector. And that is the broad picture across your sectors. Basic resources as well. We've been talking about the softer pricing around copper and iron ore. Basic resources also a little weaker by around 0.6. Again, autos as the standout on the upside with 0.7% a gain there.
Yes, and we're grateful to Charlie Wells for putting Stellantis on our radar. That went up by 1.5%. And to the downside, you're right, Tom, the telecom sector is the worst performer. And BT is very much part of that. It's down 2.3% now. It was down a little more than that at the very start of trade, but that is weighing on the sector, it would appear. And travel and leisure, another area of weakness, with EasyJet's numbers down by 1.25% this morning.
In some ways, you could argue we've just had confirmation of what we already knew. The April warning basically gave us these numbers. Maybe there's a slight kind of more downside edge that we need to factor into our thinking. But it's interesting, he was talking about 4 to 6 weeks of visibility. Like, how do you trade a stock when you don't have much outlook in terms of sort of runway, as Tom put it earlier, to work with? How do you price these kinds of stocks? It could get significantly worse, even from here.
Yes, he was talking about the normal level of visibility around jet fuel, wasn't he? But is the normal level of visibility enough at a time when the Strait of Hormuz is closed? So European equity markets then on the back foot, down by 0.2%. US futures pointing a little lower, but Asia had a really strong session. Let's bring into the conversation Max Ulia, European equity and cross-asset strategy head at Deutsche Bank Research. Max, really nice to have you with us this morning on set, and this Thursday morning taking stock of some big technology themes, and I'm wondering where that leaves Europe and your cross-asset strategy here in Europe. Numbers from NVIDIA, seem to be doing good things for appetite for tech over in Asia. How do you digest the themes coming through from NVIDIA and what that does to the asset allocation within Europe?
Yeah, it unfortunately does not help Europe a lot, does it? So we turned overweight US versus Europe exactly for that reason. This massive earnings growth. And as you know, I like Europe, right?
Yep.
We've been overweight US, worked well. We had NVIDIA yesterday. On semi specifically, I'm a little bit more skeptical, and we always see that with NVIDIA numbers. As you know, 6 out of the last 7 times they reported, they performed negatively over the next month. And the problem, I think, is that the visibility on the future of the whole sector is very unclear. I just remember 6 months ago, we were thinking it's the end of CPUs. Now we're saying, and the CEO of NVIDIA is saying, we need more CPUs. Right?
Yep.
So things are changing very, very quickly, and I don't think that this is a story that will continue for very long, at least not at this pace that we're currently seeing. So right now, we're still overweight US versus Europe, saying the GDP growth at GDP now 4% versus Europe 0.5, and earnings growth 25 versus 6 in Europe, still overweight US. But, you know, as I said, I like Europe, and I do think we might see a re-acceleration in H2 in earnings. And we probably are already somewhere close to the peak in fiscal in the US. So, you know, bear with us for H2 to turn again positive on Europe.
Okay, so that's the Europe story. We wait a little and we'd be a bit patient. Add into the mix of that lack of visibility and the focus on the tech story, a summer of IPOs, Max, in the States. And I wonder what that does, either from a very mechanical perspective around portfolios and indexes and the like, to asset allocation across Europe or across the globe. I mean, how do we absorb these big IPOs? And should we think about this as a big structural event in markets?
I think lots of those companies are taking advantage of the good sentiment, right? And it's crazy numbers. SpaceX, we have 3 big companies which all could potentially be the biggest IPOs in history. Right? So that's really fascinating. But let's not forget that they're just floating a very little share of their potential market cap. And if you consider the market cap of US tech and compare that, for example, to what's been rumored is 60 billion for ChatGPT, I think the market can absorb. So I'm actually, if you compare the numbers of what's actually going to hit the market versus the total market size, not too concerned really.
You like Europe?
I like Europe.
We're about to get French and German PMIs. They're not expected to be particularly positive. How much patience should I have? When are those numbers going to turn? Because at the moment, I look at the PMIs, and that doesn't paint a picture of wanting to be in Europe.
No. Again, overweight US versus Europe right now.
Yep.
And we don't have that confirmation. Unfortunately, especially for my dear Germany, I do think we need at least 2 months of positive prints in a row to get sentiment back positive on Germany, because there's been exuberance and expectations and then disappointment, exuberance, disappointment. So, I think we need a sequence of positive data to draw attention back to Europe. Bigger picture, I think one first step to get back positive on Europe is obviously a peace deal. Then we have all those concerns back out. Europe and Asia were the biggest losers, potentially the biggest winners once we have that. Unfortunately, I don't think it's around the corner, right? The pressure on you.
Yep.
And what I also find a little bit irritating is that if you look at positioning also in the vol space, in the put protection space, there's very little protection against this tail risk, which is growing by the day of running out of oil. Again, not our base case, right? We are saying things are moving in the right direction.
So do things get worse for Europe before they get better?
Yeah, exactly.
Okay.
That's how you should put it. And I'm surprised, again, base case should be positive by year end. But the risk of something going wrong in between is quite big.
How big is the, okay, so let's talk about symmetry. How big is the downside potential on no deal and the oil price story getting pretty crunchy, and the upside that we will get a deal? I'm just how do I price that properly?
So from an investor perspective, the probability of a deal is a lot bigger, right? So as a long only, you should be long equities. And the way to play this conditionality in the market is via put options. That's why you buy put options. I think we'll have a short-term pullback, or there's a good chance of a short-term pullback, so things get worse before they get better. And then we have the pressure either on Iran or on the US to actually act and get the act together. So short-term, it's a low risk, potentially just a short blip in the market, and best protection against that is put protection and not being underweight equities.
Okay. What does that pullback look like? What is the extent of that pullback? I mean, we're talking 5%, 10%?
Yeah, so the different things you should be looking at to assess what the
Where's
pressure
the strike
could be.
price on that put?
Yes.
I would say 10% out of the money is where you probably should be, right? To be very specific, if you look at Volsky and all that, that's a pretty cheap spot, I would say, and that's going to benefit from a potential pullback, even if it's only 5%. Is 5% going to be enough to create enough pressure to strike a deal? Not so sure. We probably need a variety of things to move in the wrong direction for a short bit.
What happens to your overweight US view if the strait remains closed until the end of this year?
Then I think everything is going to go down. Correlations move up, right? For now, the strait being closed, overweight US. Once it's reopening, start looking back at Europe and Asia. If it stays closed for more than 3 months, more than 6 months, then we're actually going to have a shortage in oil. Non-linear effects on the economy, non-linear effects on GDP growth and earnings, and then I think, double-digit downside, regardless if it's US or Europe.
Yeah. Max, you've been looking at a sort of, you've constructed at Deutsche Bank a pressure index, which is part of your notes, looking at 20-day S&P, Treasury yields, approval ratings for the president, I think, in the US, 1-year inflation forwards, and that pressure index does seem to be building again. So does that underscore the fact that you don't expect re-escalation? It's not the base case that you get re-escalation because of that kind of pressure.
Yeah, but it's not there yet, I would say, right? If you look where we were after Liberation Day, when we called for pivot there and for a ceasefire 6 weeks ago, the pressure index was a lot higher. So I think we're not there yet. Pressure is up. We just need a little bit more until we probably see the actual pressure necessary to strike a deal. Yeah.
Okay, the message I'm taking away is it's going to get worse before it gets better, but it is going to get better. Yes. Max, great to see you. Thanks for stopping by to see us. We really appreciate it. Max Euler, European Equity and Cross-Assets Head, Strategy Head, joining us from Deutsche Bank Research. Quick look at the Core 6. This is what we are looking at this morning. This is the picture we find ourselves with. Bit of good news, bit of bad news. Rheinmetall is down. ASML is a little bit softer, which I think is fascinating given the tech surge that we've seen overnight out of Asia. There's plenty of ex-dividend in the market, so just be aware of that as you look across some of the stocks. Some of the all stocks are XD, I think, this morning. Novo's up, LVMH is bouncing a little bit, but there's nothing overly convincing on the screen that I see in front of me. So let's try and find some of the other stories that we should be focusing on. Charlie Wells is starting in the orange.
Yes, I am. I'm taking an EasyJet flight, at least through its earnings report. A little bit difficult, right? Not having, the best quarter according to their latest earnings report, really struggling with those jet fuel prices due to that conflict in the Middle East. So, down a bit this morning in the red. We had that great conversation with their CEO, but talking about how those summer bookings are not as good as they were last year. So some difficulty there. Let's flip and talk about Stellantis, because this is an interesting one. They've got an investor day today. What we know is that they're trying to talk about a new strategy for this company. We've seen this company under pressure. There's a lot of competition here in Europe. There's a lot of these Chinese manufacturers coming in. So what do we hear about that? It seems like investors, at least so far, are optimistic about what could come out of that investor day later today in the United States. Sticking in cars, but staying here in the UK, let's go to Auto Trader. This is the online car marketplace here in the UK. Now, they had slightly disappointing results this morning, and the market's not liking that. Now, that's interesting, right? Because you've got a car maker in the green, you've got a car marketplace in the red this morning. So what does that say? Is that a little bit of read on the consumer? Is that more of a focus here in the UK? That's something to watch today because of those Auto Trader numbers coming through in the market. Let's flip and go and look at Elior. This is a really striking one this morning. They had an earnings report that really disappointed, and the market, as you can see here, not liking it, down some 25%. They really missed on revenue expectations. So again, the market digesting these earnings. There's a lot of earnings out this morning, not liking that. Let's end on CSG, the defense company. We hear a lot about European defense these days. There's a lot of optimism in that sector, given the fact that there's a lot more spending going into that. They had a strong earnings report yesterday. They got an upgrade today, and it's looking like, we're seeing some divergence in defense this morning, but for CSG, operate now.
Charlie, thank you very much indeed. Charlie Wells on some of the stocks on the move this Thursday. Coming up, NVIDIA's outlook fails to impress investors. Despite beating estimates, we'll have more analysis next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade. 8:15 here in London, 9:15 if you're in Paris, and look away now if you don't want to see weakness in the French economy. We've got PMI data hitting the Bloomberg terminal. The composite number dropping to 43.5. That is a 43 handle on the composite PMI. That is way below the estimate of 47.7, and it's not contained to manufacturing. It's not contained to services. It is in both. Both of those are into negative territory, including manufacturing, which had been positive, and so we see weakness across the board, it would seem, in the French economy.
France's private sector economy suffered its sharpest contraction in 5.5 years during May. That's the number. This is a very bad number. So we are looking at a significant turnaround. Can the ECB cut into this kind of weakness? Hike into this kind of weakness?
Yeah.
Make a good point.
Absolutely the right question. We'd heard from Olli Rehn. He's been talking to Reuters. The team's written up that conversation. He's been talking about whether the ECB will need to be doing a rate hike for the sake of credibility.
Yeah.
But your question is the right one. Do you do that into this kind of context? I mean, he's looking ahead at inflation data and saying there are vibrations in the short-term inflation expectations, but no significant deviation in the medium to long-term inflation expectations. I guess the longer they wait, if they wait a bit longer for the inflation conversation to calm down, does the growth story move to the fore? Because that is what we're...
Well, they don't have a growth mandate. That's the problem.
They don't.
And they just have a single...
But does it weigh in some way on those inflation expectations, I suppose?
Just a timing issue.
The right question.
Markets are pricing in more than 2 hikes from the ECB currently. So the euro's down a little bit on the back of this back of this print. But I guess the point we're getting to is if you get more than 2 hikes with this data so firmly in contractionary territory, I mean, how close are you then to recession in Europe?
But do you have
that growth mandate?
Do you need to see a recession in order to get the inflation out? Because if you look at the sheet from market PMI this morning, meanwhile prices indices continue to their ascent in May, signaling a further rise in inflationary pressures across France. Input costs and output charges rose at their quickest rate in 3 years. So while we've got a growth picture that looks the worst in 5 years, the inflationary picture is the fastest in 3 years, i.e. back to kind of 2022 when we saw the Ukraine war start. That's the kind of the metric which we benchmark this against.
So these are metrics that you don't want to see. These are
stagflation.
Stagflationary metrics, and the bond market is buying into a weak growth narrative. I mean, these moves are not huge. It's interesting that euro-dollar, it's not a huge move. It's just 1/2% on euro-dollar. And similarly, if you look at OATs, we had seen some selling of OATs earlier on this morning and a little bit move higher in the yield. Now we see that yield just coming down a little bit on the back of this as the market is pivoting really perhaps to that growth fear.
Yeah, there's more on that growth fear. The preliminary PMI survey results for France pointed to a considerable deterioration in the demand environment as total new orders declined at their sharpest rate since November 2020. So the demand picture is looking super weak and probably weaker than the inflation, and weaker than the kind of the inflation picture on the upside. So on balance, this is very negative.
Is this what Max was talking to us about things in Europe looking worse before they look better? There's the glass half full narrative.
Yes, hence his overweight on the US. So we look at those second round effects in terms of inflation. Wage growth, of course, has been slowing, and then inflation expectations, whether that delinks, and that will prove another challenge, of course, for the ECB. So some weak data out of France. We'll get more data out of Germany at 8:30. Let's get back to the tech story right now, because Nvidia shares moved lower in extended trading despite an outlook that topped the average estimate. It underscores the sky-high expectations, of course, investors have for the world's most valuable company. For more, let's bring in our senior market strategist, Neil Campling. So, Neil, some investor skepticism around Nvidia, despite a beat in the quarter, a beat in the forecast. We have seen some upside over in Asia, of course, but the takeaway, at least from those directly exposed to Nvidia, is this wasn't quite enough.
It's not quite enough. I mean, the world's largest company has only just grown revenues by 85% year on year. It is a case of travel and arrive to a degree. It's great expectations into the print, the travel and arrive to a degree. I mean, it's 8.5% of the S&P 500. It's the biggest weighting by far. It's very difficult to see where incremental money comes into play in the stock in the short term, perhaps. But stepping back, the company's accelerated growth for the last 3 quarters in a row. It's beat both expectations and the guidance for 15 quarters in a row. So the actual underlying numbers are very impressive. I think it's just a case of weight of money and where which is why it's looking for other pockets, I think.
Gravity. Let's talk about gravity. Feels like Nvidia is suffering from gravity. SpaceX, no gravity there.
I love this. It's fantastic. That S1 has had me many a comedy moment this morning.
Yeah, it's quite a read, doesn't it?
It's a 10-fold increase in losses. It's burning more fuel than it takes to get to Mars in quarterly losses. I mean, the ambitions are incredible. 1 million people on Mars is part of the ambition, which is quite incredible. There is actually already, there are ways of playing this, of course. There is actually a thematic basket I found this morning. It's up 330% in the last year.
Is this a space ETF?
Space ETF. It's a Goldman Sachs space basket. Up 70% year to date, 300% in a year. Expectations there are high. But, if you look at the S1, the ambitions, well, they're very impressive, of course. 1 million on Mars and 1 million on the moon.
Guy Johnson signed up, by the way, to be one of those million.
I mean, I can't wait to send Elon up there personally. But,
we might all need to be cryogenically frozen to see this day, but let's see. Talking of IPOs, OpenAI, we're getting a little closer to their filing. That could also come this week, then.
The filing could come this week. I actually thought it was quite interesting that, don't forget, OpenAI, there was another company born out of OpenAI, the founders some of those co-founders left and set up Anthropic. Anthropic's numbers overnight were absolutely...
They're making money.
Off the charts. They're making money.
For now.
And actually Jensen on the NVIDIA call last night said that Anthropic and OpenAI are producing revenues in 1 month that took a lot of SaaS companies 10 years to get. And that's going to add to even more risk around that whole SaaScopolis kind of stuff that's going on. But, if you look at OpenAI, huge numbers again expected there. If you're taking a step back and we look at OpenAI, Anthropic, SpaceX as IPOs coming this year, we could end up at the end of this year with 50% of the S&P 500 being tech. Now, that sounds great in principle.
Yeah, I thought that was the NASDAQ.
No, that's the S&P. We did the numbers on the S&P. But that's a real risk, isn't it, in terms of concentration of risk around one thematic. So, but then, of course, Jensen says about $100 trillion of industry is about to be disrupted by AI. That's why the Asian names went up. Some names were up 25% this morning because there's lots of robotic and AI plays in that space. Meanwhile, in Europe,
yeah,
I'll leave you this one stat. So, NVIDIA spent $20 billion on buying back its own stock last quarter. The entire stock 600 companies bought back $18 billion of stock last month.
And therein lies the difference. Neil, thank you very much. Neil Campbell's had an amusing morning reading S1s. Okay, let's talk about Gravity and talk about it from EasyJet's perspective. Summer bookings are trading last year's levels, consumers holding back on buying flights, and the budget carrier is raising ticket prices on higher fuel costs. But the company's CEO, Kenton Jarvis, says the physical supply of fuel is secure for now.
We've seen absolutely no issues with fuel supply anywhere across our network, whether that's in the UK, in Europe or beyond. And we stay in very regular contact, and as you'd imagine, with fuel suppliers, with airports and with governments. And they're also seeing no fuel issues looking forward. What's happened is clearly there's less jet fuel coming out of the Gulf region, but the fuel suppliers have successfully diversified. There's more coming out of Norway, there's more coming out of West Africa, there's more coming from the Americas. And many countries have increased their refining capabilities and have that secure as well. So the diversification is helping the fuel situation keep flowing.
We've got some visibility. Next 4 to 6 weeks, that's what the industry normally operates on. The summer looks good. Beyond that, we'll wait and see exactly what happens. Kate Duffy is our European airline reporter and joins us around the table. Kenton's not having a good war, though, is he?
Not really. I mean, he was quite positive and reassuring in that clip there, but the numbers are less reassuring. So he painted quite a bleak picture this morning, and it's a real sign that consumers are holding back on bookings.
Booking much later.
Booking much later. There's a lot more caution in the industry. He said people are waiting and watching until the best time to book. But essentially, it's not about the supply. They're not concerned about that. They've got a lot of supply coming in from the US, Norway, and West Africa. It's the cost that is really hitting them and is obviously hitting the consumer as well. We're seeing ticket prices go up, and that's really what's deterring travellers from locking in those prices over the summer season as well, which is particularly serious for airlines. This is the period where they make the most money, when cash is coming in, people are going on their summer holidays, going on business trips. So, yeah, quite concerning.
So overall, a concerning story, but does it seem as if the jet fuel story, they're trying to tell a more positive narrative around that right now? Because weeks ago, it felt as if the industry was raising the alarm bell and saying, you know, this is not good for us. Whereas now they're saying everything's normal. We've got normal visibility. Normal visibility doesn't seem to go very far, actually. So you wonder if normal visibility is good enough at a period when the Strait of Hormuz is closed.
You do. I think there still remains a lot of uncertainty, but what the airlines seem to be doing is really quelling any sort of concerns from customers, obviously booking tickets, and also with investors as well. They have, you know, the airlines have about 4 to 5 or 6 weeks of fuel visibility, and they're in good contact with governments, fuel suppliers, so they know exactly how much they've got. The problem is, you know, they're hedged on fuel, and a lot of European airlines are hedged on fuel. What Kenton was saying this morning is, what about the unhedged fuel portion? You know, those costs are obviously going to rise. In the results today, they were saying that they've got £25 million extra of their fuel bill, so higher costs are across the industry.
Kate, thank you very much. Kate Duffy on the aviation space. Coming up on the programme, we'll take a look at those PMIs once again out of France, coming in really weak. We'll wait for the numbers out of Germany. Melanie Baker will be with us, senior economist at Royal London Asset Management, to see how Europe is coping with the oil shock. That is next. This is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Bersechi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back. We're bringing the latest print in terms of manufacturing and services PMI out of Europe's largest economy, Germany, of course. The composite number coming in largely in line with the survey, 48.6 in contractionary territory, of course. This is a bit of a mixed data print from Germany and out of Germany. 49.9 is the number in terms of manufacturing PMI. Again, this is for the month of May. That is below the survey and the prior number. So that again has crossed into contractionary territory in terms of manufacturing, 49.9. The survey had been for 51. Services is slightly stronger than the survey, 47.8. The survey had been for 47. So that's moving in the right direction, but again, in contractionary territory as well. So the overall number in terms of the composite, 48.6, still below that 50 line, of course, and possibly a slightly brighter picture than what we saw in France, where it was looking significantly bleaker. Nonetheless, not a particularly positive set of numbers out of Germany. A little bit mixed, I would say, but all in contractionary territory right now. In terms of the markets, let's check back in on European stocks. You have seen a very strong session in Asia as a result of the AI trade. European stocks not really benefiting from that. Currently across the benchmark, you're seeing losses of 0.3%. Here in the UK, the FTSE 100 is down 0.4%, slightly heavier losses over in Germany, with the DAX down 107 points. Guy, what are you seeing?
I'm seeing a market that is reasonably kind of even in terms of the balance we get between winners and losers. Slight margin, a slight move to the downside, just in balance throughout, as you can see behind me. In terms of the volume, though, that is actually quite light, which I think is interesting, and maybe something of a tell in terms of the caution around Europe that we are watching at the moment. Let's talk about some winners and losers and give you an idea of what is happening. I'm going to start with some leaders. Generali, results out this morning. You've got the one I actually want to point to is at the back here. Ferrari up by 2%. So the Stellantis Ferrari story looking quite positive this morning, which I think is worth paying attention to. So the auto sector is being lifted by that. Downside, you've got Ubisoft results. That is not working. You're not getting an ASML rally either, which I think is interesting too. And you are seeing some bank weakness. Is this a story generated out of some of the PMI numbers that we are seeing, an ongoing concern around what is happening with that fuel price picture? The banks have had a very good run. As Europe just stalls a little bit, does that continue? Or as maybe Dave suggests, maybe some weakness is beginning to come through? Anna.
Let's get up to date on some of the other stories we're covering this morning. The US and Iran traded threats of escalation as the weeks-long standoff in the Middle East drags on without resolution. President Trump has told reporters that the US was in the, quote, final stages with Iran, but also threatened to resume attacks if Iran didn't agree to his terms. While earlier, Iran warned it would retaliate beyond the Middle East if the US or Israel renew strikes. Jamie Dimon says JP Morgan will likely hire more artificial intelligence specialists and fewer traditional bankers as the adoption of the technology accelerates. In an exclusive conversation with Bloomberg, Dimon said the AI-driven transition can largely be managed through natural turnover rather than sweeping layoffs, and that it will also create new roles, particularly in client-facing areas. The German Chancellor, Friedrich Merz, is pushing the European Union to consider associate membership for Ukraine as Berlin tries to inject life into the bloc's enlargement process. Under the plan, Ukraine would participate in EU meetings but would not have voting rights and could appoint an associate judge to the European Court of Justice and representatives at the European Parliament. Tom.
Okay, let's get more on that data that we've been getting out of both France and Germany. Weak numbers, very weak numbers out of France. A bit of a mixed picture when it comes to Germany. Let's bring in Melanie Baker now, senior economist at Royal London Asset Management for analysis. How weak is this European economy looking to you right now, Melanie? Good morning.
Morning. Not too much weaker than expected, to be fair. I mean, if you think, at the start of the conflict, to those economies that were expected to suffer the most, obviously attention went to Europe, to Euro area, to the UK. It wasn't expected to be the US. So a period of sub-50 PMIs shouldn't be a huge surprise. What I don't want to see is those sub-50 PMIs head much further towards the sort of 40 mark. Then I'm going to become much more worried about a sort of near-term recessionary scenario. For now, I think looking at that entire Euro area picture, I'm sort of relatively reassured, but let's see how the data comes in later today.
Can the ECB hike twice and avoid a recession in Europe?
Really good question. I think it can, just about, but it really does depend, of course, on what happens to the oil price. I mean, that's really the main thing in terms of how the European economy evolves from here. What the ECB is trying to do with its mandate is clearly control inflation risk, control the risk of inflation persistence, and then having to hike much more later, which then would absolutely take you into a substantial recessionary scenario. I think either way, there's a pretty good chance, given how weak growth is in Europe, that we get something like a technical recession. But that will be different from a sort of substantial recession, I think.
Would two hikes get us to the kind of the low 40s on the PMIs, do you think?
Again, a good question. I think at the margin it could. It partly depends how fast those hikes come and the communication around it, and clearly what's happening in terms of the backdrop around the Middle East. I think in terms of sort of risks of recession, one of the things I'm clearly worried about here is how long this Middle East situation lasts. Do we get into the situation where we do have shortages in multiple areas and that really feeding through into a substantial hit to demand?
Last time we saw a big energy spike, governments protected the consumer and industry. It's going to be a struggle to do that this time around. How different, therefore, is the picture going to look for the economy without that kind of support?
Yeah, no, it's a really good question. I mean, I think you are getting bits and pieces of support in different economies. You can see things coming through not at a substantial, not the kind of support we had during the 2022 period. But remember, the 2022 period was very different. We saw very high inflation rates. We were seeing inflation from a number of places, not just the sort of energy side.
Yeah, we had a growth boost then. We had a post-COVID boost coming through. Then you got energy prices.
We had that shield from higher savings.
So that wasn't stagflation, but this feels like stagflation.
Certainly, I think there's a risk that it develops in that direction, and you've absolutely got a whiff of stagflation at the moment. So I think you're absolutely right that fiscally, especially economies, especially like the UK, for example, will absolutely struggle to give substantial support to consumers.
Right, yeah, and I'll ask you about the UK in a moment. Just one more on the Eurozone. Olli Rehn, the Finnish central bank, has been speaking overnight, and he's saying that there might need to be a hike at the ECB for the sake of credibility, and we've talked about whether there'll be maybe more than that, maybe there'll be a couple. But interesting, their focus, they can't do anything about the Strait of Hormuz, so the short-term inflation dynamics, not the focus, is more the medium and longer term. And he's saying that the short-term inflation expectations haven't moved much, and there's no significant deviation in medium to long-term inflation expectations. Do you see things differently around the inflation expectation picture?
Yeah, it depends which measure you look at. I think that's fair, if you across the board, across all measures. We have seen some movement in some of those inflation expectations indicators, and that's clearly what they'll be watching. They're also going to be watching, of course, wage settlements, what happens to wage growth as well. As you get sort of more a pull down in terms of demand, and you get that sort of recessionary fear sort of slipping in, you are less likely to see that wage growth element come through. But I'm certainly watching the inflation expectations side closely and a little bit more concerned about that than perhaps he sounds.
Yeah, and on the UK, what's the driving force that interests you most in the UK? Because inflation is, it was a little more benign this week than expected, but it's above target still and expected to reaccelerate.
Yeah, it's a sort of same story. That sort of sticky inflation story is still there underlying everything. A lot of what pulled down inflation was sort of, Easter timing effects and negative base effects. It's a lot of one-off things that are going to prove temporary. We know that we've got electricity and gas bill increases coming in July, so I'm still not relaxed in the slightest about the UK inflation story.
Do you think the BOE needs to do an insurance hike?
I've got one penciled into my forecast. I've got an insurance hike penciled into my forecast already. I think they will ultimately want to and need to do that, but it's so uncertain, right? And again, coming back to the first point, it so much depends on what happens here in the Middle East.
When do they start cutting?
That's a really good question. In my forecast, I've got it in for next year, but who knows? This is again dependent on the shape
How
of this crisis.
asymmetrical is it? If we get 2 hikes, do we get 4 cuts? What is the kind of the growth impact that you get off these hikes that come through? And with hindsight, is there a danger that it ends up looking like a big policy error to have hiked?
I think in hindsight, there's always that, absolutely always that risk, especially because the reason they'd be hiking is presumably because the crisis has lasted longer than expected, and they're more worried about that kind of. But yeah, absolutely, I think there is that risk that you get that shape. I do think they'll ultimately end up cutting a little bit more than they will have hiked. Yeah.
And talk to us about the contrast with the US, because the inflation dynamics seem to be quite different there, driven by, everyone's going to be facing higher memory costs, but the tech build-out is so substantial in the States that you wonder if the inflation story evolves quite differently, certainly the end of this year into next. What are your expectations there?
Yeah, the inflation, because the growth story is very different, right? That's the AI story playing out, given a bit of help from the fiscal. That's one thing, but the inflation story, I'm not so convinced it will play out completely differently. I'm hopeful, and that's sort of baked into my forecast. I've got worse inflation impacts in Europe. But I am quite alert to the US. When you've got an economy that's sort of ticking along okay, a labour market that's kind of ticking along okay, you've still got a shock to consumers coming through higher petrol and gas prices. I'll be still watching closely what happens to inflation expectations in the US. Again, not relaxed at all.
So what will be the next move from the Fed?
Really good question. Right? So again, in my forecast, it's a cut. But as we've seen the data come in, as we've seen the activity data hold up, as we've got this AI story just continuing to roll, it feels like there's a higher and higher kind of probability there of, again, a bit of an insurance hike needed from the Fed as well, but not central case at this stage.
But you have at this point, you have a cut from the Fed this year.
Not this year, next year.
Next year.
I've got them on hold this year. I did have a cut before the crisis.
Cut next year. I wonder if Kevin Walsh is regretting his years-long effort to get to the top of the Fed, given the conundrum he's going to face. Can he shrink the balance sheet and cut rates? This is loosely and very simplistically what he's been arguing. You can shrink the balance sheet, lower rates.
To a degree, yeah. I think they'll try and separate out those decisions as far as they can. They'll be focused on monetary policy as the sort of instrument for affecting the economy and thinking about the balance sheet in a very different way. But yeah, to some degree, yes.
Just to come back to the issue of rate cuts. With market pricing where it is now, and I listened to the minutes last night and kind of, I think the market has taken that on board. Will a hold feel like a cut in terms of kind of the perception of the picture right now? Walsh has come in saying he's going to deliver cuts, but convincing the committee not to hike at this point feels like a fairly big job. And if he can just do that might feel quite dovish.
So, to an extent, the market is doing some of the work for central banks, right? To your point, I think that on hold feeling a bit different. But I think that's very tricky. And as for Walsh and his persuasive powers, he is just sort of one member on the FOMC. I'm not convinced at this stage that we could see him as the absolute driver of the Fed in this particular situation. And either way, he's coming into a very difficult situation. He may be in favour structurally of rate cuts. At this particular juncture, at this particular time, I'm not convinced he's going to go in straight ahead and argue for cuts.
Okay. we're going to watch the next meeting very carefully. Melanie, very nice to see you. Thank you very indeed for stopping by to see us. Melanie Baker, Senior Economist at Royal London Asset Management. What are we going to do next? We're going to talk about that oil price. Oil price is inching a little higher this morning. Now, yesterday was a different picture. President Trump says the US apparently is in the final stages of talks with Iran. That drove the oil price lower yesterday. We're maybe pricing that out a little bit this morning. Anyway, we'll have some analysis next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Earnings season is here.
Certainly valuations have shifted quite significantly.
Maybe a bit of optimism.
Bloomberg is first to break the numbers.
We're talking about a move away from U.S. assets.
So much corporate issuance.
Let's get the reaction and context.
With the smartest insights.
We're observing what's happening in the Middle East.
The situation is volatile.
We're closely monitoring the impacts on supply chain and logistics. Cross-border M&A, still such a difficult thing to get done in Europe.
Continuing coverage on Bloomberg.
Morning, how you doing? 47 minutes into the equity market session. Europe is in the red, as you can see, pretty much across the piece. We are down 0.4% of 1%. It was a cracking session out in Asia, driven by the tech story. That is not being represented here in Europe. The only main market that now is down year to date is the French market, which is now down. The CAC is now down year to date, 0.6% of 1%, which is worth paying attention to, considering we've seen some very weak PMI data out of that country this morning.
Yeah, and part of the reason for the weakness in the PMIs, no doubt, will be the higher cost of energy. Oil gaining this morning after we saw a move lower, though, in yesterday's session when President Trump told reporters that the US was in the, quote, final stages of the Middle East conflict, but also threatened to resume attacks if Iran did not agree to his terms. So where does that kind of circular conversation again leave us? Anthony DePaola is our Middle East energy markets reporter and joins us now. And Anthony, I want to get your sense of what is and is not coming out of the Strait of Hormuz right now, because in the early days we were very focused on every vessel, and it's worth checking in every now and again on what's happening. I see reported that we see a small uptick in traffic coming through the Strait of Hormuz. How much is the situation evolving?
Yeah, it is evolving every day, really, and so as you say, it is necessary to keep looking at it kind of every day and updating the ship tracking, looking at the satellites, and so the small uptick. We did see some reports that 3 larger tankers were moving through. It seemed like those may have been in coordination with the Iranian authorities. They were looking to move through. Iran itself, the RGC, was saying that some 26 vessels had gone through. That's not been able to be fully verified yet. And there is the issue of vessels passing through the Strait of Hormuz, which Iran has almost fully blocked. During the war, it was letting only its own vessels and some other kind of allied vessels or countries that it was selling oil to, allowing those vessels to go through. Now, since about middle April, the U.S. has got its own blockade to the south of the Iranian level, and that is blocking any ships going to or from Iranian ports. So the U.S. is really trying to put a vice grip on Iran's economy by cutting off its oil exports. So we're seeing some vessels passing through the Strait of Hormuz, but then getting to that U.S. blockade and then getting turned around or getting halted there. And so that's really an issue to keep watching those vessels that do get through and see which ones really travel onto the market. And there has been that trickle going through. It seemed to have slowed a little bit during the month of May after some attacks earlier in the start of the month. After April, we did report that a number of cargoes were coming out. So it's below, for sure, below the pre-war levels, and so that's really what is feeding into the oil price that we're seeing these prices still well above $100 a barrel. They're going to react to those the news of the day. Yesterday, was some positivity about a potential resolution to the conflict that really pushed prices down. And so from that steep drop yesterday, we're seeing some prices come back up. But it's really the supply issue. Without the exports coming out of Hormuz at the levels that they need to feed the market, we're really going to see those prices remain elevated, Anna.
Anthony, Goldman Sachs put out a note about the pretty rapid drawdown in global stockpiles of oil. Where do those stockpiles currently stand? Inventory stockpiles, what is the situation with that part of the market?
Yeah, Tom, that's important because that is the basically the difference between the price and the shortfall of the supply that's out there and the ability to take oil out of the stockpile. So some of the price action is getting consumers to stop buying oil, use a little bit less gasoline, turn on the heater or the air conditioning perhaps a little bit less, so try to cut back on some of that consumption. We have seen some chemical plants, some refineries cut back on their production. So that's the demand side. And then the rest is being made up by supply coming out of these stockpiles. So we've got commercial and strategic stockpiles all over the world. And we have seen the countries in the IEA, that's the U.S., European countries, Japan, they have released oil from those stockpiles to try to ease the impact on prices and try to make sure that key industries are continuing to get that oil. Plus, companies will have their own oil in storage that they will use as well. So that's really being drawn down as governments and companies try to make up for the shortfall of the exports that are not getting out of the Persian Gulf at the moment. So we've got stockpiles remaining measured in kind of the months. Estimates will differ, but some 80 to 90 days of stockpiles left. So that's really important to continuing to support the market and keep those prices a little bit under control until we get a resolution, Tom.
Okay. 80 to 90 days of stock piles left. Bloomberg's Anthony DePaola, really important insights and context. Anthony, thank you. Here's what else we are thinking about then throughout the day. From 9 a.m. UK time, we're going to get Euro area, UK and US PMIs after weak numbers out of both France and Germany. At 10:30 a.m. UK time, the European Commission will publish its spring economic forecasts. Meanwhile, in the UK, the Chancellor of the Exchequer, of course, Rachel Reeves, will speak in Parliament at 10:30 a.m. Expected to announce some measures to reduce costs. And at 1:30 p.m. UK time, on the jobs front, stateside US jobless claims. And on the earnings side of the docket, we're going to get numbers from Walmart and Workday aftermarket.
Okay, so what else are we watching out for? Let's try and find out how we should be thinking about these markets. Adam Linton joining us from our MLive team. Nvidia went down. You've got a story coming out of Asia that looks very positive, but Europe this morning looks much more cautious. Why are we getting these big divergences?
Well, I think if you're in Asia, you're relatively happy with the story. I mean, if you look at the commentary from Nvidia, it's very bullish on things like hyperscaler demands, that kind of AI infrastructure build out, and that very much benefits, the AI, the semiconductor producers in the Asia region. We've also got this kind of idiosyncratic Samsung story about the labor dispute being resolved. South Korea is an incredibly highly leveraged market, so that's why we get a bit of juice there. Then for Nvidia, they're potentially down a bit more on some of the competition elements, likes of Intel and other producers. So, obviously, if you're in Asia, it doesn't really kind of matter to you because, you're just selling to them.
Yep.
But also as well, I'd say for Nvidia, in terms of, if you look at what happens with the, pre-market opens in 7 minutes, is if you go back to last quarter, Nvidia in the European morning, they're actually up 0.7%. They closed down 5.5%.
Yep.
So in terms of the price action today, that'll be determined when cash trade opens in the US.
Yes, so it can be unpredictable, can't it, then, on the day after it releases numbers. So that's the AI story. So far, so future-looking, Adam. Here in the UK, much more prosaic matters at hand. The cost of living. We don't seem to be able to do politics in this country without talking about buses. And Rachel Reeves gets her turn today. She's going to be pledging to give free bus travel to under some certain age. And I'm being slightly silly, but what's the wider story here? Because this is all about the politics of the cost of living, which has been thrown very much into focus.
Yeah, I think when you look at that, this kind of bizarre price cap story till yesterday that ultimately got turned around. That ultimately this does feel like a government just kind of roll the dice a little bit. Yes, it's constrained, but ultimately it knows it's on the back foot. Obviously, there's talk of this potential freeze in fuel duty. That's of note from an inflationary standpoint. But in terms of some of the reported measures, you're reducing the cost of imports for certain baked goods. It all feels very piecemeal. Ultimately, the market's made its mind up, has relatively high conviction that Starmer will go this year. So, from a UK politics perspective, ultimately just looking ahead, who's going to be in head of the next government, what's their fiscal adherence going to be, taxation, welfare, relations with the EU. That's the important thing for UK politics. But any UK government is ultimately hostage to events with Hormuz. That's determining the energy crunch, how much of a fiscal buffer any government will have. So, if you're cutting the price of digestives, it's not really going to cause too much of an impact for macro assets.
Well,
to be clear, digestive biscuits.
Yes, digestive biscuits. Yes, you say that, but I mean, Guy and Paddington are both very excited about what this might
Marmalade is going to be on the list.
Well, there we go.
It's not exactly those healthy baskets of food, though, we're talking about here.
Guy's eyes veritably light up at the mention of cheaper marmalade. I'm sure the Chancellor will say, look, we're trying to sit within our fiscal rules. We're trying to do what we can do to aid the consumer here. But I hear what you're saying. European data is looking pretty weak. Do you think the ECB can hike in that scenario? How concerned are you? Are we facing a recession in Europe potentially if this drags on, the Strait of Hormuz?
Yeah, I mean, the PMI metrics are uniformly bad for France. I mean, in the release you saw, yes, they note higher input costs, but ultimately that's then followed up by a mention of potential demand destruction and the fact that France could enter recession. I think what we've seen so far from the ECB, they've just been so fixated on anchoring inflation expectations, they haven't really given as much weight to growth. And interestingly, we actually saw comments from the Bank of France governor, the incoming Bank of France governor yesterday, saying that growth needs to be an input into ECB decision-making. So if you kind of see a bit more of a balanced approach on the governing council, then you'll potentially see some of these ECB hike bets unwound. We'll probably get one next month just because it's so widely priced, but expecting one immediately after that may have a bit of reason to doubt that now.
Adam, thank you very much indeed. Bloomberg MLive strategist Adam Linton.
Okay, we're wrapping things up.
Yeah.
Thursday session.
About your breakfast basket.
Marmalade's important.
Marmalade is incoming. That is it for the opening trade. Guys off to get breakfast. I'm off to radio. The Pulse is up next. This is Bloomberg.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Blowout earnings and a huge dividend increase from AI bellwether Nvidia, but it's not enough to impress investors. SpaceX files for IPO, revealing billions in losses and a share plan that would allow Elon Musk to remain in control. Plus, Jamie Dimon warns that interest rates could go much higher even after the bond sell-off. We have more of our exclusive interview. So there is a lot going on in the markets. They're, of course, trying to assess what's happening with the price of oil, inflationary pressures, and then on the other hand, they're also looking at everything that's going on with AI. I'm looking at a rebound in U.S. equity futures that's proven actually to be a little bit short-lived. This is because oil is moving higher. Traders, again, waiting to see whether hopes of a peace deal in the Middle East would actually develop into something more concrete. Then we look onto bond yields. This is U.S. 10-year yield at 4.5895. Bond yields across the board, so U.S. but also Europe nudging higher. We did speak to JP Morgan Chief Executive Jamie Dimon, saying that interest rates may climb much further than current levels. We're also getting some data out of Europe, so let's go onto the European markets map. And Eurozone May composite PMI falling to 47.5. The forecast was 48.8. The focus is really on what's happening in the Strait of Hormuz. And again, the concern that central banks from here on end are a little bit at an odds end to what they do next. Nvidia topping expectations with its results and forecast, also announcing a massive increase to the company's dividend. Investors, though, becoming harder to impress. The impact, of course, is on some of maybe the competitors of Nvidia coming up, challenging Nvidia for market share. Pre-market, yesterday it was down 1%, and now it's down 0.6%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. We have rates warning from Jamie Dimon of French business activity shrinking in France. And, of course, we discuss what it all means for equities in just a moment with Beata Manthi. But first, Nvidia posted results that came in ahead of consensus for the first quarter. But the beat was not enough to send shares higher, underscoring the sky-high expectations that investors have for the world's most valuable company. Now, for more on all of this, let's bring in Neil Campling, Bloomberg senior strategist. Neil, thank you so much for joining joining us. Look, they're giving back. What stood out to you in the report?
The world's largest company, as you just mentioned, Fran, has just grown revenues 85% year on year. I mean, it's outstanding numbers. They've had accelerating top-line growth for the last 3 quarters in a row. They've beaten expectations 15 quarters in a row. Expectations are very high. Guidance is very solid. It's such a large weighting in the indexes. It's such a large company that I think it's just a case of travel and arrive. And also, people are now looking, I think investors are looking to play the peripheral beneficiaries of the ecosystem. Jensen last night talked about $100 trillion of industry about to be disrupted. So that's, I think, why you saw some Asian names up 25% this morning, because they are seen as the next beneficiaries of the wider ecosystem here. So it's not perhaps necessarily about NVIDIA's stock price action or reaction in the short term. It's more about the other ways of playing this enormous, tremendous growth opportunity that's out there.
Neil, we also saw movement on some of the big tech IPOs that we're waiting for this year. I mean, these are monster IPOs, right? We're getting some financial details from SpaceX. We learned that OpenAI could file as soon as tomorrow. Anthropic, again, on track for that first quarter. I mean, this AI story is only going to accelerate.
It is indeed. And I think what stood out, a fantastic exclusive overnight from Bloomberg News about Anthropic posting a profit in the first quarter, doubling revenues to $10 billion. Now, this company did not even have a product 3 years ago. Tells you the pace of this growth. Jensen actually last night on the call again, he talked about OpenAI and Anthropic reaching revenues in 1 month that have taken 10 years for some of the software, the SaaS companies to achieve. That tells you the pace of innovation and growth that's taking place in this industry. There's going to be a huge amount of disruption and disrupted as well as disruptors. Now, so this ecosystem for AI has other ways of playing this. Clearly, as you mentioned, there's 3 significant potential IPOs coming this year. And actually, one question investors may have is how do you absorb all of that capacity? Because tech potentially could be half of the S&P 500 by the end of this year. And that concentration is a high number. I'm sure that creates some risk in terms of the concentration there in the index.
Yeah, it's certainly a lot. Neil, thank you so much. As ever, our Bloomberg senior strategist, Neil Campling, on everything that's going on with AI. It's also looking like a blockbuster summer for tech IPOs, as we were just saying. SpaceX, let's go to Bloomberg's Charlie Wells, who's been looking over some of the details in the public filing. Charlie, over to you.
Francine, so look, the filing for what could be the largest IPO in history, valuing SpaceX as much as $2 trillion. Those documents are finally public. You can take a look at them on the Bloomberg terminal. And what we are seeing in these filings is a set of incredibly ambitious plans for SpaceX. These include plans to build what the company is calling the, quote, infrastructure of the future. Now, that would include the likes of sending human settlers to Mars to create colonies with as many as 1 million people, building data centers for AI, not just in deserts, but out in space. So huge ambitions here in these filings, but we're also seeing the financials. And this is what investors have long been waiting to see because SpaceX has been private for so long, taking a look at what the financial earnings have looked like. And when you look at the first quarter of this year, you see losses to the tune of well over $4 billion, net losses there for SpaceX. And what you also see is Starlink, the satellite internet service provider, really bringing in the bulk of the revenue for this company. So that fact and these numbers may bring some questions for investors about that potential valuation because there has been so much excitement about this company, about SpaceX going public. Now, again, we should talk about some of the risks because in this filing to the SEC, SpaceX had to talk about material risks to the company. These are important. We look at SpaceX talking about Starship. So this is their most advanced rocket. It's crucial to a number of their business ambitions. But again, this could pose a serious risk because testing has been rocky. It's not yet fully operational. So we're getting a bigger picture here of SpaceX, but also this model that we've been talking about these startups with sky-high valuations, staying private for longer without the sort of public disclosures that we're finally starting to get as they head to IPOs. So that model, does it work to stay private for longer, to get these high valuations? We will find out when SpaceX goes public, likely in June.
Charlie, thanks so much. Charlie Wells there with the very latest on SpaceX. Now, as long-dated bonds face pressure over concern of higher oil prices, the JP Morgan Chase chairman and chief executive, Jamie Dimon, sent a warning to bond investors that interest rates may climb much higher from current levels.
The notion that somehow people said they'll never go up is the wrong notion. And so companies like us prepare for higher rates, lower rates, and, figure those things can happen. So.
The thing is, they're at the highest level in decades. I mean, that is where the surprise could be.
I think they could be much higher than they are today.
Joining us now is Beata Manthi, head of European equity strategy at Citi. Beata, we kind of need to talk about everything. It's AI, it's bond markets, it's everything that's happening, with the price of oil and inflation. What do you worry about the most amongst those three big themes?
Good morning, Francine. I worry about all of them at the same time, and they are interconnected, right? So bond market sell-off, it's not necessarily bad for equity markets, for the index level. Equities, half of the time of this type of level of sell-offs in the bond market have been up. But what determines whether they go up or down are two variables. Number one, what is going to happen to inflation? It's irrelevant of the level. It's about the deltas. Is inflation going to be higher over the next 3 to 6 months or lower? That's number one. And number two is PMI, so economic growth. If PMI starts rolling over, that triggers or could trigger or historically have triggered a sell-off in equity markets, right?
But are you expecting a kind of sell-off or a correction in equity markets? So if you believe the bond market's right because of the inflationary dynamics and stagflation, then equities are mispriced.
So equities have rallied a lot in the short term, of course. So from that perspective, investors are worried that perhaps it got overheated in the short term. However, if you look what is happening on the earnings front and the parts of the market that are actually driving the index level, they are doing really well, right? We've been seeing an explosion of earnings in the last reporting season. So from that perspective, I don't see risks. And let's not forget about the narrowness of the market. Not everything is going up the way the tech and AI is going up, right? So the market is more cautious on some particular parts of the market exposed to higher inflation or higher oil prices.
Beata, where are you expecting equity markets to go? And again, Europe is, I guess, disproportionately compared to the U.S., much higher impacted by the price of oil. Even if the war stopped tomorrow, which is unclear the path forward, there's going to be ramifications, maybe oil at 100 until the end of the year.
Absolutely. From the preference that we've had for over a year of the rest of the world equities over the U.S., we've changed it earlier in the conflict to the U.S. versus the rest of the world because there are no miracles, right? Economies and parts of equity market exposed to higher energy prices will see downgrades, and we are already starting to see them. Now, so a bit more cautious stance on the cyclical part of the market. Having said that, I haven't changed the target for Europe, and we haven't changed the EPS growth. Why? Because actually, while some parts of the market are seeing downgrades to the EPS, you're seeing this explosion of earnings in energy. Now it accounts for over a third of EPS growth in Europe. Actually, EPS growth in Europe for the index level is going up, not down. But it's happening in this very narrow fashion, right? So index could still move higher, 5% upside. Earnings level could be okay, but it is with a very different composition than what was expected at the start of the year.
So, Beata, what's your take, for example, on AI? So, first of all, we're just talking about there's these monster IPOs, which I don't know whether it changes the fabric even of the indices, or whether it means that there's opportunities away from, I guess, the big blockbuster names for Europe.
Absolutely. So AI is a very fast evolving theme, right? And it continues to be one of the most important themes driving the market, but it's evolving. Just like Neil a few minutes ago has mentioned, so the market is narrow, it's only AI, but it's broadening within AI as well. It's still a narrow market, but broader within the theme. Now, we have this framework called bear market checklist. Mm-hmm. that tries to capture the level of frothiness at the top of the market. So it tells you when the correction comes, is it the beginning of just the next correction that you buy into, or is it the beginning of something bigger, that there is too much frothiness out there to unwind in a 10% correction. So right now we have 9.5 out of 10 factors flashing red signals. We say we get worried when we go to double digits, and IPO is one of them. I'll tell you, IPO is not flashing anything now, but when we add the IPOs coming through, it will be flashing red signals, right? So that's already tipping us into double digits. So the market is getting more overheated from the AI standpoint.
And so where do you find opportunities? Again, is it country-based or more sector-based?
So for
crossover,
now,
maybe.
It is. I really don't remember such a narrow consensus in terms of everybody being on the same trade, including us. So it's AI, the US, and parts of Asia, Taiwan and Korea. And of course, that's a very risky trade, and investors are starting to get a bit worried. What I'm starting to get questions about Europe, is it again a good diversifier, right? From potentially, we don't think AI is overheated yet. Valuations are still reasonable, earnings are picking up, but investors are starting to think that perhaps, just like last year, we should start to add some diversifiers. On the index level, for us, it's the UK, but more on the defensive side and geopolitical kind of hedge, right? Mm-hmm. On the when it comes to the sectors, we like tech, of course. Yeah. We like materials, and we like financials, but only via banks.
But on the UK, there's so much noise and policy being, of course, put by challengers basically to Keir Starmer's leadership. How do you cut away from the noise? You just need to wait and see, because they're also speaking to different constituents.
Absolutely. So the noise could continue for quite some time, right? We won't have the resolution of the situation very soon. And that weighs on some parts of the market, right? So FTSE 100 actually is isolated from that noise. If anything, weaker pound helps these international earners. So plus it has this geopolitical hedging inside of it. So that's why we like FTSE 100 over FTSE 250, which is more of a rates trade, so higher rates, which is inevitability in the UK for the time being, could put away on this more domestic related stocks and sectors.
And Beata, when we get a ceasefire, if we get a ceasefire, right, in the Middle East, like a long-lasting peace solution, are there direct opportunities that you're ready to go in there?
So if it happens very soon, that's going to be a surprise to the market, and you can see the market wanting to buy the parts of the market that have been exposed, right? So Europe will squeeze. Probably this is why we are neutral Europe. You can't be underweight Europe, because it will squeeze a lot on a ceasefire news. And another one that we are waiting for, of course, is Ukraine, and potentially that would be even bigger than the Middle East.
Beata, as always, thank you so much for joining us. Beata Manthe, their head of European equity strategy at Citi. Now, coming up, President Trump says the U.S. is in the final stages with Iran. We'll discuss all of this with Daniel Tannenbaum, partner at Oliver Wyman. That's coming up next, and this is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
For From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
We've seen absolutely no issues with fuel supply anywhere across our network, whether that's in the UK, in Europe or beyond. And we stay in very regular contact, and as you'd imagine, with fuel suppliers, with airports and with governments, and they're also seeing no fuel issues looking forward. What's happened is clearly there's less jet fuel coming out of the Gulf region, but the fuel suppliers have successfully diversified. There's more coming out of Norway, there's more coming out of West Africa, there's more coming from the Americas. And many countries have increased their refining capabilities and have that secure as well. So the diversification is helping the fuel situation keep flowing.
Kenton Jarvis there, the chief executive of EasyJet, telling Bloomberg that the conflict in the Middle East has not caused any fuel supply issues across the company's network. Now, the U.S. and Iran have traded threats of escalation, even as President Trump says the U.S. is in the final stages of the conflict.
Everything's gone. Their Navy's gone. Their Air Force is gone. Just about everything. The only question is, do we go and finish it up, or are they going to be signing a document? Let's see what happens.
Now, in a post on X, Iran's president says forcing surrender through coercion is an illusion while calling for mutual respect. While Tehran has also warned it would retaliate beyond the Middle East if the U.S. or Israel renew strikes. Now, let's get some analysis and bring in Daniel Tannenbaum, partner and global anti-financial crime practice leader at Oliver Wyman. Dan, thank you so much for joining us here in London. It's unclear, first of all, how do you take the Trump Xi meeting compared to the Xi-Putin meeting, and does any of it help with the Strait of Hormuz?
No, and look, both of those meetings didn't really seem to achieve a lot other than showing that China will work with anyone. I think that's the real takeaway, even if maybe Trump had a shorter chair than Xi did compared to Putin when they were meeting this week. I mean, China is getting ships through the Strait of Hormuz. They had 2 super tankers go through in the last 24 hours. The blockade that the U.S. has in place has not impeded their movement. And, the U.S. doesn't hold the cards on this. The U.S. military is being held at bay by Iranian drones and fast attack boats. I mean, that doesn't bode well. This is a different type of warfare than I think the U.S. is historically prepared for.
I mean, it's unclear, actually, listening to President Trump, where we are. He says, look, we're close to a deal. He's ready to escalate. Where do you think we are?
So I think we will find some degree of a détente to get basic normal resumption of flow through the Strait of Hormuz. But you've got to remember, Iran never realized that they could actually do this. I've been working on Iran issues since 2005. This was always a fear, but Iran was never really testing this strength until their back was to the wall. They never shot at Gulf allies until this conflict in February. But I do think the world needs to prepare itself that Iran could shut down the strait again. Even if it gets open, I don't think it's open in the same conditions that it was before this conflict began in February.
So, again, one of the difficulties I have is understanding the strength of this regime in Iran. I mean, does it have the money to pay, their guards? Does it feel strong, or is it smoke and mirrors?
I mean, we've seen reports that they're trying to extort crypto-related tolls. I do believe that is happening, where companies are paying for safe transit of their vessels through the strait outside of the traditional banking system, so it makes it harder to try and intercept and stop that. They've found a way to live under severe sanctions for 47 years. They've been prepared for this type of a moment. They still have trade with countries like China, which is not stopping, seemingly. So they will find a way to keep going, but this isn't Venezuela. I mean, you've got nearly 1/10 of the country that are true believers in the Ayatollah and the regime. This is not that easy to overthrow. And remember, there is no opposition. So whatever deal that President Trump will make will be with this current Iranian government, which, to be clear, is not a regime change from what was in place before the start of this conflict.
But, Daniel, I mean, at what point does the president become desperate for a deal because gasoline prices go up, because we're going to run out of jet fuel and the midterms are around the corner?
I mean, you've already heard the president say he's not that concerned about Americans' economic interests, and he doubled down on that last week on his way to China. I think as it begins to hit directly more consumer prices. We've already seen increased prices in fuels, but the U.S. has tapped the strategic reserve, so that's actually offset the prices. We haven't really seen the full impact yet with how much barrels have been released from the strategic reserves, putting them on the market at a lower price point. I think until you really see more direct consumer impacts flowing through to goods, they may wait until there's more of real pain being felt, because certainly the markets aren't pricing any of this in.
What do you think the markets are pricing in?
I think they're pricing in hope. I also don't think people totally understand the second or third order impacts of what's going on. You've got shipments of fertilizer, of helium, of sulfur, all being delayed. That's an input into something else. So it takes time to actually see that real delay and impact when you can't get a critical item in your supply chain, but you don't see that for months potentially, especially you talk fertilizer. I mean, fertilizer impacting agrarian economies, needing planting season delayed, and then nothing to harvest later this year. You don't see this until the back end of the year, realistically.
Daniel, talk to me a little bit about, what China's role in this is. I understand that, they'll do business with whoever has an advantage to them, but they don't want the Strait of Hormuz to stay this way. So with the call, could they actually try to get Iran to, really come to the negotiating table?
They could, but I mean, China can find a way to get their interests covered through the Strait, and I think that's the real challenge. I think President Xi knows that if he wanted to move more vessels through the Strait today, he could do that. Whether that benefits the Americans is a totally different scenario. So if he's looking to encourage Iran to reopen the Strait, I don't believe he's necessarily doing that for humanity's best interest. I think he's doing it for China's. And that's the thing, that's the part of the calculus I'm not sure the U.S. government totally appreciates.
What can the U.S. government do now?
I mean, realistically, the U.S. government can more aggressively enforce sanctions on third countries that continue to support Iranian interests. There have been threats. Operation Economic Fury that was announced by Secretary Bessent added a myriad of other designations of entities around the world, but none of them meaningful, none of them significant, none of them scared those who were engaging in trade with both Iran and the U.S. out of the market. You need to really hit them where it hurts and scare significant firms with the threat of enforcement or banning from the U.S. dollar transactions. They're just not doing that.
Dan, we have a viewer question. I love viewer questions, so thank you so much for all of our viewers who write in. So this viewer says, what are your odds that President Trump reconsiders oil export controls if this drags on?
I mean, we've already seen the president said he wasn't going to extend the Russia oil waivers again, which he did over the weekend. I mean, the president is really kind of scrambling to find anything to improve oil prices, and those Russian oil waivers have really not impacted the market. It's providing cover for countries like India, others in Southeast Asia to buy Russian oil without fear of repercussion of penalty in the U.S. I think you'll continue to see those type of moves. The irony is none of that helps American consumers at the end of the day, which really is his primary focus.
Daniel, thanks so much for joining us. Daniel Tannenbaum, their partner and global anti-financial crime practice leader at Oliver Wyman. Now, of course, all of this is weighing on markets. We're looking at U.S. futures. This is a mixture of what's happening with the price of oil and a mixture of what's happening, of course, with AI. Now, if you look at some of the markets, look, U.S. stocks, rebounding is actually faltering. So they were rebounded a little bit yesterday. Now the futures are pretty much flat. And this is, again, as oil is moving higher, traders waiting to see whether hopes of a peace deal in the Middle East would develop into something more concrete. Coming up, we discuss the trends shaping the future of work and what AI could mean for the jobs market with the chief executive of recruitment giant Randstad. That's next. This is Bloomberg.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up to the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Blowout earnings and a huge dividend increase from AI bellwether NVIDIA, but it's not enough to impress investors. SpaceX files for IPO, revealing billions in losses and a share plan that would allow Elon Musk to remain in control. Plus, Jamie Dimon warns that interest rates could go much higher even after the bond sell-off. We have more from our exclusive interview. Now, we're getting data. We had data from France and Germany. Now it's the turn of the UK. UK make composite PMI coming in actually below 50. Now, anything below 50 means a contraction. Above 50 is expansion, so it's fallen to 48.5. The forecast was 51.6, so definitely something just to keep our eyes on. Now, Standard Chartered Chief Executive Bill Winters ignited a debate about the impact of AI on the jobs market this week, saying the technology could replace what he described as lower-value human capital. We've heard from the leaders of JP Morgan and Barclays giving their perspective on what AI could mean.
I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, it'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy our people.
Human capital is a really important part of any large organization. And we must use technology, we must invest in technology, but we must also invest in our people.
Well, for another perspective on the impacts of AI, I'm joined by Sander van Noordende, the Chief Executive of Randstad. Thank you so much for joining us. I'm excited to have a good conversation on AI because, look, you're kind of at the forefront because of work and management of all of this. And we've heard chief executives where a lot of workers just felt upset. I don't know if it's, a language that they find upsetting because they're already worried about losing their job. We heard it from Standard Chartered. Like, what kind of impact do you see? I mean, is it a human assembly line that will be taken by AI?
Well, what we see, first of all, let me say language matters. There is no such thing as lower value human capital. I mean, I think that's unfortunate, and let's move to the east of it. Yes, AI will have an impact on jobs and labor. What we see is an impact of 7-8% in the base case over the next 5 to 10 years. And that's massive, but it's not the massive doomsday scenario that some people would like you to believe. And yes, administrative work, marketing, content, programming, software development, customer service, they will be impacted by AI, yes.
But is that why we're seeing layoffs now? Or, and we talk about AI, washing, which is the fact that if I'm a chief executive, I want to get rid of 10% of my workforce. Instead of saying, well, I want to get rid of 10% of my workforce, I use AI as an excuse.
I think there's three elements. There's some of the washing element, because AI adoption takes time, and AI adoption at scale is maybe the case in a few bigger organizations and not in many other organizations. I think then there's the AI, let's say, focusing on productivity, but there's also, especially the tech companies, they're pivoting their companies towards AI, and that means they are downscaling other initiatives in their business.
When do we reach peak, and is there a danger? So this makes me think of COVID, right? In COVID, we were all stuck at home, and you have big companies that laid off too many workers, and lo and behold, there was trouble because they didn't have enough good workers when everything reopened. Is there the same danger with AI?
I would not say so. I think AI is going to be something like a wave over the next 5, 10, 15 years. Think back to the .com and the digital era that we are in now. Yeah. It took Amazon 25 years to get to where they got to. I think AI can go a lot faster, but it will take years.
But who exactly is there anyone who's not at risk of losing their job or having their job significantly impacted?
Well, let's not forget there are lots of opportunities as well. First of all, AI enables many workers, whether you're in customer service or you're a knowledge worker in a law firm, to do a much better job and a much more productive job. Then the flip side of the coin, AI requires massive infrastructure.
Yeah.
That means there's opportunities for people in the skilled trades, your HVAC technicians, your maintenance engineers, and things like that. So there are opportunities. And then I always say I'm an AI optimist, meaning the world is in dire need of a productivity boost. Because populations are going to shrink, are shrinking, so we need to do more work for, fewer people need to do more work for more people. And that's in healthcare, that is in the skilled trade, it's in hospitality, it's all those sectors where there is going to be massive demand.
Do you worry about the human connection? That actually, yes, I have a computer that can be much better at giving me solutions than maybe a junior or an assistant. But is it good for humanity, or is it better for me to still speak and interface with a human?
Yeah, well, I would say in our business, we are a case in point. Yeah. So AI is helping our recruiters to be more productive, to be more efficient, and make more value in the human connection. So spend more quality time with candidates and with clients versus doing administrative work. So I think human connection will always be important, and the quality of the human connection supported by AI will become better.
Sander, do you worry about youth? So this is, especially in the UK, it's actually the employment of the graduates that are just coming out of university that's probably most at risk. Now, this could be for a number of reasons, because chief executives are also spending so much money in AI just to build it, that they may be using that money instead of recruiting graduates. But it's also a natural process if it's the more junior jobs that go.
I would say, and this is actually our research shows this is tremendous opportunity for younger people, because if they build AI skills, and we say AI is a fast path to pay and promotion, they can get higher pay and they can get promoted faster and they can overtake some of the more senior people in the job.
But there'll be less of them.
Not per se.
The graduate product,
Not per se. Actually, graduate unemployment in the US has come down by 200 basis points over the last couple of quarters.
So what was your first job, Sander?
My first job was a programmer at Accenture.
But at the time, did you enter the workforce with proper skills, or was it a little bit of, were you trained on the job?
No, training on the job I think will still be important. I think the interesting thing today is that people can acquire skills online on themselves, on their own merits. They don't need anyone to tell them. And that's what we see younger people do. I was talking to a CEO of a big consulting firm the other day, and he said, well, our younger people are actually much better at applying AI AI to the jobs that we do than some of the more senior people. So I'm optimistic for younger people, provided that they combine the AI skills with more social skills, empathy, collaboration, judgment.
So, what should they study? This is another conversation, because the workforce in 5 years, because of how they learn at school through AI, is also going to be vastly different to how you and I started out in the workforce.
I would say science and technology is still a good place to be. I would say the skilled trades are a good place to be. Skilled trades can go up into the 6 figures these days, so that's massive. Healthcare, and I would say people working with people in general is a good place to be.
Yeah, so this face-to-face is always, here to stay. How do you anticipate what's coming next? Because behind closed doors, a lot of chief executives will tell you, look, we're still trying to figure it out. So the pace of change can be very, very quick, but they don't 100% know exactly where it lands.
No, nobody knows where this is going to land, as we didn't know that for the .com and the digital era either. I think for executives it's very important to have a bit of a plan, so to speak. Where do you see the application of AI in your business? And I would like to focus on, at least in our business, we're focusing on the experience for the customer and the experience for the talent. Because if we do a better job for those two, then almost automatically we will get the efficiency rewards. But that's our approach. I mean, I can imagine if you're a big bank and you have a big factory, quote unquote, that you want to apply AI to that.
Sander, whose job is it to retrain, and how quickly, I mean, how difficult is it to retrain when you don't really know the jobs of tomorrow? I
think it's business and policymakers, government, education systems working together to make that happen, because we have to do a much better job this time around than previous rounds when we had the whole manufacturing, technology, China discussion. So we should learn the lessons from that era and apply them at scale now.
Sander, thanks so much for joining us. That was the Randstad Chief Executive Officer, Sander Vardanonde. Now, let's return to our interview with the Chief Executive of Barclays, speaking at the Bloomberg Global Markets and Banking Summit in London. Venkat, the Chief Executive of Barclays, gave his take on the impacts of AI and whether high-tech valuations are justified.
Speaking from the point of view of a large corporate, the thing that is very difficult for us is actually to get the value out of AI that we think we can get, right? You've just got to change an organization completely. And there are 3 big aspects, each of which is really tough. One is adoption. Do you get the right tools available to people adopt them? How do they adopt them? Second is infrastructure, both in compute and in data and quality of data. And then the third thing is to find those high-value cases where you do something in an AI way, beginning to end, and throw away the old way of doing it, which is also hard. So corporate adoption is hard. And the question is, what is being built in to the equity market's perceptions of values of companies and this money they're spending based on their assumption of corporate adoption, right? Because if adoption is less than what people think, then valuations may be too high.
So what does that mean in terms of jobs? So we had Standard Chartered saying they will eliminate corporate function roles by more than 15% by 2030. HSBC says it's looking to cut around 20,000 jobs. What does it mean for AI for Barclays?
The answer is I don't know. There is, no, I'm being very serious about this, because I think clearly there are tasks and activities which will see greater productivity, right? And where you can do something with fewer people than you can today. Equally, this opens capabilities on personalization of services, on actually investing in making existing things more efficient. And I can give you examples. We sample all the calls now for customer service agents. That is better than what we did, but it doesn't reduce the number of people. It makes us have better customer service agents. So these things are going to trade off. And I also think it's a really important thing for corporate leaders to look at the impact on our workforce, on reskilling people, and finding ways to actually use this technology, not just to make our companies better, but to make things better for our customers. This is hard stuff.
So Bill Winters yesterday talked about lower value human capital. He received a little bit of backlash. Was it a poor choice of words?
Well, I'll let Bill answer. what he meant. But what I would say is that, human capital is a really important part of any large organization. And we must use technology, we must invest in technology, but we must also invest in our people. So that, as I said, reskill them, upskill them, get the most. And, if I can use a difference, some of these things will help with tasks. What people do are jobs. And a job is much more than a collection of tasks. And that's the thing we have to keep in mind, I think.
Have you seen a concrete business impact already, thanks to some of the AI that you've been implementing?
We're seeing creeping impact. Okay. We're seeing things getting on the margin a little more efficient in certain parts. Fundamental impact, I think it's coming, but it's not. I don't see it yet.
Well, that was the Barclays Chief Executive Officer, of course, C.S. Venkatrakrishnan, speaking to me yesterday. Let's unpack these comments from the Chief Executives of Barclays and J.P. Morgan and bring in Tom Metcalf, Bloomberg's Managing Editor for EMEA Finance. Tom, I have 1,001 questions. I mean, suddenly everyone's talking about AI, and we're really starting to see layoffs. I mean, is it layoffs directly because of productivity, or is it a bit of an excuse?
Yeah, I think that's the big question, the concept of AI, washing, are people just sort of seeing an opportunity to look like they're, jumping forward into the future, but at the same time getting rid of, what's often the hardest decision as an executive. But no, I mean, pretty much every single executive this week has been engaging on this topic. Some a bit more kind of in a more considered way, perhaps, than Bill Winters. But broadly speaking, they're all saying the same thing. They're like, we're expecting, certainly fewer classic banking jobs, certainly in the middle and back offices. And, you'll see a lot more kind of technical or AI-facing roles coming through.
So, I mean, Bill Winters did get quite a lot of backlash. I think Jamie Dimon actually defended him. But are people worried because those jobs go, or is it just being called lower value, human capital?
Yeah, exactly. I mean, I think it's tone deaf. But, basically, it was an unscripted comment, and I think, as Jamie Dimon was saying, look, everyone says stuff off the cuff, and sometimes it gets mangled a bit. So, absolutely certain Bill Winters is probably regretting what he said. It certainly created a great, hoo-ha and furore. But so fundamentally, and as he's making clear now, it's like that is not how he typically communicates with staff. It's all about reassurance and, valuing folk. But I think it just really points to the big challenge, right? There is going to be sweeping changes, not immediately, as Venkat was pointing out, but over the coming years. And it's how, the companies are going to work and succeed are going to sort of navigate that. But also, you've got to bring your workforce along with it. You need them to be engaging fully behind AI. Otherwise, you'll get left behind, but also, you don't want a sort of a mutinous workforce either.
Tom, I know you have a fantastic and pretty large team trying to figure out exactly where we land on AI in banks. But is everyone using Claude, or are they, is it actually going after the big U.S. companies and trying to absorb them in their own, companies and in their own structures, or what do we know about that?
Yeah, I mean, certainly, there's a spectrum of usage, but broadly speaking, if you're a sort of bank at the cutting edge of this, you will be, I heard a great anecdote earlier, actually, that, a banker was pulled into a last-minute meeting and effectively was able to get his, pitch done almost in the elevator and kind of seemed to get away with it, right? And I think that's the sense is that, there's products like Claude Co-Walk, all this stuff, which, the kind of drudgery of banking is, clearly potentially going to go away. And it raises so many interesting questions. No one has the answer to these questions, but if you take away all that work, but where does that leave kind of training, development, and of course, what do you need from your sort of more junior staff?
So we have these monster IPOs, SpaceX, OpenAI. Yeah. What does this mean for the banks?
Well, I'm sure a lot of them many of the US ones, very excited about the fees that will be coming down. I mean, it's definitely worth reading the SpaceX filing. It is quite extraordinary, I think is probably the word I'd use. Huge, 1.75 trillion, right? And then you're like, but they lost $4 billion last year, or whatever the period was. So it's really fascinating. And then obviously in there's, I think for me it just becomes so clear. It's basically a bet on Elon Musk, right? And that's shown in kind of the various milestones he's trying to achieve, including I think it's 1 million people on Mars. So you don't often see that in an IPO filing.
It is quite a special prospectus. Everyone should go and read it. Tom, thank you so much, as ever. Tom Metcalf, Bloomberg's Managing Editor for EMEA Finance. Now, coming up, as markets rally on the AI trade and IPO enthusiasm, a different kind of pressure is building in private equity and credit. We'll discuss that with our next guest, Richard Madden from DC Advisory. That's coming up shortly, and this is Bloomberg.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, we're just getting a little bit of breaking news. Iran is in the process of responding to a message sent by the U.S. This is according to the semi-official agency ISNA. A couple of things that you need to watch out for. It was unclear for me over the last 24 hours what President Trump really wanted to do, because he was saying that they could actually escalate things, possibly looking at strikes, whilst at the same time saying that there was also something on the table that he thinks he could get signed. So we've seen this tactic before over the course of 24 hours, maybe 48 hours, the message changing maybe to, I guess, blind your opponent and see what they come up with. So we'll keep, of course, an eye on what's happening in the Strait of Hormuz. Now, beyond geopolitics and the AI trade, the world of private market remains one of the biggest talking points on Wall Street. Many private equity firms are struggling to sell their portfolio companies and return money to investors, while the world of private credit is suffering reputational damage after a series of high-profile losses. So where do we go from here? Let's discuss all of this with Richard Madden, European Executive Chairman of DC Advisory, which advises private equity and corporates worldwide. Richard, always a pleasure to have you in the studio, so thank you so much for coming on. First of all, what do you make of all the dry powder that PE firms are yet to deploy? They're sitting on cash.
They're sitting on enormous amounts of cash. But the issue with private equity and private markets, as opposed to public markets, is really pace. Because in the public markets, the pace is extraordinary. The volatility, the momentum, the pace is extraordinary. But there's always an escape route. You can always sell. It might be disappointing, you might have scars, but you can always sell. The problem in the private markets and for private equity is that they're investing for years. Yeah. And as a consequence, they're not being asked to decide what may happen this week, next week, but where will we be in 5 years' time? And that's a staggeringly difficult question to answer. And so the capital remains parked.
Okay, but we see these monster IPOs. I
Yes.
decided to call them monster. They're just mega IPOs, right? 10 billion plus. What does that mean? What are the exit options for PE firms today?
So I think it is good that the public markets seem to be more receptive. Yeah. A lot of these IPOs are coming from founder and venture funding and not from private equity. The public markets have been burned quite frequently by private equity IPOs, so there's a little bit of reluctance. But I do think that is a market that will open and will provide an important exit route going forward.
When do PE firms actually start to sell? The $1 million trillion question, Richard.
So there's an awful lot that is not sellable at the moment.
Okay.
Because that uncertainty over the medium term means I just can't understand value. And so you look at technology, take the technology sector, it's very, very hard to value. There are very valuable businesses, but they are hard to value. And so for them, they are sort of stuck at the moment. Interestingly, there is a flow towards selling businesses that will not be AI'd out, where essentially they are AI-proof. And that's very attractive. So you can see in testing, inspection, infrastructure services, where skill capital is really valuable and people need to do things, that's where I think there'll be a real uptick in activity.
But and they will IPO?
I think the dry powder in private equity is sufficient that they probably won't. Okay. So when we look at the decision-making that people are going through, if you can run an auction process with a fairly clear view of value, then you will sell to that. Whereas an IPO process takes longer, and you're really not certain of value until right at the end.
Richard, I mean, we've talked about zombie fund managers, right? I mean, are these going to get much worse? Again, the oil price is high. Central banks will likely raise interest rates. Certainly, we're not looking at anyone cutting them. Is it going to come to a point where they're just not going to be able to raise the money they need?
You would think so. I mean, I think if you're allocating capital now, are you looking at the private markets and saying, I'll allocate more there? Or are you sitting there saying, well, actually, the returns look vulnerable in private markets, I'm going to look elsewhere? And I think there are quite a lot of asset allocators looking elsewhere. The issue is, where do they go? Into your super IPOs, perhaps, but there are some big calls to be made about the medium to long-term allocation of capital, because for the private markets, you're committing money for what we thought was 10 years, what seems now to be 12 years and may well be 15.
Richard, you worry about Europe. You really worry about Europe, or European capital, European businesses, European money. Why?
I just think, so if you look at an economic level, we're not growing, we're not productive, we have aging populations, we have more costs than we have income. And that feels difficult, very difficult. And then you look at the capital that you need to deploy in order to innovate and grow, and you see that happening in China, and you see that happening in the US. That capital and that ambition doesn't seem to exist in Europe. And so I just think you'll see these two extraordinary pillars in the US and China growing, and I don't see where that engine comes from in Europe.
I mean, you see pockets of, I guess, investors wanting to make a difference. Is it that, you know, we had, for example, the EQT CEO who's now going to deploy $5 billion. Is it just that the amount of money is too small, that we need 10, 15 times that?
I think it's different. I think there is plenty of money. There is plenty of money. It just doesn't get deployed into higher risk ambition projects of scale. They just don't come out of Europe.
So you want a European Google?
Oh, wouldn't it be wonderful? But unfortunately, the capital required to play in that game now is so significant. But we need a European AI champion, or all of our information and all of the things that we do will be owned by China and the US. Where it comes from, I really don't know.
Richard, thank you so much. Interesting points. Richard Madden, their European Executive Chairman at DC Advisory. Now, on tomorrow's show, don't miss also our exclusive interview with Oscar Garcia Maceiras. That's the Inditex Chief Executive. I'm really looking forward to that interview. It's going to be a good conversation on future trends as they also celebrate 25 years of listing on the stock exchange. A couple of other things we're watching out for. Look, it's very clear that U.S. stocks are stalling because of what's happening in the Strait of Hormuz. Traders waiting to see whether hopes of a peace deal in the Middle East would translate into tangible progress. I'm looking at Brent around 105.70 a barrel, snapping a two-day decline. As again, Iran is assessing the latest peace proposal from the U.S. Up next, Bloomberg Brief.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
A cidade estava sitiada.
Isso ao começo eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro. People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Do
nisho talaki kun ahmata chuara pango ahmale pa manchang leña ay kun mamanya. Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures wavering as Iran says it's assessing the latest message from the U.S. Shares of Nvidia steady after a roller coaster ride on potentially a lackluster forecast and lots to parse in those earnings. And investors await jobless claims and PMIs following Fed minutes that showed a more hawkish committee. Let's get a check on markets around the world now. It's been a monster session across Asia, but particularly in Korea. Let's get to Alice French for the latest. Alice.
Good morning. Yes, as you say, we've seen some very solid gains in Korea today. The Nikkei here in Japan as well, recovering from its 5-day losing streak. And it's been all about tech today. Nvidia's sales forecast, I think, really driving sentiment there. Also some relative calm in the Forex and bond markets, helping sentiment too. Like I said, Nvidia has been a big theme, but here in Japan, seeing some amazing gains for SoftBank, actually its highest daily gain since 2000. And this is mostly driven by the news that OpenAI is readying for its IPO. And another data center company also readying to go public in the States. Of course, we know SoftBank, one of OpenAI's biggest investors with a 13% stake. So that's really been driving the benchmark. Let's see if it can keep it up.
All right, Alice, thank you so much. Now let's get over to London for a look at what's been happening across Europe. Here's Charlie Wells. Charlie.
Good morning, Vonnie. So some disappointing PMI data out of a number of European companies. That's kind of shifted the bond picture here. You can see behind me that 10-year UK yield down about 3 basis points. So a shifting picture as we see some signs of potentially slower growth, but also concerns about inflation. And that is really creating some push-pull factors in the bond market right now. Let's flip and talk about stocks. Let's look at that Euro Stock 600. So it has had a pretty good week, 3 consecutive days of gains this week. But this morning, really kind of struggling to find footing, slightly optimistic, just a little bit of an uptick here. We had some earnings reports, some conflicting reports, some companies reporting strong, some really struggling, particularly on that uncertainty coming out of the Middle East. So looking for that footing in the Euro Stock 600 today.
Charlie Wells in London, thank you so much. Yes, those comments from ISNA, from the student news organisation, semi-official, just changing the calculus a little bit in the last few minutes. However, we are seeing NASDAQ 100 futures pointing fractionally lower. We'll see if any of the good humour from Korea and from SoftBank out of Japan bleeds into the US session. But of course, we did get through that big risk event, Nvidia, pretty unscathed. And we'll see what that stock does today. Brent crude at 105 and change. So sentiment does continue to improve here in the crude oil market, so we're unchanged right now, but this is several dollars lower than we were at this time yesterday morning. I wanted to point to the dollar index. It keeps strengthening now, the DXY obviously versus some of the major currencies, but the BBDXY also strengthening quite substantially. We are seeing much more of an impact on other countries. So, for example, the Philippines and India in focus right now as their currencies really hurt through this process. We had Indonesia hiking by 50 basis points in a surprise move yesterday. And for separate reasons, the Korean won is even under the microscope at the moment because there's been so much foreign exodus of capital after so much gains in Korea. This is the bond picture. Again, we're seeing a little bit of relief, but as you can see, we have repriced, and that repricing looks to be sticking right now, particularly at the long end, with the 30-year still above 511. All right, let's get to some individual movers now. Here's Chloe Melly. Chloe.
Good morning, Bonnie. Nvidia shares are struggling for direction this morning. The earnings beat expectations, pointing to resilient, very strong AI demand. But at the same time, the outlook is raising questions among investors about the sustainability of that growth, especially given the rising competition facing that company. And so we are seeing shares down a little bit, but only slightly this morning. Moving on to e.l.f. Beauty, which has beat expectations with a very strong momentum in the skincare business. And so that is really helping the stock after some recent weakness, up about 10% there. And finally, the software company Intuit is down this morning in pre-market after disappointing investors and also cutting a big chunk of its workforce. And so that is raising further concern about this AI displacement in the software sector. And we're down almost 13% there for Intuit.
Chloe, thank you so much. Chloe Melly there will be back later in the hour. Also coming up this hour, a deep dive on NVIDIA results with Frank Lee of HSBC and more on the Fed's rate path with Abigail Watts of UBS. Let's get back to NVIDIA. Relatively muted trading in the pre-market, although we're pretty early on. We did see some whipsawing after the earnings report last night. The host of Bloomberg Tech Europe, Tom McKenzie, joins us now. So Tom, what will markets be seizing on today?
Well, for the moment, it's a repeat of kind of the quarterly earnings story that we've seen from NVIDIA in recent past, where they have come through with a beat and raise, and yet investors in NVIDIA say, hang on, couldn't you have done more? They didn't quite meet the toppiest, highest end in terms of some of the analysts' forecasts. They did beat the estimate, and they beat in the quarter that was reported, and they beat in terms of raising for the current quarter, where they expect to see sales of a little over $91 billion in terms of sales. So on most metrics, when you look at things like the gross margin at 75%, when you hear from Jensen Huang talking about the opportunities in physical AI as being colossal, when you look at the fact that they come through with a buyback of $80 billion, they've raised the dividend from 1 cent to 25 cents. On all those metrics, this is looking pretty solid. But maybe there's some profit taking. Maybe it didn't meet quite the highest end of the expectations, and there's a bit of a gap there. Maybe this also is a business that is maturing, particularly when it comes to the data center story, and that buyback for some will be a signal that this is starting to mature. Jensen Huang, again, pointing to other revenue streams coming in down the line in the future. So we'll see how the stock reacts through the session, of course. But to your point, largely unmoved, even as some of its partners, or at least some of the companies related to the robotics trade in Asia, performed very well in the session today.
Jensen Huang saying demand has gone parabolic. I don't know how much more superlative he can get with his rhetoric, right? I mean, that's literally the best that a company could hope for if they can manage to satisfy that demand. And of course, memory prices and so on are going up, but they're managing to keep margins high, Tom. How are they doing it?
Yeah, gross margins, again, of around 75% gross margins. They've got other revenue streams that are coming on board as well. So data centers, of course, is the key part of it. That's where the GPUs go. And by the way, the most sophisticated chip that's coming through, the Rubin platform that will start hitting production towards the back end of this year, the team at NVIDIA saying that already the demand for that is outstripping supply. So it's much more about what NVIDIA can do to meet that demand rather than demand slowing. But they also are seeing growth from the CPU business. That has come through strong. Of course, they've got their networking part of the business, their software, they've got their AI models, all of that coming to bear. And it's the sovereign part of the story as well that Jensen Huang says is going to drive momentum into the future. So, yes, there's competitive threats from the likes of AMD. There's competitive threats from the likes of Broadcom and Apple's, or I should say Google's TPUs as well, that increasingly hyperscalers are looking to diversify their exposure to these AI chips. But NVIDIA stressing that they have other parts and other units that are starting to kick into gear now, and that is how they're able to keep these margins at around that level.
Tom McKenzie, thank you so much, Bloomberg Tech Europe co-host. Over in Iran, the foreign ministry is saying it is assessing the latest message from the US as a potential peace deal remains in gridlock. Joining us now in Dubai is Bloomberg's Abir Abu Omar. Abir, how are we supposed to assess what ISNA is telling us, that Iran is assessing the latest proposal? Was there a fresh proposal, or what exactly is it assessing, and what gaps are getting narrowed, as ISNA is saying?
We're seeing a sense of deja vu, really, Vonnie, when it comes to the latest from the Iranian side, saying that they're reassessing a deal that was put through by the United States a few weeks ago. So essentially, to your question, not much has changed. This is the same 14-point deal that the United States had put through to Iran, suggesting a gradual reopening of the Strait of Hormuz, and then discussing the latter details between the two warring parties that have been going on for the past 78 days or so. And so essentially what the U.S. is asking of Iran is to pass through its highly enriched uranium. Iran, on the other hand, is asking for some of its assets to be unfrozen, oil unsanctioned, and those are the main elements that they have not been able to agree on over the past few months or so. And so in a nutshell, there's not really that much that has changed between the two in this latest proposal. Iran did say that it is reassessing the deal. It did not put through a timeline as to when it would respond. So we know that Foreign Ministry spokesperson Ismail Baqai said via semi-official news channels in Iran yesterday that it's looking at the deal again. We don't know when they will respond. And look, this comes after President Trump last week said that an attack against Iran is imminent as soon as Tuesday, but he was halted from doing that because of Persian Gulf countries, including the UAE, Qatar, Saudi Arabia, that had urged him not to attack Iran. The diplomacy could be back on the table, that a deal is still possible. What we also know is that the military chief in Pakistan, which has been mediating this since the start of the war, or mediating an end to the conflict and a beginning of a ceasefire that could last longer than for a short term. We know that the head of the military is visiting Tehran later on Thursday, so that could possibly bring about more conversations about a ceasefire. Look, on the Iranian side, the president came out, he said that coercion or coercing Iran into a deal is nothing but, and I quote, an illusion. And so things are standing pretty much where they were. That's why I started by saying this is a sense of deja vu, really. We wait and see what happens by the end of this week, whether attacks could be renewed. But at this point, both parties seem to not want hostilities to come back to the table and to catch up to the rest of the Middle East, Vonnie.
All right, Abir, Iran, through ISNA, saying the U.S. message has reduced gaps between the parties to an extent. That is Bloomberg's Abir Abu Omar there in Dubai. Now to other top stories trending on the terminal this morning. Samsung chip workers could soon get massive AI-fueled bonuses, averaging about $340,000 after the company reached a deal to avoid a strike. Some employees in Samsung's booming memory division may earn even more as demand for AI chips sends profit soaring. SpaceX has filed for what could be the biggest IPO ever. The filing revealed a nearly $4.3 billion quarterly loss, while seeking a valuation near $2 trillion. SpaceX is also giving Elon Musk overwhelming voting control and ties future stock rewards to ambitious goals, including Mars colonization and orbital AI data centers. Manus founders are exploring a $1 billion fundraising round to unwind Meta's controversial takeover of the Chinese AI startup. Beijing ordered the $2 billion deal reversed over concerns about sensitive AI technology moving to the U.S. Manus could relaunch as a China-based joint venture ahead of a Hong Kong IPO. Coming up, Frank Lee of HSBC joining us for a closer look at NVIDIA's results and forecast. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
This was an extraordinary quarter. Demand has gone parabolic. The reason is simple. Agentic AI has arrived. AI can now do productive and valuable work. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. NVIDIA is the platform of this era. Of all the platforms in the world, NVIDIA Compute supports the richest diversity of demand.
Shares of NVIDIA fairly muted at the moment after fluctuating as investors weigh the chipmaker's first quarter results. Joining us now is Frank Lee, Global Head of Tech, Hardware and Semiconductor Research for HSBC. So the big risk event out of the way for the week, potentially, Frank, I mean, it didn't end up turning out that way. Other things were a little riskier, but is this the new narrative now from NVIDIA that agentic AI has arrived and it's fine to compete in the CPU space just as it was in the GPU space?
Yeah, I think that's a great question. I think one of the problems with NVIDIA is that the last couple of quarters have been very strong beat and raises, but that's not enough. Earnings momentum and the overall AI GPU roadmap is not enough of a new narrative for investors to get excited, especially, I think, given the fact that if you look at the CapEx spending of CSPs, they now have to share the CSP CapEx with memory makers, with the overall networking guys, as well as the server CPUs. So we do think that this is the right step in terms of focusing on the server side. But we also believe one very significant takeaway from this earning result is how they reclassified their data center revenues to break down the CSP and non-CSP customers. And I think this is going to be a very important metric to follow going forward.
Right. Now, will people be laser focused on how each one grows, and then will they overreact if one doesn't grow enough, Frank?
Yeah, I mean, I think if you think about last year, they already set the wheels in motion because they talked about the enterprise and the sovereign AI. So essentially, these were non-CSP customers, but we didn't really see how that was progressing because up until the first quarter this year, over 60% of their revenue still looked like it was coming from the hyperscalers. Now that they're breaking it down, I think it's going to give more transparency to investors to see how the non-CSP guys are tracking. And I think that would be a more important catalyst to their potential re-rating.
How much of a risk to NVIDIA is hyperscalers starting to use proprietary chips?
I think for the moment, we haven't seen any slowdown yet. So it's not that their numbers are starting to slow down and they're missing, but the narrative is out there that they're not 90% of the pie anymore, that they have to split this pie with more players. So, that's why it's important that they establish a new narrative, which I think they've started to do this with this earnings season.
So we knew about Rubin Ultra, right? We knew that these were coming. Phantom maybe next. Are we going to hear anything new at the GPU conference that we're going to hear from Jensen again soon at? Or is this it now, Frank? Do we know what the future entails for NVIDIA for the next several quarters?
Right. So I think, one thing that's coming up is the Computex in Taipei. They've talked about, they're going to talk more about the server CPU. Agentic AI definitely has become a key focus, and we've seen CPU-related names, both Intel, AMD, and ARM do very well this year because of the increasing recognition that CPUs are back. And so I think they've also talked about 20 billion in CPU revenues. So that is a start. And I think right now the investors are going to probably want to see more details over the next couple of months, starting with Computex in a few weeks, to see what if they can give us more details about the TAM opportunity here.
Yeah, and what the next generation is going to look like, right? What about China? So obviously there was a lot of speculation, Jensen Huang getting on the plane at the last minute and so on, going off to China, but still nothing on whether China will actually allow NVIDIA's chips to be imported. Now, you've said in the past that you're not considering that at the moment, that it would be a nice, maybe marginal benefit potentially. Are you changing your mind on that at all?
No, I think the China angle is just too difficult to know how big that's going to contribute. NVIDIA itself continues to not put China orders into its forecast. And so I think we continue to treat the China as an optionality. And I think that's probably the most prudent way for investors to not really put any expectations into it. It's too difficult of a question to answer. I think there's a lot of sensitivities. It's not the U.S. government that's holding NVIDIA back. It's the China side that doesn't seem to be as receptive to buying NVIDIA chips. So I think this is going to be a going concern that's just too difficult for investors to have a clear view on.
Frank, I know you don't cover the company, but can I ask you about Samsung? Because that could have been a major risk event if the strike had gone ahead and continued for some time. It's been averted and the Kospi was up 8% today. Is it a big relief for the global supply chain that there isn't a strike at Samsung? And what does that say about how beholden we are to certain companies?
Yeah, I think one of the things that we see is that memory is one of the biggest beneficiaries in the last 6 months in the market. All memory stocks have rallied really hard because of this super cycle we're seeing on pricing. And it's only gotten worse this year because up until this year, the majority of the memory demand was strictly coming from HBM, which is really driven by AI servers. But now with agentic AI, the CPU demand has come back, which is putting an additional tension on the overall regular memory that's used in servers. So we do think this is an issue that will continue to be quite tight. So it is very positive to see that the strike issue has been averted because I think the downside would have been perhaps that we're going to see even more price hikes beyond what we've already seen so far.
All right, Frank, thank you so much for joining us today. And Frank upping his price target on NVIDIA most recently by several dollars to $325 from $295. That's Frank Lee of HSBC. Coming up, another CEO joining the chorus with a warning on AI-fueled workforce shifts. That and a look at what else is making headlines in your front page news. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse, that doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Verrett.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Vonnie Quinn in New York. Time now for your front page news. First up on Bloomberg, JP Morgan CEO Jamie Dimon saying the bank will likely hire more AI specialists and fewer traditional bankers as AI adoption speeds up. Dimon spoke in Shanghai from the JP Morgan Global China Summit.
People and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, it'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy people.
Next up, the New York Times reporting Cuba is telling the Times it's ready to negotiate with Washington. In an interview with the newspaper, Cuba's ambassador to the United Nations said Havana wants talks, but the Trump administration is creating pretexts for military action. Ambassador Guzman said Cuba is open to economic and political change, but doubts Washington's intentions. And the Washington Post reporting the Trump administration saying it doesn't need Congress to approve President Trump's planned 250-foot arch in Washington, citing a century-old authorization for a similar project that was never built. Surveys and testing work has already begun near Memorial Circle. Let's take a look at your macro picture as we head into the Thursday trading session with NVIDIA results behind us, the Samsung strike over, and lots of relief in this markets. We have S&P futures pointed higher, Nasdaq futures wavering slightly. We'll see what the reaction to the NVIDIA results was. It's not going to be exuberant in either direction, it looks like. The dollar index just slightly stronger now, and the 10-year yield down another basis point, but still pretty elevated and well above 450. All right, coming up, we're looking ahead to jobless claims and PMIs, also reviewing those FOMC minutes and the direction of the committee with Abigail Watt of UBS. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some
some point the question was who.
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation.
As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Stock futures wavering as Iran says it's assessing the latest message from the U.S. Shares of NVIDIA steady. It had a roller coaster ride, though, on potentially a lackluster forecast. And investors awaiting jobless claims and PMIs following Fed minutes that showed a more hawkish committee. So let's take a look at those markets then. We have Nasdaq 100 futures pointed higher. The Kospi and Kosdaq just raced ahead today after the Samsung strike went away. So we had the Kospi up 8%. We'll see if some of that optimism bleeds into the US, particularly with these IPOs potentially on deck. To that end, SoftBank also up 20% in Japan because obviously it has a stake in these two big companies that are about to IPO. Brent crude continues to fall after we got comments via ISNA, the student news agency, that Iran is assessing the latest message from the United States and that it does address some gaps. Brent crude at 104 and change now, and the dollar index just a little unchanged there. We also have the bond board here with not much movement. If anything, just a little bit more relief in this bond picture. The 30-year yield below 5.11 now, the 10-year yield below 4.57, and the 2-year yield at 4.05. But we have repriced, and we seem to be sticking around the new levels. Let's get to some individual movers now. Here's Chloe Melly. Chloe.
Good morning, Bonnie. NVIDIA shares were slightly down earlier. Now they are slightly up, so struggling a bit for direction. We had earnings beating expectations, but at the same time, a potentially lackluster forecast that is raising questions about the sustainability of that growth going forward. So we're seeing a little bit of hesitation there in the market. Moving on to e.l.f. Beauty, which is a big mover today, up very strongly in pre-market trading after earnings beat expectations, with, in particular, very strong momentum in the skincare business, and that is helping boost the stock after what has been actually a fair bit of weakness recently for e.l.f. Beauty. And finally, let's end with Intuit, the tax preparation software company. It had results that disappointed investors and also cut a big chunk of its workforce, joining a bunch of other tech and software companies in making those major layoffs and raising concerns around this AI displacement and replacement in the software sector. And so we're down more than 12% for Intuit this morning.
All right, Chloe, thank you so much. Some big moves today on deck, it looks like. The latest Fed meeting minutes showing more officials considering potentially rate hike scenarios, but at least taking out the easing bias out of the language. That's ahead of PMIs and jobless claims later this morning. Bloomberg's Van Ram joins us now. So, Van, did the FOMC minutes change the calculus as Kevin Warsh takes the helm?
Morning, Moni. I don't think that the markets have recalibrated enough to the prospect that rates may actually have to go higher from here. Because if you look at what is priced into the markets are thinking there is, you know what, a 50% chance that rates may go up by the end of the year. I don't think that is very sane pricing given the current macroeconomic environment. If you look at the Taylor rule rate, it would suggest that the current Fed funds rate is exactly where it needs to be, meaning it's neutral at current levels. But if you look at the U.S. economy, how resilient it is, and the inflation dynamics that stem from the Iran war, I think that rates need to go higher, and that perspective is completely lost on the markets, which is why I think that the 2-year yield is underpricing where the Fed will eventually get to at 405. The market is underpricing the risk. The 2-year yield needs to be more like at 425 or 430 thereabouts.
Then Jamie Dimon told Haslinda Amin that we're going to see much higher rates. What time frame is he talking about?
Well, I would imagine in the next 1 to 1.5 years would be his time frame. But I think that we've already seen a considerable sell-off at the long end of the curve, whether it is in the UK, whether it is in Germany, whether it is in Japan or the US. And I think that, you know, the long end rates, there is opportunity to scale into duration, because I think that much of the risks are already in the price tag, especially in an economy like the UK, where the markets have sold off mercilessly. So I think that, you know, there is an opportunity to nibble into duration, albeit there is a slight risk that, you know, you'll have to scale into it because it's not going to be one level that cuts it.
All right, Ven, thank you so much. Bloomberg's Ven Ram joining us there. Joining us now is Abigail Watt, US economist for UBS. Abigail, can we start there? In fact, let's have a listen to what Jamie Dimon had to say.
The notion that somehow people said they'll never go up is the wrong notion. And so companies like us prepare for higher rates, lower rates, and, you know, figure those things can happen. So.
The thing is, they're at the highest level in decades. I mean, that is where the surprise could be.
I think they could be much higher than they are today.
How does Kevin Warsh take the helm of a Fed when there's that sentiment out there and a lot of pressure for him to hike? And that probably ties in with what he came up as, which is a conservative economist who, you know, leans hawkish.
Yeah, look, I think it's a great place to start the conversation. Thank you for having me join this morning. I think the thing for Kevin Warsh is this is a really difficult time for any chair, I think, to be taking the helm of the FOMC. The fact that we're starting to see kind of inflation pressures building again in the US economy and concern over the potential for inflation essentially remaining away from the FOMC's target already for a prolonged period of time. And I think you have seen that kind of concern building across the committee at this point as well. I think as well, though, I think we have to caveat here with the fact that, you know, there's still concern lingering around the labor market at this juncture in the US economy as well. We have seen an improvement in the kind of run rate of jobs growth in recent months, but the data have been very volatile and it has been quite difficult to get a handle on the state of the labor market as well. So I think for the FOMC just now, and think for kind of Warsh coming in as the new chair, I think there's going to be a lot of kind of conditionality in terms of how they're thinking about the kind of path for policy. I think we saw that in the minutes yesterday. Essentially, every kind of key paragraph of the minutes, which was referencing, policy making, essentially, was heavily caveated with, how events in the Middle East progress. And I think that's the key thing here is that given that uncertainty, I think that the committee feel like policy is well positioned. And to me, that essentially means they're potentially going to be on hold for longer. But it does potentially widen the distribution of risks to rates as well at this juncture.
Yeah, absolutely. I mean, inflation is well above target, and although we're seeing energy prices a little lower today, and, ostensibly the Fed is supposed to look past energy prices, they are pushing a little bit on inflation. We already had an inflation problem, Abigail. How can anybody think about cutting right now? Is the labor market about to show us some severe weakness?
I think that's the key thing that we saw in the minutes yesterday is that, that conditionality in terms of what would potentially keep participants willing to kind of lower rates was conditioned heavily on solid evidence that the labor market was weakening. And I think that is something that, means that it means that we need to see kind of a cumulative loosening in the labor market. Essentially, you need to see evidence building that there is a need to lower rates given the labor market. And then on the inflation side, I do think the dynamics are going to matter in terms of the components of inflation that are driving the kind of stickiness in inflation inflation, right? So if we continue to see kind of goods price inflation running above levels that it was kind of pre-pandemic, I think the kind of pass-through of tariffs in the second half of the year is a key thing that I think would be needed to kind of condition the potential for rate cuts. I think the other thing is watching for potential upside risk to inflation beyond expectations here, and that's largely going to be predicated on the potential for further supply disruptions. If we see kind of broader supply chain disruptions occurring because of the events in the Middle East, I think that would be potentially an upside risk to inflation at this juncture. And I think that balance between what's happening in terms of the inflation dynamic and the labour market dynamic is going to be really important for the FOMC when we think about the potential for kind of hikes, but also the potential for cuts at this juncture.
Abigail, will he go on to the committee trying to make the argument about productivity and investment? In other words, the easier financial conditions are, the more investment that can happen in the United States. And look, we're seeing so much AI investment, you know, we should keep that going. And the only way to do that, to the best of our ability, is to lower rates.
Look, I think this is a conversation you've already seen, you know, occurring within the FOMC committee, right? I think this is something that the debate is kind of already happening within the FOMC, and thinking about the potential for AI to be disinflationary, and this idea, as you say, of kind of allowing rates to be lower and allowing that investment that could turn into something that boosts the supply side of the US economy as kind of as a reason to potentially lower rates at this juncture. Now, I think the question is, when we think about kind of the impact of AI is kind of whether the kind of demand for a number of the components that go into that investment is outstripping supply, and that could be potentially in the near term more of an inflationary driver than it is a disinflationary driver. And I think for the FOMC, they're really going to have to think about that kind of balance between that kind of near-term dynamic and the potential longer-term dynamic of AI being disinflationary. So I think in terms of the kind of arguments that could be made by a new chair, Kevin Walsh, this could be one that he potentially makes to the committee. We did hear him making this point essentially in a number of interviews before he was nominated, and we did hear this in his congressional hearing around this idea of potentially you know, AI boosting the supply side of the economy and allowing rates to be lower. But I think that's a conversation that's already going on within the committee.
So we've had a lot of banking CEOs on in the last day or two basically talking about jobs going away, and they've phrased it in various different manners, but that's been the message, right? Jobs will eventually go away, and whether it be through attrition or actual layoffs, AI is definitely going to take some of the older jobs, right? So are we on the cusp of massive layoff announcements, and will it be due to AI, or are we going to see, you know, a constant drip of, you know, restructurings and 10,000 jobs here and 5,000 jobs there, the type of thing the economy can absorb?
Yeah, so we actually just published a note overnight on this, and this idea of kind of AI disruption in the labour market. And, you know, our sense is that, you know, we see a lot of churn in the US labour market, you know, all the time. And I think the question is kind of how disruptive is AI relative to the kind of natural churn that you see in the US labour market on a monthly, quarterly basis already. Now, our sense is that you do see disruption from AI. We think this is something that could potentially lead to kind of job destruction. And I think the key thing to note, though, is that we don't think that this would ultimately be, you know, leading to necessarily a structurally higher unemployment rate. And that's because at the same time as you see that job destruction, you also see potential for job creation. And I think the question is kind of those dynamics between job destruction and job creation. I think so far we've seen, you know, as you say, like drips of layoff announcements around AI, accounting for only around 6% of the Challenger layoffs last year. You know, the reason was AI. So a relatively small share so far being attributed to that. I think the question is whether we begin to see kind of more of that disruption coming through. But I would caveat this with the US labour market is constantly seeing kind of that churn as well.
All right, Abigail, thank you so much. Abigail Watt of UBS joining us there. Now to other top stories trending on the terminal this morning. Iran says a US proposal has narrowed gaps toward a peace deal, but Tehran still wants fighting to end on all fronts and its frozen assets released. President Trump says talks are in the final stages, while warning attacks could resume if Iran rejects US terms. Manus founders are exploring a $1 billion fundraising round to unwind Meta's controversial takeover of the Chinese AI startup. Beijing ordered the $2 billion deal reversed over concerns about sensitive AI technology moving to the US. Manus could relaunch as a China-based joint venture ahead of a Hong Kong IPO. JP Morgan CEO Jamie Dimon says Zoran Mamdani's tax hike plans could drive businesses and talent out of New York. Speaking with Bloomberg from the JP Morgan Global China Summit in Shanghai, Dimon warned that anti-business policies may benefit rivals like Texas, but said he hopes Mamdani succeeds. Coming up, competition fears creeping in. We'll take a closer look at NVIDIA's results and forecast next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This was an extraordinary quarter. Demand has gone parabolic. The reason is simple. Agentic AI has arrived. AI can now do productive and valuable work. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. NVIDIA is the platform of this era. Of all the platforms in the world, NVIDIA Compute supports the richest diversity of demand.
Shares of NVIDIA up just very modestly, taking a little breather in the pre-market after some fluctuation following the chip maker's earnings. Let's bring in Mandeep Singh of Bloomberg Intelligence for more. Mandeep, was there anything about the earnings report or the conference call indeed that surprised you yesterday?
Well, they changed their disclosure. So, when a company changes their disclosure, it's always some sort of, reasoning around why they had to do it. And look, I can see how they want to show the hyperscale portion separately versus the neoclouds and the sovereign portion of the revenue, which was a very good number, in the print last night. The neoclouds and sovereign portion actually sequentially accelerated compared to the hyperscale portion. But still, I would say that was a real surprise for me. Gross margins holding up 75% in the face of memory costs going up is quite a surprise. And it just goes to show how NVIDIA customers continue to go for, the demand that NVIDIA has when it comes to, getting the supply from NVIDIA and not substituting it with TPUs or any other chips.
Yeah, I mean, opening up their books like that, does it set them up for more risks and potential disappointment on the part of investors if each metric doesn't now continue to grow?
Well, so the numbers obviously are getting quite big, and the growth rates they have, over 80% growth. It's phenomenal, at their scale, almost a $400 billion business at this point of time. But what they're saying is this is probably one of the largest addressable markets ever. And, there is still a lot of runway where, a number of players can do well. Just because TPUs are doing well doesn't mean NVIDIA is losing share or its gross margins have to come down. And that's what I think the message was last night, that all of these guys, it is a rising tide that is lifting all boats, and they can continue to do well for a while.
And of course, they're taking a leaf out of Masayoshi Son's playbook, which is paying off for him right now in the sense of they're investing in some of these companies, and Anthropic saying it's on pace now for a first profitable quarter because revenue surged. What does that mean for NVIDIA and just the broader universe?
Yeah, I mean, NVIDIA actually called out Anthropic being one of the new customers for them because, they were indexed more towards OpenAI and other model developers before. And now with Anthropic doing so well on the coding agent side, that is what underpins, the profitable quarter you alluded to. But there's no doubt that, NVIDIA will also benefit from Anthropic being successful and having the kind of demand that they have seen for their tokens. And it will trickle down to, all of the chip providers, whether it's Google TPUs, Amazon, and also NVIDIA now.
All right, Mandeep, thank you so much. And just to let everyone know, SoftBank up 20% today in Japanese trading. That's Mandeep Singh of Bloomberg Intelligence. From one hugely valued company to another, SpaceX filing for its IPO, valuing it at as much as $2 trillion. Its unprecedented size set to transform both the public and private markets if it succeeds. Joining us now is Bloomberg's Neil Campling. So, Neil, did you have a chance to look through the filing? What did it tell us? Is it possible that it will succeed?
Well, 2 trillion obviously is a very large number. You've just been mentioning about Jensen Huang talking. He's talking about a $100 trillion opportunity in terms of industries about to be disrupted by AI. Well, we heard last night by looking at the S1 filing that we're talking about a SpaceX who believe that they are facing a $28 trillion opportunity in terms of their technologies. One of the things that is going to be a question for investors potentially looking at this deal is the losses and the revenues. Now, the revenue growth in the filing showed it grew by about 17% year on year. In contrast, the losses are up nearly 1,000% year on year, as the investments required into this ecosystem are absolutely enormous to fund future potential opportunities. I thought one of the most interesting facts, and of course it's also related to the pay structure that Elon Musk will face, one of those is to have 1 million people on Mars in the future, which is one hell of a target, and clearly there's going to be a lot more investment required until we get to 1 million people on Mars or the moon, as is part of the ambitions that Elon has.
Yeah, absolutely. And also we'll have 2 public companies listed at that point, so there's key man risk for both. It will be interesting to see how it all pans out. Now, OpenAI looking at an IPO, but there's plenty of unknowns there, even after that victory over Elon Musk, which undoubtedly won't change anything either way. Talk to us about the OpenAI IPO.
So the OpenAI IPO, again, I think Bloomberg News has reported that we're expecting an IPO later in this year. And of course, Anthropic have also come out overnight saying that they are on course for doubling their revenues quarter on quarter. So I think investors will be looking at the growth of these 2 powerful agentic AI systems to see whether they're matching each other in terms of revenue, the growth opportunities, and there'll be questions clearly over corporate governance for OpenAI and the partnership with Microsoft and how that looks in the future in terms of the technology stack and in terms of the growth potential going forward. But we're looking here to potentially 3 massive IPOs in tech coming up this year. So it's another one to look forward to when that filing drops in the next couple of weeks, we expect, Bonnie.
Yeah, soon all of that private information will be public. Have fun. Neil, thank you so much. Bloomberg's Neil Campling. Coming up, we're going to get you set up for your trading day. We have data and earnings on deck. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now look at what's ahead today. First up, we get jobless claims data coming at 8:30 a.m. Eastern and PMIs at 9:45, so plenty of data. Earnings from Walmart and Deere, they're both reporting before the bell. Zoom among companies reporting after the market close. And then we get more of an idea of what's happening behind the scenes at the Fed. We get some Fed speak from Austin Goolsbee and Tom Barkin later in the afternoon. Let's take a look at your trading environment. Now, we've had a little bit of mixed messaging coming out of Iran and the United States, but we do have Brent lower, so that will tell you the tone has been taken down. Iran saying that it is about to respond to the latest message from the US, and some gaps have been addressed, and that appears to be calming this market. Nasdaq 100 futures deciding what direction to take. That's it for Bloomberg Brief.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
There's still this institutional bias in favor of the U.S. equity market going higher.
The bull market still deserves the benefit of the doubt.
We eventually will see AI adoption spread.
It's accelerating, and it's not going to slow down.
This technology is not going to stop, so we have to invest in it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Thursday, shooting for the moon. Elon Musk, SpaceX fighting for what's set to be the biggest IPO in history. As Sam Altman's OpenAI is gearing up to do the same in the coming weeks, NVIDIA's Jensen Huang is pitching investors on the next phase of growth. Stocks holding steady this morning.
Look, the race for AI is profoundly changing, and we can feel this with respect to just how it's being adopted. We're hearing about NVIDIA's Jensen Huang saying we now have the agentic era of AI. You hear companies talking about where they're deploying staff into AI and where they're trimming elsewhere. And the scope of trying to raise money into this peak frenzy for AI seems to be escalating. The idea that OpenAI could be the biggest IPO in history, more than double what the previous record was, which was Aramco, gives you a sense of the size and scope of the moment.
3x Alibaba as well. Just unbelievable numbers. The tech story is changing. We're going from buybacks to capex, from shrinkage to tons of supply. I just wonder what that means for the investment implications for the next 12 months.
When you're talking about supply, it's, yes, on the data center side, although there still seems to be demand on that, but there's supply when it comes to just the stocks available, and the fact that suddenly, after years of shrinking the stock market, we're suddenly ballooning it with potentially what could be one of the top 15 size companies ever that is coming as an IPO with a sort of unproven track record. Yes, it is a relatively new company, even though people are sort of weaving it into the fabric of their companies. There is so much unknown, including the destination, right? So it just gives you a sense of race to something that you think is going to be great for a valuation that you think is going to be right. There's a lot of uncertainty.
These companies are huge. We've done a lot of work in private markets over the last few years. Looking at the bond market this morning, need to talk about fixed income as well. 2s, 10s, and 30s. 2s. Let's talk about the front end of the curve. And the Federal Reserve minutes. I have to say this, a bit of daylight between the minutes and the consensus that the chairman was meant to represent in the news conference.
When I read the minutes, I thought, why didn't they drop the easing bias, given how many people raised concerns about it? What was the argument for keeping the easing bias? Because ultimately, I heard a lot of argumentation about how much this was going to be a higher for longer type of scenario. It would take much longer to get to that 2% goal. Yes, there was some discussion of AI distorting some of the inflationary inputs. Is that enough to offset it? Do you want to just discount that? To me, the idea that many different people wanted to drop the easing bias and that they didn't Is that a hawkish tell or a dovish tell that even amid all of that discussion, they still kept it in there?
I think you know what Jamie Dimon thinks about interest rates based on the comments he offered to our colleagues over in Asia overnight. They could be much higher than they are today. Jamie, of course, is not a rate strategist. He's a risk manager, and that's a risk we've all got to talk about.
Which is why you haven't seen as much buying step in when we breached some of the highest levels going back to 2007. On the 30-year, right now, you do have a little bit of buying. There is a feeling this is a global inflationary push and that there isn't the will at central banks to really push back. There is a really interesting irony here that we're talking about this incredible fundraising round that we're going to be getting from all of these tech companies at the same time that the cost of money is going up. Why is the cost of money going up not an impediment to all of these financing plans? Because right now it doesn't seem to be. It's a dissonance. It's a breakdown of the traditional relationship with respect to rates and financing activity.
Let's turn to equity markets just briefly. Equity futures this morning, stable, just about unchanged. Another price target just dropped into my inbox. 80.20 on the S&P 500. Chris Harvey, CIBC. He's looking for 80.20, 8,020, and saying this, EPS stronger than expected. How many times have we read that line following a price target raise to the S&P 500 in the last 2 months?
It's all about the earnings. When you take a look at just NVIDIA, to give you a sense of how much earnings have increased, they doubled their quarterly sales since the first quarter of 2025, from 40 billion to more than 80 billion. It gives you a sense of how quickly some of these companies are rapidly growing. Even Target, though, outperforming. You're seeing companies, I'm sorry, Tom Keene, adjust and adapt and start to push forward in order to monetize a moment, even if the economy isn't going gangbusters.
Walmart up next, delivering numbers a little bit later this morning. Coming up this hour, we'll catch up with Peter Chair of Academy as the market gears up for a series of mega IPOs. Vivek Arya of Bank of America on the lukewarm response to NVIDIA's blockbuster results. And Vishal Kandudra of Morgan Stanley as Fed officials leave the door open for an interest rate hike. We'll begin this hour with stocks edging higher as investors digest the latest earnings from NVIDIA. And the IPO pipeline is heating up as SpaceX and OpenAI make moves to go public. Peter Chair of Academy Securities joins us around the table for more. Pete, good morning, good to see you.
Hey, good morning.
You saw that opening exchange that we just had around these IPOs. The tech investment story has changed. We've gone from buybacks to lots of capex. We're moving away from shrinkage towards maybe tons of supply. What does that mean for the investor in this space?
You know, right now, I think it's all hands on deck. Everyone's growing, everyone's spending the money to do it. And you were asking the question, you know, what's the disconnect? I think right now there's so much money to be made in the AI space that whether it's 4%, 6%, 8% on interest rates is trivial. Same sort of thing, I think we've been talking about this for the last little while. Electricity prices, right? You and I are being affected, but the AI data centers, they could care less, right? It's such a trivial input relative to what they're making. So I think we were this tale of two economies. You've got the AI data center growth, it's booming, everyone's trying to get into it, everyone's rushing headlong. You're seeing more and more companies get into it. Just also why I think NVIDIA's earnings aren't as important, because there were so many tells what's going on. But the rest of the economy is kind of languishing, it feels like. The jobs aren't there, and the degree of uncertainty, I think, is hitting spending.
We'll spend some time on that in just a moment. Let's just talk about potential constraints. Lisa gave a nod to them. You mentioned energy. That's been widely discussed. Lisa mentioned capital. What are the prospects of capital constraints, given how much money is being demanded right now, both in fixed income and in equity in the coming year?
So one thing I think we're seeing is a little bit of a shift where people are much more comfortable owning corporate credit than treasuries. And I think treasuries have become a very generic asset. I think that's one reason you see some pressure on treasuries. As far as I can tell, when we're talking to our large asset managers, they're all in on credit. They love credit. It's cheap. You're getting the higher yields from the treasuries, and you've got a compelling story there. And you're even seeing some of this play out in the super sovereign space. And, you know, kind of wonky to even talk about some of the super sovereigns, but they are trading at their closest spreads ever to U.S. treasuries. So you have, I think, this kind of not aversion to U.S. treasuries, but it's just a generic asset, right? If you're in Germany now, buy bunds. If you're in Japan, buy JGBs. So I think treasuries don't have as much interest, but people are piling into credit, and they're looking at these opportunities saying, well, maybe I want to own XYZ's bonds. I'm getting extra 50, 60, 80, 100 bips, and I think the risk is better, and for credit people, it's the only way to play some of these AI stories.
And it seems like right now the bigger risk is inflation rather than any kind of hit to growth. Nobody is pricing in recession. No one's pricing in some sort of serious downturn. Do you agree that credit and equity are better hedges for the inflation risk, and that is where people should be looking?
So I like credit on that perspective. I think it's kind of an interesting place to be. Again, we're not seeing recession, though there is this tale of two economies. Again, I feel like what you're seeing is in the rates market, if you went back 3 months ago, and I thought before the war started, we could cut. And if we cut, even if it was an aggressive cut, we could control the long end of the bond market. Right now, I don't think we can cut without controlling the long end of the bond market. I think if we cut rates right now, we would lose control over the long end of the bond market. So I think we're higher for longer, and that's here, it's across the globe. Defense spending's ramping up everywhere, so I think you've got some pressure there. But again, I still think we're in that 3 to 5% inflation period. There is a lot of excitement. I think the bond market has one more leg to higher yields, because the one thing people keep arguing to me is, well, we're going to get all this benefit from AI. We're going to get kind of deflationary pressure from AI. That may be true, but I think the next year to 2 years, it's all about the cost of build-out rather than the benefits of AI.
You talk about the tale of two economies and this idea that we could get significantly higher rates as a result of this push higher. I just wonder at what point the stories start to come together. It seems like either there's a bubble in human capital or there's a bubble in the cost that companies are paying for tokens and access to some of these AI models. They are justifying the increased cost by increased productivity and then laying off staff in order to free up the cash. At what point does that become an unsustainable equation?
I think over the next 6 months to a year, people will actually, for the first time, really be able to say, here's what I spent on tokens, here's what I kind of could have spent on employees, and make that decision. Because until fairly recently, right, it was all kind of, who knows what we're spending. You'll get these kind of deals. So I think this will actually let people to take a closer look, and it will be scary if AI turns out to be much cheaper than people. The problem is, someone's cost is someone else's customer, and I don't know where all that heads. I had to write about UBI or Universal Basic Income 2 weeks ago because it felt like this is a topic that's going to come up. I really kind of hate the concept, but you can clearly see a path where if we are doing these layoffs, and unlike the .com where I think everyone was excited, there is so much angst around this from a personal level. I don't think we've ever seen anything like this. And we're heading into an election season, and the country's already very divided on many things. AI, electricity generation, these just seem to be massive political risks.
We just skipped to the final chapter of the book, but since we're there, let's flick a few pages over. What's the policy response going to be to all of that, if that is indeed the end destination?
I think you're going to get politicians who are going to fight electricity, who are going to fight data centers because it's populist. You're going to get some who decide to embrace it, and I think you're going to see a shift in where people are moving this country. I think this is a part of our overall, as we reindustrialize, I think you're going to see the heartland of America do very well. I think you're going to see, between the Appalachians and the Rockies continue to do well. Last year, I think, was the first time in 30 or 40 years that part of the country beat the rest of the country in population growth and GDP growth. I think you're seeing some of the low per capita red states in particular embrace these things. They're like, hey, we want the jobs, we're comfortable, we will deal with the pollution, we will deal with the after effects of some of these. And I think that you're going to see an opportunity to reshape where people live and the demographics in this country. And if anything, on a real estate side of things, I'm very bullish on the Great Lakes region, on the heartlands, the traditional manufacturing, because they have the fresh water. The weather's actually conducive to this. They've got the engineering schools. I think that could be one of the shifts that we see over the next 5 years, is this kind of flood to the coasts and to the deep south changes a little bit as people realize, hey, there are places to do this. And if we're going to do industry, we need electricity and we need fresh water. And that's an abundance in some of these regions that people have forget.
Now we're getting down the rabbit hole. What are you bearish on? You alluded to it. What would you be short in that kind of world?
Right now, I'm very cautious about anything that requires a deep spend from a personal standpoint. I think even the people with jobs are looking carefully at their spending. So I think construction, homes, this affordability is so real. And again, that kind of drives me. I think some of the really expensive places that, grew up very quickly, especially with the, COVID sort of experience, I think I would avoid those areas. I think there's a chance that people decide this was too expensive, I made bad decisions. Where I live, I actually live more in the swamp than on the ocean. And you have some potential for that to
That's not personal.
Sorry about that. But I think I want to be a little bit bearish there. I think some of the growth areas done, and I get really uncomfortable with where the spending is going to come from. And once again, I'm going to spend this weekend doing something completely boring, but looking through the jobs data.
Sure.
Because so many people are now asking, why is there a disconnect? Why do we see nothing but doom and gloom on jobs, but the last two headline reports from NFP have been really, really strong?
What's your gut tell you?
That I think it's once again very overstated. I think we're, to me, one of the biggest mistakes that the BLS does is this birth-death model, which tries to estimate jobs created by new companies, they continue to look at EIN or employment identification number applications to judge that. And I think we live in a world where EIN, kind of like law school applications, go up when people are worried about their jobs. If all of a sudden you're like, well, maybe I'll drive Uber on the side or I'll do something. There's whole companies now, I can't remember, someone just told me, one of the big fintechs, they have a whole setup. You go click yes, it sets you up in an LLC, it gets you an EIN, you can do all your taxes and get all that. So I think we're once again making this mistake and seeing, oh, people are creating new businesses. I think it's much more, people are so nervous, they're joining the gig economy to supplement their income.
This was a depressing start to the program, Pete. We
sorry
appreciate
about
it.
that.
Thank you, sir. No, thank you. For the chair.
I do like
Cannabis
space.
Securities. It's a lot to think about there, Pramo, on this technology revolution that's taking place in this country and around the world.
Yeah, and the CEOs of companies are taking different approaches. You have the Standard Chartered approach, talking about the low-value human capital, which generated a lot of backlash. Or you could just say, look, you might not like it, but this is the world we live in, and we have to play ball. And so the question is, as a society, how you sort of message this, and how do you create a network so that it doesn't end up with the same kind of outcome as some of the more pernicious sides of globalization?
I'd say if you don't want the backlash, don't do what Standard Chartered did. And based on the reports I've seen from Meta, where basically now they're training the AI on the habits of their own staff to ultimately, possibly, replace them further down the road. I don't think that's the message you want to be sending to the general public right now.
It's a morale killer. It's also a PR killer. At the same time, more companies are doing it because for them to transition to a more AI-based infrastructure, they've got to prepare for it using the data that they're getting from their current employees.
Equity futures this morning just about unchanged on the S&P 500 with an update on stories worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Good morning, John. President Trump saying the U.S. is in its final stages of the war with Iran. Trump maintaining that the U.S. would resume attacks in the coming days if Iran didn't agree to his terms. Iran's president has insisted the country was not on the brink of giving in. A majority of Federal Reserve officials warning the central bank would likely need to consider raising interest rates if inflation continued to run persistently above their 2% target. In the minutes from the last FOMC meeting, many called for the Fed to drop its easing bias and signal its next move could be a rate hike. And Samsung could distribute a bonus of up to $40 trillion to chip employees this year after the company struck a deal to avert a strike. Employees will receive on average 513 million won, equivalent to $340,000. The bonus program will continue every year for 10 years as long as certain profit targets are met. That's your Bloomberg brief. John.
Yahira, thank you. More from Yahira later this hour. Up next on the program, Wall Street raising the bar for NVIDIA.
The narrative is out there that they're not 90% of the pie anymore, that they have to split this pie with more players. Earnings momentum and the overall AI GP roadmap is not enough of a new narrative for investors to get excited.
That conversation up next with Vivek Arya of Bank of America, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
In the next hour, another read on retail in America, the ultimate read. We'll hear from Walmart at 7 a.m. Eastern Time, around them. We've already heard from Target earlier this week, the best sales growth in 4 or 5 years. TJX raising its sales growth expectations. Carver in the restaurant business raising its annual sales outlook. So far this week, if you're looking for pockets of weakness, I know it's cherry picking season, whenever it's earnings season, but I can find you a couple of decent stories so far this week.
And the guidance from a lot of these retail-focused or consumer-focused companies has been that the consumer is still resilient. They're still spending. Do we get the same thing from Walmart? The key tell to me is how much can they raise prices, right? How much are they being driven in terms of any kind of increase in sales from volume, and how much is it being driven by increases in prices that they are able and willing to pass along? And that ultimately might give a sense of how much inflationary pressure there is under this resilience.
Equity futures right now into that, positive by 1/10% on the S&P 500. Decent gains in the last 24 hours, snapping a 3-day losing run on the NASDAQ, going absolutely nowhere. Decent numbers from NVIDIA, but that stock can't catch a bid this morning. Under surveillance this morning, Wall Street raising the bar for NVIDIA.
For the moment, we haven't seen any slowdown yet, but the narrative is out there that they're not 90% of the pie anymore, that they have to split this pie with more players. Earnings momentum and the overall AI GP roadmap is not enough of a new narrative for investors to get excited. Agentic AI definitely has become a key focus.
So here's the latest this morning. NVIDIA shares flat in the pre-market, up just 0.6% after the chipmaker's big earnings beat was met with skepticism from investors. Vivek Arya of Bank of America raising his price target to $350, writing, "We ignore the noise and focus instead on NVIDIA's unique full-stack positioning in the largest and fastest growing tech market of all time." Vivek joins us now for more. Vivek, thank you for making time for us this morning. When you say noise, what are you talking about?
Sure. Good morning, John. So I think there is fundamentals and then there is positioning. When you look at the fundamentals, they are off the charts. But the positioning tends to be rather full because this is the largest company in the S&P 500. But let's talk through the fundamentals first. Results were exceptionally strong. Sales are growing over 80%. I don't know of any other multi-trillion-dollar company that is growing sales, and this is their third straight quarter of acceleration of sales. The sales are very diversified across hyperscalers, across neo-cloud, sovereign, on-premise enterprise, and increasingly the edge AI, the robotics opportunity. Gross margins are holding up extremely well at 75%, despite all this memory price inflation. And then they also raised their dividend by a factor of 25. So now the dividend yield is actually higher than Apple's dividend yield. So I think from a fundamental perspective, NVIDIA is doing everything right. But the positioning aspect is sometimes what weighs on the stock, because 8 out of 10 investors own it and own it in reasonable size. But if you look at the stock itself, it has outperformed the broader S&P 500 over any 6 or 12-month period. So very strong fundamentals, but kind of full positioning, and that's always kind of the tug of war with the stock.
There is an additional risk factor that you acknowledge beyond just positioning and ownership. You say this, that hyperscaler customers have the desire to deploy more custom chips in lieu of expensive and potentially supply-constrained GPUs. You note that, Vivek, as a risk factor. What's the biggest counterpoint to that thesis in this market?
Sure. So if you look at any hyperscaler, they have a mix of workloads, right? There is a lot of internal workloads. So for example, if you're Google, there's a lot of internal workloads that have to support search and YouTube and Maps and other Google properties. But then Google also has a very large and growing public cloud. Same thing with Amazon, same thing with Microsoft. Right? Meta is almost all internal workloads. So usually for internal workloads, what we are seeing the hyperscalers do is use a lot of their internal custom chips. But for a lot of the public workloads where the infrastructure needs to be very flexible, because you just don't know what the customer's requirements are going to be, that is where you tend to use a lot more GPUs from NVIDIA, because it's an exceptionally flexible architecture. It is basically plug and play. So overall, from an industry perspective, NVIDIA is keeping 70 to 80% of the value of this industry. But if you have an industry where you have 500 to 600 billion of sales that can grow over to $1 trillion of sales, even a 30% of that industry is still a lot of money. So as the size and scope of this industry grows, I think you will see these two phenomena concurrently, where you will see the hyperscalers continue to adopt a lot more of these custom chips for their internal workloads and sometimes for external workloads. But for the most part, we think that the public clouds, neo clouds, sovereign on-premise enterprise will still prefer to use NVIDIA. And that's why we think that even as this industry grows, NVIDIA can keep over 70% of the value of whatever is being deployed in AI infrastructure.
Vivek, do you think that at some point NVIDIA is going to be pressured to lower the cost of some of the infrastructure, of some of the chips, of some of these tokens, et cetera, in order to make them a better value proposition to some of the alternatives you were talking about?
Yeah, I think there is always that pressure because you are dealing with a very sophisticated group of customers, right? They don't care about your brand name per se. They care about price. They care about performance. They care about reliability of supply. They care about the fact that you're not just throwing a chip at them, that you're really, and that's why we always continue to stress full stack. What does full stack mean? It means that you are optimizing your silicon, your hardware, your systems, your power, your software. You have a base of developers. So even though your upfront cost might be higher than using a custom chip, the ease of deploying this is exceptionally strong, right? We saw recently XAI gave some data on how quickly they have been able to install NVIDIA gear. And with every new generation of NVIDIA chips, it is taking them a lesser amount of time to install that. So that's a big advantage. Number two, every new generation of NVIDIA products, you see their content go up by a factor of 50 or 60%. But then you actually see that the performance is going up by a factor of 3 to 10 times. And that is why on a kind of a cost per token basis, we continue to see this deflation. And I think that's what the customers care for. It's ease of deployments, it's reliability of supply, and the fact that the cost per token continues to drop using this infrastructure.
Going forward, what do you think right now we should be looking for in terms of just ongoing adoption with the potential for $4 to $5 trillion of spend every year, which is what Jensen Huang was talking about?
Right. I think there is this race between a lot of the public hyperscalers. And then, there are two very, very important technology companies that are still private, OpenAI and Anthropic. They are essentially in this race with steroids, right? Literally speaking, in that, or figuratively speaking, in that they're really pushing the ecosystem to adopt and build out this intelligence layer as quickly as possible. And they're doing so in the midst of what is a rather supply-constrained industry, right? There is constraint in wafers and substrates and memory and optics and CPUs. So the industry is trying to move extremely quickly in the midst of supply constraints. There is a build out of this global intelligence layer. And I don't think this race is going to stop anytime soon. And this race is not just confined to the US. We think it's a global race. And that's why we think this can continue until the end of this decade at a minimum.
Hey, Vivek, appreciate your time, buddy. It's good to see you. Vivek Harry there of Bank of America, the constructive bullish view on NVIDIA this morning. Up next on the program, Amrita Sen of Energy Aspects as the deadlock in the Middle East rolls on. We'll catch up with Anne-Marie in Washington, D.C. in just a moment. From New York City, you're watching Bloomberg TV.
are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
This story from the Journal this hour, some breaking news for you from the Wall Street Journal. The Trump administration awarding $2 billion in grants to 9 quantum computing companies. One of them, this stock right here, IBM. The department has agreed to give IBM $1 billion of the package. That stock is up in the pre-market by close to 9% in early trading.
Yeah, and that $1 billion is half of the total, even though there are considerably numerous names within this. So real question here of exactly how the U.S. is deploying its equity stakes in which companies and how, what they're trying to get in on so that they can ride this wave. It just gives you the sense of the next phase of this. I mean, we've heard about quantum computing being used by places like HSBC. How much is this the next phase of the agentic adoption?
Looking to build out capacity for the next frontier in this country, in America. That's a single stock story. More of them in just a moment. Let's get to the index level on the S&P 500. Equity futures so far this morning, negative by 1/3%. Another upgrade to the outlook, this time from CIBC and Chris Harvey, looking for 80-20. It's very simple. It's on earnings. And we've seen that repeatedly. Even since the start of this war began. We've seen it repeatedly from Morgan Stanley, from RBC, NGR Denny, from Barclays, and now from CIBC.
Yeah, and frankly, even some of the people who have been bullish are coming out and reiterating the bullish stance. Max Kettner following on just after that, saying they continue to be tactically max overweight equities, even though you see Treasury yields hitting the danger zone, and they explained why the danger zone hasn't been the danger zone and why they can look past it. And the answer? Earnings.
Earnings and rate volatility. I was reading the note in the commercial break, not as high as it was in the last few years.
I mean, to me, that suggests that people are looking for reasons for why this has not been a crimping factor. Other people just point to the fact that the enthusiasm for AI is triumphing over any concern about rates. Nonetheless, the idea that rate volatility and this idea that earnings are coming in strong, people are still feeling really
The warm embrace of corporate earnings in America lifting this equity market close to all-time highs. In the bond market, 2s, 10s, 30s look like this. Let's look at the front end of the curve, 4.1%. Now, I give you a choice, a decision. Maybe you've got an alternative view on what happened here. But either the chairman did a dreadful job of representing the consensus on the committee in that news conference, or they massaged the minutes to make them sound a little bit more hawkish than the meeting actually was.
That is exactly the right take. You could ask, reading those minutes, given the messaging here, it was ridiculous that they didn't drop the easing bias. Why didn't they drop the easing bias? What was the argument to keep the easing bias, despite all these inflationary pressures and the fact that the majority of the committee seemed to be seeing inflation higher than 2% for a lot longer? That said, I think that your second point is right. How much is this telegraphing that they're not going to be cutting rates anytime soon?
Just getting some other headlines from Reuters just on the Iran situation. Let's turn to crude, Brent and WTI. This from the Supreme Leader, who we've still not heard from directly. Haven't heard his voice at all throughout all of this. Crude is higher by 1.5%. Brent crude up to 106. WTI back through 100. The Supreme Leader issuing a directive on uranium, which of course is a key part of the negotiations with the United States. The Iranian Supreme Leader says the uranium must stay in Iran. Now, that headline alone, and we'll look for further context, but let's just run with that headline alone, with that headline alone, you'd have to say that it would be very, very difficult to come to an agreement with the US based on that statement.
And right now, the fact that you're not seeing oil prices rise more gives you a sense of just how people are not very concerned. I will say what did get people excited yesterday was the fact that 2 super tankers carrying Iraqi oil to China passed through the Strait of Hormuz with the greatest amount of oil to traverse that particular strait going back to the onset of this conflict. They're looking for proof points, not necessarily rhetoric.
So with those headlines, the gains in places like Europe and the equity market flip to losses, and you're starting to see a pickup in the price of crude. We'll come back to that in just a moment. As we count you down to the opening bell, let's get you some single names and morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with Tesla. Those shares up 1% in the pre-market as the SpaceX IPO filing unleashes fresh excitement around anything having to do with Elon Musk as he prepares to be at the helm of 2 separate trillion-dollar publicly traded companies that could become one. It's something that we've heard before, and it was the subject of a Dan Ives note yesterday saying it's a possibility since Tesla already owns a stake in SpaceX, and the two already have joint projects like the Terafab semiconductor facility. Speaking of semiconductors, we are seeing shares of NVIDIA. They have flipped positive, up just about 0.3%, even after it posted a beat and a raise. The sign investors may have simply gotten used to this company posting massive beats. And remember, the stock had already run up about 10% in the past month as we saw all of its customers post stunning earnings, stunning CapEx numbers. So this may be a story of the good news already being priced in. And we end on another stock, Intuit. Shares are plunging nearly 14%. It also posted a beat and a raise, but investors are focused on its on weaker results in its TurboTax business and its plans that it's going to cut roughly 1/5 of its workforce. And those developments are just adding to growing concerns in the software industry that if AI can increasingly handle things like tax prep on its own, what does it mean for these companies that are built around that work? John.
Yahira, thank you. Thank you for the update. More from Yahira later this hour. On our radar this morning, NVIDIA shares holding steady after robust first quarter earnings and higher rewards for investors. Wall Street setting a high bar for the chip maker, questioning the growth story in the competitive AI market. Elsewhere, SpaceX filing for what stands to be the largest IPO in history with a $75 billion funding target. The company revealing billions in losses, along with a plan to give Elon Musk near total control over the company and up to 1 billion shares. And finally, OpenAI gearing up to file a confidential IPO as soon as tomorrow. People familiar with the matter telling Bloomberg the company is looking to debut sometime this fall. Goldman and Morgan Stanley working on the filing in the race to get ahead of rival Anthropic.
So they're trying to ride the enthusiasm from Cerebras and get ahead of Anthropic at a time when people have been skeptical about some of its valuations. Nonetheless, they want to come as the largest IPO in history. I really can't stress enough how much of a divergence you're seeing in terms of total value. I think they're going to raise $60 billion. That's the estimate. And it's less than $30 billion for the second biggest, what would be. Now, what was the largest? The Aramco initial public offering. Massive scope and scale for an industry at the heart of this race for AI.
All of these intriguing side stories with the personalities as well.
Yes.
Altman, Amode, also Altman and Musk. It's quite a big race for the year ahead.
Yeah, Altman versus the world.
Right, seemingly.
And a lot of people have kind of soured on the story of Sam Altman. How much does that play into the appetite? So far, it doesn't seem like that much, given the fact in the recent round of funding, it was some north of $800 billion, their valuation. So this could be $1 trillion IPO.
Let's get you that breaking news in the energy market. Crude moving higher as the Iranian supreme leader says the uranium must stay in Iran, according to Reuters reporting just moments ago. President Donald Trump insisting a peace deal with Tehran is still in its final stages.
If we don't get the right answers, it goes very quickly. There would have to be a complete 100% good answers. And if we do, we save a lot of time, energy, and lives, most importantly. It could go very quickly. Or a few days. It could be a few days. I'm not doing any relief until they sign an agreement.
Tehran reportedly assessing the latest U.S. proposal to reopen the Strait of Hormuz. Anne-Marie joins us now from Washington for more. Anne-Marie, that breaking news moments ago turned around this market. Equities lower, crude turning a little bit higher. What do you make of that report from Reuters?
Yeah, crude turning higher, Jonathan, because the Israelis have made it very clear in order for them to view that this war is over, the highly enriched uranium that Iran has needs to be gone or be taken out of the country and put into a third party, or the United States needs to deal with it. So I'm guessing the market is just viewing this as a negative towards any time soon that we can get a deal between Tehran and Washington. And we could bring in Amrita Sen now of Energy Aspects for a little more insight on this. Amrita, as Jonathan said, the market turned around on this report from Reuters that the Supreme Leader has issued a directive that the countries near weapons-grade uranium should not be sent abroad. Does the market now start to view that potentially the president's going to have to go back to strikes?
Well, I think the market isn't pricing that fully in yet, right? It's not full escalation, but what I would say is that, look, we've been very skeptical. Each time there are these headlines from Pakistan, from the U.S. administration, or we're near. We've been talking about being near to a deal for several weeks, even months now. The market tends to sell off faster, partly because Brent positioning is still long, but in reality, neither side is willing to make any significant concession. And I think this is exactly proof of that, what Iran's Supreme Leader has said. And it does suggest, at least from the interpretation the market's going to probably come up with, is that no, a deal isn't near anytime soon, which is why prices came off last evening.
So it's basically living in, as one guest told us yesterday, continuous purgatory. Why then are prices still capped at this level, around 100 for WTI and 110 for Brent?
Look, that's a great question, and something we do a lot of analysis on internally as well, because you would think, given the scale of the supply losses, we should be potentially even double, right? What we are seeing is record levels of destocking. We did some analysis on this. We did start the conflict with about close to 400 million barrels of excess inventory. And so we've run down, call it almost like half of it. But then we've also been drawing down SPR at record levels, right? So what we are seeing is that the market's in a massive deficit, but we really haven't gone into outright shortages yet. We calculate that's about a month and a half away, so it gives us till end June. But what I worry about is that everyone, right, and I've been on the road for a couple of weeks now, everyone's hopeful that, okay, the straits are going to reopen end of June. First it was end of May, then it's now end of June. And we are really living hand to mouth right now, running down those inventories. End June or comes close to that, refiners around the world, I'm in Asia right now, are extremely underbought. Then when they do come to the market, I think the pickup in prices will be material, and that's when we can get the overshooting to the upside, because there is this sense, complacency is the wrong word, but hope that things start to pick up a little bit and we can just get by, just running down inventories, and then restocking is a problem for the future.
So, Amrita, you're saying by the end of June, we're going to hit tank bottoms and we're going to see a risk higher for crude. How much higher?
I don't think we'll hit tank bottoms globally, to be clear, but I think there are definitely parts of the world. I mean, look, China's got stocks for months and months, right? China's not going to have problems, but there are definitely other parts of the world, be it Asia for crude. If you look at product stocks in the US, we are very quickly racing towards tank bottoms in parts of the US as well. So yes, there will be pockets where we hit tank bottoms, but when that happens, then physical markets, not financial markets, again, that's a separate story. It's a little bit broken right now. Liquidity is really thin. And again, all the tweets coming out doesn't give markets a lot of confidence to put on positions. But the physical market, you're likely to see prices go up to previous highs. We've seen crude trade at 160, 170, potentially even higher if you are genuinely stocking out in parts of the world.
Amrita, thank you so much for that. Amrita Sen of Energy Aspects. And Jonathan, as Amrita's on the road, what she's hearing is that those inventories, we are now half being drawn down. Everyone is going to have, when they look at their calendar, June, which is why a lot of people think something has to happen before then. Potentially, this means this White House or the regime blinks.
Anne-Marie, thank you. The status quo is unsustainable. We've heard it repeatedly in the last 24 hours. AMH down in Washington, D.C. If you're just joining us, that breaking news from Reuters in the last 20 minutes or so, citing two senior sources out of Iran on the supreme leader in Iran who would like to keep the uranium in Iran, which could be a sticking point in the negotiations with the United States. Negotiations that the president says are in the final stages.
President Trump has said it's non-negotiable for Iran to have nuclear weapons. That's been one of his North Stars through this entire conflict. At the same time, if they're close to an agreement, how is this compatible with it? Right now, the market's getting a bit jittery. At the same time, not taking this seriously that it actually is a breakdown in talks. So it gives you a sense there is a benumbing of markets after so much back and forth of headline risk over the past couple of months.
WTI, triple digits, $100 a barrel. Brent crude this morning, just around 107. With an update on stories worldwide with your Bloomberg Brief. Back with us, Yahara has more. Hey, Yahara.
Hi, John. The Trump administration taking stake in select quantum computing firms. The Wall Street Journal reporting the White House is also awarding $2 billion in grants for 9 companies, including IBM. That's why those shares are up 6.7%. The funding is set to come from the Biden-era CHIPS and Sciences Act. AI giant Anthropic is on pace for its first profitable quarter. The company is seeing a surge in revenue driven by demand for its AI software. The cloud maker expects to post nearly $11 billion in revenue for the second quarter, more than doubling from the prior 3-month period. And Standard Chartered CEO Bill Winter's remarks on, quote, lower value human capital are sparking questions. Sources telling us here at Bloomberg, regulators in Hong Kong and Singapore have pressed the bank about the impact of job cuts in their respective markets. That's your Bloomberg Brief. John.
Pretty controversial comments from earlier this week. Yahara, thank you. Up next on the program, preparing for higher rates.
You have bond rates going up. Inflation is a little bit higher than people thought. But I'm not surprised. The notion that somehow people said they'll never go up is the wrong notion. They could be much higher than they are today.
Up next on the program, we'll catch up with Vishal Kanduta of Morgan Stanley, live from New York City. You're watching Bloomberg TV.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Equities pulling back just moments ago, down by 0.4% on the S&P, negative by 0.5 on the Nasdaq. The why? I'm sure you're very bored of this, but this is the why. It's in the energy market. It's crude, just inflecting a little bit higher. Brent crude to 107, up 2%. Likewise on WTI. We got these headlines from Reuters, citing two senior sources out of Iran, that the supreme leader has issued a directive on uranium, that the uranium must stay in the country. As we've said repeatedly, that could be a sticking point, will likely be a sticking point in negotiations with the United States. So you see that move in crude, you see this move in the bond market. 2s, 10s, 30s, yields start to climb on a 10-year right now, higher by 3 basis points, getting back to the 460s.
Yeah, the computers don't like this because those are the people who are left trading on any of these headlines. And ultimately, the inputs still matter. The takeaway for me is this still is a conflict that does ultimately matter, even though everybody has tried to move on. And even though people are trying to glean comfort that there are going to be talks, there still are quite a few sticking points.
Matters to energy, matters to the bond market. Under surveillance this morning, preparing for higher rates.
You have bond rates going up. Inflation is a little bit higher than people thought. But I'm not surprised. The notion that somehow people said they'll never go up is the wrong notion. And so companies like us prepare for higher rates, lower rates, and figure those things can happen. They could be much higher than they are today.
So here's the latest this morning. Wall Street preparing for a world with higher interest rates. JP Morgan CEO Jamie Dimon warning global bond yields could continue to climb from levels not seen since the global financial crisis. Vishal Kundra of Morgan Stanley writing US yields are showing clear signs of forced selling by investors whose portfolios are extending in duration. Vishal joins us now for more. Vishal, good morning. Good to see you, sir.
Great seeing you.
Is the selling over?
We felt it a little bit on Friday and Tuesday, the forced selling part of it. I think the first two big rafts of selling that went through were actually not technical or forced. It was just a massive macro shift going through. You're going through the war, which is still right front and center, the reason for all of this. And then I think the expectations, and we were included in it, was of growth and demand destruction, a little bit coming from higher oil prices that never manifested. At least even if you squinted, you couldn't see it in the data. And then the earnings took over from that bit. So the last bit has come only from real yields, not from break-evens widening. And then Friday and Tuesday price action was very clear-cut convexity selling that was going through.
Where do you think the ceiling is now for interest rates? When does the buying start to come in?
So we've started to see buyers come in, but I think there are those three clear conditions. Like the reasons for all of this need to be solved first. Clear-cut clarity from the conflict ending. Cannot be another Axios headline, cannot be another Reuters headline, at least for the negative. If we are going and having a conflict or full-blown military action over the weekend, we're going to see significant flattening and another hike being priced in very easily by the time we come back from the long weekend. But we are starting to see some of that sort of bond math kicking in. Now you need about 250 odd basis points of a sell-off in the 2-year for you to make a negative return if you buy a 2-year treasury today. So that bond math is kicking in, very different than 2022. When you went in, I think December 21, 2-year was at 78 basis points. So even a 100 bip sell-off got you negative, and that's what 2022 was, but 10, 15% negative returns. We're not seeing that, and that's why you're starting to see the nibbling coming back into the bond market.
Can you explain the bond math behind the investment grade bond market right now? Because we're seeing people hide out in investment grade to avoid the duration risk that you're seeing in treasuries, even though the duration risk is picking up in investment grade, and it's tied to the tech story in terms of all of the issuance. Does it make sense that that's a haven right now?
Not to us, actually, meaning the moment it gets into that lower 70 to 80 basis points over treasuries, with the makeup of that index being less tech. Again, coming into this year, tech was not even the top 3 to 4 sort of allocation of sectors within the index. Now going forward, probably in the next 6 months, I think we were discussing this in the last couple of months here in this show, where a lot of these bonds are getting issued with looser language in terms of who's going to be on the hook at the end of it if this does not work out, or if it does not work out with the same sort of exuberance that we are going into this. These bonds are going to have massive amount of spread duration because they are for longer term projects, and the negative convexity that they hold on to. Some of these bonds are issued in a way where it has a 3-year callability and a 14-year extension time period. So the negative convexity one-on-one kicks in. So we don't think that these are as easy of structures to get into, and the compensation that we're getting is not commensurate to the risk that we're taking on.
You are seeing spreads start to widen out, just to touch on some of the tech debt that's been issued. At what point, though, do investors really push back and say, hold on, guys, if you're going to make us take on 15-year debt tied to a data project that hasn't been built yet, hasn't been proven out, and has depreciating assets that rapidly have a 3 to 5 year cycle, we're not going to lend you money so easily. Why aren't we seeing more of that?
I think active managers have started to push back. So I think what you're seeing now from issuers, they're trying to target the high yield market where the covenants are stronger. Then another step higher is the securitized market. Covenants are extremely stronger there, but you cannot issue 40 billion of debt at 40-year there because the average life of covenants actually reduces the amount of risk that the investors are taking. So I think issuers are starting to see that. They're starting to go into different countries, different jurisdictions, different currencies, and different markets to act.
Spread the love.
A little bit of that, but then the love comes at a cost, and then like it does, and then the covenants are much, much stronger on that bit. So yes, we're starting to see a few of the self-correcting mechanisms come in, but there's a raft of the yield buyer externally, globally sitting, who's buying a lot of this IG debt, and a lot of, unfortunately, is getting bought by the passive side of things. And they don't actually look for what the structures are. If it is IG, it is going into the benchmark, and they're buying it.
Listening to this conversation, we started with treasuries, we finished with credit, but I'm hearing the same thing, crowding out additional supply. Is that becoming a problem? And who is it a bigger problem for? Corporate America or the sovereign for treasuries?
Absolutely for treasuries for now. Again, if you think about it, take a huge step back, there are 3 big balance sheets as fixed income investors that we invest in. It's government, which could be sovereign, municipalities, etc. It's corporate and securitized. COVID happens, government spends about 10 trillion, makes sure that the corporate and consumers are not going down, and they balloon up their fiscal issue. That's why we are asking for more term premium. If baffled, 530 still is at 85 basis points on that bit. But the corporate and consumer balance sheets, there are sections that are deteriorating, are peaking in their credit quality from a fundamental perspective, in the perspective of being able to service their debt, being able to service their coupon and payback par. Now in the last 6 months, now you're getting into areas where the speculation increases and the debt metrics are reducing. So almost like 2003 to 2005, debt metrics peaked there, and then you started to see a little bit of that deterioration.
So this is the era of leverage that we're entering, we're in right now.
Absolutely feels like it, but the earnings for now are backing it up. So the debt metrics are still okay, but then the moment a whiff of earning release comes off, and that as debt holders, all we are worried about right now, you're sitting on so much cash, you're not finding great projects or great M&A activity because every multiple is extremely high in your area, you're going to buy back extremely high. So I think that's, as a debt holder from the IG perspective, going back to your point, not a good feeling.
Vishal, this was a clinic. We appreciate it. Thank you, sir. Vishal Kanduja there of Morgan Stanley, and some worrying takes on what's developing. There's some runway here, but you've got to focus on what's developing.
Essentially, bond investors need their money back. And at a certain point, if we're talking 15 years tied to a data center with not a lot of covenants, it starts to get a little bit more worrying. 2003 to 2005 build out, not exciting.
No, not great. No. Coming up next on the program, David Levitz of JP Morgan Asset Management, Mark Short, the former Chief of Staff to the former VP Pence, BNY CFO, Dermot McDonough, and Sam Linton-Brown of BNP Paribas from New York City. The second hour of Bloomberg Surveillance just around the corner.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon.
which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again, and they finally brought it up to $1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The rest of 2026, I think the Fed sits squarely on the sidelines.
To get any cuts at all, it does have to start with the labor market.
Maybe, possibly, there's an opening by year end.
The majority of the FOMC is going to keep their heads down.
Does inflation actually cause weakness in the consumer? Then you get maybe an opportunity for Warsh to act.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Negative 0.4 on the S&P, down by 0.5 on the Nasdaq, down by 0.75% for the small caps. With this move in the bond market, 2s, 10s, 30s, yields higher again on 10s by 3 basis points and back through 460. Off the back of this in the energy market, energy higher by 3% on WTI. Brent crude back to about 107. These headlines from Reuters in the last 60 minutes or so, according to 2 senior sources out of Iran on the supreme leader issuing a directive on uranium and suggesting the uranium must stay in Iran.
This is the risk case that talks don't go well. And why should they go well, given some of the mixed rhetoric that we've been hearing, which is the reality that markets are waking up to today? It just highlights how people keep trying to ignore this story, and it keeps coming back and rearing its head. The amount of comfort that people got yesterday from a couple of reports about tankers going through the Strait of Hormuz and this discussion around getting better talks gives you a sense of what people want to happen, but not actually what is happening on the ground.
This is why this week was so important from the earnings side of things. From the earnings perspective, we were focused on the retailers. How is corporate America doing? How is the American consumer? This is what we heard from Target, best sales growth in like 5 years. TJX raising its sales growth expectations. In the restaurant business, mentioned Carver because sales are performing there. Cherry picking season, I know, but so far so good on this front. Walmart just dropped. How's Walmart shaping up?
Less good, I would say. You can take a look at earnings per share for the second quarter of 72 to 74 cents. The estimate was 75 cents. They said that their first quarter operating income was negatively affected by 250 basis points on higher fuel. A lot of the other aspects that were really coming in line, revenue coming in higher than expected, comp sales at Sam's Club coming in better than expected. We'll go through all of the numbers. This, though, really does highlight how they are seeing higher expenses and potentially are not able to pass it along fully to all of their customers. You're seeing this as Kroger's came out and said they're cutting their prices to compete more directly with Walmart. And Walmart has said that they are trying to invest in price, not raise prices, and taking it on the margins. Are you seeing that in today's earnings?
Am I getting this right? When Walmart does well, things are bad. And when they do badly, things are bad. Is that how this works?
Well, of course, John, because
Okay,
you're talking
good.
to me. But at the same time, I could say that Walmart maybe isn't as much of a cyclical story. Nonetheless, this does show how the biggest companies are getting pressured, especially when they're trying to run clean balance sheets and work on the margins by cutting costs and squeezing some of their suppliers.
So far this year, the stock has been up, doing quite nicely alongside Target. The stock this morning is down by 2% in the pre-market. Lots of tech stories still to come. Coming up this hour, we'll catch up with David Lebovitz of JP Morgan Asset Management as stocks snap a 3-day decline. Mark Short, the former chief of staff to former VP Pence on diplomacy with Iran, and the BNY CFO, Dermot McDonough, on increasing AI adoption at one of the best-performing US banks. We begin this hour with stocks lower following a muted reaction to NVIDIA earnings. David Lebovitz of JP Morgan Asset Management still bullish, writing bonds won't act as an effective hedge when inflation risk is rising. On the equity side, we continue to see opportunity and remain overweight. David joins us now for more. David, good morning.
Good morning.
How hungry are investors right now for more tech? And how easily will they digest the massive IPOs we're getting in the next 12 months?
So what I would say on the tech front is we still see structural opportunity there, but we also recognize how far things have run over the past couple of months. And this rebound from the situation in the Middle East that began in March has really been driven by technology at the end of the day. And so while we're conscious of that and we do want to lighten up a little bit on that exposure, we're not running away from the US, which is obviously a tech-heavy market. We think that the fundamentals are there, the earnings are there. Even if we're missing expectations, the numbers themselves are still pretty good. You asked the question about the IPOs. We have supply coming, and oftentimes when supply increases, if demand doesn't increase at the same pace, you can see an adjustment in price. Whether or not that has a market level impact, I think is probably to be seen, but the question is, tech has had such a strong run over the past 15 years. Are we reaching the point where you're seeing those animal spirits rear their ugly heads, where you're seeing more speculation in the market? I'm less concerned with how they get taken down. I'm more concerned with what this means for risk-taking over the next 12 months.
Let's just stand the story of supply as a force in financial markets and think about it beyond just equity. We're seeing it in fixed income on both the sovereign side and now on credit from the hyperscalers. We just had that conversation. Supply is everywhere right now. These demands for capital are picking up. Do we have the demand on the other side to meet it?
So the question about, and I think the hyperscalers specifically are the issue that's on the market's mind. To us, this is really more of a corporate financing decision more than anything else. Day one of business school, what they teach you is that the capital structure doesn't matter. It's how you use your capital structure that will make or break the project. And so what I think you're seeing from the hyperscaler community is a recognition that they can't just allow all of their cash flow to get eaten up by these projects. They're going to the debt markets where, again, demand has been robust. And I think more than anything, it's really this all-in yield story. I mean, what struck me over the past couple of weeks is how orderly spreads have been against the backdrop where yields have really gapped higher, particularly as of late. And I think what that reflects is if you can get paid 5% on IG paper, if you can get paid 7.25% on high yield, investors are going to take that because the memories of the post-GFC environment where rates were pegged at zero are still fresh. And so yield's available and people will take it.
We've been talking about who gets crowded out first, and John has pointed to this in a significant manner. Is it going to be some of this corporate issuance on the stock and on the bond side, or is it going to be governments? A previous guest was saying it was going to be governments in terms of their issuance. Do you agree with that?
I wouldn't disagree with that. I mean, in our client conversations, the thing that's once again been coming up, and it feels like this is somewhat cyclical, but people are increasingly concerned with what's happening with the deficit, what's happening with the debt. This isn't just a U.S. conversation, it's really a global conversation. And I actually had a client the other day say to me, well, is some of this corporate debt, particularly tied to IG tech companies, is that actually a safer bet than what some of the stuff that we can find in the sovereign market? And so, what's interesting about the environment environment we're in today is you're seeing that tension begin to emerge. I don't want to go as far as to say that the bond vigilantes are back, but I think now that you're seeing the inflation data begin to pick up, you know that the administration wants to prime the economy in advance of the midterms. That's what I think the bond market is saying, and that's why I think people are now looking to high-quality corporates as a potential substitute if the goal is diversification.
At this point, we've been talking a lot about why haven't higher yields, higher benchmark rates crimped the equity appetite. And Max Kettner used to talk about the danger zone of 4.5% on the 10-year. Came out this morning with a note saying the danger zone hasn't worked because earnings have been so strong, rate volatility hasn't been that great. It's no longer the danger zone. Is there a new danger zone that is a higher threshold?
So I think that 5% is still very much a line in the sand on the 10-year. I think that if you saw yields get to that point, you would definitely see equities get some indigestion. I do give a lot of credence, though, to the idea that the earnings story has helped to offset some of this pressure stemming from higher rates. I also think that markets are still viewing the driver of higher rates here as being temporary, right? What really set this whole thing off was the CPI, but more so the PPI report the other week. The market is saying the left tail risk from the situation in the Middle East has collapsed. The administration wants to do a deal. They're going to get the oil flowing, and everything is going to be okay. That sounds great, but it needs to begin to happen. And, it's not lost on me that gas prices are much higher than they were a year ago. Food prices are much higher than they were a year ago. The lower leg of the K, to your point about Walmart, the lower leg of the K is still struggling here. And so if we can't make progress, we have time as long as asset prices are elevated. But if asset prices begin to correct, then the upper leg of the K comes under pressure. That's where I think you have a real problem.
Lisa, trying to work out where the risk is in financial markets. I'm just listening to the way that you're talking about financial markets, and I've heard this a few times now. The all-in yield is good, right? Spreads are tight. Let's run with that. All-in yield's great, spreads are tight. A growing proportion of the all-in yield is the supposed risk-free rate. So ideally, I would have thought you'd say, look at that, okay, I want to buy the underlying, I want to buy treasuries, I want to buy the risk-free. But you're saying that's where the risk is. And I've heard that a few times. Whenever anyone comes on the fixed income side of things, they'll say, yeah, spreads are tight, but I like the all-in yield. And I'm sitting here thinking, well, if a growing proportion of the all-in yield is the treasury and it's meant to be risk-free, why wouldn't I just buy the treasury? Why take the corporate risk?
Because I think that at the end of the day, there's more certainty around the corporate outlook than perhaps there is around the government outlook. And
that's
so to me, that's why I come in every morning and the first thing I look at is move, right? What is interest rate volatility doing? And the gap up we've seen in rate volatility, I do think is tied not only to the inflation story, but some of the rhetoric coming out of Washington. You have that offset to your point about the equity market from solid fundamentals. That supports corporate paper, but I think you're going to get bounced around sitting in risk-free paper.
People are more concerned about the sovereign than they are the corporate. That's the headline.
Absolutely. Remember when Microsoft actually traded inside of government debt briefly for a second? Do we start to see that kind of dynamic? If that's the case, though, we always say the crisis always happens in debt perceived as safe. If treasuries are no longer safe, it's not exactly not going to affect all of these other products that potentially have some sort of tie to it. So even if they are safer, it highlights the risk inherent in markets right now.
I think it's a visibility issue more than anything. There was a great report out of one of the regional Fed banks the other day about how the run rate of AI spending has increased across the corporate sector. I mean, it's basically up 50%. Relative to last year. And so if you're sitting there as an investor saying, okay, well, the money's getting spent, one man's CapEx is another man's revenue, this seems like it still has legs, or you're saying, I'm not really sure what's going to come out of Washington or Brussels next, it's a very different
Do you think we need to see corrective action from the Treasury? Where does it come from to put a lid on what's developing in this bond market?
So I think a couple of things. One, they can try to talk it back down. But one of our views more structurally over the next 10 to 15 years is that term premia are going to be higher, rate volatility is going to be higher because we're in this environment of fiscal activism and economic nationalism. That's just going to mean that you have more volatility in government bond markets. They can try to talk it down, but what they really need to do is they need to allow the inflation that we're now seeing to run its course, and they need to give the market a better sense of what may be coming from a spending perspective. I think there are still a lot of questions around midterms in the fall. What is the administration going to do to try to prime the pump in advance of that? There just isn't great clarity. And so that's, again, what I think is really impacting the rates market today is just that uncertainty there, which you're not necessarily getting on the corporate side, given that fundamental setup.
Are treasuries a good hedge against the AI hopes and dreams not coming to fruition?
So I think that they are, because our view is that treasuries are not an effective hedge when inflation is the problem, but treasuries, in theory, and we've seen it over the past couple of years, should be a good hedge when growth is the problem. We know the story here about, consumer 70% of the economy, but the cherry on top has been the AI CapEx. If the AI CapEx story begins to falter, you have a weaker consumer, markets are going to get spooked about the outlook for growth. I do think that treasuries act as a hedge in that environment.
David, this was fun. It's good to see you. Thank you, buddy. David Levovitz there of JP Morgan Asset Management. In the bond market right now, yields higher by about 3 basis points on twos to about 4.1%, 10s back around 460. With an update on stories worldwide this morning, with your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. Iran's supreme leader ordering that the country's near weapons-grade uranium should not be sent abroad. Reuters reporting that Iran's top officials believe sending the material outside would leave the country more vulnerable to future attacks. Meanwhile, we are seeing Walmart shares sliding nearly 2% in the pre-market. The company posting steady sales gains, but flagging higher fuel costs. CFO John David Rainey telling us here at Bloomberg the headline consumer is still reasonably healthy. The low-income consumer is more budget conscious. And Paramount's takeover of Warner Brothers Discovery is gaining steam. Bankers are preparing to sell $49 billion of debt to back the deal, with the financing coming from Apollo, Bank of America, and Citigroup. The deal will consist of a combination of investment grade and junk debt. That's your Bloomberg brief. John?
Hey, Yahara, thank you. Thank you for the update. Up next on the program, renewing pressure on Iran.
If we don't get the right answers, it goes very quickly. There would have to be a complete 100% good answers. I'm not doing any relief until they sign an agreement.
Up next, we'll catch up with the former Chief of Staff to the former VP, Mike Pence. Mark Shaw joins us in just a moment, live from New York City this morning. Good morning.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
There's a few phrases in retail America that drive me absolutely insane. One is consumers are choiceful, and there's another one, investing in price. It's when things are difficult and they try and make it sound good. Walmart down by about 2%. Are they investing in price this morning?
They are investing in price, absolutely,
Okay.
John. This
Great.
is what has definitely weighed on their margins, because investing in price can also be absorbing costs, which is essentially what they did. Walmart coming out and saying that actually consumer demand was pretty good. They actually did see strength there at the lower side. They did see ongoing choicefulness in terms of lots of decisions. At the same time, they said that it really was the fuel costs. The company absorbed, quote, virtually the entirety of the increases in fuel costs during the period because the company is prioritizing keeping prices low. The number of discounts rose 20% from a year earlier. So they're trying to gain market share by competing on price. Thought it was very interesting that Kroger's CEO came out this morning and told Bloomberg that they are planning the biggest price cuts in 2 years to take out Walmart. So it gives you a sense of this price war that's starting to try to capture customers and capture market
On a more
share.
serious note, this ain't 2022.
Yeah.
Consumer price tolerance then, consumer price tolerance now, and retailers are acting accordingly.
Yeah, they are ultimately trying to capture a bigger share. Although it does seem like in certain categories, price increases can go to the moon, like in chips and other areas of that nature. But for consumers, there clearly isn't the same kind of robust appetite to keep buying at any cost.
Energy prices are higher, costs are higher. That story still shaping this equity market. Equity futures negative by a few tenths of 1% on the S&P 500. On the Nasdaq, we're down by 0.4. In the bond market, yields turning a little bit higher, up by 3 basis points on 2s, on 10s up by 2. This move in crude, Brent back to 107 off the back of these headlines from Reuters earlier on this morning, citing 2 Iranian officials, 2 sources in the country, that the supreme leader wants to keep the uranium in Iran. Under surveillance this morning, renewing pressure on that country.
If we don't get the right answers, it goes very quickly. It would have to be a complete 100% good answers. And if we do, we save a lot of time, energy, and lives, most importantly. It could go very quickly. Or a few days. It could be a few days. I'm not doing any relief until they sign an agreement.
Here's the latest this morning then. Reuters reporting Iran's supreme leader pushing for its uranium to stay in the country. Tehran reportedly preparing a response to the latest peace proposal from the US. Anne-Marie joins us now from Washington for more. Hey, Anne-Marie.
Hey, Jonathan. Well, that directive from Iran that's being reported from the supreme leader on Reuters is really going to be a red line potentially in these negotiations, because Prime Minister Benjamin Netanyahu had made it very clear for Israel, for the war to end, that highly enriched uranium needs to be taken out of Iran. So potentially this could put the president in a very difficult position. And for a little bit more insight on how potentially we could see this White House react, we are now joined by Trump's, in the first term, Director of Legislative Affairs. And of course, he was the former Chief of Staff to Vice President Mike Pence. And that is Mark Short. Thank you so much for joining us.
Thanks for having me.
So we have this new reporting out of Reuters, as the president said yesterday, right now, they're right on the borderline between getting a deal and resuming a war. What do you think he does with this, basically, escalation from Iran?
Well, look, I don't think there's any president who's been a better partner and more loyal to Israel than Donald Trump throughout his first term and his second term. But we are reaching an important point here, because Iran is an existential threat for Israel, clearly. And they're not going to want to see a deal at this point, whereas the president is facing a lot of domestic pressure with energy prices continuing to spike, his numbers continuing to deteriorate, with midterm elections coming soon. And so this is obviously going to be a significant pressure point for him.
Yeah, his polling is going down as you see gasoline prices going up. We're north of $4.50 today. I just spoke last hour to Rita Sen of Energy Aspects, and she's on the road, and she says inventories are halfway drawn down now, and people are looking at June. Yeah. If we see north of $5 a gallon, does the president blink?
Like, I think it's not just north of $5 a gallon. It's jet fuel prices. Jet fuel, a lot of airlines continue to cancel flights. It's diesel fuel continuing to go up. I think there's some things the president's done, like waiving the Jones Act, that have kept some of this at bay. But I think that the question is going to be, does he want a deal? The president loves to have a deal. But I think if he gets a deal, Anne-Marie, there's going to be a lot of questions like, is this not just Obama 2.0? And when a lot of Republicans criticize sending pallets of cash to Iran, if we're basically saying, well, you know, as some have said, that we got 20 years now, is that really going to be that significantly different? And Iran has done this. This is what they've done for 47 years. It's continued to walk along a lot of presidents to say, hey, we'll negotiate this later. And they've continued to be the same menace for 47 years.
Yeah, they continue to drag their feet, and they have done with multiple presidents. But you have been in the room with President Trump. You know his instincts. If the domestic pressures get too much for him? Does he then give a lot of concessions away?
I worry that he does. I think that right now, the president, again, it's hard to say there hasn't been somebody who has stood with Israel more than this president, and he has so far. But, Anne-Marie, I do think he's going to look
tough on Iran. First term, maximum pressure. Second term, obviously, their strike.
Taking out Soleimani. But for a lot of things the president has done. But I do think that he likes to be the one who ends up making a deal. And so there's a lot of pressure for him to obviously get out of this and to lower energy prices. But again, for our partner, Israel, again, this has been an existential trend. They view this is our opportunity. Iran is weakened. Now is our opportunity to do this. And they know that if we back out, then China and Russia are going to continue to rebuild the military supplies in Iran. And it will become, once again, a threat to Israel and to the West.
You mentioned the midterm elections. We just had a bunch of primaries, but also recently the president said he's not thinking about Americans' financial conditions when he's talking about Iran. Now, I know some people would say that was taken out of context, but how difficult is that going to be for Republicans when they try to deliver a message before November?
The midterms are always going to be difficult in the term of the president, particularly when there's one party in power. So the Republicans have obviously the House, the Senate, and the White House. And American voters have always wanted to have divided government. And so you would anticipate already a significant year for Democrats. I think you add on to that what you've seen with the economy and affordability crisis, energy prices spiking, but also now the president has shown his muscle in winning primaries. But if you're basically showing that you want people who are more loyal to you, how does that play to general election voters? I think that it may be playing out to their strength in the primary season, Anne-Marie, but creating an even bigger hurdle for Republicans come November.
What does this mean for also the current Republicans in Congress? A lot of Republicans were very disappointed of the president yesterday going for Ken Paxton in Texas.
Well, that's obviously on the heels of taking out Republicans in Indiana, taking out Thomas Massie in Kentucky, taking out Bill Cassidy in Louisiana. And I think that you're going to continue to see, I think, less and less done in Washington. It's already hard to get something done in the midterm election cycle, Emery, but I think even more so now because you're going to see those Republicans begin to break further and further from the president. So I would think there's going to be very little done legislatively. It seems that this housing bill that it seems to be Republicans, there's only a handful of Republicans that actually still believe in free markets because it seems like the vast majority of them are partnering with the populist left and deciding who can buy houses and who can't.
But if they're willing to break with this president, what does that look like?
It looks like things stalling. It looks like basically nothing else happening between now and November. It means that things like the president's desire for ballroom funding doesn't happen. It potentially means that more funding for the military doesn't happen.
I was going to say, we had an individual yesterday saying we're going to be running out of the military budget for the war in Iran. The president's asking for $1.5 trillion now. Does he get that before November?
I think everything gets harder now. Everything does. And so I would be basically wagering against anything else happening of consequence between now and November.
Does that mean that we see a president that's going to be more assertive on Congress and try to do things through executive order?
Well, I think that's already been the case, right?
Right.
I mean, this administration clearly believes they don't need Congress for much, and they think that they can do it just from the executive branch. That's going to become a bigger and bigger challenge after the midterms because there'll be a bigger and bigger clash with the legislative branch at that point.
Mark Short, thank you so much for your time this morning. Thanks for coming in. That was Mark Short, Jonathan. Of course, Trump won. He was Director of Legislative Affairs and also the Vice President Mike Pence's Chief of Staff. Interesting at the beginning of our conversation, when it comes to the war with Iran, you see these reports like Reuters with the Supreme Leader having this directive about enriched uranium. Potentially, this can make it much harder at the negotiating table with gas prices going up. Mark Short is worried that this president blinks at the table.
Anne-Marie, appreciate the update. Thank you. Anne-Marie in the nation's capital. We all understand the seriousness of what's taking place in the Middle East, but I have to take a step back. The degree of fatigue in financial markets for investors tracking this story is off the chart, just totally off the chart.
You can feel it. Look, I'll be honest, I have fatigue with it because there's no way to analyze it. There's no way to get an edge on it. There's no way to know. Tell me when it's over. Tell me when it's escalating. Tell me what I can price in. Tell me when I have to care if it's a crisis. Throw in some Ebola. I can't pay attention to that because I've dealt with enough of that stuff. It's like, but it's, you know, it's just, there is a crisis fatigue right now in markets, especially given the overlay of optimism and enthusiasm and change going on from AI. Doesn't mean it's not an important story. It's an incredibly important story. It's just hard to analyze, so people are just trying to put it in the back.
We're drawing down inventories aggressively. That's cushioned the story so far. but ultimately it's unsustainable, which is why the status quo can't continue for much longer. Maybe that's the good news. Maybe you get a breakthrough. I don't know.
If it's not possible or if it's going to be so bad, it's not going to happen, right? That's what we've heard.
Up next, the BNY CFO, Dermot McDonough. That's next. This is Bloomberg.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Live from New York City, welcome to the program. Equity futures so far this Thursday morning. Good morning to you. Negative by about 0.3% on the S&P 500. You see the Nasdaq down by 0.4. You'll notice in the bond market as well, Treasury's a little bit softer, yields a bit higher. 2s, 10s, 30s, yields up by about a basis point now on 10. Still around 460. The 2-year just north of 4%, up another 3 basis points at the front end of the curve. A lot of these moves born out of the energy market this morning, and these moves include Brent and WTI. Brent crude up by 1.7% to around 107. It's the story you're all sick and tired of hearing about, but it's the story driving financial markets this morning. It came from Reuters, a couple of headlines suggesting that the supreme leader in Iran would like to keep the uranium in the country, which makes it difficult to get to a deal with the United States.
Yeah, this market doesn't want to have to focus on the internals of coming to a deal because it looks pretty messy and frankly unsustainable to have any kind of agreement given the position of both sides. It's interesting to note the dissonance between how much people have moved on and the fact that they can't really move on, because this story is fundamental to the underpinnings of the economy. I mean, just looking at Walmart's earnings gives you a sense of just how much cost is being absorbed by the fuel costs going up that hasn't been passed along yet, but is unsustainable if it continues.
Is that good news for the Federal Reserve, that we're not seeing that pass through? This is different. The more obvious story might be a growth one further down the line, because you can see the nervousness right now about the inflation component of all of this. We've priced out the easing of the Fed. We've priced in tightening of the ECB at the Bank of England. This Federal Reserve, reading through those minutes in the last 24 hours, they seem very, very nervous about the next several months.
Yeah, partly because inflation there is no sign that it's come lower. In fact, it's actually accelerating higher, and you haven't had 2% inflation for more than 5 years. They now see a longer path to get down to 2%. And you ask, does it make it more comfortable that you aren't seeing any pass-through at the likes of Walmart? No, the answer is absolutely not, because you're seeing the pass-through for airline tickets. And frankly, there are other inflationary components as well tied to the AI story. So you can strip out everything that you want, but that target isn't getting back to that 2%, at least not in the near future.
And those buyers in that tech space, price insensitive, as we've seen big time in the last 12 months or so. More data later this morning, 8:30 Eastern Time, jobless claims, that's just around the corner as we count you down to the opening bell, 2 hours away. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. Staying on Walmart, we are seeing those shares falling 2%, even after it posted another solid quarter of sales growth. But as you said, the company warning that rising fuel costs are starting to hit its shoppers and its own profits. Executives saying that lower income consumers are becoming even more budget conscious, while the company itself is absorbing much of the fuel hit to try to keep its prices low. Turning to shares of IBM and other quantum computing stocks, they are surging in the pre-market on this report by the Wall Street Journal that the Trump administration is preparing roughly $2 billion in grants for the sector, with IBM set to receive the biggest award at $1 billion. And we end on shares of Deere. They are falling in the pre-market. It just reported results. Shares are down 3.4%, even after it posted better than expected earnings. But looking under the hood, results show that farmers are still holding back on purchasing those bigger, pricier equipment. And Deere says the reason results have held up is because of the AI boom. John.
Yahira, thank you. Thanks for the update. More from Yahira later this hour. On our radar this morning, Walmart moving lower in the pre-market. The retailer posting steady sales gains but flagging higher fuel costs. The CFO, John David Raley, saying, quote, the headline consumer is still healthy. The low-income consumer is more budget conscious. Elsewhere, Anthropic on track for its most profitable first quarter. Strong demand for its AI software driving a surge in revenue. The numbers adding fuel to the race with OpenAI to go public. And finally, JP Morgan boss Jamie Dimon arguing the AI transition can occur without sweeping layoffs.
I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. Your job will be the same. You'll just be much smarter at how you execute that job. But we will retrain and redeploy our people.
Diamond's comments underscoring a broader industry shift towards automation throughout the financial workforce, and I think setting him apart with some of the comments we had earlier this week from a certain Standard Chartered.
Yeah, and he called those comments indelicate when you talk about lower value human capital. Nonetheless, an increasing number of CEOs are saying whether you like it or not, change is coming. Whether you like it or not, our economy is changing and we have to adjust and adapt or else we will become obsolete. What I learned when I talked with Lori Beer yesterday, who is the Chief Information Officer at JP Morgan, was this is a highly uncertain time. There isn't a clear destination, and it is incredibly difficult to have people sit with that uncertainty. At the same time, people who thrive are the ones who can deal with that uncertainty and keep shifting. How do you get this message out, though, when you have a lot of mixed messaging and when you have some of the executives coming out with indelicate phrasing?
I was smiling. Didn't Bill used to work with Jamie? I think they did.
I will have to
a while back. Yeah, I think they did. So I imagine he was smiling too when he saw those comments. You know.
Somebody who tends to put foot in mouth. Yeah, exactly. But he's done that before.
Yeah, he's not alone. This week, we've seen a lot of that. Let's turn the page and stay on the financials. America's oldest bank and the first listing on the New York Stock Exchange getting a little bit of a revamp today. The Bank of New York is set to begin trading under its new ticker, BNY. Joining us now is BNY CFO, Dermot McDonough. Dermot, good to see you, sir. Welcome to the program.
Good morning. Thanks for having me.
You guys have had a fantastic run, whether it's under BNY or BK, and I don't think this story is talked about enough. Alongside Robin, the best performing large bank in this country over his tenure. Now, at the very beginning of life at BNY. You were the architects of the Treasury market, one of the early movers in this whole financial space. How different is this institution now compared to back then?
So look, first of all, thanks for having me. America's oldest bank, 1784, storied institution, founded by Alexander Hamilton, who became the first Treasury Secretary, first loan to the US government. And so we're very proud of our place in the financial market ecosystem, and that's evolved over the last 242 years. When tickers first became a thing in 1969, BNY wasn't available, so we went with BK for America's oldest bank. And now we have the opportunity to sync up how we present ourselves to clients and shareholders with the ticker, so it's a great day for us.
Hamilton was an incredibly intelligent man. I have my doubts as to whether he would have imagined the position that we're all in right now, staring down the technology that is just on the horizon. How different are things going to be for your institution? And when you think about AI, I imagine you're not thinking in the terms of low-value human capital. Can you tell us in the way you are thinking about the incoming technology?
We have a very, very different strategy on AI. Jonathan, I think you've been down to our headquarters. You'll have seen the ledgers from that time. You'll have seen our CTOC Center, which is quite a modern, where we manage the markets, 20% of the world's investable assets flowing through our pipes every day. So, you know, you've talked earlier about a lot of uncertainty in the world. The only thing that's constant in today's world is uncertainty. And so we've embraced at BNY AI as a superpower. It's part of our strategy. It's part of our transformation. And I think we've done a pretty good job at demystifying AI for our people. We say inside the walls of BNY, AI is for everyone, for everywhere, for everything. And we have two strands to it, individual AI and enterprise AI, where we focus on how can you use AI as an individual to become more productive and to upskill yourself. And then as a firm, how do we use AI as a strategic superpower to make clients have better services, better goods? How do we serve? How do we grow? And more importantly, how do we create capacity within the firm to grow?
That's the word that interests me, capacity. So when we talk about AI, and when I hear the C-suite discuss it, they'll talk a lot about efficiency. We'll have a conversation about job losses. Maybe they'll spend some time on an improved product offering for customers. We'll spend a bit of time on that. Capacity is the interesting component of this. Does it create capacity and allow you to do things that maybe you might not have been able to do several years ago? And when you think about the spaces that it opens up for, say, BNY, what does it mean for you?
I would say, in a word, AI for us means growth and opportunity. And things that we thought we couldn't do before, we're now able to do, and do at a faster pace. If you kind of go back to what I said in terms of 20% of the world's investable assets flowing through our pipes, we settle 95% of the US Treasury market every day. That gives us a lot of data, and we'll be able to, with AI, to unlock that data, provide greater insights and greater information, be able to develop greater data products for our clients in the whole world of digital assets as well. I think we can power that with AI. So actually, AI for us is, we were quite optimistic in terms of our ability to grow and transform, as you've seen in our results over the last couple of years.
What's the main note of growth, given the fact that people used to think of BNY as being sort of where money markets funds go and get parked, and it's the collateral bastion? You talk about 20% of the world's assets. How do you grow profitability given the low margin aspect to those transactions?
So I think in many ways BNY is a unique institution. We have several businesses, and we have strong competition in each of those businesses. But when you add them together as a combine, we're pretty unique in what we can offer our clients as a collective. So what we've done over the last couple of years to a good success is our ability to sell multi-line of business to single clients, and unlock the firm and de-silo the firm and deliver a more holistic brand to our clients. And you've seen that in record sales revenue in Q1 of this year, record revenues this year, and a tripling of the stock price over the last 3 years. So clients are noticing the transformation, our shareholders are noticing the transformation, and more importantly, our employees feel empowered and energized by what we're doing at the institution.
The total number of employees at BNY peaked out in 2023, close to 53,000, and they've fallen considerably since then. It's been a pretty contractionary headcount story, even amid some of the growth in profitability. Do you expect it to continue shrinking because of some of the capabilities and efficiencies that you're putting out there?
So I think the rationalization over the last couple of years, we've largely dealt with through attrition in terms of each firm has a steady amount of attrition each year. So it's not been large-scale workforce layoffs. It's like we've kind of figured out how to manage the workforce in a more strategic way. And it's been kind of taking back control of our expense spend and reducing duplicity in the firm, implementing our platform's operating model so we can deliver more holistic set of products to our clients, and that's taken excess capacity out of the firm in a more strategic way, which I think our employees are very pleased to see.
Well, we're seeing the performance, strongest sales quarter, I think, in the firm's history more recently. Can we talk big picture about financial markets and more broadly capitalism? We heard over the weekend people get booed whenever they mentioned AI. I think that a lot of these institutions have totally lost control of the narrative right now. And I mentioned Standard Chartered, and I'm sorry to keep beating up on that bank, but the language that was used to describe this technology and the people that worked at the institution was deeply derogatory. And for a lot of people that work in capital markets right now, they themselves might be losing faith in the future of this industry. How do we make sure that people stay engaged with capital markets? I know that you're engaged also with the Trump accounts as well. Is that a feature in this effort to keep this country engaged in capital markets at a time of deep skepticism over the future of capitalism and of technology?
So look, we're very, very privileged as an institution to partner with the administration on Trump accounts. We believe it's a very important public policy initiative. It's giving the kids of today a future in the stake of America tomorrow. And, you know, it's a real privilege. We're a GSIB. We're a key part of the financial market ecosystem. We serve the government every single day, and we're very proud to be one of the first institutions to match the Trump administration's initiative by doing it for our own employees. So financial literacy, financial education, giving people a stake in the economy of tomorrow is really important, and we're very proud to play our part in it.
What other things can we do?
We're very focused as well on home ownership. We launched an initiative this year where everybody who earns less than $100,000 a year who wants to get their step on the property ladder, we give them assistance to do that. We do a lot of digital education about how to save and how to, you know, build for the future. And I think we're also very focused on wellness and health benefits to make sure we're a leader in that. So when people join BNY, they not only join for a career, they join to be part of a family.
I think we often have doubts about the consumer sentiment numbers we see, Lisa, on a monthly basis, and we say that can't be real. People can't be this downbeat about this economy compared to, say, GFC and the pandemic. But maybe it is real. Maybe they just look at the future right now, the technology, the language that's used about the labour market, and have their doubts about where they fit in and what capitalism ultimately is going to mean to them in the next several years.
A lot of people do say that the level of uncertainty for the future has led to a lot of discomfort. Last night at the dinner table, I will say that my 14-year-old said, I'm worried about having a job. I mean, I don't know if I can get one in this world. I mean, these are actually things that they're talking about.
Have you heard about Casa Lisa?
Well, as somebody who grew up in Ireland, I was always worried about getting my first job. We came from an economy that had a lot of unemployment. Everybody had to emigrate. And I emigrated, and here I find myself in New York. So I think if you're a glass half full person, there's still a lot of opportunity out there for those who want it.
We're lucky to have you here in New York, sir. Thanks for being here. We appreciate it.
It's a pleasure. Thank you.
Thank you. Dermot McDonough there, the BNY CFO. If you're just joining us, welcome to the program. Equity futures a little bit lighter this morning. We're softer. We're down across the board on the S&P by about 1/3 of 1%. With an update on stories worldwide, let's get your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. We are seeing Kroger shares falling nearly 5% in the pre-market after Walmart's cautious results, but in an interview before that, the supermarket chain's new CEO told us here at Bloomberg he's looking at major price cuts to win back market share. Kroger aiming to protect margins by trimming expenses by directly importing its merchandise. Meanwhile, taking a look at NVIDIA shares, they are falling just slightly in the pre-market. The tech giant reporting another blockbuster quarter with record sales and income. The results topping the average analyst estimate, but some are questioning the sustainability of its growth, especially amid higher competition. And SpaceX filed for what stands to be the largest IPO in history with a $75 billion funding target. The company revealing billions in losses along with a plan to give Elon Musk near total control over the company and up to 1 billion shares. The company's goals include a human settlement on Mars and data centers in space. That's your Bloomberg Brief. John?
Yahara, thank you. Thank you for the update. Up next on the program, a fresh warning from Wall Street.
You have bond rates going up. Inflation is a little bit higher than people thought. But I'm not surprised. The notion that somehow people said they'll never go up is the wrong notion. They could be much higher than they are today.
Up next, we'll catch up with Sam Linton-Brown of BNP Paribas from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Equity futures this morning down by 0.25% on the S&P 500. Upset just a little bit by this move in the bond market. The front end of the curve, twos this morning. Yields higher by 4 basis points, approaching 4.1% all over again, with energy elevated up 2% on WTI, on Brent back to about 107. Some disruption in the negotiations potentially between Iran and the United States, as the Supreme Leader says the uranium must stay in Iran. Under surveillance this morning, a fresh warning from Wall Street.
You have bond rates going up. Inflation is a little bit higher than people thought. But I'm not surprised. The notion that somehow people said they'll never go up is the wrong notion. And so companies like us prepare for higher rates, lower rates, and figure those things can happen. They could be much higher than they are today.
So here's the latest this morning. Global bond yields hovering near levels not seen since the great financial crisis. The JP Morgan CEO, Jamie Dimon, warning investors that interest rates could continue to climb. Sam Linton-Brown of BNP Paribas writing, the market sees resilient growth despite higher energy prices and higher rates. Our view is essentially that the bifurcation can continue in the near term. Sam joins us now for more. Sam, good morning. Good morning. Let's extend some of those issues, and welcome to New York. Let's talk about the prospect for interest rate hikes as well. As a team over at BNP, I think the research team doing a decent job recently of really highlighting the risk of that actually materialising this year. Can you walk us through just how high or how low the bar for hikes actually is?
Yeah, look, our view at BNP Paribas has been that the Fed wouldn't be cutting rates this year. That's been our view since December of 2025. And we're quite open-minded to the idea that it's possible the Fed could actually be hiking rates. I think the key is we'd need to see even more strength in the labour market. So an unemployment rate beneath 4%, accompanied with some type of de-anchoring in long-term inflation expectations across the panel of what the Fed look at, that could be consistent with a Fed that really becomes open-minded to rate hikes.
They're the conditions. In the beginning, do you have to change the communication, drop the easing bias? We've been talking about the Federal Reserve minutes that came out yesterday. Lisa, like me, like everyone, surprised the easing bias is still there, given the minutes we just read.
You do need to see that sequencing of communication change. So you'd need to see the easing bias dropped, you'd need to see a tightening bias included, and then you may be in a situation in which the Fed would be more sort of openly signaling that the rate hikes could be coming.
Did the minutes indicate that some of the Fed members might be prodded to look through AI-related inflation to some degree?
I think as it relates to AI, the challenge for the Fed is what it's going to mean for inflation in the near term. Because in the near term, the sentiment effect is clearly very positive. It's driving stocks higher. That's having a positive effect on consumption through the wealth effect. At the same time, you've got a huge amount of capex, which is also supporting economic growth. So there's clearly a demand impact near term. The supply impact is there to some extent as well, but it may only come later. So the view that we've actually got at BNP Paribas is AI will be inflationary in the near term.
At this point, it seems like people are readjusting their sense of what the danger zone is in the bond market with respect to how much it curtails risk appetite. What's the new metric for the danger zone? I'm using Max Kettner's term over HSBC for, say, 10-year yields or benchmark rates. And does that highlight how maybe these aren't such restrictive rates at the Fed currently to the rate hiking point?
It depends why rates are rising. This sell-off has been predominantly driven, at least the latest leg in the US, by higher expected short rates. And the reason we've priced out rate cuts and we're beginning to price in rate hikes is because of how spectacularly strong the economy is performing. The labour market's performing better than anyone expected. Claims are low. Weekly ADP hiring is high. NFP is surprising to the upside. So the market's really having to discount this backdrop in which the economy is stronger than expected. So if rates are rising for good reasons, so to speak, it means risk assets, as we've seen with credit, as we've seen with equities.
It still is problematic. I mean, if we get to 5.5%, it's still 5.5%, even if it's for all the right reasons.
I think it really depends. If that's reflecting higher expectations of neutral rates because growth is just so strong, risk assets may well be okay with that.
Are rates rising for the right reasons over in Europe?
I don't know what you possibly mean. Yeah, look, in the UK, we've clearly had some fiscal-related sell-offs recently, but that's actually come back now. I think across European bond markets, across EGBs, they are actually in large part rising for the right reasons. At least at the long end of the curve, it's predominantly related to fiscal stimulus in Germany, which remains a very important story and, in our view, an important driver of why European growth may be actually quite resilient.
So if the ECB hikes in June, you don't consider that a hawkish policy mistake?
No, I don't think so. The ECB need to respond to higher inflation expectations given the energy shock. Whether or not they hike more than our central case, we have 2 hikes, June and September. If they hike more than that, then I think we could be getting into the territory where the growth impact will be quite negative, and therefore we could be looking in 2027 at some reversal of those hikes. I think the UK is a similar story. Right now, the market prices in hikes, and then it doesn't price a reversal of those hikes. That looks a bit wrong to me. It looks a bit wrong to us. We think the front end of curves could actually flatten a little bit in that environment.
What is a policy mistake of not hiking rates? What does that look like, and how realistic is that?
It looks like 2022, where you wait to see wage growth evidence before responding to the shock. And at that point, it's already too late because the second round effects have already kicked in.
Sam, that's scary stuff. A repeat of 22.
And we're not in that environment because the starting point in 2022 was, for example, in Europe, rates were at 0 and inflation went to 5. So we had a negative 5% real rate. This time, inflation was at 2, rates were at 2. So it was 0% real rate. So you had a 5 percentage point differential in real rates, and the shock is thus far much less severe. But central banks remember 2022. They remember perhaps being a little too slow, and I think that's why you have this hawkish bias.
Sam, it's good to see you. Thanks for being here. Sam Linton-Brown there of BNP Paribas, haunted by 2022 over at the ECB and maybe not 2008 or 2011, which is perhaps what they should be reminded of.
Well, but this is the ultimate conundrum, right? On one hand, you could say if they hike rates, they could precede some sort of crisis in growth. You could also say if they don't hike rates, you could precede what could be a spike up in inflation. The fact that we could have a really good argument on either side gives you just how inconclusive this moment is.
Lose-lose.
Exactly.
This summer as a central banker. Okay. Up next on the programme, we'll catch up with Laurie Calvasina of RBC, David Bellinger of Mizuho, Barbara Reinhardt of Voya Investment Management, plus this one, the US Undersecretary of Defense, Emil Michael. That's an important conversation in the next hour on Bloomberg Surveillance.
Estava sitiada. Isso ao começo eu tremia, não sabia o que fazer. Foi a mais terrível que eu passei na minha vida. Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talagi kon ahmalep ahmata chuara panglop ahmalep manjang lenya ay kun mamanya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, I'd still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
There's still this institutional
bias in favor of the U.S. equity market going higher.
The bull market still deserves the benefit of the doubt.
We eventually will see AI adoption spread.
It's accelerating, and it's not going to slow down. This technology is not going to stop, so we have to invest in it.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. We're pulling back once again. We're down by 0.25% on the S&P after snapping a three-day run of declines in yesterday's session. This morning, the losses resume. We're down by 0.4% on the Nasdaq, and decent numbers from Nvidia not helping out this morning. In the bond market, yields are higher again, particularly at the front end of the curve. Twos are higher by 4 basis points to 4.1%. In the commodity market, energy is inching higher as well. Brent crude up to 107, up by 1.9%. Going into this data in about 29 minutes' time. Jobless claims in America.
It has been an incredibly low figure that just seems to get revised lower and lower. We saw the lowest initial jobless claims going back to 1969 a couple of weeks ago. Is this still a viable metric at a time where there's so much transition and people are measuring the economy in such a different way? I ask this because we're talking about the replacement of lower value human capital with bots. I mean, it's horrible the way that Bill Winters talked about it. It's not showing up in the numbers. So people are saying, just as we were having a conversation earlier in the show, is it right? Are we reflecting the right things? What does this mean? What is the signal telling us?
Let's talk about price. There's always signal in price, and there's signal in the ability of corporations to pass on that price. Notable what's happened with Walmart this morning. You've mentioned it already a few times today. This has been a central question in economics. Do we need to hike interest rates? How do we measure that? How do we gauge that ahead of time? A couple of ways of doing that. You start with the labor market. How tight is this labor market? Is consumer price tolerance high enough to pass on higher costs, to allow those higher costs, those higher prices to become embedded more broadly in the economy? Is that something the central bank needs to respond to? I know it's a very sort of narrow subset of companies we're talking about right now, but what you talked about from Walmart, from Kroger, I think is difficult to look at that data and suggest that what we need right now is interest rate hikes.
Walmart increased the amount of price cuts, discounts that they did across the board. They absorbed almost or virtually the entirety of the increase in fuel costs, and they took it as a hit to their margins, which is why they came in with lower than expected earnings, even with a consumer that all in all is holding in strong. Then you saw Kroger's CEO coming out and saying that they're planning the biggest cuts in years because they want to compete better with Walmart. Does this give comfort to the Fed? On the flip side, you have inflationary inputs from AI. You have inflationary inputs from other metrics like airline tickets. So it opens up this interesting question. Are these the places that are cutting prices because they don't have the pricing power on some of their products that, say, some of the airlines do, where people still want to travel, and some of the luxury products? Are we seeing inflation in pockets in this dual economy where you're seeing very different speeds in different places?
Get to neutral, stay open-minded. Get to neutral and stay open-minded. David Kelly said it yesterday, enjoy the summer. If you're a central bank right now, take the summer off, don't do anything. Get to neutral, stay open-minded. There's no argument for an easing bias either, by the way, over this Federal Reserve. And see how this summer turns out and see if we can address the issue. Look, I know everyone's sick to death of this situation in the Middle East and the ongoing headlines. The blockade continues, then you get more headlines from Reuters on Iran and keeping uranium in the country, and crude starts to move higher again. But ultimately, it's a central issue. It's a central issue for the outlook for prices and the outlook for rates.
You say get to neutral, and yes, there is the Iran situation.
I don't mean take rates to neutral or whatever. There's a big debate about that. I just mean communication-wise.
But what's interesting to me is that actually you can make an argument to that point that we are at neutral. And I think that that's the easing bias that gets removed. That's another way of thinking about it, is if you get to neutral in your guidance, you're saying this is ultimately a neutral rate, which you can make an argument about because the economy is going so strong.
That Federal Reserve meeting will have Kevin Walsh, and it will also have Chairman Powell, just as Governor Powell. So it's going to be an interesting one in about a month's time. Coming up this hour, Lori Calvasina of RBC, is SpaceX and OpenAI prepared to go public. David Bellinger of Mizuho breaking down earnings from Walmart, and U.S. Undersecretary of Defense Emil Michael as the Pentagon weighs the risks of AI. We begin this hour with tech-hungry investors gearing up for the biggest IPOs in history. Lori Calvasina of RBC writing investors we spoke with were interested in what else might offer opportunity beyond semis, tech and AI, but had difficulty envisioning what those were. Lori joins us now for more. Lori, good morning.
Good morning.
We're going to get a ton of IPOs, some major IPOs in the next 12 months. Do you sense there's enough demand out there to absorb all of this supply?
But, you know, to be honest, I try to stay out of those conversations as much as possible. But I do think that what we've seen within the AI theme itself is a bit of a broadening of the AI theme, that people have, you know, kind of owned what they've owned, and they're interested in looking for new things within that theme. And, you know, to the quote you guys had earlier when I was out seeing investors in Europe last week, I mean, it was really funny, John. Nobody wanted to talk about the broader market. You know, I would sort of like tell people, this is where our target is, this is why, this is how we're baking in inflation, damage from the Middle East. And they're like, okay, that's fine. Let's talk about sectors. And so just really wanting to go through and look at the areas that are cheap. So things like financials, healthcare, energy, and sort of debate, you know, is there opportunity to move it into some of these things? And I think what people were really struggling with was, on the one hand, they felt like they've been in a lot of these semis names, and, you know, maybe it's time to take some chips off the table, but then you go and look at the fundamentals of all the other stuff, and it gets quite hard for people. So to me, that illustrates this moment that we're in the market perfectly, which is, you know, just kind of clinging to this stuff that has bigger cap exposure is causing us to creep up. But then we have, you know, like those 3 down days, people kind of feel this urge to pull back, and it's sort of like they're fighting within themselves.
I think it depends what seat you're in right now. I had this conversation earlier this week. If you're a technical strategist and just looked at the charts of semis, I can see why you'd get nervous, because we saw semis just explode higher and become really detached from, say, the 50-day moving average. We've seen all of that analysis. But if you're a fundamental investor and you just look at valuations, the earnings profile of some of these companies, any reason to worry?
Well, so I would say on the valuation metrics, and we look at the Russell 3000 semis, just that kind of GICS level 3 industry, and we have data, I think we go back to 1989, and we look at like a median PE. So it's not a cap-weighted time series, but when you do that relative to the broad market, we have crept up to recent highs. We're not at all-time highs. Now, obviously, there are stocks where that statement does not apply. So I would say valuations do feel like they've got a little more pressure on them than they did a few months back. When I look at earnings revision trends, though, for semis, this is what I think sort of captures, again, this complexity of the moment. We're seeing, you know, a lot of areas of the market that had been at very high rates of upward revisions and pulled back. You can say that for probably like 7 of the 11 GICS sectors. If you look at semis in particular, we're still up around peak-like rates of upward revisions. So earnings sentiment is really high. And that's normally kind of a scary chart as a strategist, because you don't want to be there when it starts moving down. The problem is, I can't sit here with a straight face and tell people to say short that space or sell that space, because if you go back and look at the history of the past 30 years, sometimes we get stuck at peak for a couple of years. So what I've told people is we just have to be really, really vigilant in terms of watching that area of the market. It does feel to me like there's some vulnerability to profit taking at some point, but that does feel more short-term in nature.
You kept talking about how people are looking to invest. And we keep hearing this, cash to put to work. At what point does the cash run out? I mean, is this just a big transfer right now because people see cash as a liability due to the inflation in the economy?
Well, look, I would say, you know, my bread and butter are long-only investors, and they're really not allowed to sit on too much cash, right? They need to be fully invested. So it really is about kind of moving the chips around on the table. I think it's a little bit different if you're talking about retail investors. And that's where I think sort of looking at the labor market and the ability of the retail investor to kind of keep goosing stocks up. You know, I think the cash issue matters there a little bit more. But in my world, people feel like they have to put money to work.
I do have to get the sense of the danger zone. I'm sorry to keep coming back to it. Max Kettner, thank you. Copyright, I understand. With respect to yields, and at what point that will start to crimp some of the appetite and be an alternative in terms of income driver for investors. Are we getting close, or has the bar just shifted higher?
It's not an answer. You can't just look at yields in isolation, and I think that's what's hard about this moment in time. And so I'm gonna, if I can indulge you in a little bit of math, and Tom Keene would probably throw something at me at this point, but if you look at my valuation model, so what I've got baked into my 7,900 forecast, which by the way is a 12-month number, it's like a 6% return. I've never seen people so annoyed about me being bullish with a 6% return. But anyway.
Who got annoyed with you?
People want me to be bearish. It's really funny.
Who are those people? Where are they coming from?
I'm not going to say specifically, but I'm saying I am feeling a little bit of the... Not Lisa. Not Lisa. Just like out in doing the course of my day-to-day.
Is this still a hated bull market?
Yes.
Is that what you sense? That's crazy.
Yeah, I think in certain camps. I think in certain camps. But going back to the valuation, I've got 3.3 CPI baked in, a flat Fed, and 4.5 10-year yields. I take the consensus earnings, haircut them by 5%. Within that, I leave the AI numbers alone, and I take everything else down by about 7.5%. Versus consensus, not an overall cut. That gives me 79.29 as a fair value estimate for the S&P in 12 months' time. If I put 3.8 on inflation, if I take a couple of hikes and put them in, and 5% on 10-year yields, use the same earnings, I can get you to 7,400 on the S&P, which is about where we're stuck now. But if I want to really bear that number up,
bear it up,
I've got to cut the earnings. And so if I cut earnings, not just haircut the consensus by 5%, but put a 5% year-over-year decline on the 1Q27 earnings, then I can get you 6,300. And all that is to show is that it's a sliding scale. The PE is negatively impacted by the Fed, by 10-year yields, by inflation. All of that stuff moving up pushes the PE down. But the PE is then used against the earnings, and the earnings forecasts are astronomically strong right now. And even if we haircut them, kind of that non-AI part by the typical, number by which they're too high, I'm still getting a, really reasonable number on the market. I can get you up 6%, I can keep you flat. But if I want to take you down, I gotta attack the earnings, and you gotta attack the AI piece of that, not just the rest of it.
We've gone over this as the 2-year just turns to 4.1%, by the way. Energy shock, rate shock. For it to become an earnings problem, you've got to believe it becomes a growth shock. We haven't seen that yet. You just haven't seen that yet.
Because the note of growth right now is not stemming from consumer demand and isn't stemming from some of the areas that are getting hit by these other areas. It's being driven by a secular overlay that is independent from cycles because of the hope of what AI can accomplish.
10s right now at 460, not the danger zone, apparently. To your point, I'm with you. At some point, you climb fast enough that investors start to get a bit jittery about the potential for a hit to growth. But clearly, based on how things have played out, we're not there yet.
Love the mathy morning. Actually,
I like that too.
I actually really love that because I love that people are saying, come on, Lori, bear it up. And she's thinking, how do I bear this thing up? And it's like, all right, I got to cut this over here. But it gives you a sense of how high the bar is for the...
It's been a hated bull market.
It has.
And look,
since GFC.
Yeah.
If I could just say one more thing. I think there's this whole accusation of the equity market has been complacent and doesn't understand what's going on in the Middle East. I don't think that is true. I have talked to enough investors that are worried and wary and paying attention. But I think that if you're a portfolio manager who's looking at the earnings and looking at the companies, you are getting hit in the face every single day with the strength of this AI earnings story. And by the way, the rest of the market is filling people's ears with commentary about how they're really good at managing through crises, and their numbers haven't collapsed either. So from a bottom-up perspective, it is very, very hard to just make the worst-case scenario assumptions and make that your base case.
I think there's some career risk involved as well. If you're a PM right now and you're not involved in some of these names that are driving higher, you get to year-end and you weren't in it, that's a big problem.
Especially because inflation is going to create a real negative return for any cash or safer instruments. What's the big risk right now? And ultimately, right now, the risk for a lot of people is not being involved in this.
I'm just going to remove Laurie from this part of the conversation because I'm sure she'll want nothing to do with what I'm about to say. I also think there's a lot of skin in the game now with these major IPOs set to come to market in the next 12 months that people need to speak quite favorably about this equity market to make sure the dancing continues, the music keeps playing, and we get this away because there is a lot of money to be made going into year-end.
All the fees tied to IPOs.
Astronomical.
Astronomical. All the bridge loans, all the other deals that would come to the fore as a result of this. There clearly is an incentive to talk favorably and see them all go off as well as Cerebrus.
Can bring Laurie back into the conversation now, Laurie. If TK ever throws anything at you, throw something back, all right? Laurie Cavacino of RBC. Laurie, thank you. Appreciate it. Thank you very much. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Stellantis unveiled a sweeping turnaround plan focused on boosting profits by concentrating investments on a handful of key brands. The company says it will invest $70 billion through 2030, launch more than 60 new vehicles, and cut billions in annual costs. But investors appear skeptical, with shares down 4% in the pre-market. Samsung reached a deal with its chip workers to avoid a strike, agreeing to a long-term bonus program tied to profit targets. The company could distribute as much as 40 trillion won over 10 years, with employees receiving on average annual payout of about 513 million won, or $340,000 if targets are met. And AI agent Anthropic is on pace for its first profitable quarter. The company is seeing a surge in revenue driven by demand for its AI software. The cloud maker expects to post nearly $11 billion in revenue for the second quarter, more than doubling from the prior 3-month period. That's your Bloomberg Brief. John?
Yahira, thank you. Thank you for the update. Up next on the program, the morning calls, plus David Bellinger of Mizuho on Walmart's mixed earnings report. That conversation just around the corner, live from New York City this morning. Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right now, I think it's all hands on deck. There's so much money to be made in the AI space that whether it's 4%, 6%, 8% on interest rates is trivial. Unlike the .com, where I think everyone was excited, there is so much angst around this. From a personal level, I don't think we've ever seen anything like this.
That was Peter Chair of Academy Securities. Really thoughtful conversation. Catch the full conversation on Bloomberg.com and on the Bloomberg terminal. Really echoing what Lisa's talking about. At what point does this bond market start to cause real problems? Haven't really seen them. Saw a 2% move on the S&P 500 over 3 sessions. In the equity market this morning, we're down by 1/3 of 1%. On the Nasdaq, we're down by 0.5. If you check out the bond market, yields starting to creep a little bit higher. Lisa keeps talking about the so-called danger zone that Max Kettner over at HSBC talks about. 460 apparently isn't it. Yields up by 2 basis points this morning. 4.1 at the front end of the curve apparently isn't it. Yields up by 4 basis points on 2s. And when I saw those minutes yesterday, and they were super hawkish, by the way, I looked at the price action, and the market reaction to them. Pretty tepid stuff.
Because they don't even begin to approach the hawkishness of a market that's pricing in a rate hike come early next year. And they're saying, what's taking you so long? Why are you then maintaining an easing bias at all? That, to me, is the most dovish sign of all, that there was no argument in there for keeping the easing bias in place. There is the skepticism being played out in the bond market, but all the equity analysts say it doesn't become a problem because ultimately it's rising for the right reasons, which is that growth has been strong. If it starts rising for the wrong reasons, say that the U.S. government debt is now $35 trillion and potentially rising, and then that's potentially a problem given how quickly it's moved up, you know, that could be a different story, but for now, it isn't necessarily putting an end to this.
Max Kettner, cushioned by earnings,
yeah.
Right? CIBC, Chris Harvey, 80-20, new price target year-end on the S&P 500 earnings. Earnings. Every single upgrade we've seen to the S&P 500, whether it's Laurie Calvasina of RBC, whether it's Barclays, Morgan Stanley, or Ed Jardini, they've all pointed to the same thing. Powerful earnings.
And we've seen it in terms of how much has been delivered above and beyond. And it isn't just what we're seeing in a big tech, but big tech is certainly driving it. And the margins are just incredible. I mean, some of the earnings growth that you're seeing in NVIDIA is like 95%. That's the expectation for next quarter, year over year. If you take a look at their sales, they've doubled since the first quarter of 2025. This is catastrophically amazing things. It's not exactly a phrase that I'm ever going to use again, but going forward, that's what people look at.
You might do.
I mean, it's
a bit off-brand. But you might do.
Catastrophically amazing, I think it's right on brand.
Let's get you some morning calls this morning. With one stock in focus, NVIDIA. First up, Goldman Sachs raising its price target to $285, seeing further upside potential in rising CapEx expectations. A second call from Morgan Stanley, raising its price target to $288. The analyst calling NVIDIA the best value in semis. And finally, BED hiking its price target to a street high, $500. The firm's model showing gains in inferencing and growth well ahead of hyperscale AI CapEx. That stock is negative by about 0.1% this morning. Sticking with earnings, Walmart shares falling in the pre-market after solid sales growth failed to offset concerns over rising energy costs. David Bellinger of Mizuho with an outperform rating on the shares and a 137 price target. David joins us now for more. David, good morning. Good to see you.
Hey, great. Thanks for having me on.
Stock's down about 2%. Earnings call is underway. This phrase came up, investing in price. We've been talking about that. Are they struggling to pass it on, or is this just a fight for market share?
Yeah, I think it's the fight for market share. So very inline quarter. It seems like inline isn't enough these days, especially as you have more of this consumer pressure building. The tax refund payments basically fizzled out. I mean, those are up 18% year over year. Now you've also got consumers going straight into the teeth of these $4.50, potentially $5 gas prices. Walmart's seeing that, I think, in their business, incremental pressures on the low end, but they're also seeing it on the cost side. And that's what hit them today. Talked about 250 basis points that was shaved off of operating income dollar growth because of higher fuel cost. But I think what's concerning investors today is that that's only a partial period impact for Q1. So the full force hasn't hit in Q2, Q3, and Q4. So we'll see what's to come and if prices have to move up across the space. But Walmart is making a very pinpoint move, very decided move to keep prices down as much as possible, as long as possible. And this is a share gain story.
Are they in the strongest position to do it? Versus, say, a Kroger versus a Target? Are they in the best position to do this?
Yes, I would say absolutely. Did you think about the alternative and creative business lines Walmart has? Advertising, marketplace, these are really high margin, great businesses. Those are a source of funds to invest. Think of those as Walmart's AWS. Like Amazon has AWS to go after retail pricing, take all this share. Walmart has elements of that. Others in retail, they don't really have that cookie jar to dip into, that bucket. So Walmart is better positioned than most, and that's why we still like this name.
Walmart's investing heavily in artificial intelligence. They've been talking about how they're trying to transmit it to each one of their associates, as they call them, their employees. I'm looking right now at the number of employees at Walmart. It's gone from 2.3 million to 2.1 million and sort of stayed at that level. Is that a positive for the stock in the sense that they are investing more in AI and seeing where they can get efficiencies elsewhere?
For sure, for sure. We don't expect headcount cuts at Walmart. It's more of keep this employee count pretty stable, and then you could grow incremental revenues off of that. So a more powerful flow through, a more powerful earnings model. But they're talking about the business being very people-led, but tech-powered. So it's more of an amplifier for their employee base as opposed to cuts or anything like that. But it should have cost savings throughout the business. And then we've done a lot of work around agentic commerce, which is extremely, extremely early days. But that could put Walmart up at the top of the list. Again, more of this share gain, especially if they have lowest price, fastest speed. That's what this agentic shopping will prioritize, and we think Walmart's in a good spot from that perspective as well.
So bear with me, but a lot of places are talking about the idea of keeping their staff the same, maybe shrinking just a little bit, and then gaining a significant amount of market share. Where are they taking the market share from? Who's losing on the other side of this as they do more with less?
Yeah, it's a great question. So a lot of these large cap, mega retailers, Walmart, Amazon, Costco, they've been gaining share, especially in the grocery category is one. It gives you that frequency of purchase. You get add-ons into other categories. But it's a lot of these smaller retailers, not as much investment over the last several years. And then a lot of these private guys, mom and pop type stores. That's where they don't have the capability to invest to do such expedited delivery. Look at Walmart today. Store orders up about 50% fulfilled from the store. A lot of that is done within 3 hours or less, a lot of them 1 hour or less, and Walmart's even doing 30-minute deliveries. So if you have that capability, you're definitely gaining share. It's expensive, takes a long time to build. You'll get hit with higher fuel cost in the process. But at the end of the day, it seems like a net-net winning strategy that you get all this share accumulated and it's pretty sticky.
Stock is down by 2% so far this morning. David, good to see you. Thanks for being here. David Banninger there of Mizuho on Walmart and the fight for market share in the retail space this morning. And that fight is picking up with Kroger in the mix as well.
Yeah, Kroger's trying to hang on by cutting prices potentially in order to compete with Walmart. Walmart right now is saying we'd rather miss or be sort of slightly off or in line and continue to gain market share. Again, this is the rearranging of our understanding of what retail looks like going forward, especially because some places just do not have the capabilities to keep up.
To that exact point, David was talking about it. They've got the business model to do it. The Amazons of this world have got the business model to do it. The other companies probably don't have the business model to do it. Walmart down in the pre-market, negative by about 2%. Up next on the program, we'll get you some jobless claims data. That drops in just a moment. We'll get reaction from Barbara Reinhardt of Voya Investment Management. Live from New York City this morning. Good morning. Equities declining by 0.4% on the S&P. Bond yields a bit higher, up by 5 basis points on twos. And in the commodity market, crude up by close to 3%. WTI at 101, Brent at 107.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equity futures on the S&P down here by 1/3%. On the Nasdaq, we're negative by 0.5. In the bond market, yields climbing, going into jobless claims, up by 5 basis points now. On 2s, the sell-off in fixed income resumes north of 460. On 10s again, up by 3 basis points on the session. The initial catalyst for some of this price action was earlier this morning in the commodity market. Brent and WTI creeping higher. WTI up by 3%. Brent crude up by 2.3 to 107. Some tension in the negotiations in the Middle East. That's the cross-asset price action. Let's get you some data. Mike McKee has the latest. Morning, Mike.
Good morning, John. Everybody keeping an eye on jobless claims. Isn't going to get a whole lot of information. No change almost. 209,000. Last week, revised to 12. So we're really not seeing many changes there. And the continuing claims number, 1,782,000, just up a little bit from 1,776 the week before. The interesting thing is Bloomberg Economics has a piece out that suggests that maybe jobless claims are being distorted by efforts by states to cut down on fraud, and that's why we're not getting a comparative rise in jobless claims, but we'll just have to keep an eye on that. Philadelphia Fed is out, and the Philly Fed number goes to negative 0.04 from 26.7, a big drop. Prices paid at 47.9. That is down from 59.3, surprisingly. And prices received at 26.3. That's down from 33.5. So a little bit of an odd number there in terms of the pricing numbers. And housing starts come in at 1,465,000, down from 1,507,000. That's a 2.8% drop. Building permits up by 5.8%. We'll see if that translates into actually anything. What people are really going to be watching, guys, is a little bit later this morning we get the S&P Global U.S. Manufacturing, PMI, Services, and Composite. Those will be the preliminary numbers for May, and we saw downturns in Europe when those numbers came out as the war starts to take a turn on the economies, and we'll see if we get that same result here.
They've had a rough run when it comes to the PMIs over on the continent. Mike, thank you for that. Every single time we get jobless claims drop, tumbleweed. No story here whatsoever. Nothing to talk about. Everything's okay, apparently.
To me, it's flatlining, right? Which is the reason why people are thinking, is this thing still on? Everything okay over there? Is this actually a signal in any way? If it is a signal, it's being taken as things really are not deteriorating materially in the labor market, which checks out with some of the spending data and some of the other labor market metrics. And the response then is maybe not only are we at neutral, but potentially the Fed could have to hike. I was looking at the WIRP function, looking at Fed funds rates, the expectation for any kind of rate hikes or cuts. We're now almost pricing in a full rate hike by December. Just giving you a sense of how much we're pulling forward those expectations.
Let's talk about the deterioration in the bond market this morning. Bonds down, yields up 5 basis points higher on 2s to 4.1% on a 10-year this morning, still higher by 3 or 4 basis points. Back above 460, 462 this morning. Barbara Reinhardt of Voya Investment Management writing, the AI boom will come to an end, but we think it's too soon to call the end. What worries us, it's the bond market. Barbara joins us now for more. Barbara, good morning.
Good morning.
What worries you about the bond market this morning?
Well, the backup in rates is somewhat concerning for the equity market, which is why the equity market has come under, a little bit of pressure over the past couple of weeks as bond yields have been rising. There's always a continuum and a place where bond yields rise high enough that PE multiples start to contract, and that's kind of the scenario that you saw in 2022. We don't think that we're there. We think that the inflation surprises that we've seen have really all been supply-driven by the price of oil, not demand-driven like it was in 2022 when there was a lot of money in circulation and consumers had a lot of pent-up demand. But we do note, in order to get the price of oil sustainably down, you need to see some resolution in the Middle East.
Back to square one all over again. We've got no idea when we get any kind of solution to the situation in the Middle East. So energy creeps higher, just a little bit more. Again this morning, yields creep higher as well. Going to ask the Lisa question. Lisa's asked it a million times. At some point, that bond market becomes a problem. Where is that point?
Oh, that's a tough question to ask. 5% was the big problem in 2022 on the U.S. Treasury 10-year. We're inching up. It's also been the speed of the increase in bond yields that causes the problem too. So it's really twofold, not only the exact level, but the speed of the increase. And this has been a fast rise in bond yields. But I would note the fundamental change at the margin on the news out of the Middle East seems to be inching towards a resolution. Every time you hear a little bit of good news on a resolution, oil prices come down below 100. That tends to help the bond market and certainly helps the equity market like you saw yesterday. But Lisa, you pointed out, the fundamental data in the U.S. is relatively strong. And, part of it is that the U.S. has much more energy independence and also is a more efficient consumer of oil, which makes it the effect of higher oil prices a little bit less in the U.S. than it is, say, in the rest of the world, specifically in Europe.
Do you think that the earnings that we're seeing in big tech are incompatible with the strength in earnings that we're seeing in some of the other companies that are seeing pressures from some of the cycle, based on whether it's oil prices or whether it's pockets of weakness in the consumer?
Well, you have to look at sales growth, and sales growth for 1Q looks like it's up 10%. So this is not operating margins just expanding. This is actual underlying sales growth. So the demand story looks to be pretty solid to us. Of course, the longer that this conflict in the Middle East continues, the more it starts to weigh on sentiment, the more it continues to somewhat cloud the outlook. But you didn't see that in 1Q earnings, so I think we're on a clear side for just a while longer.
Do you think that people are looking for a bearish side? I mean, do you think that people are looking for a reason to feel bad and they say, oh, it's the bond market, which is what we just heard from Lori Calvasino, but then she looks at the earnings and she's like, I can't find anything.
Right. So I think there's two things going on. So we've looked at this at Voya in great detail. You had two big secular bear markets in 2000 through 2003 and then 07 through 09. Those were bigger than 50% declines in equities. It takes an average of 25 years for an investor to forget a secular bear market like that. So we're just at the point where we're getting past the scars of the TMT bubble in 2000. So I think this little bearish tilt that you see into the market, this kind of always calling for the end is nigh, is likely to be with us for a while just because of that behavioral finance segment that we've been so scarred, not once, but twice in a 10-year time period, and we're not that far away from it.
Did that feel personal? Well, I just saw you start and laugh. Starting to laugh, and it just felt,
you know what I was laughing?
Go on.
I was laughing about the Homer Simpson, the end is nigh, ringing the bell with the thing. I mean, I was just thinking, there are quite a few little Homer Simpsons running around right now.
Well, and meanwhile, I was thinking Lisa and I had this nice moment.
It was a nice moment. It was a nice moment.
This great connection that you understood.
Not a bullish connection, just in case you thought it was that. Just saw this headline. I wanted to bring it to you just briefly. So when there was this big stress, the initial energy shock, certain currencies were exposed to that, and certain central banks, certain jurisdictions had to protect their currencies, defend them. Over in Turkey, the initial conversation was about liquidating gold reserves to defend the currency. Just saw this headline cross that Turkey liquidated almost all of its U.S. Treasury holdings back in March.
It opens a question of how much the weakness that we're seeing in treasuries right now is due to central banks selling to defend their currencies and defend their economies due to the oil price shock. Turkey liquidated, it sounds like, pretty much everything or quite a bit in order to defend its currencies. again, goes to the question of who will the ultimate buyer be for some of this debt. I wouldn't take Turkey as a signal for all other central banks or necessarily global dynamics. Nonetheless, again, on the margins, some of the big ballasts of the bond market are facing their own pressures and are having to actually use their cash.
The team here at Bloomberg just breaking down the numbers just to share them with you. The amount of treasuries held by Turkey fell to $1.8 billion by the end of March, down from $16 billion the previous month. So not a massive amount in the context of the overall treasury market, but real money. Barbara Reinhardt of Voya Investment Management. Barbara, thank you. It's good to see you.
Thank you.
It was a beautiful moment. I shared it. I was happy to be here to witness it. Let's get you an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. Recapping that data we just got, jobless claims coming in at 209,000 last week. That's just lower than estimates. Continuing claims, meanwhile, coming in at 1.78 million, ticking up slightly from the previous week. Iran's supreme leader ordering that the country's near weapons-grade uranium should not be sent abroad. Reuters reporting that Iran's top officials believe sending the material outside would leave the country more vulnerable to future attacks. And crews at New York's LaGuardia Airport are working to repair a sinkhole discovered at one of the hub's 2 runways. The hole forced hundreds of flight disruptions Wednesday, making for a slow start to Memorial Day weekend travel. Some delays and cancellations were reported again this morning. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate it. Up next on the program, don't miss this. The U.S. Undersecretary for Defense, Emil Michael, live from Washington with Anne-Marie in the nation's capital. That conversation just around the corner in D.C. from New York. This is Bloomberg Surveillance.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
We have a very, very different strategy on AI. We've embraced at BNY AI as a superpower. AI for us means growth and opportunity. The rationalization over the last couple of years, we've largely dealt with through attrition. That's taken excess capacity out of the firm in a more strategic way, which I think our employees are very pleased to see.
A very different approach from the BNY CFO. That was Dermot McDonough on the programme a little bit earlier. That stock has had a fantastic run, trading under BNY as of today. Equity futures right now, the S&P pulling back by 1/3 on the S&P. On the Nasdaq, we're down by 0.5%. Tech in focus and tensions between the Pentagon and AI giant Anthropic remaining still quite high. A federal court signaling it may uphold the DoD's push to designate the company as a supply chain risk. Anne-Marie is in Washington with a special guest. Hey, Anne-Marie.
Hey, Jonathan, good morning. AI is not just dominating Wall Street, it's also dominating the conversations here in Washington, especially when it comes to the U.S. industrial complex. And an individual that's in the middle of this fight with Anthropic has been the Pentagon's Undersecretary of Research and Engineering, Emil Michael. Thank you so much for joining us.
Good to be here.
The last time I spoke to you actually was after this fight really brewed out into the public, and you had called the Anthropic CEO as having a God complex. Now it seems like this federal appeals court kind of agrees with the DoD. So if this stands, is the Pentagon truly ready to not use Anthropic and its models?
Yeah, well, when they were declared a supply chain risk, they took that to court, not us. We were ready to start a 6-month transition out of their using their services. And by the way, there's a lot of other companies that are very willing and able and excited about serving us because we just signed deals with Microsoft, OpenAI, SpaceX, NVIDIA. So we've got great other partners there.
Has the conversation stopped with Anthropic, or have you been in touch with them?
Conversation stopped. When you sue someone, you usually stop talking.
How awkward, though, is it, though? Because Dario Amodei was recently at the White House having a meeting with Susie Wiles, and other parts of the government are using Mythos.
Yeah, well, the thing is, the way I put Mythos is in a category with other cyber models. Some of these models are becoming very effective at cyber capabilities. And what I mean by that, helping you find vulnerabilities in your own code. That could mean that you could use it for defensive purposes to harden your network. It also means that a bad actor could use it for offensive purposes to hack code. So we have to, as a government, treat all these new capabilities in a different way than we've ever treated anything like this before to make sure our networks are patched, our community hospitals are protected, our utilities, everything that uses software and technology. So you'll see us as a U.S. government looking at all these models and working with them.
You're seeing everything right now. Is there anything that is up to the same level as Anthropic?
Yes, and I'll tell you why. Part of the reason these models are good at cyber is because of the coding revolution. All these AI models help you code. That code helps you train the next model on what good and bad code looks like. So if you recall that Claude Code was first out of the gate, but then OpenAI launched Codex, and then Elon Musk at SpaceX AI will have something similar, and those models will naturally evolve to be good at code. So I'm talking about every month or two, you will see another drop of a model that has similar capabilities.
So just to be clear, though, even though the DoD and you're describing it as supply chain risk, it is okay for other parts of the government you think safe to use it. What if it was like a Huawei that was described as supply chain risk? Should Treasury or Commerce be able to use it?
We have to remember we have a specific mission at Department of War. Our specific mission is to protect the American people and to protect our warfighters. And if the terms of service that a company gives us prevent us from doing that, for example, it says in their terms of service, we can't develop weapon systems. We can't use it for battlefield management applications. We can't use it to direct interceptions from an incoming drone or a missile attack. That's not the same thing that Commerce is worried about or HHS is worried about. So this risk is specific to the DOW and their ideology about not wanting to serve us in the way we need to be served.
You mentioned other these partners you're working with. Recently, I saw that Google, some employees wrote to the executives saying, we don't want to work with the Pentagon. We don't want this company to do this. Are you seeing pushback from AI? We're off of a weekend where the future of this country booed commencement speakers the second they mentioned the words AI or artificial intelligence.
Yeah, I think to address the Google things, I think 600 out of their 100,000 employees, or less than 1%, sort of had an issue with it. And I think they've learned from the activism of 10 years ago when employees wanted to import their political opinions into the company's strategy. And these companies are public companies. They have a lot of public shareholders. So the leadership has to do what's good for those shareholders. When it comes to the AI reputation and where they rank for the American people, the military is here and the AI companies are down here. And it's because the leadership keep talking about job loss and loss of sort of sovereignty as an individual. And I think that's wrong. I think they should talk about what AI can do, help you maybe be more efficient, help you grow your business, help you cure diseases, help you do things that it can do. And I'm encouraging all of them to talk about that piece, because I don't believe the bad piece, but I do believe in the good piece.
Standard Chartered CEO said that they're replacing jobs with replacing, quote, lower value human capital with AI. Do you see your rank and file embracing AI, or are they pushing back and concerned about also jobs?
Yeah, so as the Department of War, we are embracing AI. We went from 80,000 users before we deployed AI broadly to the department to about 1.5 million out of our 3 million employees and contractors. So we're seeing great interest. And the reason is because it's making their jobs easier and it's letting them do more in less time. So I think some of these companies are using AI as an excuse to slim down the companies they already wanted to slim down, where we're using it, and we're not shrinking, to increase the productivity of employees.
I just got back with the president from China. You mentioned how Anthropic is on the same level as you're thinking OpenAI and what Elon Musk is doing in terms of XAI. Where is China right now? How close is the competition?
Well, the Chinese have historically benefited, let's say, from the IP of the American companies that have built really exquisite stuff stolen. And the way these AI models are stolen is by what's called the distillation attack. They sort of hit the model and so on. But that only goes so far. So I think our lead over China, 6-12 months, will continue to grow because we'll be better at figuring out how to stop those attacks. And just because we have the chips, we have the knowledge, we have the researchers, and we have competition in this country. So I think we're just going to outpace them.
Emil Michael, thank you so much for your time today.
Thanks for being here.
John, of course, that was the Undersecretary for Research at the Department of War, Emil Michael. Really interesting. 6 to 12 months, he says, we have that race when it comes to China.
Anne-Marie, thank you. Appreciate the update. Great work this morning down in Washington, D.C. More from Anne-Marie through the next 24 hours or so. Remember, tomorrow, the main event really for us here in financial markets, particularly the Treasury market and interest rates. Kevin Walsh getting sworn into the White House to be the next Fed chair. When I was listening to Emil there about the Defense Department, we're not shrinking. I was like, yeah, no sign of you guys shrinking anytime soon, given the risks on the horizon and the push to get a bigger budget down in Washington.
Yeah, and to finance all of the conflicts that have been brewing, especially given the pace of technological change that they've got to shift over into the Defense Department.
What a massive year we've got ahead of us. We could see not one, not two, but three of the biggest IPOs we have ever seen in the history of financial markets. Ed Ludlow is going to be tracking the story for us on Bloomberg Technology, and Ed joins us now for more. Ed, welcome to the program, buddy. What are you hearing about SpaceX, about OpenAI, and how long do we have to wait before we see Anthropic?
Yeah, a wild 24 hours. The SpaceX imminency is probably the biggest story, right? And, it was fascinating to go through the S1 with a fine-tooth comb, understand the debt implications, the exposure markets already have to SpaceX, the banks that are been absolutely willing to do very, very high rounds. They need that money to fund the business plan. If you're going to raise $75 billion, it's for a reason. And for SpaceX, it's as simple as buying the GPUs for their data centers in orbit. And the story with OpenAI and Anthropic is they are vastly compute constrained. They keep arguing, if we had more compute, we could do more things, show better revenue growth, and improve our finances overall. The IPO is the best mechanism for that. That's my understanding.
Ed, isn't it notable we're not talking about NVIDIA this morning? It used to be the headline act in tech, and this morning, waking up, I've mentioned tumbleweed twice now. It's just like tumbleweed going across New York. No one's really talking about it, Ed.
we just had the same debate for the show. You know, SpaceX is probably the lead, right? NVIDIA is completely flat in the pre-market. And generally speaking, the market sees it as a clean beat. But we knew that whatever the numbers in the quarter gone and the outlook for the period, it didn't really matter. You know, NVIDIA's principal argument is that their growth is tracking beyond hyperscaler capex. So they leaned on the fact that hyperscaler capex will be $1 trillion in 27, and it's on track for $4 trillion by the end of the decade, and they're growing beyond that. And they have this number, a $1 trillion backlog. It is just Blackwell-Rubin systems, and it ranges from calendar 25 to 27. But if you hit FA Go on your Bloomberg terminal and try and track what the street sees as being revenues between calendar 25 and the end of 27, we're not at 1 trillion. So there's something that's still missing here in what the market believes in the NVIDIA story longer term, beyond the moment that we're in right now.
Ed, it's good to see you. Looking forward to the programme. Great reporting, as always. Ed Ludlow there of Bloomberg Technology, alongside Caroline Hyde, coming up in a few hours' time. When you speak to Ed and anyone in Ed's world, they talk about compute constraints, supply constraints, energy constraints. When I talk to you and people in financial markets, it's a different conversation. There are capital demands here, there, and everywhere to funnel into this particular venture, this massive push to really go after this technology. And I just wonder how quickly we become capital constrained. How quickly investors start to push back.
It's a great question. A lot of the bankers are trying to get ahead of that, as Ed was talking about, given the fact that they know it's not unlimited. It also explains why some of them are trying to rush it out, right? SpaceX is first. Cerebras was a clarion sign to everybody. Let's get this going. And then, of course, OpenAI wants to be Anthropic for a lot of reasons, but also to suck up some of that demand. I will say on the NVIDIA tumbleweed point, I find this really interesting, especially given a story in the Financial Times I thought was really excellent about how much 40% of their free cash flow they are pouring into investments in the whole ecosystem. They are intimately connected to the success of all of the hyperscalers, of all of the small product investors. The investment is just massive in terms of the footprint throughout the industry. How do you gauge that? How do you sort of price out what that will ultimately mean?
Where's the opportunity? Where's the risk? It's going to be quite 6 months ahead of us going into year end, that's for sure. Coming up tomorrow, Brian Levitt of Invesco, the NICE president, Lynn Martin, looking forward to that, Alex Ullman of Barclays, and Yelena Shuretseva of the Conference Board. From New York City this morning, good morning. Thank you very much for choosing Bloomberg TV. Have a wonderful day. We'll see you tomorrow morning. This was Bloomberg Surveillance.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Just wanted to say, Primer is back. We've been scouring
exploring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
What a day. We got NVIDIA, we got SpaceX, we got OpenAI. 30 minutes till the start of trading. I'm Matt Miller.
And markets are down. I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, NVIDIA fails to reignite the AI trade as CEO Jensen Huang pushes to diversify the chip maker.
Meanwhile, SpaceX sparks the race for mega IPOs with potential offerings from OpenAI and Anthropic still to come.
Plus, Jamie Dimon says JP Morgan is poised to hire more AI specialists and fewer bankers as automation accelerates.
I really didn't expect NVIDIA to become the sideshow after the close yesterday. I mean, it was the SpaceX IPO. Come on, that definitely captured everyone's attention.
Because it has so many question marks around it, and there's so many insane things to talk about. But NVIDIA still has to be the driver.
Yeah,
of
I mean, it's more
markets,
important for the market. Currently, I don't know when SpaceX IPOs, maybe that won't be the case. But let me show you what it's doing pre-market. I mean, this earnings had everything for everybody: 85% growth, more returns to shareholders, and yet down 1%. Revenue jumped to $81 billion, and it forecasted another $91 billion for next quarter. I guess there's still some questions remain. It's hard to know where the expectation is for this company.
I mean, the bar has been set very high, right? And they've already rallied like 35% from the this year's low in March. So we'll talk about that. Plus, we'll talk about their other earnings. Normally, Walmart would be one of the top headlines. Its first quarter sales growth beat estimates, but the company signaled inflation pressures are building as rising fuel costs weigh on margins. And you can see the shares, which were already down 2.5% at the close yesterday, off another 3.25% today, Danny.
Let's discuss more about those NVIDIA earnings. Joining us now is Bloomberg Tech co-host Ed Ludlow. And I don't know, maybe we should stop talking about the one-day reaction because it doesn't really tell us anything about longer term after their earnings, because by all accounts, they're really, really solid earnings. I mean, huge amounts of growth coming from this company.
Yeah, I mean, in aggregate, the sell side is calling it a clean beat. And we went into it saying that the expectation was beat and raise, and to all intents and purposes, we also got that. $91 billion of sales, plus or minus 2% in the current period, is kind of bang on the whisper number on the buy side. You know, it was high against consensus on the sell side, but everyone's looking much further afield than that. And so now we're talking about numbers in the trillions. And I think what Jensen Huang and Colette Kress, the CFO, tried to do is extrapolate out a little bit. So they talked about the idea that there is a $1 trillion backlog, and they gave some clarity that that figure is 2025 calendar year through the end of 2027, and it's just Blackwell and Rubin systems, and it excludes all the other stuff that they do, like networking and CPU, etc. But if you go into FAGO on the Bloomberg terminal, across that time period, the street's not really seeing $1 trillion of sales yet. But core to that is the argument that NVIDIA continues to make, which is their own growth is outpacing the growth of the hyperscalers in terms of their CapEx. And so we're now down a percentage point in pre, but we've basically been flat overnight as we digested that.
They're on track for like $370 billion in annual sales, right? Which is 22 times the annual sales they posted in 2021, just 5 years ago. So the growth has been tremendous. I think bang on the whisper number for the outlook just doesn't cut it these days, because everybody expects them not only to beat the mean or the median, but to beat really the highest estimate on the street, the most bullish estimate out there. And they still could do that, right? Especially if China actually comes into play. The $91 billion forecast doesn't include anything from China.
Correct. It doesn't account for any, or it does not reflect anything from China, and there is nothing from China in the quarter gone. And basically what Jensen Huang said and Colette Kress said on the call is they do not know when China is going to be a market that's available to them. But even if it were, it's not moving the needle in the first instance, right? They've talked historically about NVIDIA being a $50 billion opportunity. The point you make is really good. So like, yes, right now, as I look at my Bloomberg terminal for fiscal year 27, sales are $380 billion. Part of the confusion is that this $1 trillion thing that NVIDIA dangles, it refers to calendar years. And so everyone's trying to do the math on that, right? From a technology perspective, Blackwell is ramping, and Rubin is the next generation system that's on track. And what NVIDIA is trying to sell is the idea that as they transition from one system to the next, it actually supports sales growth on that 2025 to 2027 calendar year basis. But we're talking in a very different calendar for fiscal years. It's hard to track.
All right, Ed, this is something we'll be talking about for the entire program, and I'm sure you will as well on Bloomberg Tech. Ed Ludlow hosts that show, anchors that show with Caroline Hyde that kicks off at 11. Now, SpaceX hopes to IPO at a $2 trillion valuation despite ballooning losses and debt, with future success hinging on data centers in space, like 100 gigawatts a year, 1 million humans on Mars. Those targets seem pretty far-fetched, but it could also make Elon Musk the first trillionaire as soon as like next month. Bloomberg's Benedict Campbell leads our space and aviation coverage, normally out of Berlin. He's come to New York for this. And Benny, I mean, these numbers are in some ways laughable, but in other ways, like, we could actually see a trillionaire in 2026.
It might indeed happen, but as you say, these are bonkers numbers. You know, we're looking at the total addressable market in the trillions. We're looking at, as you said, Elon Musk becoming the first trillionaire, obviously already a rather wealthy man. We're talking about those the million people on Mars. There's a lot of ifs and buts baked into this, but what it all has going for it is, you know, the factor Musk. If this were any other company, and if you looked at the financials, which we read about yesterday, this is a company with relatively low revenue, with high losses, huge debt, massive capex, and yet everyone thinks this could happen, and it's simply down to
about $6 billion in revenue, not quite, and about $6 billion in losses.
Yeah, so losses and revenue are basically at an equilibrium. You have 29 billion, or about 20 billion in capex. A big chunk of that is going to come out of AI. That's the other thing, just sort of how much of AI is now part of this business. We see the company as a launch company historically, but it's become such a big AI play.
But even to that point, it has these big GPU clusters, but it's renting most of it out to Anthropic. A lot of the revenue is coming in from that. That doesn't seem to give the most confidence about their own AI offering, the fact they're renting it out. Just listening to you, Benny, this sounds just like another Tesla, that on paper maybe it's a car company, but what you're paying for is just this bigger promise.
And that's going to be a tough sell. I think even inside the company, there were employees thinking, well, we're working for a space company here, and then as they merge these different assets together, there's a lot of confusion, like, who are we, what do we want to be, what's our addressable market? So that'll be interesting to see how investors latch onto this. They're going into the marketing phase now. The pricing starts in a couple of weeks, and then we'll know how the stock actually reacts. But I think there's a lot of hope baked into this, but there's also a lot of risk baked into this. This was a 270-page filing yesterday, of which about 40 pages were only the risk section.
By the way, one of the risks, I wrote this down, was that certain initiatives, quote, may not achieve commercial viability.
Well, they already have that problem with Starship, right? They want to have the capacity to launch 100 to 150 tons of commercial payload into space. Currently, they're at the potential of 35 to 50 tons, if I understand it correctly, and that's not even commercial. They're just launching like fake drones for now because, or sorry, fake satellites for now because a lot of times this rocket blows up, on the pad or shortly thereafter.
And we will find out more tonight, because there will be a launch tonight, which is actually very interesting timing. So this rocket has to work, because so much of this business is basically sort of tethered to this rocket working, and they have done reasonably well so far, but they've also had some real failures. So there's a lot of questions still remaining over this asset.
Now, we haven't even talked about the fact that we might be getting an OpenAI IPO at a similar timing too. So much to talk about. Benny, thank you for joining us. Great to have you in New York. That's Bloomberg's Benedict Campbell. Back here on Earth in the real world, Walmart warns that fuel costs are squeezing the company's bottom line and could lead to higher prices for shoppers. Joining us now is Romain Bostick, co-host of The Close. Romain, that might be the case, but for now they're cutting prices. And it was also interesting to hear Kroger's feels that they need to cut prices too to compete.
Yeah, and Walmart has done this in the past. We've seen inflationary pressures hit a lot of retailers, and Walmart says, look, I mean, we are known for low prices, and we're going to hold the line on that because that's what keeps the customer sticky, and that's what you saw in the most recent quarter. It actually did help same-store sales. They were up about 4.5%, and this is like the 8th straight quarter where they've had same-store sales above that 4% mark. Even when you back out fuel, it was at 4.1%. But they did talk about a slowdown in profitability, operating income on an adjusted basis, only rising about 5.5%, well below where it had been in more recent quarters. And that was largely because of what it's been talking about on the conference call as we speak. The idea that as inflation goes up, meaning its own costs, it is going to do what it can to keep those costs lower for the consumer. Prices in aggregate at the store did rise 1.4%, but they were very selective about which areas they raised prices and which areas they kept prices low.
I wonder how much, yesterday we were talking about Target and TJ Maxx, and you pointed out that TJ Maxx can sometimes be a beneficiary of a slowdown in the economy or a pickup in inflation because the higher income consumers then step down. And we've seen that happen with Walmart already in the past. Is that a potential now as well? I mean, the lower income consumer they want to support, but the higher income consumer they can get in the door as well.
Oh, it's not potential, it's happening. And then that was specifically referenced on the conference call by at least 2 of the executives on that call today. The idea that they're seeing more foot traffic from lower income consumers and more foot traffic from higher income consumers as well. Ticket prices, meaning the average receipts, are also up as well. I do just want to point out one big highlight here in the quarter that everyone should keep an eye on, and that's the e-commerce business. 26% growth there. Without the growth in that e-commerce business, their overall same-store sales would have been flat. That's the real secret sauce for this company. It's now 23% of their total revenue. They are becoming a formidable competitor to Amazon's online business, and going forward, that might be more what we're talking about and less about the brick and mortar.
All right, very interesting. So almost a quarter of their total revenue now is coming online. Romain Bostick, co-host of The Close. You can catch him, of course, at 3 p.m. New York time, extending through an hour after. Check on markets right now. We were up yesterday. We were up 1% as Romain and Katie were there on air. We are down right now in terms of futures. S&P futures off 0.4%. NASDAQ futures down a little bit more, so tech weighing more heavily. You had the 10-year yield coming back up a few basis points, but it had come down substantially yesterday after we got Fed minutes and President Trump made a comment about the final stages of the war in Iran. And then Brent crude, you can see, back up $3, but still under 110 at 108.11.
I can't stop thinking about the massive liquidity drain that's going to come to this market when just between OpenAI and SpaceX alone, it's like $135 billion that are going to have to be reallocated to these things because they're so massive.
Well, and that's a really important point that we didn't bring up with Benedict Campbell, is that the NASDAQ has changed the rules in terms of SpaceX. Obviously, they want that big business. It'll immediately go onto indexes. And so if you own the NASDAQ 100, if you own the Qs, for example, you have to be a buyer, whether you want to or not. And other index operators may follow.
But it just becomes this this black hole of gravity. If you're a retail investor, you'd be really excited about this. So your capital gets tied up in these companies and maybe less to others. I'm excited to talk to our guests about just that this hour. But first, some of the individual movers that are on our radar. Deere earnings showed growth in construction business, but concerns around the agricultural department of the company are weighing on shares, down almost 3%.
Anthropic is reportedly in talks to use Microsoft's AI chips to power its chatbots. You're looking at Microsoft shares right now in the pre-market, ticking higher on that news.
And e.l.f. earnings showed impressive profit growth as it sees momentum from the Rhode brands. Rhode, the Hailey Bieber brand, was nearly all of its sales growth. Really, really big for the company. We're going to discuss this later in the hour with e.l.f. CFO Mandy Fields.
More on growing competition for NVIDIA with TD Cowen analyst Josh Buchalter. That's next. This is Bloomberg Open Interest. At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Let's get now to high interest. Look at what's making headlines around the world. Iran says a new U.S. proposal has narrowed gaps toward a peace deal, but Tehran still wants fighting to end on all fronts, including Lebanon, and his frozen assets need to be released. President Trump said talks are in the final stages, while warning attacks could resume if Iran rejects U.S. terms. By the way, Reuters reports that Iran's supreme leader also ordered the country's near weapons-grade uranium not be sent abroad, fearing future U.S. or Israeli attacks. Stellantis is betting on $70 billion in investment on a turnaround by prioritizing 4 core brands. Those include Jeep, Ram, Peugeot, and Fiat, while sidelining brands like Chrysler and Alfa Romeo. The automaker plans 60 new models, major factory cuts in Europe, and deeper partnerships with Chinese and Indian companies to slash costs and revive profits after steep sales and stock declines. JP Morgan CEO Jamie Dimon said AI is reshaping hiring as the bank prepares to scale back Wall Street recruiting. He spoke to Bloomberg Television in an exclusive interview at JP Morgan's China Summit in Shanghai.
I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, It'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy our people.
NVIDIA says that mainstream AI will create new customers that could become a bigger source of revenue, and its hyperscaler clients as robotics become more of a thing. Let's bring in TD Cowen Senior Equity Research Analyst Joshua Buchalter. He has a buy rating on the stock. Joshua, can I just get your initial reaction? Because the numbers are big, 85% revenue growth, huge amounts of buybacks, a $91 billion quarter upcoming. What were your overall thoughts?
Yeah, no, thank you for having me on. Yeah, no notes really. I mean, it was what's become a typical NVIDIA earnings call with, you know, a meaningful beat and raise by $3 billion in the print, $4 billion in the guide. They're making the extraordinary look ordinary here. And the other angle that's typical about an NVIDIA earnings call recently is the stock didn't move on it. But I think, you know, you alluded to a very important point. So NVIDIA, for the first time, separated its data center segment into two buckets, hyperscale and then AI, one that includes the AI startups, neoclouds, enterprise, and others. And I think there was an important point there in that only half of it is stemming from hyperscalers. And so I think they're leaning into, you know, the diversity of both their customer base and the applications, which should lead itself to, you know, more confidence in the durability of the spending as well.
You know, we're going to talk to Joe Kaiser a little bit later, formerly of Mercado and Blackstone. He says, you know, AI is moving to the edge, meaning away from these, you know, big data centers in like Danny's hometown and back here towards the city, maybe even in robots or in cars that we drive. And that's why they broke apart that revenue reporting. How soon are we going to see AI that we interact with in real time, you know, in those kind of products?
Yeah, I think, you know, it's a fair question. I think, you know, the robotics and more edge inferencing in AI, I do think is not going to be material from NVIDIA's standpoint for a bit, simply because, I mean, let's be real, NVIDIA's revenue is tracking towards $400 billion, and it's hard for what are inherently more singles and doubles wins to meaningfully move the needle. I think the bigger portion of that bucket is going to be how much of spending is done by the AI labs like OpenAI and Anthropic, who, by the way, might be IPOing in the near to medium future. And then also larger enterprise applications and customers that are increasingly going to be utilizing AI, more so than some of the robotics and edge inferences, even if, you know, the revenue numbers that are within that bucket are, you know, rounding errors through NVIDIA, but are very meaningful for everybody else.
Joshua, at the same time, there was some time spent on this call about supply chain risks. They're quite complicated. You also have what's happening in the Middle East, adding to concerns. The macro environment and demand for these chips obviously has been outweighing any of those. But at what point, if at all, do they become a real issue for NVIDIA and for the wider chip universe?
Yeah, I'm less worried about the, you know, impacts of the Middle East for NVIDIA specifically. I do very much think that demand remains a much more important piece of the story here. But on the supply side, one thing that was interesting is NVIDIA's supply chain commitments went up from $95 billion last quarter to $119 billion this quarter. Now, it's really hard to make an explicit and quantified read from that number. But I do think what we should be taking away is we are in an environment where everyone is clamoring for capacity. There are concerns about supply, and NVIDIA has supply commitments locked up that are bigger than most companies' revenue, and that naturally lends itself to better visibility than others. And I do think there's an element where visibility into capacity and supply is important, not just from a pricing standpoint, but also for demonstrating to your customers that you have more visibility and ability to get supply through the network than your peers.
Durability is like the key word, I guess, in a lot of the analyst reports. Is this kind of growth sustainable, maybe is a better word, Josh, in the future? I mean, will we continue to see these massive numbers, or does it, you know, scale down as we get further into the AI, you know, reality?
Yeah, I mean, listen, like NVIDIA is going to track, are they going to do 75, 80% year-over-year growth forever on the massive revenue base that they have? No, that's, you know, there is law of large numbers that will certainly apply here. But I think from that standpoint, what's most compelling to me is that, again, we're 4 years into the AI into the AI boom. And NVIDIA is the clear leader here from a market share and revenue standpoint. And their revenue growth is going to accelerate this year. Again, that can't continue forever. But the other point here is, again, there were concerns of the hyperscale portion of contribution to NVIDIA needing to naturally hit a wall as NVIDIA's revenue was becoming so high within the CapEx figure. We're actually learned by splitting out the segments that NVIDIA's revenue is actually closer to 20% of hyperscale CapEx run rate versus the 40 to 50% if you just took the whole data center segment revenue. And the other interesting point was their hyperscale segment grew 115% year over year. It's going to decelerate, but it's not really doing it right now is the reality.
Josh, great to get some time with you. Thanks so much for joining us. TD Cowen, Senior Equity Research Analyst Joshua Buchalter. Coming up, PNC's Amanda Agati joins us as earnings overshadow inflation fears. This is Bloomberg Open Interest.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Check on markets ahead of the opening bell. We're looking at futures that are down as rates move a little bit higher, and Brent crude does as well. We're back with the opening bell in 2 minutes' time.
cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at futures that are down slightly. We closed up 1% yesterday at 74.30, around there. Right now we're down 0.4% in terms of futures on the S&P, about 0.2% in terms of futures on the NASDAQ. You hear the opening bell. Look down at the New York Stock Exchange. Citi ringing the opening bell in celebration of Asian Heritage Month. Their stock, with reinvested dividends, is up 91% in the past 5 years, which is pretty good. It puts them like middle of the pack around money center banks. Goldman Sachs is up 200%. Morgan Stanley is up 160%. JP Morgan's up 110%. So Citi is doing better than Wells Fargo and Bank America, which are up 86 and 36% respectively. It's pretty good, right?
It is very impressive memory.
Air, advanced inhalation rituals. I'm pretty sure this is a hookah company out of Dubai that's coming to the NASDAQ via SPAC. I was thinking Puff would be a better ticker, but maybe we'll reserve that for something even more exciting.
Yeah, but the inhalation systems are advanced, so it must be air.
Yes. Is it a hookah company? I think it's a hookah flavoring. They make flavorings for, like, hookahs.
Okay,
you know,
yeah,
which
totally.
is a big business in other parts of the world. And maybe it's catching on here.
It is dwarfed by NVIDIA. Everything is dwarfed by NVIDIA. That's the only thing. Is it the only thing that matters? I mean, it is moving this morning. It's down 1%. It beat high expectations. There's some cautiousness about the sustainability of NVIDIA's growth. And I just do want to point out another AI chip-related story. The Information also reporting that Anthropic is in talks to use Microsoft's AI server chips. So those shares are up 0.8%. I mean, Matt, like the argument I make that maybe NVIDIA isn't the most important thing, I got to wonder, is this market starting to weaken because it realizes it needs to absorb $135 billion worth of OpenAI and SpaceX shares that are going to come to market? I mean, that's got to have an impact somewhere.
That's a really good point. I mean, $75 billion worth of shares from SpaceX, right? And OpenAI is expected 60? To be... Okay, so, and some of these indexes are going to absorb them immediately. So if you're tracking the index, you need to be buying those shares. Very interesting stuff we'll continue to talk about, as well as the 1 million people living on Mars, the 100 gigawatts of power in space, and the $1 trillion that Elon Musk will be worth. More than that. Walmart's first quarter sales growth beat estimates, but the company signaled inflation pressures are building as rising fuel costs weigh on margins. You can see the world's biggest retailer down about 5.5%. Let's bring in PNC Chief Investment Officer Amanda Agati. And Amanda, I think it's interesting to have, you know, NVIDIA and Walmart right next to each other, because Walmart is the inflation story, which to be honest, we don't really care about much. It feels like the Fed has never really cared about it that much. And then on the other hand, you've got the AI story, which is everything, right? That's what's driven us to 7,500 on the S&P. Does it matter much more?
Well, it's great to be with you. Thanks for having me. I actually thought Walmart was an AI story.
Yes.
So, I mean, today it's an inflation story. Yesterday it was an AI story. I mean, you just say AI and everything's an AI story. So, I mean, what really matters at the end of the day, I think it's the sustainability of growth and the trajectory of growth. So in terms of NVIDIA, the topic du jour, right, the fundamental story there just continues to be really strong. But I think as many of your other guests this morning have shared, you can't keep that pace up forever, right? Is it to the moon? And so I think this natural sort of next stage of the innovation cycle is some maturation and some slowing in terms of growth. That's not a negative. It just means that the stock price reaction is a little bit more of a snoozer than maybe what investors would like. I think just zooming out, I think the stock market's kind of traded a little bit directionless the last few trading days in particular, mostly hoping that we would get a quick resolution to the conflict with Iran and that inflation would start to settle in. Nobody waved a magical policy wand to make that happen. So I think it's just a little bit of steam coming out of the market rally sales at the moment.
You talking about to the moon, just baiting me to talk about SpaceX, Amanda. That's what I feel. One of the ways,
a pun in there.
I love it. One of the ways, I thought Mandeep Singh from Bloomberg Intelligence, he was talking on radio, I thought made a really, really good point about just kind of the valuations in this market we're willing to accept. So theoretically, SpaceX goes at $2 trillion. He pointed out that it's growing 30% off of a $20 billion revenue base. NVIDIA is growing 80% off of a $400 billion revenue base. So in that case, if you're willing to pay $2 trillion for something like a SpaceX, Amanda, should we be thinking about NVIDIA trading much more richly than it is now and maybe a lot of the other chip makers in the similar instance?
Well, we've certainly seen chip makers and just AI leverage plays in general trading at much higher valuations. Some of that has settled in a little bit. So I think it all comes down to the multi-year secular growth story for either SpaceX or just AI in general, more broadly speaking. And so investors are willing to pay up big time, right? Technical term for you, big time in terms of forward PE is under the assumption that we're very early innings and this long secular tail of growth is just going to continue at an unabated pace. I think that's very much the case with AI. We're still very early innings, 3 or 4 years into it doesn't mean much, right? We haven't seen those use cases really permeate the market more broadly speaking. So I think there's a ton of runway there. I'm not sure I know yet what the runway for SpaceX in terms of growth is. You know, it's a big bang, right, in the best possible sense, hopefully. But I just don't know that it's going to have the same legs that a broader AI trade has. So I'd be a little nervous.
But a $30 trillion TAM.
SpaceX.
But Amanda, a $30 trillion TAM. I'm being somewhat sarcastic.
I don't know. I'm skeptical. I don't know what you want me to say. I'm not backing up the truck.
Yeah, but this market is willing to believe that Tesla is a robotics company and then it has such bigger potential. Why can't we believe the same for SpaceX?
That is a fantastic point. I mean, Amanda, how do you square that circle? The fact that this car maker is still and has for so long been valued at more than every other car maker in the world put together. To me, it hasn't made sense for years, but the market continues to believe it.
It's a technology company. I mean, other than saying it like that, it's hard to square it, right? It's not really an automaker. I mean, obviously they do make cars, but it's much more about the technology that's gone into it and the path for additional technology and innovation, right? They're just so far ahead of all the other automakers in terms of AI and technological implementation there that I think investors are, you know, more interested in thinking about that one creatively than the traditional automakers.
Amanda, what are your thoughts on this idea of these big unprecedented IPOs and the impact they'll have in terms of a liquidity drain? Matt's been talking about a mechanical rebalancing from the passive funds because the index rules have changed. Surely retail's going to get involved and put a lot of their money towards these companies instead of other constituents of this market. What does it mean to have the market absorb such high tickets coming from these IPOs?
Well, on the one hand, I'm thrilled to see this big pickup in capital markets activity. It feels like it's been really sluggish for quite some time. So I view that as fundamental strength. I don't view it as a top. A lot of investors view it as, a top. That's not what we're seeing here. So I think it's a very healthy next step to see capital markets activity pick up. I think the second half of the year, it's going to be a very important story. You're right to call out, how do we absorb it though? But I think we're going to have to figure it out one way or another. It's coming. And so, I think it's just very challenging. It creates much more challenges, as it has been the last few years, for active managers, particularly in large cap, to add a lot of value. You just can't add enough to outweigh or outpace and take big bets on some of these exposures. So I think, unfortunately, it just creates a much more difficult dynamic for active management to add value in this environment. Passive seems to be the way to go. Trying to just keep up, add beta.
All right, Amanda, thanks very much. Amanda Agati there, PNC Chief Investment Officer. Really appreciate your time this morning. When you talk about liquidity, I keep thinking about comments we hear on the bond sales side that, even though Oracle may be the poster child for taking on too much debt and will be the first to pop in a bubble deflation, we still are like 10 times oversubscribed their $25 billion offering. I look at money supply. Ed Hyman of ISI always tells me, you can see when inflation is going to come, and you can see when there's too much liquidity in the system. It's pretty easy on the Bloomberg terminal. Just type M2 index, and it just continues to climb. This is over like the last 40 years, but it's just bigger and bigger and bigger. I feel like there's just enough liquidity out there to sponge up a SpaceX IPO. It's only $75 billion.
No, you make an excellent point. I mean, if we're buying 100-year bonds from the hyperscalers, why not a SpaceX IPO? I do want to show you what markets are doing right now. We're about 10 minutes into your trading day. I think two things of note. We are still down, but if you look at the winners, NVIDIA has now flipped into the green, unless it changed in the past few seconds. Am I correct? I don't even see it on this board anymore. I swear it was in the green just moments ago. Matt can check that for me. But at the top of the pile, I do want to point out Tesla. Dan Ives has been writing this morning that by getting a SpaceX becoming public, you are getting closer to a reality in which Tesla and SpaceX merge. So I suppose we are buying Tesla on that. Some of the other chip makers rebounding. They gained yesterday. It was weaker days prior. Micron's doing well, as is Seagate. Walmart, those shares are down pretty aggressively. They've been eating up all of the margin of higher costs. They've been having to cut prices into it. Down 19%. That is painful. Yesterday, they announced that they were cutting staff by about 17% as that company faces some of the AI woes. Let's look at some of the sectors that we have this morning. Again, we're down 0.5%. Energy is the only sector higher as the price of gas moves higher. Staples is down big. That's going to be Walmart down there. That's down 2.3%, Matt.
Guess what? We have a GIP of NVIDIA. So you were right that it was up in the green just moments ago. It was trading for more than $227. Right now it's trading at $224. So it was a big jump up. And here's a 2-day chart. Coming up, an 85% jump in sales and a massive boost to its dividend. We're talking about 25x the 1 penny dividend, fails to excite NVIDIA investors, and that's because an $80 billion buyback is only 1.5% of the company's total market cap. Mandeep Singh joins us next. This is Bloomberg Open Interest.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, You need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Virginia report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
NVIDIA reporting another beat and raise quarter with analysts broadly positive on the results. But despite the strong quarter, the stock really isn't moving higher. And that's the problem. The quarter looked great. The stock reaction is not. And this is becoming a theme for NVIDIA. Let's bring in, for more, Bloomberg Intelligence Global Head of Tech Research, Mandeep Singh. I boiled it down to just the basics there, Mandeep. And I guess maybe part of this is already priced in, right? They're up 35% since the March lows.
It's really the concentration risk with hyperscalers. That's where the bear case stems from is, 50% of your data center revenue comes from hyperscalers, and two of them are ramping up their own chips, Google and Amazon. And over time, everyone is questioning the durability of that revenue stream. When they changed their disclosure and showed that, neoclouds and sovereigns make up the remaining 50% of the data center revenue, and it's growing faster. So NVIDIA right now seems to be prioritizing the neoclouds and sovereigns over hyperscalers in terms of their chip allocation.
Just in terms of where NVIDIA is priced, still at something like 20 times sales or something. I heard you make a really good point.
I believe we have a chart, by the way, on the valuation.
Do we?
Yes. You can use the Bloomberg, obviously, and look out the forward 12-month estimate, and they are trading at just about 20 times that.
Well, I heard you make a point on radio that I'd love for you to make for our TV audience, just comparing it to what SpaceX's desired valuation will be.
Yeah, look, the point is very simple, that NVIDIA is close to a $400 billion run rate, growing at 80% top line. SpaceX is coming to the market at close to, a $17, $18 billion run rate, growing at 30%, and it's commanding, or at least looking to price it at 80 times sales when NVIDIA is trading at 18 times forward PE. So just that, divergence in multiples for a company that is generating free cash flow, doing an $80 billion buyback, raised its dividend, and it's not getting the multiple like SpaceX is. And I compare the two. I would say NVIDIA's addressable market is larger and more attractive right now than SpaceX.
Is a serious institutional investor going to buy SpaceX after the syndicate, after the IPO, or is this is the idea that institutional investors are going to want syndicates so that they can dump it on retail as soon as it pops at the IPO.
You really have to have a very long-term view here and take a leap of faith that they're going to crack, space data centers, the fact that, all the investments being made in XAI, where they're losing close to $6 billion every year, will, result in free cash flow like the other LLMs. Look at Anthropic. I mean, Anthropic's LLM revenue is growing over 100% every quarter. Now, you're not seeing that sort of results with XAI. So you really got to take that faith with the terafab plans that they have and the space data centers. But I don't see that in the next 2 to 3 years. So this is a much more longer horizon story. And that's where I think it depends on the investors.
Can I tell you why they'll probably buy it? Because study after study shows that institutional investors love to benchmark hug. Because it looks bad if you're underperforming the benchmark, and the best way to not underperform is own a lot of the benchmark. So SpaceX is put into all the passive funds.
All right.
Institutions are probably going to buy it.
It's a fascinating, Mandeep, I wish we had an hour to sit here and talk with you about all of these things. How they're going to get 100 gigawatts of compute into space annually. Like,
the
when
TAM
is that
slide,
the
28 trillion TAM slide. We should unpack that sometime.
That could be its own hour.
That'll be 6 months.
Yeah.
All right, Mandeep Singh from Bloomberg Intelligence has to get back to work. He's very busy today. Coming up, Elf Beauty's growth streak continues despite a more selective consumer. The CFO, Mandy Fields, joins us next. This is Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, only on Bloomberg Television.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Elf Beauty earnings showed impressive profit growth thanks to strong skincare momentum from the Rhode brand. The company also announced a new partnership with the television series Survivor. Joining us now is CFO Mandy Fields. Mandy, great to have you on. I want to ask about the business mix specifically because Rhode, with an impressive 35% top-line growth this quarter, 34 percentage points of that came from Rhode. Are you just Rhode now, basically, despite the name of being Elf Beauty?
Well, thank you so much for having me. Look, we're really impressed with the momentum that we're seeing behind Rhode. They had an incredible quarter contribution. 34 of the 35 points of growth that we delivered was driven by Rhode. So very pleased with the performance that we're seeing there and really across all of Elf Beauty. I mean, for the year, we delivered a 25% growth year, our 7th consecutive year of growth, 29 quarters running.
Talk to me about the partnership with Survivor. It's apparently in its 50th season, which made me feel pretty old. And I saw the spot, the ad that you guys made for it, which is pretty brilliant, with one of the cast members camouflaging herself. What do you expect to get from this?
Well, I'm with you. I also felt pretty old hearing 50 seasons of Survivor. I remember when it first started. But I'm really excited that we were able to partner with them. This is just another one of those culturally relevant moments that ELF found its way into, and we really are excited for what we saw there last night.
Just to that point, because it does feel like the way that beauty is now targeted in advertisements, it's all TikTok, it's all Instagram, it's influencers. This feels decidedly different. Is it a different audience you're trying to achieve? Have you kind of grown already on the social media influencer side, and this is something different? Are you looking for an older audience? What does this get to?
Well, we're always looking to connect with our community, and our community is very diverse. I mean, we're the most purchased brand by Gen Alpha, Gen Z, and millennials. And so if we can tap into the Gen X crowd a little bit more with this, we certainly want to be there for that community as well.
I want to just point out, producer Will Shaker reminded us it's not 50 years old, it's been 50 seasons.
Correct.
And they do 2 seasons each year. So
okay. That's right.
That's what I said. It's
I'm
measly 25 years old, and I mean, that's how old Danny is.
Correct.
In terms of the growth, Mandy, where do you want to get it regionally? I mean, how focused are you on the U.S. and how important is international?
Well, both are very important to us. In the quarter, we saw 75% growth in our international markets, 26% growth in the U.S. market. So both are continuing to be growth drivers for us. But if you think about e.l.f. Beauty as a whole, roughly about 20% of our sales are outside of the U.S. So international still represents a huge opportunity, particularly compared to our other beauty peers who can have 70% of their business outside of the U.S. So all eyes on international, and Rhode will be launching in the EU this fall, 19 countries. And so more to come there.
I thought it was interesting that your gross margin is about the same as NVIDIA's, right? I mean, it's 73%, NVIDIA's 75%. With them, I get it. With you, how do you achieve that? Aren't you paying high costs? Don't you have to deal with tariffs? This marketing budget must be big. How do you get to those gross margins?
Our gross margins have always been something that we focused on. I would go back in the day, maybe 10, 11 years ago, we were probably around 47% gross margins. And each year we've kind of worked on those through our supply chain initiatives, through our innovation mix, and continued to strengthen those margins.
I don't mean to cut you off, but we're almost out of time. And I'm super curious about this because, again, enviable margins. But you also in your earnings noted that in some places you're reducing prices for more value-oriented consumer. What's going on there, and how do you keep high margins while cutting costs? And only about a minute here, Mandy.
Yeah, so we are always going to be focused on providing value. Really, the way e.l.f. has been architected, our supply chain is built as such so that we can provide that value to our consumers. And if you think about it, 75% of our portfolio, $10 or less, and we're just being very thoughtful about where the consumer is right now. And if there's an opportunity for us to get sharper on prices in a couple places, we're certainly going to do that.
All right, Mandy, thanks so much for joining us. Mandy Fields there is the CEO of e.l.f. Eyes, Lips, and Face. Coming up the next hour, Brooke May updates us on her NVIDIA position. She's an owner. Plus, Oaktree's Danielle Poley on data center credit exposure. It's a big conversation, not just today. And we talk SpaceX with VC investor Joe Kaiser. How does he feel about the $28 trillion total addressable market?
tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Multiple sources confirm that Acting Attorney General Todd Blanche will meet with Republican senators today as more of them speak out about the president's so-called anti-weaponization fund. Blanche to address them during a closed-door conference meeting. Here's ABC Chief White House correspondent Mary Bruce.
A growing number of Republicans outraged.
I don't support it. I think you can't do that.
If someone is damaged by the federal government right now, there is already a process in place to be able to get restitution for that.
Sends the signal, hey, go breach the Capitol, destroy the building, assault police officers, you may even get compensated for someday. That's absurd.
Roughly 600 people were charged with obstruction or assaulting police officers in connection with January 6th. At least 170 pleaded guilty, and dozens others were found guilty by juries.
2 of the police officers who defended the Capitol on January 6th have filed a lawsuit against the fund. Gas prices about $1.40 higher per gallon than they were last year at this time, thanks to the war in Iran. Still, about 45 million Americans are expected to travel at least 50 miles from home for the long Memorial Day weekend.
Traffic data company INRIX says the worst times to drive will be Thursday and Friday afternoons, especially between 3 and 6 p.m., with major backups expected in cities like New York, Boston, Denver, and Los Angeles.
ABC Stephanie Ramos. The Surgeon General's new report raising more questions about kids and screen time.
Experts warning even some toddlers are now spending multiple hours a day in front of a screen, setting up potential mental health issues and poor developmental and educational outcomes. That may be a shocker to parents because surveys show most teens these days currently average 8 or more hours per day.
ABC's Andrea Fujii. A day after Target announced strong sales, Walmart delivered another strong quarter. However, it also reported caution for the rest of the year given economic uncertainty. You're listening to ABC News. The sinkhole on the runway at New York's LaGuardia Airport is being repaired, and it's expected to be reopened in an hour.
Notably, this is the same runway where the deadly Air Canada collision happened back in March, shutting it down for several days. Repairs have been being made all night long. Now, this all happened Wednesday around 11 a.m. The large sinkhole was discovered during a daily morning inspection of the airfield. So it was good, of course, that this inspection was taking place, as it always does.
That's ABC's Lindsay Tuckman here in New York. Fewer Americans filed for unemployment benefits last week. Layoffs remaining low despite a number of uncertainties clouding the current economic picture. A total number of Americans filing for unemployment benefits, just under 1.8 million. Competitive eating's biggest star is headed back to Coney Island this 4th of July, but not without some off-the-stage controversy. There's ABC's Dave Packer.
17-time champion Joey Chestnut is set to return to the Nathan's famous International Hot Dog Eating Contest on the 4th of July while serving probation after pleading guilty to a misdemeanor battery charge. Chestnut was accused of slapping a man during a night out at an Indiana bar. A judge approved travel outside the state, clearing the way for him to compete for the famous mustard belt. Organizers say the incident happened outside league activities and does not affect his eligibility. Dave Packer, ABC News.
Part of the original staircase for the Eiffel Tower in Paris just went up for auction, sold for $500,000. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube as well, streaming live at Bloomberg.com as well. It's Scarlett Fu, Paul Sweeney. This is the Bloomberg Intelligence Program. We got stocks kind of mixed out there. Still got a lot of earnings flowing across, so we'll get to that. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, will join us here. What is this Fed going to do going forward? The economic data is showing persistent inflation out there. Angelo Zeno, Senior Vice President and Equity Analyst over at CFRA. He's going to recap NVIDIA's numbers for us. Stocks kind of unchanged on the day. I thought there were some pretty solid, crazy good numbers that you typically see out of NVIDIA. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. He's here in New York. We're going to check in with him on commodities, including oil as well. Danielle DiMartino Booth in studio, and we'll get her thoughts on this Federal Reserve and some of the economic data we've been seeing here. Craig Trudell, Bloomberg Managing Editor of Global Business Coverage. He's going to talk to us about Stellantis. They need to try to get a turnaround going there, particularly with their Chrysler brand. He's got the reporting on that, so we'll check in with him. But first, let's kick everything off with John Tucker and a Bloomberg Business Fest.
Yeah, right now the major averages all lower to little change, I'll say it. 7 of the 11 major industry groups in the S&P 500 down right now. Consumer staples is proving to be the biggest drag, and that is home to, yes, Walmart. Down about 7%. They warn that, among other things, fuel costs look like they're squeezing the bottom line and could also lead to higher prices if you shop at Walmart. The most valuable company, and this is kind of a ho-hum thing, at least the way it was greeted by investors, up about 0.1%, NVIDIA. Pretty solid report, but it's failing to impress. And analysts broadly positive, some also questioning the sustainability of the growth at NVIDIA. The shares right now up just 0.2%. Part of the story, I think, is overshadowed by the SpaceX IPO news. Tracy McMillian at Wells Fargo says, you know what, investing in tech may actually have run its course for now.
You know, we went overweight information technology about a month and a half ago, and that was, great timing. But now those names are starting to, appear fully valued across most of the AI space.
The S&P 500 down 17 points. The NASDAQ Composite Index down 98. The Dow just turned positive, not by much, up 13 points right now. This business flash being brought to you by IBKR, trade, election, climate, and economic outcomes with IBKR prediction markets. Right alongside your stocks and options, earn interest in your position and receive $1 per contract if you're right. Learn more at ibkr.com/predictions.
Fashion news, Zara launching a collection in partnership with Bad Bunny. It's the latest example of the retailer's push to expand the brand. It's a 150-piece collection under the moniker Benito Antonio. That's Mr. Bunny's given name. Available online in some stores across the world. I'm told that it's kind of a conservative look right now for Mr. Bunny, but back in 2017, it was a much different look. So he's
Is
changed.
he going to design it? Is that part of it, or it's just like a collab and name only?
You know, a good reporter would know those the answers to those
You
questions.
don't. I
was
guess,
just looking at the pictures.
Right. You're not.
I mean, I
you're
could
not
see
gonna,
myself in some of these.
I was just going to say you're not going to
bunny
dress up in
outfits.
Mr. Bunny's outfits.
Yeah, I could see myself going there.
You could. Okay. Isabel, what do you think?
I think this isn't a surprise because during the Super Bowl, I think he was wearing all Zara.
Yeah, he was. Yeah.
Oh, really? Okay,
Yes,
that's good.
because
info.
everyone was like, "What was he wearing? Like, who's the brand that clinched this deal?" But it was Zara, right?
Yeah, exactly.
John Tucker,
Wait,
the fashionista.
I'm wearing Bloomberg.
Oh, good. Best brand.
Anyway, we
Best
check
brand.
the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
Thank you. I jumped the gun a little bit here because Isabel Lee is in studio with us, and of course had to get her opinion on all of this, right?
Of course.
Isabel, why don't you share your opinion with us on the big movers of the morning so far?
We have to talk about NVIDIA. I feel like that is, we would be remiss if we don't talk about it. Stock is higher by 0.3%. I mean, that's really flat. And it's interesting because profit rose more than 20% year over year. Revenue climbed 85%. Forecast was solid. Jensen Huang himself said that demand has gone parabolic. How parabolic? Well, the company's AI spending infrastructure would climb as high as $4 trillion in 2030. That's up from roughly just $1 trillion today. So every number is really eye-popping. It's always been a beat and a raise, but I feel like investors are just really wanting more and more. The company also authorized an $80 billion share buyback. So that's also great news. But I feel like as the pie gets bigger, the slice is at the risk of becoming smaller because we know that a variety of chip makers are trying to get a piece of the business. There's the likes of AMD, which has rival processors, Broadcom, Alphabet Inc.'s also trying to come up with their own. So I think,
with their TPUs.
Yeah, I think it's that maybe. I mean, people are just becoming greedy.
People have gotten used to NVIDIA blowing out of the water, right?
Spoiled is a less negative word.
Yeah,
Yes.
would you say that?
Spoiled.
Yeah, absolutely.
You know, that's the expectation. Show me more. What else can you do, right?
And it's not proven, but some people are also saying maybe it got overshadowed by SpaceX dropping their paperwork.
No, absolutely. That's
the same
definitely part
time.
of that. All right.
What else we got? Elf Beauty?
Elf Beauty higher by 1.5%. Ticker is ELF, so they got a winner there. So they reported earnings and they beat average estimates on major profit and revenue growth. So Elf is a cosmetics company. Their adjusted EPS for 2027, however, fell short of estimates, and that's why you probably saw cuts in price targets from Raymond James, Canaccord, and Jefferies. But I don't know why the stock is higher. I guess investors are digesting it. This is the skincare of Rhode, known for Hailey Bieber, Naturium, and Elf Mix. So Bloomberg Intelligence said that the fiscal sales growth suggests pressure. Morgan Stanley said forecast confirms that the momentum has slowed for cosmetics. And Citi also said that, yes, the results were good, but they acknowledge that there are many moving pieces from the report.
Well, rising oil prices definitely don't help because that's a key ingredient for a lot of cosmetics. So that's something to keep in mind.
That is
By
true.
the way, I'm going to speak with Elf Beauty's CEO and CFO next week.
I saw that.
Oh, very cool.
Yeah, so we're going to touch on this earnings report. I mean, it's a longer, broader conversation with the CFO about their overall strategy, but I'm looking forward to seeing their makeup closet.
You have to invest in your face, guys. I'm just telling you.
This coming from Paul Sweeney.
Yes, exactly.
That is my friend's mantra when she buys expensive skincare. You only have one face.
Yep. That's what.
What is that, youth?
I guess so. You only have one face.
Some
That's
people
true.
have two faces.
Okay. Wow. Okay. We'll unpack that later with John Tucker.
All right. One more. Walmart, real quick.
Walmart down by 7%. I mean, it's also the price pressures. The company, they reported adjusted EPS for the second quarter that missed estimates, and we also got a warning from them. Again, to Scarlett's point, it's fuel costs that's squeezing the company's bottom line, which could lead to higher prices for shoppers. But they're attracting a lot of the higher end consumers as well as the lower end consumers. So
and their digital sales are up 26%. Isn't that
yes.
I bought a lot of stuff over Walmart.com.
Is it fast delivery? I've never bought from
Yeah, it is. It is. Their return situation is not as seamless as Amazon. They got to work on that. So that's my note to them.
Oh, good.
I'm sure they're listening. All right, Isabel, thanks so much. Appreciate that. Isabel Lee, cross-asset reporter for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. If I'm Kevin Warsh and I come into this new job, I got some pressure, I'm thinking, to lower rates, okay? But man, I look at that data out there, I just don't see how I can do it or convince
it's
a
not
bunch of other
just
people.
pressure. That was the litmus test for you to get named Fed chair.
I know, but that's a tough spot to be in. Ira Jersey, Chief U.S. Interest Rate Strategist from Bloomberg Intelligence, and also our World Cup correspondent. Ira, what do you think Kevin Warsh is going to do in his first days and weeks as chair of the Fed?
Yeah, I don't think he's going to really be able to convince the rest of the committee to do much of anything. And in fact, we got the minutes yesterday from the Fed meeting, and they were the most hawkish that we've seen since they were hiking a couple of years ago. So I very much doubt that he's going to be able to do much of anything. I think some of the nuance around what he says may be like, I would like to cut, and here's why, versus what the rest of the committee can do. That'll be a balancing act that'll have to do, because he doesn't want to alienate the rest of the committee that he has to try to convince in order to get any of his policies and any of his other reforms that he'd like to do done.
Yeah, so it's a curious situation, or it's going to be a tricky situation, I should say, for Kevin Warsh. Now, when you look at what's happening in bond yields overall, yesterday there was a little bit of relief, but today we're seeing yields go back up again. How are you thinking through what's driving this sell-off? I mean, are these mainly cyclical reasons, or should they be viewed as something more systemic and therefore more concerning?
Well, I think it is somewhat systemic. So we've been talking about for a couple of years that the debt burdens, particularly in countries like Japan, the U.S., and the U.K., are concerning, and that you'd wind up in periods when you have market weakness and sell-offs because of fundamental reasons, that you get larger sell-offs than you would have when the debt burdens and debt loads were significantly lower. So I think we're in that situation, and we have seen yields move higher, and I think part of that is the fiscal situation. Keep in mind, the U.S. isn't really leading this sell-off. When you look at the sell-off in global bond yields in developed markets, you see first it was the UK that started to lead the sell-off, and then it was more recently Japan. And the US has not been immune to this, but it's really a global phenomenon where investors are just worried about the fiscal situation of a lot of these countries. They don't think that monetary policy is going to be eased anytime soon in any of the 4 major developed bond markets that we've just been talking about. So you're going to have yields that are going to hover near the cyclical highs, and that's exactly where we are today. Could we extend it on the 30-year a little bit? Yeah, we probably will a little bit more, but I don't think it's necessarily going to be a sell-off where we're going to see 6 or 6.5% 30-year bond yields in the near term. But could we see 5.25%? Absolutely.
All right, Ira, thanks so much. Appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence. Red headline crossing the Bloomberg terminal: Iran and Oman discussing a permanent Hormuz toll. That's according to an Iranian envoy. And again, just geographically, I guess what we've all learned is you got Iran on one side of the strait, Oman on the other side of the strait. So, okay.
And something that was free passage before is now going to perhaps cost you a toll.
Yeah, and I just threw into the chat my 2 cents worth, which is I think we've heard from pretty much everybody in the world. I don't think so. And this isn't a canal. This is a freestanding body of water in the high seas.
Well, let's see if anyone jumps in and starts doing anything about it. The reporting is that NATO is starting to act more on its own as opposed to before when it was saying it was going to hold off.
Yeah, exactly. So, again, and that's Tom and I, we saw earlier this morning a jump in oil prices, and we were wondering why, and maybe it was some of this news kind of seeping out here. So again, you're looking at Brent crude up 2.4% today, $107.50. That is off the high of the day of north of $109 per barrel, but it was as low as $103 a barrel earlier or late last night. So movement.
I filled up my gas tank yesterday at 4.40, 54, and I was pretty happy.
Yeah, that's the national average, right spot on it there. Use your debit card and then select...
Or pay cash, even better.
Yeah, no, the debit card, you get the cash price.
Oh, do you?
Yes.
Okay, but then you don't have to carry the cash with you.
Yeah, and so what some of the dudes at my place do, like I pump my own gas, even in New Jersey, they try to be too quick and hit the credit thing so they get the higher price. I said, no. We're doing
I got this.
I got this, buddy. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major averages all lower right now. Let's start off with Brent with those headlines from Iran. Brent, the active contract, still higher, up 2.3%, 107.41 a barrel. WTI, 2.8% higher. That's 101.04 a barrel for West Texas. S&P 500, 39 points lower, down 0.5%, 73.94 in the index. The Dow, 30 points lower. And the NASDAQ Composite Index is down 215 points. And NVIDIA, those shares now lower, down 1.9%. The chipmaker reporting its first quarter results, delivering a forecast amid increased investor skepticism, we'll call it. They're also trying to broaden out beyond customers like the hyperscalers. The best performing stock in the S&P 500 right now. Go back to fashion. Ralph Lauren. And yes, it's Lauren, not Loren.
Who was saying Loren?
A lot of people say that. I hate that. It's up over 10%. Reported revenue and profit beating analyst expectations. The customers are, I guess we can say, higher end, so they're willing to pay full price.
They're not bothered by the rising gas prices?
They're not bothered by much, apparently. But Intuit is then at the bottom of the barrel, the worst performing stock in the index. Intuit shares down 19.3%. The tax prep software company reporting third quarter results seen as disappointing for the TurboTax business. They also announced they're cutting 17% of the staff. That's 3,000 workers to try and trim costs. Stephen Colbert, the run on late night, that's ending tonight.
Oh, tonight's the last show?
Yeah, winding down tonight. Blame competition from, well, streaming and podcast for the end of the 33-year-old television institution.
Who are his guests tonight? That's the question.
I don't know. I think a lot of like the other late night hosts.
Oh, the Jimmy Kimmels.
Yeah. Maybe they'll make an appearance or whatever. It should be interesting. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. Thank you so much, JT. You mentioned NVIDIA down. NVIDIA was the big earnings report that we were waiting for, Paul. And I think everyone's just gotten so used to this chip maker blowing out expectations and, coming in with these great statements of demand, limitless demand seemingly, and the market's reaction is like, whatever.
Yeah, the beat and raise, and they've been so good for so long, surpassing expectations of the street, but it's, if nothing else, it's a law of large numbers, maybe a little bit of competition as well.
All right, Angelo Zeno is our Senior Vice President and Equity Analyst at CFRA Research. He joins us now through Zoom. Angelo, we're looking at NVIDIA shares now lower by almost 2%. Is there anything objectionable in this set of results?
No, I mean, I thought it was overall fairly clean type of number. Maybe the only thing that, maybe wasn't as clean was the fact that they did, shift their business segments around a little bit. But I think that was to be expected. I mean, it was one of those situations where when you kind of looked at everything outside of data centers, it was just such a small part of their revenue, whether we talk about, autos at about 1% of sales or kind of, whatever else, even gaming, which was once their largest business, was only, mid-single digit percentage of their sales. So kind of changing the way they kind of segmented it and broke their revenue down, I think makes a lot of sense. But when you kind of look up overall from the results here, I mean, it was a solid beat and raise quarter, as NVIDIA has done here over the last couple of quarters. You're getting a little bit of a sell the news, which is, typically what you've seen here from NVIDIA stock, but this is now a stock trading about 18 times our expectations for 2027. And what investors really want to hear and see long term, and what the answer to is the sustainability of this stuff, right? And NVIDIA can be as optimistic as they want looking out through the end of the decade, but investors are going to continue to be somewhat cautious in that outlook.
Talk to us about customers, Angelo. They talked about maybe governments and other entities becoming big customers. Talk to us about that and the development of that part of the business.
Yeah, I mean, so in kind of breaking down this revenue, essentially they within data centers, which is what, 92% of the revenue at this point in time, you're looking at about half of that, or essentially exactly half of it coming from the hyperscalers. And we know what the hyperscalers are all doing. We're looking at near doubling in terms of hyperscaler CapEx spend here this year. And it's one of those situations where, of course, those growth rates are going to decelerate over time. So I think it was smart for NVIDIA at this point in time to show now that breakdown in terms of what else is out there, in terms of, to your point, the sovereign AI opportunities, potentially what the neo clouds have to offer, which is also, in that other half of the bucket there, where you could potentially see, let's call it stronger CapEx spend, at least on a relative basis here, longer term, because there's a bigger or larger number of participants in that basket, right? So you've got the potential for that to be a bigger percentage of their total revenue here as we kind of look out 2 to 3 years from now. I think that's at least their expectation. And I think if you start seeing that, I think investors will reward that. So again, it's one of those situations, stock trading about 18 times next year's earnings. But if we see kind of maybe a more favorable mix outside of hyperscalers, I think that could be a good thing, especially since when you think about who really plays and sells these AI-based servers outside of the hyperscalers, it really is largely Intel. NVIDIA.
Gotcha. Angelo, before we let you go, I got to ask about the return of cash because the CFO says they plan to return 50% of their free cash flow this year. They announced an $80 billion stock buyback plan, boosted their quarterly dividend to 25 cents a share. Does this attract a new crowd of investors, a new group of investors, or is this largely built into expectations?
I think it's a little bit built in, but I think it's a good thing to see. I mean, we're looking at them they're probably gonna return at least $100 billion, we think, in back to shareholders here over the next 12 months. And the only other company that is anywhere near that is Apple at this point in time. Especially when you start looking at all the hyperscalers out there, essentially all of them have kind of refrained at this point from buying back shares, right? And increasing dividends significantly because of what they're devoting towards the CapEx spend. So that's all that money now is going into NVIDIA. They can return that cash to shareholders. And I think that is somewhat enticing to investors at this point in time. So we like the move, and we think, especially as growth rates start to decelerate here over the next 2 to 3 years, I think that's going to probably become a bigger part of the conversation for investors.
All right, Angelo, thanks so much. Appreciate that. Angelo Zeno, Senior Vice President and Equity Analyst for CFRA Research. Again, just looking at NVIDIA stock, it's about down 2% today, but it's up about 17% year to date. And on a trailing 12 basis, the stock is up 66%. And remember, this is no small cap company. This is $5.3 trillion of market cap. So when you see those percentage moves, that's big money for investors here. Earlier this morning during surveillance, Tom Keenan and I, we saw a jump in crude oil, and we're like, what's going on out there? We couldn't figure it out. But then there's lots of news out there. The oil's pulled back off of its highs, but still trading higher here. But it feels like for those in the early days of the war, they were talking about if this goes higher for longer, we could be in a problem. Well, I think we're there. I think we're in that higher for longer. I think we're there. But let's just see from a trading perspective what we're thinking about on the oil and commodity front. We do that with Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence. Mike, how much of this, this increase in oil prices that we've seen, let's just take WTI crude oil from 60 to 100 here. How much of that is Iran, and how much of that is other stuff?
Oh, I would say over 100% closure of Strait of Hormuz.
Okay.
That's starting out admitting what I got wrong. I never thought that whatever we did, the U.S. military allowed this strait to be closed, but it did.
Yeah.
So what it's doing now is it's adding fuel to the pre-existing bearish trend in crude oils. And I say bearish because before this happened, it was the U.S. proliferation of supply and demand from the U.S. and Canada heading towards 8 million barrels a day. It's going to 10 now because we have major incentive from price now. The key thing that's really missing, another thing I really got wrong this year, key thing that's missing that's really never happened when you have these kind of global energy shocks is wealth reversion. I mean, U.S. stock market says, yeah, we don't care. We're going to keep going up. And that's, I like to point out, that's the #1 inflationary force. Crude oil, short term, it's temporary. The price you see on the screen was first traded in basically at end of 2007, 2008. We've seen this before, but it's starting driving season, right? And that average price of gasoline at $4.50 versus this time of year, close to $3. Even diesel heading there to an all-time high. That's going to be demand destruction. But to me, the key thing for this year is where we go by the end of the year. And natural gas, I think, is the guide. On a year-over-year basis, it's down 10%. In January, it was up 1%. Now, that's the front future contract.
Okay, that's a lot to digest here. And what you've also been saying fairly consistently is that if you look at oil due for delivery in December, it's a whole different picture. How has that picture evolved, though, as everyone's gotten more accustomed to the idea that this is going to be a higher for longer situation?
Yes, exactly. I love when people in commodities adjust to something a higher for longer. It usually means they're going down. It's the #1 lesson in commodities. When they go up, they go down, with the exception of gold. There's only one major sector that's made a new high this year. You might not know it. It's precious metals. And that's already put in a good peak. So I look at December crude oil future. Right now on our trusty Bloomberg screen, we see $83 a barrel. I'll stick my neck, and I still think that's going to be closer to 50 by the time we get to midterms. The average cost of production in this country is closer to 50, maybe 55. And the thing is, what does Mr. Trump need? Now, how he gets it, it's being a little more difficult than most of us had thought, but he has to have that happen. So look at the repercussions if it does not, if it stays higher. Republicans are already toast. There'll be more toast. People will be clamoring about inflation. And imagine inflation, if it stays high and even the stock market goes down, what happens to the 2028 election? This is very serious political stuff. I hate to say it, but it's just a fact where prices are. But the bottom line is simple, oxymoronic statement. The leader of the world's largest energy producer and a net exporter wants energy prices lower. And we have an election in November, and the number one issue is affordability. What do you think is going to happen?
Yep.
They're going to find a way.
Exactly. That's my focus. And I hate to be political, but that's what matters in crude oil right now.
Red headline across the Bloomberg terminal. EIA says U.S. natural gas stockpiles rose 101 BCF last week. And I look at the Henry Hub nat gas, that's the U.S. nat gas, that's down 47% year to date, down 19% year to date.
Yeah.
So you're saying that we should look at nat gas as a little bit of precursor of directionality for oil.
So for nat gas, I always use year over year because it's so seasonal. You have to compare natural gas to the same month last year, and it's down 10%. So that's a shocker. But the key thing is it's the number one measure for heat, electricity, and bottom line, fertilizer. I come to the Corn Belt. When you want to put fertilizer on your crops, you use anhydrous ammonia. That comes from U.S. natural gas. And we're the largest net exporter of LNG. So these are things Mr. Trump has in his favor. But natural gas has been a great leader. It's a high volatility leader in energy, and it's plunged on the year, down 10% year over year. I expect that's what's going to happen. Again, the same thing happened in 2023 when a lot of people are calling for crude oil to go to 150, and I stuck with my $50 mark. Yeah, okay, I got the 54. But the key thing is natural gas typically goes from 5 to 2. And this year we're around 7. And when it goes up, it goes back down. It's just the simple things that happen in elastic commodities. And again, we have a motivated government to bring on more supply.
All right. Mike, very quickly, Paul was telling us about how Iran is in talks with Oman over a permanent toll system for Hormuz. This was one of the headlines that crossed. What's the oil market's reaction going to be if this is something that's announced?
That's a shocker. I mean, they're not going to like that, but what they're going to do is just move away. And what is Saudi Arabia doing? It's already sending this, crude pipelines through to the Red Sea, and even the UAE can export crude oil through a pipeline to the Gulf of Oman. So it's just also, bottom line is energy price making status has shifted to the Western Hemisphere and U.S. in the middle.
All right, good stuff. Mike McGlone, thank you so much. He is in our New York office with us this week, senior commodity strategist, covering commodities, and you're usually in Miami.
That's right.
So, he decided to join us here, brought the heat, and now he's brought the rain as well. Yeah, it's cold and kind of dreary.
Exactly.
Right? Memorial Day weekend is, I know, that's Paul because he can't go to the beach. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 has erased this week's gain. Investors, in part, are taking their cue from the rise in oil prices. Brent's up 1.9%, WTI up 2.5% right now, as Iran is discussing with Oman how to set up some sort of a permanent toll system in the Strait of Hormuz. Walmart, which you can look at as a bellwether stock, they warn that fuel costs squeezing the bottom line and could also lead to higher prices for their shoppers. Meantime, pretty solid outlook from NVIDIA. That has failed to impress investors. Shares of NVIDIA right now down 1.8%. And then Armonk, New York-based IBM, those shares up 7.5%. The Trump administration agreeing to award $1 billion to IBM to build a foundry for producing quantum computing chips. Meantime, Lori Calvasina at RBC Capital Markets says, you know what, semiconductor stocks in particular may give investors some pause.
We just have to be really, really vigilant in terms of watching that area of the market. It does feel to me like there's some vulnerability to profit taking at some point, but that does feel more short-term in nature.
The S&P 500, 34 points lower and down 0.5%. The Dow, 72 points lower. The NASDAQ Composite Index down 166 points. 10-year yield up 3 basis points, 461. The long bond up a basis point, and that is at, we'll call it 514 right now. I got to wonder what Lee Iacocca would say about this. So Stellantis is plotting a turnaround. In the process, it looks like they're going to sideline Chrysler and Dodge. 70% of its future spending is going to go to just 4 brands: Jeep, Ram, Fiat, and Peugeot.
Wow.
So
interesting. Chrysler.
Yeah.
It's a mainstay.
It used to be one of the big 3, and then no more.
No more.
How many Gen Zers would know who Lee Iacocca is?
I remember
They would look at you blankly.
I used to cover the old Mario Cuomo when he was governor, not his son, but he used to tell this great story when he went to visit the White House with Ronald Reagan. Ronald Reagan pretended that he didn't know who he was. It's, oh, Lee Iacocca, so good to see you. So anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business. I'm full of these boring radio stories.
I love them.
Yeah, keep coming. All right, John Tucker, thanks so much. Appreciate that. As always, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, if you're Kevin Warsh, the new chair of the Federal Reserve, maybe it's a little bit of be careful what you wish for, because he is the Fed chair, and presumably he has some pressure, outside pressure exerted upon him by President Trump to lower rates. But boy, the data just does not seem to be there to support that. Danielle DiMartino Booth, CEO and Chief Strategist at QI Research, formerly of the Dallas Federal Reserve Bank herself. Danielle, if you're Kevin Warsh, what do you do your first few days on the job, first few weeks, when you're trying to get your feet planted here?
Well, I might consider before his first day at work conceiving a dashboard of alternative measures, maybe starting with the comments out of Walmart this morning that said, you know, for a while, tax refunds, the word they used was muted the higher prices at the gas pump, but now they appear to have basically run through that cushion. That was reiterated by Home Depot, and Home Depot added that Americans have also been mentioning layoffs. So I think Kevin Warsh is hopefully going to be a young and dynamic enough leader to kind of resurrect a lot of the real-time indicators that Fed officials had to fall back on when the government was shut down. I'm hoping he's able to bring some new life into how they study the economy.
Okay, he can present that and maybe start looking at a dashboard. How does he convince the rest of the FOMC to see it his way? Because the latest Fed minutes show that there's a pretty big divide there.
Oh, there is. I mean, we could be talking about something that resembles mutiny, depending on, the Supreme Court has yet to rule on Lisa Cook. I think the irony here is, given how deferential Powell has been about Warsh coming on in his last press conference, Powell might end up being Warsh's greatest ally in trying to form a consensus. We haven't heard too much in the way of antagonism from Philip Jefferson, the vice chair. I think Waller will probably also side with Warsh, but then the list starts to get pretty thin after that. Anna Paulson from the Philly Fed, I think she'll also be an ally, but again, it's a big committee, and there are a lot of individuals who are clearly looking for the next move to possibly be a rate hike.
Wow. So, Danielle, the next Fed decision day is June 17th. Will we hear from Kevin Warsh publicly before then? Do we know?
That's a really good question. And I've been kind of scouring the headlines to see if we're going to hear anything after he's sworn in on Friday. I think it would possibly work to his benefit to state his case to the public before meeting behind closed doors on June 16th and 17th, and put a litmus test out there. I'm not talking about coming on TV every day. I think that would certainly reduce his credibility, but I don't think that a single appearance to the public stating where his thinking is, saying when the University of Michigan and Conference Board come out and households are bemoaning the fact that they've run through their savings. We've seen the saving rate come down appreciably. I don't think it would be to his detriment to state his case to the American public before the Fed meets.
How much do you think President Trump will start to, speak out in public through social media, kind of urging Kevin Warsh to cut rates? Or is he going to stay quiet initially and see how Warsh navigates this situation?
Well, I certainly do hope that we would have a little bit of time for him, but even before he got through committee, much less confirmed by the Senate, Trump joked about suing Kevin Warsh if he didn't lower interest rates. I cannot speak for how long the president is going to be silent if Warsh decides to let the June meeting come and go and say, we're going to remain data dependent and see how much of this supply shock from the Iran war trickles down into other areas of inflation that monetary policy does have some sway over. We'll have to see if he can get even past that first meeting without the president chiming in. It would surprise me if the word deferential was to cross Trump's mind.
Danielle, what's your view on the inflation picture out there these days?
Well, we just got fresh data out of the New York Fed yesterday, and Americans are planning to spend an extraordinary amount of their income on essentials, on just food and gas, and they therefore took down to a huge extent what they're going to be spending on other things. And we're seeing that play out in a widening divide you can get it on the Bloomberg terminal, between Trueflation headline and Trueflation core. So you're seeing real pressure on discretionary purchasing power, and that is indeed what we're hearing from one retailer after another at the tail end of this earnings season.
Yeah, I was just going to say, you don't have to go too far to find evidence of that. And, the retailers are definitely pointing it out. Yes. The discount retailers also pointing out that the high-income consumer trading down and increasingly going to them as their go-to place. Danielle, thank you so much. Danielle DiMartino Booth, the CEO and Chief Strategist at QI Research, talking to us about the difficult road that Kevin Warsh has ahead of him. I forgot about the fact that President Trump had threatened to potentially sue Kevin Warsh if he didn't cut interest rates.
Yeah, if I were Kevin Warsh, my assumption going in would be that the president will be aggressive in public about his continued desire for lower rates. I don't know why the president would change, just because there's a new chairperson in there. So I would be ready for that. No,
this is his guy. This is his guy that he wanted, and he got what he wanted in the end when Tom Tillis gave way following the resolution of the lawsuit against Jay Powell over the Fed renovation. So that continues. And the irony of Jay Powell playing this role to help Kevin Warsh, get consensus, build consensus.
Potentially.
Among the FOMC. All right, we have much more coming up. Right now, stocks are lower on the day. The S&P 500 down by 0.5% as oil prices move higher. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
This is Bloomberg Intelligence. Paul Sweeney and Scarlett Fu and John Tucker broadcasting live from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are also streaming live on YouTube. And, you know, as we get to the almost the end of the earnings calendar right now, retailers are busy reporting. We're also trying to get a better understanding of how companies are positioning themselves through this new period of higher oil prices and also perhaps the consumer remaining under pressure for longer, given the inflationary pressures and all sorts of other factors that are beyond these automakers' control, including the shift away from electric vehicles back towards ICE engines.
Right.
And that's something that they're all kind of navigating in their own way. Let's bring in Craig Trudell right now. Craig Trudell was our global car czar, but he has moved back to New York, and he is now our managing editor of global business coverage. So congratulations on the promotion. Let's talk a little bit about Stellantis, because John Tucker was telling us earlier that Stellantis, which owns Chrysler and all the brands under the Chrysler umbrella, is moving away from Chrysler. It's kind of leaving it behind.
Yeah, I mean, this has been a long-running issue with this company of making this case years ago that, scale above all else was going to win out and was going to be the sort of answer to this industry that was in need of consolidation. But they haven't actually sort of justified that, sort of business case that they made. 14 brands is an awful lot of mouths to feed. And here in North America, they don't have quite as vast a portfolio. There are a fair number of European brands that aren't in this market. But Chrysler for some time now has been down to a single model, a minivan, and that's just not sort of consistent with a brand that a lot of Americans recognize, but is sort of reflective of this dilemma that they've had of where do they lay their bets. I think there's some disappointment here in this sort of reaction to this investor day that they're having, that the company isn't making the sort of tough decisions that they probably needed to make years ago to maybe put some of these brands out to pasture, considering how little they've invested.
What is Stellantis's EV strategy today, and how does that compare against maybe some of its peers?
In short, they were way behind everybody else. They were trying to catch up. And in retrospect, they made some incredibly wayward bets at the worst moment, sort of at the very end of this transition, that the U.S. industry was attempting under the Biden administration. And in their defense, this has been just all over the place from one administration to the next, where Trump won. He was very sort of anti-EV, drill baby drill. Biden comes in. IRA was just this incredible sort of effort, and actually something that got Europe very nervous about. Are all of these EV and battery investments going to go to North America at the expense of Europe for a company like Stellantis? And yet there wasn't a whole lot of progress by the time. Not just multi-billion-dollar write-downs, companies like Stellantis and Ford in this position of having to take, not just multi-billion-dollar write-downs, but tens of billions of dollars in write-downs or write-offs.
So in a way, being behind maybe helped it because, they're right back to where they were and they don't actually need to have a big lineup of EVs. What kind of investments are they going to make then in the existing Chrysler brands? I mean, you mentioned the minivan. I mean, how many more versions of that minivan can you really focus on?
They are talking about bringing some crossovers to the Chrysler brand, but really sort of focusing on some of their core divisions. I think here it's really Jeep SUVs and Ram pickups, which makes a lot of sense. Americans, even as gas prices are like headed up, we still love our big pickups and SUVs. I do have some questions about whether or not it's so simple of bringing back like the Hemi engine or these diesel models. Even if it is the case that we buy a heck of a lot more of those than EVs, are we going to see some change in buyer patterns as a result of the fact that diesel in particular is really hitting consumers where it hurts in terms of their wallets?
So is EV been just slowed down, the EV conversion in the U.S.? Is it still happening? Where are we with that?
Yeah, I think it's going to be a case where it's a lot messier than we were expecting just a few years ago, right? And we are seeing sort of indications that in the used market, in part because maybe we overbuilt in terms of thinking that there was more demand than there actually was. You actually have some real sort of bargains in the market for cars that are just a few years old that depreciated quite a bit, and consumers are interested in sort of bargain hunting. Does that sort of help with sort of shoring up residual values and help that business case a little bit? Maybe. But until and unless we have indications that policy in Washington is going to be more consistent and there's going to be an emphasis on competing with China in a more head-on and sustained way, I think if you're a manufacturer sort of laying bets for the future, you really have to hedge against this notion that Washington kind of keeps going back and forth in terms of are they into this or not?
Very quickly, do they have any hybrid vehicles?
They do, and I think that's actually something that we're going to see across the industry. That's a sort of natural, bet to make that consumers are maybe going to not go fully electric, but are going to want to save at the pump.
All right, well said. Craig Trudell, thank you so much. Our former Global Car Czar, who has since been promoted to managing editor of global business coverage back here in New York as well.
All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121, access the world's only global audio business network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence begins in just a moment with stocks trading lower, oil trading higher, yields higher. That's what you need to know. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
This is Bloomberg Intelligence, broadcasting live from the Bloomberg Interactive Brokers Studio in Midtown Manhattan. We are also streaming live on YouTube, and we're available at our website, bloomberg.com/video. Did I get that right?
Perfect.
Okay, great.
Perfect.
I can't keep track of whether it's / or back.
Yeah, I know. It's the one that you don't think it's supposed to be.
Okay, thank you. All right. Paul Sweeney there, Scarlett Fu, and John Tucker. We have a lot to cover in the second hour of Bloomberg Intelligence. We're going to check in with Chris Cialino. He is our U.S. machinery analyst to recap earnings out of Deere. U.S. farmers, we know, are struggling. So what does that mean for a company like Deere? Walmart, of course, reporting earnings this morning. The barometer here for the U.S. economy, because it covers such a wide swath of the economy and has such direct exposure to the U.S. consumer. So Jen Bartashis, our senior analyst covering retail staples and packaged foods, will be joining us to talk about that. Laura Wellen, she is managing director at UBS Wealth Management, will give us her outlook on the markets as we see stocks under a bit of pressure and yields moving higher once again after a bit of a respite last week, or I should say yesterday, not last week. Barry Ritholtz, founder of Ritholtz Wealth Management and host of Masters in Business, will also join us to give us his big picture take on investing. First, let's go over now to John Tucker for our Bloomberg Business Flash.
All right, the major stock averages, Scarlett, they are lower. This follows a rise in oil prices and some of the earnings that met with a little skepticism on the part of analysts. Walmart, the biggest retailer, let's start there, down 7% following the profit report. They offered up weaker forecasts and also citing the rise in gasoline prices. NVIDIA, we're going to take a deeper dive in just a moment, but they reported stronger profit revenue for the latest quarter. It's kind of met with a big by analysts and investors. Right now, NVIDIA shares, they are down 1.7%. David Leibovitz of JP Morgan Asset Management says, you know what, technology shares do still have a lot of room to run.
We're not running away from the U.S., which is obviously a tech-heavy market. We think that the fundamentals are there, the earnings are there. Even if we're missing expectations, the numbers themselves are still pretty good.
Deere's farm machinery sales staying sluggish in North America, and that's raising questions on the agricultural economy when it's going to start getting a lot better. Deere shares, they are down right now 7.6%. Overall, the S&P 500 down 24 points. That's a decline of 0.3%, 7408 on the index. The Dow Jones Industrial Average 66 points lower. Nasdaq Composite Index is down 0.5%. That's a decline of 133 points. Brent crude up 2.5%, 107.76 a barrel. West Texas crude, that's up 3.25%, 101.47 a barrel there. Great story on the Bloomberg. I don't know if you saw this. A focus on the scene in Granbury, Texas, where they are fighting a data center. And the story goes on to say that 7 in 10 Americans against the construction of an AI data center in their area, with 48% strongly opposed. This according to a recent Gallup poll based on a survey done in
Public
March.
sentiment towards data centers, towards AI has really soured in the last couple of weeks. I mean, because I think the fear is kind of running rampant, right? That AI is going to take over
story
jobs.
says they don't want, initially, all the pollution that it could generate, the construction vehicles, and the rise in the cost of their electricity bill.
That's right.
Absolutely. I mean, you hear it with the commencement speakers. When they mention AI, they are getting booed.
That's a good point. And they don't really create that many jobs. I mean, once you have a data center up and running, I mean, it's not like you got to have...
It's just kind of humming all the time there.
Yep. All right.
Taking
All
up
right,
a lot
John
of
Tucker,
space.
thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Here's John was just reporting. Got some red on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Avalon Purnell, equities reporter for Bloomberg News. Avalon, what are you looking at today?
We have to start off with NVIDIA. That's ticker NVDA. Currently down about 1.7%, though earlier it was whipsawing from the green to the red. That's after the world's most valuable company reported first quarter results that surpassed expectations across the board. However, it still is kind of not really being supported in the markets. Morgan Stanley writing that the stock continues to underreact despite a clean beat and raise on all metrics. And to be honest, it's not that surprising after the last couple of quarters we've been seeing them dipping despite having record earnings.
Yeah, people have just gotten so used to NVIDIA knocking it out of the ballpark that they're like, oh, okay, here it is again. What about your next company? Because this is also moving on earnings.
Yes, Intuit, that's ticker INTU, currently sinking about 20% in its biggest intraday drop since 2003. That's after the software firm reported third quarter results that were seen as disappointing, especially for its TurboTax business. It also gave a growth outlook that Barclays says is likely not enough to mitigate investor concerns. Part of that is because they also had a planned layoffs that many are saying are likely going to weigh on shares in the short term. Also worth noting that analysts say that TurboTax revenue miss could continue to add fuel to that AI bear case about the tax automation, and what exactly this company will look like as AI continues to get more superior.
Absolutely. All right. How about Ralph Lauren?
Yes, ticker.
Lauren, you're driving me nuts.
Pronounce that. I'm sorry.
By the way, his real name was Ralph Lipschitz.
Is that right?
That's close to Ralph Lauren.
No, that's a
or
good change.
Lauren.
It's a good name change there.
Yes, that's ticker RL, currently climbing about 11% for its biggest intraday jump since last April. That's after the fashion label reported revenue and profit for the fourth quarter that beat expectations. Also worth noting that analysts are really touting the fact that their first quarter outlook kind of surpassed expectations. Investors see the results as another great example of this high-end apparel company's momentum continuing to build as luxury shoppers continue to spend despite everything happening outside the markets. Also worth noting that Ralph Lauren's sales growth was mainly led by sales in Asia as shoppers decided to snap up those goods for Chinese New Year.
Yeah, everyone wants the U.S. preppy look.
Is that right? That's still in? Still a thing?
That's Ralph Lauren's look.
Yeah, that's the whole thing. You're right. Yeah.
I don't think it's changed over time, really. They're not adding more stripes. It's just the stripes.
It's classic and timeless.
There you go. Very good. I like that.
Someone wears Ralph Lauren.
I have one of their shirts.
See?
So that makes me, classic and timeless.
You are classic and timeless, John Tucker, as is Avalon Parnell. Thank you so much, Avalon. And of course, for more conversations like this, subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Be sure to subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, Deere reported earnings as well. It's a real grab bag towards the end of earnings season. You've got retailers, you've got farm machinery makers. NVIDIA, yeah, I know. NVIDIA is just kind of out of sync with the rest of the Mag 7 names. But Deere shares are slumping down about 8% right now. Let's bring in Chris Ciolino. He is our senior U.S. machinery analyst to recap what we learned here from the tractor maker. And I guess it comes down to the farm economy is struggling, and so therefore we're seeing that reflected in Deere's results.
Yeah, I mean, that's part of it. The headline coming out of the quarter was that they had a big beat, but really, if you unpack that, a lot of that was driven by this IEEPA tariff refund that they got. If you kind of peel back the onion here, their construction business actually continues to perform quite well. Really good top line and margin performance there, and the orders continue to progress nicely. And small ag and turf was good as well, but the weakness on the large ag side continues to be a problem for them, and really it doesn't really kind of show any signs of abating as we look through the balance of this year. You have the higher input costs, weak farm fundamentals, so still a very challenging setup as we look here in the near term.
Chris, just by my recognition, Deere's the first company that I can think of that calls out this tariff rebate. Can you explain a little bit? So what's the company disclosing about this? How long did it take to get this rebate? Was it everything they were looking for? What are they doing with this rebate?
Yeah, so interestingly enough, I think they're the second or third company, at least in my universe, that has actually called out this refund claim. It was roughly $272 million here in the quarter, so we think it contributed, roughly 75 cents in the quarter. If you look at their gross tariff impact for the year, so they were anticipating about a $1.2 billion impact for fiscal 2026. That gross number really hasn't changed. Once you take away some of the IEEPA and you add back some of the Section 122s and some of the other incremental tariff costs, net that hasn't changed. Now you have this refund, so when you look on a net basis, it's somewhere going to shake out in the $900 million range. This is relatively new for the machinery guys. I would anticipate we may hear similar from other companies next quarter, but Deere being, a little bit of off cycle during their fiscal quarter, I would anticipate we'll begin to hear more of these moving forward.
Okay. Well, I mean, either way, it's going to take a while for this to all get resolved. What we've seen with other heavy machinery makers, including Caterpillar, is that the boom in AI has benefited them as well. Does Deere fit into that category too?
It's a stretch, right? So it does help on the construction business, particularly during the early phases of any construction, whether it's excavation, anything with moving dirt. Deere has a strong and really growing position in construction equipment. And I think that's one of the big takeaways from this quarter is that construction results were very strong. The orders, again, very strong. There seems to be increasing visibility in terms of projects as we move into next year. So I think that has helped support the weakness that we're seeing on the ag side. They've introduced a whole new excavator lineup, a lot of new technology and innovations coming through on the construction side. So if we look at machinery earnings overall this season, I'd say construction continues to be one of the biggest bright spots.
How's the U.S. farmer doing out there, Chris?
It's tough, continues to be tough. I sound like a little bit of a broken record. This seems to be a recurring theme here over the past 2 years. Listen, I do think that 2026 will still mark the trough of the cycle, and I do think that's important. The debate really now becomes around what the trajectory of recovery looks like. Our sense is that it's going to be a much more measured recovery as we look into 27. And really, a lot kind of hinges on what happens here in the Middle East. How soon do maybe some of these fertilizer and input costs begin to come down? Yes, we've seen a little bit of a pickup in crop prices, so that helps to a degree. But we need clarity in terms of some of the input costs, again, particularly on the fertilizer side, as well as what's going to happen in terms of export markets and some of these trade relationships, and to see how those materialize. So we have a much more cautious view in terms of a cyclical recovery as we look into 27.
All right, Chris, thanks so much. Chris Giolino is our senior U.S. machinery analyst with the latest on Deere earnings, and those shares are lower in this morning's trade. We're also seeing shares of Walmart decline, down 7% this morning. Walmart coming out with its latest earnings report. Jen Bartashis is our senior analyst who covers retail staples and packaged food. And Jen, I'm really interested in the interplay between oil prices and Walmart's sales. In particular, we know that fuel costs are definitely squeezing Walmart's consumers, yet Walmart says that it has managed to absorb almost all of the fuel increase.
Yeah, it's an interesting dynamic when you look at it. Walmart has really done a good job of shifting their business mix, which really gives them a little bit more flexibility in how they can offset unexpected high costs, like we're seeing right now with fuel. The consumer for Walmart, certainly anybody in the lower end of the consumer spectrum is under some pressure. That does get amplified when gas prices are higher. And so we see that. But at the same time, what it does is it does reinforce value-focused shopping, which is really Walmart's wheelhouse. And so it's almost an odd situation where the more stressed the consumer is, the more likely Walmart is to be able to serve those customers. Not that you want that to be a never-ending cycle, but it is something that is out there. Walmart is actually, they do sell fuel as well. And so, obviously higher fuel prices does feed their top line to a degree, especially for Sam's Club. But it is a dynamic that we're going to have to watch closely over the next couple months.
Talk to us about their e-commerce business. Every quarter, I see this revenue growth from digital, and I guess this quarter's up 20-some-odd%. It is extraordinary. How are they doing that?
Yeah, their e-commerce business is really flourishing. And to your point, Paul, it's been multiple. I mean, it's just on a string of double-digit, high 20%, mid 20% growth every quarter. And really what's happening is you're seeing a big expansion of their marketplace. You've got more sellers coming into the marketplace, more shoppers buying on the marketplace, and that's then feeding ad revenue. It's feeding other types of revenue for the company, and so it's become this virtuous cycle where the more they're putting into it, the more people are responding, and the healthier that business becomes. Walmart has already said that their e-commerce business is now profitable, which is really great, and is also fuel to that growth where they can reinvest more easily because they are finding it to be a profitable business now. And you can't discount things like Walmart Plus, which is their membership program. Their membership fee income growth was astounding this quarter. They said they had a record number of new net adds for Walmart Plus this quarter. And a lot of Walmart Plus benefits are centered around e-commerce. And so whether you're placing orders for delivery to your house, whether it's for ship to your home, all of that is contributing to that e-commerce success.
Yeah, their Walmart Plus has a partnership with American Express Platinum, and I think that has, well, I signed up for the Amex Platinum card, and I'm very well-versed on all the different benefits.
Yep.
And this is one of the benefits, to steal market share away from Amazon. Do we have any sense of how well that effort is going, Walmart Plus versus Amazon?
Obviously Walmart does not disclose anything about Walmart Plus, but when we look at when we do our analysis, we see, millions and millions of households have now joined Walmart Plus, and the frequency of shop is really increasing. For a long time, Walmart had a hard time displacing Amazon because people's first inclination when they wanted to look for something was to go to Amazon.com. And that mentality is slowly shifting. And in part, it's due to these types of memberships like Walmart Plus. So when we estimate the number of households, it's continuing to grow. The revenue generated from that is just changing the entire profit mix for Walmart. And most importantly, this is what helps keep higher income households in particular sticky with Walmart as the economy starts to improve. Because once you're in that ecosystem and you get used to the quick delivery and the ease of ordering online, especially for things that you order with frequency, that makes you very sticky within Walmart, and that really bodes well for just their ability to keep those customers long term.
Trailing on a 5-year basis, Walmart's stock has gone up 22.3% per year. Compare that to the S&P, 13.8%. So it's just an extraordinary performer there for making a lot of shareholders a lot of money, including a lot of employees own a lot of that stock.
Yeah, all that investment into their e-commerce, and that's why the company wants to see itself as a tech company increasingly.
One of the greatest companies of all time, no doubt about it. Jen Bartash is senior retail analyst with Bloomberg Intelligence, breaking down the numbers from our friends in Beltonville, Arkansas. We got some red on the screen, not going to oversell it right here. I'm keeping an eye on crude oil. WTI crude oil is up over $3. We're now at $101 per barrel.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. The major stock average is lower right now. Treasury yields, they're higher. Oil, that's higher. Iran and Oman are discussing a permanent toll on the Strait of Hormuz. As you look at some of the movers right now, Intuit, Deere, and Walmart, these are the laggards in the S&P 500 after their earnings reports. And then Ralph Lauren and IBM, they're among the leaders in the index. Ralph's customers who want to look like they never left boarding school, still willing to pay full price. IBM right now, those shares, they're up 8% now. The Trump administration agreeing to award $1 billion to IBM to build a foundry for producing quantum computing chips. IBM actually going to start a new company around this called Anduril. They do have their quantum computer up at the Sleepy Hollow campus, I believe. And the thing is, it's a chip and basically a gigantic refrigerator to keep it cool. It's pretty cool looking. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. Thank you so much, John Tucker. Again, mixed trade if you include the Russell 2000. As Paul was saying, we don't want to oversell this decline because it's just modest losses right now for the equity indexes. And higher yields once again, although nothing like what we saw earlier this week or the end of last week. I want to bring in now Laura Wellen. She is our next guest. She's a managing director at UBS Wealth Management, and she joins us from Atlanta. Laura, you mentioned in your notes to us that you've been raising cash for clients who need liquidity over the next few years. How are you doing that? What are you, inching out of or selling down here to raise some of that cash?
Absolutely. Thanks for having me. We have been rebalancing a lot of the tech names. We still think there's room to run, but taking some risk off the table there. We've also trimmed our active gold and silver investments that we have for clients as they've done phenomenal last year.
So, Lauren, talk to us just about where your asset allocation is in the UBS kind of world here these days. Stocks, bonds, but I know you probably have an alternative sleeve as well. Where are you guys today?
We do. We carve out, depending on the client, 10 to 15% on the alternative space. We love high yield dividend paying stocks. So on that's mostly our focus. On the bond side, it's been really difficult in that long-term yields really haven't been where we wanted. So we've been more in the short-term duration, call it less than 3 years. And with where yields are today, we're sticking with that for now.
How does that translate into corporate credit as well, given where long-term yields are?
I think corporate credit's a really good place. We're always looking at risk mitigation. And so looking at the companies, obviously, when we look at earnings, just overall, 81% of companies beat their earnings. So we're looking at companies that are doing well, taking on their credit for our clients, probably 5 to 10% in that space.
How much credit risk, Lauren, do you think, or do your clients typically want to take these days? Or are they happy sitting in a 2-year treasury at north of 4% here?
They don't really want to take a lot of risk. And we personally don't want to take that risk either, especially when we can get short-term yields on the money market and kind of duration under that 3-year period. So we're not recommending that they take high risk on that side.
So if they're not really looking to take a lot of risk, how are they thinking about a lot of the big issues that are coming out in the equity market? We got the SpaceX IPO filing this week. We're anticipating getting the OpenAI IPO filing in as early as tomorrow even, certainly in the coming days and weeks. And Anthropic is set to go public as well. Does that constitute a risk that they might feel uncomfortable with?
I would say they defer to us on that. We are more sticking with the high yield dividend payers. We see lots of opportunity in the AI space. Companies both strictly on AI, but also the companies that are really investing in AI for their businesses. Data centers, people are talking a lot about data center. We see opportunity there. So we're willing to take risk for clients, but we want to make sure it's calculated and they're going to get paid for taking that risk.
In looking at different sectors here, healthcare, boy, you can certainly make the call long term. This is an industry that should have just a very good long-term runway as more and more people stay alive longer, live longer, that type of thing, but maybe need a lot of healthcare support. How do you think about that space longer term?
We absolutely agree with you. We think healthcare is a really great space to be in, especially with the biotech and pharmacy and stuff that you're seeing come to market every day that is helping longevity. We actually call our theme longevity. That's one of the things we really look at for clients. And so being able to invest in that, going back to your risk question, we feel like that is a good risk to take on because people are going to live longer, and the way that AI is helping that space, especially if you just look at robots being built to be able to help on the healthcare space. So we definitely like that space for our clients.
You had mentioned earlier about precious metals as being one area where you've maybe trimmed some of your holdings to raise cash. When your clients have exposure to precious metals, how are they expressing that? Is it through ETFs? Is it through miners?
It's through physical and ETFs. We think having it actively managed is really important. Obviously, in the short term, it's been hit here, and so we love to do what we call value buying. We rebalanced early in the year. We've bought a little bit more. Clients want it in physical, both here and internationally. But we think that over the next 6 to 12 months, that is going to be a good hedge once a lot of this war situation hopefully gets worked out soon.
All right, Lauren, thank you so much. Appreciate that. Lauren Wellen, she's Managing Director, UBS Wealth Management, on Zoom from Atlanta. Full disclosure, I am also a UBS Wealth Management client, so Tony O.C. in New York. We got some tech stuff coming out. I'm going to go NVIDIA, and then I also want to go SpaceX. So we said, get this Mandeep Singh guy in here. Even if he doesn't know about it, it feels like he can talk about it. He can fake it. He's been doing it his whole career, folks. Let's be honest. Mandeep Singh, one of the best tech analysts out there on Global Wall Street, joins us here. NVIDIA trading down a little bit here. Was it just kind of an expectations situation there, Mandeep, do you think? Or is there something a little bit soft in the numbers?
I think the numbers are becoming too good for people to believe this is sustainable.
Okay.
So, when you have a company that is close to a $400 billion run rate, growing 80%, that has never happened.
Yep.
Companies like Apple, Google, when they reached the scale of, 300 to 400 billion, they were growing 20%, 25% at best. 80% growth is unheard of.
Yeah,
and that's
right.
where people are like, this has to end.
Yet the indications from Jensen Huang is that this will continue, right?
Yeah.
You used the word parabolic to describe growth and demand.
Right.
So it's hard to see, how this ends down the road. Nevertheless, we are seeing maybe some shifting in their business segments that could confuse the way people interpret the results. Do you think that has something to do with it, the presentation of the numbers as opposed to the actual growth trajectory?
I think what they're trying to do with the new disclosure is give everyone a feel for how big the neo cloud and the sovereign business is so that they get the credit for this growth, which they're not getting, because everyone has this narrative. They're exposed to the hyperscalers. The hyperscalers make up 50% of the revenue, and they are developing their own chips. So that's why the multiple has been suppressed. And what they tried to do yesterday is, look, we've got, out of the $300 billion in data center revenue, half of that is neoclouds and sovereigns, and that portion is growing faster. Now, the only caveat there is that circular financing angle where even though the neoclouds are buying the chips, NVIDIA is an investor in those neoclouds. So that's an optics case that it's hard to deny there, that NVIDIA is financing some of the build out at the neoclouds, not so much at the sovereign level, but more at the neoclouds. And I think that's a case to be made in terms of how long that can sustain if especially the interest rates go higher or something like that were to happen.
For AI, what I've been waiting for is kind of what I call the Google moment, where you get an IPO that says, this is the internet stock in that particular case. This is the search stock. It just sets the stake in the ground. Seminal moment for the industry. Facebook was that name for social media. Looks like we're going to get some AI-specific IPOs of size coming down. Anthropic, ChatGPT coming, I don't know, very soon. What's the story going to be for those guys?
I mean, look, Anthropic has a very solid story right now because just on a quarter-over-quarter basis, their growth rate is north of 100%. This is like, again, Anthropic has gone from 10 billion in ARR at the end of last year
Annualized revenue.
Annualized revenue to over 30 billion, close to 40 billion now, 4 times in a span of 5 months. Wow. This is, again, and that's the basis for Jensen saying this is parabolic, because everyone was questioning ROI last year. Well, this is the ROI. The model companies are growing their revenue. What else do you need for
these percent increases, though, are kind of just blowing people's minds when it comes down to it. So when you look ahead to the IPOs, do you think that Anthropic will be better received than OpenAI, given some of the negative press surrounding the lawsuit between Elon Musk and Sam Altman? I know it clears the way, the way that the trial ended clears the way for OpenAI to move forward with its IPO, but you know, it did maybe damage some perception.
Agreed, and I think right now Anthropic has such a strong tailwind behind its back in terms of the revenue momentum, the numbers that I just alluded to in the last 4 months, 5 months, and so Anthropic will be definitely better received in terms of a higher valuation. And OpenAI, look, they were the leader. They had a head start of almost 12 to 18 months over everyone else. How did Anthropic, have a better model compared to OpenAI in coding agents, and suddenly everyone is talking about Anthropic, and it shows up in the numbers. So clearly, Anthropic will be better received right now.
Yeah, Claude is the way to go now over ChatGPT. So many people.
Is it? I got ChatGPT on my phone. Now I got to put Claude
on the consumer side, yes, but on the enterprise side, it's all Anthropic.
You got to download a new app.
I got to download a new app. All right, geez, I've got the little bubble there on my phone. You know, where you put the like-minded apps together. So I have an AI little bubble there. So
yeah, he just did this in the last week.
I'm getting into it. Real quick, 30 seconds. SpaceX is not profitable. Are Anthropic and Open, whatever AI GPT thing, whatever, are they profitable?
They're not, but at least their AI portion is growing at a hyper growth rate, whereas SpaceX XAI grew 22%. So if you look at just the AI
He's
portion,
been talking down the SpaceX thing.
22%, and they bought X, formerly Twitter, at $6 billion run rate. Now that has gone down to $2 billion. So they actually destroyed value, the ad revenue that the company had.
Well, that's why they were unprofitable last quarter, or for the last reporting period that they did offer. All right, well, Mandeep Singh not holding back at all.
No, you should have seen him this morning on surveillance. Tom had him going here. Luckily, I think it's going to be George Ferguson covering SpaceX, and there's an aerospace dude. How's he going to put a multiple on a space company? I mean, he's not. It's like it was with Tesla. The auto analysts are like, "You want me to pay what for this thing?" So anyway, that was kind of an issue. S&P down 36 points. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. So the major stock averages pushing lower. The S&P 500, in fact, has erased this week's gain. We have the S&P 500 25 points lower right now, 74.07 on the index. The Dow down 133 points. The NASDAQ Composite Index is 113 points lower. Consumer staples, the worst performing of the major industry groups in the index, and that's home to Walmart. Those shares, they are down right now 7%, seeing slowing sales growth, also delivering a pretty downbeat profit outlook for the current quarter. U.S. crude oil, West Texas, topping $101 a barrel with a few signs now the war with Iran is ending. The high inflation worry hasn't gone away. We have Treasury yields hovering around multi-year highs. And Sam Linton-Brown at BNP Paribas says the idea of Fed rate cuts anytime soon, well, that's pretty much out the window.
Yeah, look, our view at BNP Paribas has been that the Fed wouldn't be cutting rates this year. That's been our view since December of 2025. And we're quite open-minded to the idea that it's possible the Fed could actually be hiking rates. I think the key is we'd need to see even more strength in the labor market.
Right now, the S&P 500, again, 26 points lower. The Dow down 138, and the NASDAQ Composite Index 118 points lower. We do have cereal news. Target is on track to remove all cereals with artificial colors by the end of this month. Wow. But it's now the exclusive retailer for a new cereal from Kellogg's, Wild Berry Flavored Fruit Loops.
With no artificial coloring.
No synthetic colors or
what color
flavors.
Is that going to be?
Yeah, I don't know. It's just like...
How do you know which one is raspberry versus strawberry versus blueberry?
Exactly, Scarlett. That's my point.
Questions being asked. These are questions that have to be asked.
I don't know. It's just like...
I mean, speaking as a child of the 80s, no cereal's complete unless it's colored and you can tell what fruit it's supposed to be.
Yeah, I'm going to stick with the Captain. He's still my favorite.
Yeah, that
Captain
gets it
Crunch.
Did you know up on the 6th floor, we have a cereal of the month?
Oh, yeah. Oh, I know that.
What is it right now?
Cinnamon Toast Crunch.
Good one.
Solid
It's
offering.
awesome.
Yeah.
It really is.
So I always bring like a bowl to Lisa Mateo's desk of like, you know, Captain Crunch or something just to upset her day.
Because she's such a health freak.
Yes.
Yeah, take that.
Yep.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right, thank you. Good stuff. John Tucker with our Bloomberg Business Flash. It is Thursday, which means we check in with our Barry Ritholtz. And of course, Barry is host of Masters in Business, which airs on Bloomberg Radio. Also, he's the founder of Ritholtz Wealth Management. He has written a book, How Not to Invest. It actually published a while ago, but the paperback version of it drops this month. And
it's got to be successful if a publisher does the paperback.
Yes, I know,
That's
right?
what
I got to find out how many copies of the book do you sell before they actually publish a paperback version? Yeah. Barry, you're with us by phone, no, by Zoom, excuse me, by Zoom from New York. Within this book of How Not to Invest, you excerpt something from a magazine which shall remain nameless about Apple. And, some skepticism and doubts about the Apple Store when that was first announced about 25 years ago. Why did you include this? Why was this important to point out?
Sure. So, William Goldman, who wrote Marathon Man, Princess Bride, won a couple of Oscars for, I think, Butch Cassidy and the Sundance Kid and All the President's Men, famously said, nobody knows anything. And he was talking about scripts and like when you look at movie executives trying to figure out what the public is going to like in 2 to 4 years when a greenlit movie finally comes out, it's wild speculation. And the parallel for investors is just anytime there's something new, a new technology, a new retail store, just a new concept, there's a ton of skepticism, and sometimes we shouldn't be skeptical. So the magazine in question is Business Week before Bloomberg bought it, so we take no responsibility for it. But the headline was 25 years ago to this day, May 21st, 2001. Sorry, Steve, here's why Apple stores won't work. And the author, and I'll leave the author nameless, but the author just chronicled why all the reasons this was a terrible, terrible idea. And everything this person said turned out to be wrong. Not only did it work, Apple stores are the fastest store ever to reach $1 billion in retail, more sales per square foot than any other store. The closest store to them is Tiffany's, about half. So it just is one of those things that show you can't assume you have any idea that you know what's coming, especially with something new, different, outside of your expertise, or innovative things that make you uncomfortable. And the obvious parallel today is AI.
Absolutely. Nobody knows anything. Truer words have never been spoken. So, Barry, how do you apply this to something like OpenAI, Anthropic, or SpaceX? These are all things that are very new, very disruptive, and are causing people to lose their minds.
So first, you have to bring a lot of skepticism to the forecasting community. If you've paid any attention over the past, I don't know, 1 year, 100 years, everything in between, we as a profession, we as a species are not particularly good at guessing what comes next, especially because so many random events can happen that derail what we think. So what this means is, first, when you're constructing a portfolio, when you're investing your capital, don't start with the assumption that you have some idea what's going to happen, because you really don't. You can look at long-term returns. You can figure out, hey, here's what this asset class tends to generate over the long haul, but it's never a straight line. It's never easy. You get paid for waiting, and you get paid for tolerating the volatility. So starting out with that sort of humble assumption, I don't know what's going to happen next, is a good place to begin. The second place is to just be aware there's a difference between being cynical and having a healthy skepticism. And so when people say AI is going to be terrible, it's going to end this, that, and the other thing, it's a bubble, it's this, it's that, like, I'm having a hard time figuring out how it's going to simultaneously take all our jobs and also be a bubble that's not going to generate a decent ROI. That's a different criticism than, hey, there's a lot, this area is changing face very quickly, the pace is very rapid. We don't know exactly which company is going to be the winner. So rather than just make a binary bet on this one over that one, we're going to buy the whole space. We're going to buy the picks and shovel sellers and the hyperscalers and everybody else. And from that pool of 50, 100 companies, software, semiconductors, AI directly, there will be some big winners and they will make up for the losers. I just think about what took place during the dot-coms. And if you made a handful of bets, you were either very right or very wrong. But if you bought a whole basket, you did pretty well. You ended up with the Amazons and Microsofts and, all right, Pets.com didn't work out, but Chewy has worked out really well.
Yep. Barry, thanks so much for joining us. Always appreciate getting a few minutes of your time. Barry Ritholtz, host of Masters in Business on Bloomberg Radio, also the founder of Ritholtz Wealth Management, and the paperback version of Barry's book entitled How Not to Invest. That drops this month. So there you go. So it's a great book, good summer read in the paperback, How Not to Invest.
I love titles that do that, how not to do something.
Yes.
You know, because there's a million ways to do something, but the ones that stick with you are the ones where you're like, you know, if you did it this way,
and it's
you'll
going
get a messed up
to
result.
be interesting. I mean, you mentioned some of these big IPOs that are coming. We got the SpaceX filing yesterday. We're going to get some of these AI names, presumably.
OpenAI maybe tomorrow.
Tomorrow. Anthropic is another one. So this is going to be an opportunity for investors to really study this industry, figure out what it is, what the opportunities are. But you're going to have a very optimistic, longer-term view for a lot of these names.
And step back and admit to yourself that nobody knows anything.
Yep, and you either kind of believe in it or you don't. So we'll see how those things trade here. Got a little bit of red on the screen here today. The S&P is down 19 points. The Dow's down 90. And the NASDAQ is down 85 points, all about 1/3 of 1%. WTI crude oil up almost $3, $101 per barrel. This is Bloomberg.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Man, it is good to be an equity capital markets reporter these days. Lots going on out there. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Anthony Hughes is that equity markets capital reporter for Bloomberg News, joining us here in studio. Anthony, the SpaceX S1 was filed yesterday, or dropped, as the kids would say. Tom Keene had the notable, very keen observation. There's a lot of pictures, a lot of photographs in this prospectus. You don't typically see that. Did you take note of that?
Yeah, there was definitely a few interesting pictures. I think the first 4 or 5 pages were rockets flying into the air, which is quite an evocative evocative thing for an IPO. And perhaps people who don't, they don't want to read the whole document will just have a look at those pictures and get excited. So that's one possibility. But there's also a rendering, I think, of life on Mars, which I thought was quite interesting as well.
Yep. So there's a lot there, and then you get to the nitty gritty. I noticed, first of all, risk factors section, a solid 38 pages. So, I mean, that takes you, I used to pop out prospectuses that were 38 pages. Now I got a risk factors here. What was your takeaway from this filing here?
Well, I think that there's already been so much written about this and a lot of hype, but to actually read some of the statements in print about how much of how much of how many projects that SpaceX has that could provide the growth for the future. I mean, it's quite phenomenal, and people obviously really have to believe in those to get excited about this story. But there's one section there which is just about the growth strategies of the company, and it lists what they're doing in the space launch business, which is about growing the payload capacity of the rockets, and they've got the rocket launch today of Starship. There's in the Starlink business, which is the one that's doing the best in many ways. They're looking to build out a mobile phone network there, and then, very cool. But the really interesting one is on the AI side. They're obviously looking to substantially expand the amount of compute there, and obviously put data centers in space. But and then some of those projects in space, the really long-term stuff, is quite amazing around putting as I mentioned, civilization on Mars, but also building a lunar economy, and asteroid mining was one. I think they also talked about space tourism and what they call point-to-point terrestrial flights as well, which is like basically a spaceship replacing an airline, right, and getting you across the world much quicker, which is kind of an interesting concept. But I think to your point about the risk, space has always had a huge amount of risks. So people might, with so much hype around this IPO, people might forget that space is a very risky endeavor.
They start off strong in this prospectus summary. Our mission is to build the systems and technologies necessary to make life multiplanetary, to understand the true nature of the universe, and to extend the light of consciousness to the stars. That's a solid sentence. I would find the person who wrote that one.
Yes.
That's not an investment banker writing that one, I don't think.
Yeah, I think a few people were commenting that some of this prospectus might have been written by AI even, so I'm not sure whether AI is that creative, but yeah, there's also a section of the prospectus which talks about the TAM, or the total addressable market, and they say it's the largest in human history. And interestingly, I think it's a $27-28 trillion TAM, and interestingly, the largest, easily the largest proportion of that is actually AI. So, I think a lot of people's initial reaction, maybe once they've read a bit more of the fine print about this company, is, are we really investing in more of an AI story here than a space story? And the answer is, well, it may be that as we're looking to really scale up the revenue and sort of justify this $2 trillion valuation, which at the moment looks pretty far-fetched, maybe there is a lot of revenue coming through AI in the next few years. Particularly, they've got this deal with Anthropic, and that is going to add a bit to revenue. So maybe you can see the revenue scale up a bit. Still you'd want to see it scale up a lot to justify this valuation. That's all I'd say.
All right. So do we know anything about any type of roadshow that the company and its advisors will go on?
Yeah. So, like any IPO, there'll be a roadshow, and at the moment, we think it's going to start on June 4, so that we have to wait 15 days from the filing, and then we could see the IPO potentially price on June 11 is the current speculation. Then you'd have on that Friday, which is the 12th, you'd see the stock start trading. But obviously, in the next few weeks, we would actually see a valuation in the price range, which would give us a much better idea of whether this is going to be a good investment or not. But obviously, a bunch of hype, and a lot of people are interested in the
And
story.
presumably there'll be a video publicly available with kind of the roadshow presentation.
Yeah, so typically there's a retail roadshow that's publicly available, and then there's an institutional roadshow as well, which is more, may include a broader amount, more information. But the retail roadshow would be something would be publicly available.
All right, I've printed this out. I did go double-sided to save some trees because this is 280 pages of a prospectus. So I'll read that this weekend. A little bit of way through it, but there's a lot in there.
A lot.
And then I got to get ready, like everybody else, for potentially OpenAI and potentially Anthropic for the AI potential IPOs coming. So we'll keep our eyes out for that, as I know you will. Anthony Hughes, Equity Capital Markets reporter for Bloomberg News there. Looking at the markets here, we got a little bit of red on the screen. Nothing happening really. S&P's down 20 points. The Dow is down 66 points, and NASDAQ is down 94 points. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top global stories and global business headlines are coming up in just a moment. Looking at the commodity space here, look at oil here. WTI crude oil is up $2.50 here, $100 and some change here. It was up to $102, so we're off a little bit off the highs, but definitely moving higher again today. Some more troubling discussion coming out of the Strait of Hormuz. Brent is up $2. That's $107 per barrel. So we'll keep an eye on that. Yields higher as well. 10-year Treasury, 4.60%. This is Bloomberg.
From ABC News, I'm Chuck Severson. A measure to compel President Trump to withdraw from the war with Iran is expected to come up for a vote in the House today. Significant test of lawmakers' willingness to go along with a war the president launched over 2 months ago without congressional approval. A small but potentially crucial number of Republicans have sided with Democrats on the issue. And what's keeping oil and gasoline prices high continues. Iran's announced a new area of control of the Strait of Hormuz, but the U.S. insists it is in control. ABC's Tom Sufi-Burridge.
Iran has the ability to threaten ships, and that is why there are hundreds of ships stuck in the Persian Gulf to the west of there and can't get out. The U.S. military blockade is a significant distance to the east, beyond the Gulf of Oman, basically where that goes into the Arabian Sea. That is where the U.S. military has multiple ships stationed and is not letting any ships which are going to or from Iranian ports or having Iranian-linked goods on them to transit through those waters. So it's a U.S. blockade on the Iranian blockade.
Growing concern among Republicans in Congress about the fund President Trump wants the Justice Department to set up to pay people claiming they were harmed by the government.
Oklahoma Senator James Lankford is one Republican questioning whether the new fund could see taxpayer money going to those who beat Capitol Police officers on January 6th.
I don't understand why any of those folks would receive any kind of compensation.
Senate Democrats will aim to put Republicans on the record on the fund and on the president's ballroom project as final action nears on a bill that would fund immigration enforcement. But noting a lack of interest among Republicans in putting taxpayer money into the ballroom, senators say $1 billion provision for the Secret Service has been removed from the package. Stephen Portnoy, ABC News, Washington.
The U.S. Commission of Fine Arts has approved the design for the military victory arch President Trump wants to build in Washington, this despite opposition. Wall Street major indexes are lower. You're listening to ABC News. A mixed bag in the housing market, according to new government data.
Last month, construction was begun on 1.5 million new homes compared with 1.7 million the month before. That's single-family houses, apartments, and condos. But next month might see an increase in housing starts. Construction permits issued for new homes surged nearly 6% from March to April.
ABC's Jim Ryan. This says mortgage rates have hit a 9-month high with a 30-year fixed hovering around 6.68%. Hitting the road this Memorial Day weekend, ABC's Stephanie Ramos has tips to beat the traffic.
Traffic data company INRIX says the worst times to drive will be Thursday and Friday afternoons, especially between 3 and 6 p.m., with major backups expected in cities like New York, Boston, Denver, and Los Angeles. The best bet? Hit the road early in the morning or wait until later at night to avoid the heaviest congestion. Now, if you're driving long distances, experts say plan your gas stops ahead of time. Prices can vary significantly along your route, so filling up smart could actually save you some money.
More than 45 million Americans are expected to travel at least 50 miles. The Union for Theater Workers is planning to protest outside the Kennedy Center today to demonstrate against layoffs and the temporary closure of the center. Members of the International Alliance of Theatrical Stage Employees say that the layoffs are in violation of their contract, and they say that the jobs won't come back when the center reopens. Chuck Sievertson, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Welcome to Balance of Power. I'm Kaylee Lines alongside Tyler Kendall in Washington today, and we want to take you live right now to the White House, where President Trump is answering questions from reporters in the Oval Office at an event with the EPA administrator over easing food industry refrigeration requirements, climate requirements, that is. But let's listen to some of the questions the president is receiving and his answers now live.
Misreporting that I've ever seen. The ballroom is being built. It'll cost. It was going to be $200 million. I've doubled the size of it because we need it, and it's being done in conjunction with the military and with the very much in conjunction with the military and Secret Service. We're on time, on budget. It's going beautifully. Have all the money I need. We're making a gift to the United States. They came along and they said we want to make it the White House overall more secure, and I understand that. Not for me, because I'll be gone. You know, I'll be gone, and you'll have somebody else in for hopefully hundreds of years. But that's what they're doing it for. The ballroom is paid for. It's a gift. I mean, I want to make it clear, because so many people say, I thought you were giving this away. And all of a sudden, the money that they're spending is for security, having to do maybe around the ballroom and other parts of the house. But this is not for the ballroom. The ballroom is being a tremendous amount of what's being done with respect to the ballroom is for national security, including, as an example, a drone port on top of, which was top secret until litigation made it less than top secret. But we have a drone port. We have the glass that's 4 inches thick, bulletproof glass. We have bulletproof walls. We have things. You need a place like this, but this is being made as a gift from me and other people that are great patriots that spend a lot of money. We're building what will be the finest ballroom anywhere in the world. If they want to spend money on securing the White House, I think it would be very, very much a good expenditure, but the ballroom is being built.
But what if Congress doesn't sign off on the security money, sir?
Then the White House won't be a very secure place.
But then regarding Cuba, there was an aircraft carrier that just arrived there this week, the Nimitz aircraft carrier. Are you sending that there to intimidate the Cuban government?
No, not at all. Look, it's a failed country. Everybody knows it. They don't have electricity. They don't have money. They don't have really anything. They don't have food. And we're going to help them along, and we're going to help them because number one, I want to help them. I don't want to on a humanitarian basis, but we have the Cuban American population, much of it living in Miami and Florida. That's a great group of people, amazing group of people, industrious, they're great Americans. They've wanted this to happen. They want to go back to their country. They want to help their country. I hope they're going to stay here, but they want to go back. They want to invest in their country and, see if they can bring it back. Other presidents have looked at this for 50, 60 years doing something, and it looks like I'll be the one that does it, so we'd be happy to do it. We want to open it up to Cuban Americans where they can go back and help.
The DNC released a report this morning, their report on the last election on why you won and Democrats lost. One thing that it mentions is how they failed to reach Middle America, Southern Americans. Do you think they've learned lessons from that election, and have you seen that report?
I think the elections are so rigged, and we have to do something about it, and we're going to do something about it, but we cannot continue to have, and frankly, the Senate and the House, they ought to get together and they ought to pass the Save America Act so that you have voter ID, and it's so important you have proof of citizenship, little thing like proof of citizenship, and also mail-in voting, which is so crooked. So in Maryland, as you probably saw, they had 500,000 mail-in votes that were corrupt. They were corrupt. They said the printer made a mistake. Don't believe that. And they got caught with 500,000 mail-in ballots that were corrupt. We got to stop it. We have a country that has a very corrupt. We have more corrupt elections than third world countries have. And we ought to get smart. Pass the Save America Act. That'll be a long way. You have voter ID, voter identification. The Democrats don't want to pass. Now, I'll tell you what, the Democrat voters do want to pass, 87%. But the Democrat politicians don't want to pass. And the reason is they'd never be elected again. Because with their policy of open borders, transgender for everyone, I call it transgender mutilization of your children for everybody, men playing in women's sports, all of the stuff that they do, high taxes. They want a tax hike. They voted in favor of high taxes. They voted against a tax cut. They voted in favor of men playing in women's sports. I don't know what these people are thinking. The only way they can win is to cheat, and that's what they want to do. And we ought to pass the Save America Act. Yeah, please.
Yes, Mr. President. I have two questions for you. One of which is first about the ballroom and the second about Iran. First, I'm curious, what is the stone that you're going to be using? And I ask that for a reason, because I live in Stafford County, and you know a lot about history and stuff like that. So you know the stone that was quarried for the Capitol and the White House is from Stafford County. They still have quarries, so down there.
We're using marbles and granites, mostly marbles and granites.
All right, excellent. And then my second question is, the Vice President mentioned the other day there will be accommodations, they were willing to make accommodations with the Iranian deal. Could you kind of expand on those possible accommodations? Does that include...
When you say combination of what?
Accommodations, he's talking about accommodations as far as making the deal, going. Is that...
I don't know, I can't tell you. Right now we're negotiating, and we'll see. But either we're going to get it one way or the other. They're not going to have a nuclear weapon. You know, when people hear it, because oftentimes they won't put up the second part of the sentence having to do with, I'll say, this is more important than anything that we have to talk about, and usually they'll cut it off, the fake news. I said, because this is the nuclearization of a country that some people would say is somewhat crazy, and we cannot let Iran have a nuclear weapon. That's all it is. We can't let it. You will have a nuclear war in the Middle East, and that war will come here. That war will go to Europe. We cannot let that happen, and it won't happen. It's not going to happen. That's more important than anything else. We can't. I can think of nothing that's more important than the fact that we cannot let Iran have a nuclear weapon, and we won't. Yeah, Jeff.
Following up on that, sir, Iran is negotiating with Oman to set up a formalization of charging tolls in the Strait of Hormuz. Is that acceptable to you?
Well, we're looking at it. We hear about it. They've negotiated. They've had a relationship with them before, and we'll see. We have total control of the Strait of Hormuz, as you know, with our blockade. The blockade's been 100% effective. Nobody's been able to get through. It's like a steel wall. It's our Navy. We have the greatest military anywhere in the world. We wiped out their Navy. We not wiped out their air. I think they're down to about, I would say we knocked out 85% of their missile capacity. It's very hard for them now to build missiles, to build drones. We have great drone technology, anti-drone technology now that, frankly, we didn't have even 2 months ago. We have unbelievable drone technology, both for making them and also for knocking them down. But look, we're going to either make sure they don't have a nuclear weapon, or we're going to have to do something very drastic. And the people of the country, I believe when it's put to the people of our country, they will all agree that we cannot let Iran have a nuclear weapon. Yes, Daniel?
Just let me do one follow-up on that. How do you want things to end up with the Strait of Hormuz, though? Would you like them to have...
Well, we want it open. We want it free. We don't want tolls. It's international. It's an international waterway. They're not charging tolls. Right now, they are losing $500 million a day is what it's projected. I don't know, it sounds like a lot of money, but whether it's 500 or 200 or 300, they're losing a lot of money. There hasn't been a ship that's been able to get through without our approval. And the Navy has done an amazing job. And no ship is going to Iran, as you know. No ship is going to, or out of Iran without our approval.
Can they keep their highly enriched uranium?
No, we get the highly enriched. We will get it. We don't need it. We don't want it. We'll probably destroy it after we get it, but we're not going to let them have it. Okay?
Mr. President, I have two questions. First on deregulation, the second on the Supreme Court. You, coming from business, you've seen the effects of what unnecessary red tape can do to business. Do you believe that given the amount of deregulatory actions you've taken along with this, the pulling back the endangerment finding, the CAFE standards, tax cuts and tariffs, do you believe that you've made the United States the most pro-business, pro-investment country in the world?
Yeah, thank you very much for that question, because we are, for every one new regulation that we add, we're getting rid of 20 to 30 to 40, and now it's actually at even a number. In my first term, for every regulation that was added, we got rid of a minimum of 10. And I understand, Lee, that it's up to 43 or 44 right now. So if we add a regulation, we get rid of 43, 44. We're making it a much more pro-business, pro-people. You know, regulations are very costly for the people. They're bad for everybody. They're bad for jobs, bad for everybody. And we have, as of today, we have more people working in the United States than at any time in the history of our country. To me, it's one of my favorite stats. But we have more people today working in the United States than at any time in the history. And this is with the Iran conflict. That'll end soon, very soon. And when it ends, your gasoline prices will go down lower than they were before. You know, I left Iowa a few months ago, and gasoline was at $1.85 a gallon. And we'll be hitting numbers like that again.
Mr. President, on the Supreme Court.
But we'll be hitting them in a much nicer way, by the way. We will be hitting them, and we will have a country that will not have a nuclear weapon. Yeah, Daniel?
So one is today's.
Yeah, let me just finish with him.
On the Supreme Court, sir, we're still waiting for the decision on birthright citizens.
Yeah, birthright.
You attended the oral arguments of that. Can you just explain what's at stake with that decision, sir?
It's a big decision that we're waiting for from the Supreme Court. We had a terrible tariff decision. They cost our country a fortune. They said do it a different way. We're doing it a different way, but we're going to most likely have to pay back $149 billion. All they had to do is put a little sentence in there, half a sentence, saying that any monies paid don't have to be paid back. You know, you're talking about the people in many cases that hate our country. Give them back money. It was a terrible decision. And it's not going to affect because we do the tariffs a different way. The tariffs are what's bringing in all of this money. It's really made our country rich, modernly rich. Now we have another one coming up, which is birthright citizenship. And we're the only country in the world that has it. You step into our country and you're all of a sudden a citizen. You come in a certain way. This was not meant for Chinese billionaires to have their children become citizens of our country. This was meant, or other rich people, poor people. This was meant for the babies of slaves. This was signed right after the Civil War. You look at the dates alone, immediately after. This was having to do with the babies of slaves. And people have used it. And if this is allowed to stand, it will be a disaster economically for our country. And you'll have 25% of the people coming into our country coming in through birthright citizenship. And we won't have any control. This decision by the Supreme Court is a very big one. They'll probably rule against me because they seem to like doing that. You know, frankly, I'm not happy with some of the decisions. Look at NIL. Look what they've done. Look what the courts have done to college sports. They're destroying college sports. They're destroying universities. But birthright citizens are a big deal. And literally, if that's allowed to stand, and again, this was a civil war. This was right after the Civil War, and it has to do with the babies of slaves. It doesn't have to do with the babies of very rich people coming into the country. One of them came in with 57 children. Okay, 57 children. They're using the system, and it's usually people that hate our country, if you want to know the truth. Birthright citizen is done by no other country in the world the way we're doing it. We're a laughing stock. And if the Supreme Court approves that decision, they have done a great disservice to the United States of America, just like they did a great disservice by costing us $149 billion on tariffs by saying do it a different way. Get the same result, do it a different way. We should have won that decision. We had a very strong, very powerful dissent. We had 3 dissents. So it wasn't like a unanimous decision by any means. We had very powerful dissents. When you read that dissent, people that read that dissent say you really should have won this case. We should have won that case on tariffs. That case cost our country $149 million. It goes to people that hate our country. So now we have another one coming up, birthright citizenship. It would be a disgrace. It would be a disgrace if the Supreme Court of the United States allows that to happen. Remember what I said, 20 to 25% of the people coming into our country will come in through birthright citizenship. They'll become citizens through birthright citizenship, and it'll cost us numbers that are, I don't even think they're doable. And it's all up to a couple of people, and I hope they do what's right. Birthright citizenship is a disgrace. The fact that, look at the people that are bringing the suit. Study the people that are bringing the suit. These are not people that love our country, I can tell you that.
Mr. President, when is today's executive order on AI been postponed?
Because I didn't like certain aspects of it. I postponed it. I think it gets in the way of, we're leading China, we're leading everybody, and I don't want to do anything that's going to get in the way of that lead. We have a very substantial on AI. It's causing tremendous good. And it's also bringing in a lot of jobs, tremendous numbers of jobs. Again, we have more people working right now than we've ever had. I really thought that could have been a blocker, and I want to make sure that it's not.
Mr. President, Mr. President,
wait 1 second.
With President Xi last week, did you discuss AI safeguards?
Who, what?
In China last week with President Xi,
yes.
Did you discuss AI
I did.
safeguards?
No, I discussed it. And he acknowledges how well we're doing. We're doing well. He's doing. It's the two of us. The 2 countries are fighting for it. Other countries are way behind, way behind. They're fighting for it. They want it. Everybody wants it, but they're way behind. But I didn't want to do it. I postponed that meeting. It was a press conference. It was a signing, actually, because I didn't like what I was seeing.
Mr. President, a few moments ago, the Commission of Fine Arts approved your redesign for your arch. Do you think you need congressional?
Oh, that's good news. I finally get good news from you. What was the vote? Do you know what the vote was? What was the vote?
I'm just seeing the headline here. I don't have the exact vote.
So we're building what's called the Triumphal Arch right opposite the Arlington Memorial Bridge, right by Arlington Cemetery. It's beautiful. It's the Arc de Triomphe would be the one that you would probably know in Paris. It's one of the most beautiful. It's a very similar size, slightly larger. We have to do slightly larger. It doesn't have to be a lot larger. Otherwise, you'd all be disappointed in me. But it's even far more beautiful. And I think that the Arc de Triomphe is beautiful. It's a couple of 100 years old, but I think it's beautiful. And some arcs go back over 1,000 years. And it's called a triumphal arc. It's usually done for victories in war and things. 59 of them in the world.
All right, we've been listening to President Trump live on Bloomberg Radio as he answers questions from reporters in the Oval Office, ranging from geopolitics as he once again reiterates that Iran cannot have a nuclear weapon. He suggests on Iran, the U.S. will get there one way or another, and that he wants a free and open Strait of Hormuz, no tolls, even as an Iranian envoy to France told Bloomberg today that Iran and Oman are looking at tolls for the Strait of Hormuz on a permanent basis. But interesting as well, Tyler Kendall, that the president weighed in on an AI executive order that we were expecting today, and yet we will not get that. That has been postponed. The president saying he didn't like some of it. He felt that it would get in the way of the United States' lead in artificial intelligence.
Right. The president just saying that he had discussed artificial intelligence with Chinese leader Xi Jinping last week when he was in Beijing, and he felt that he wasn't happy with how this executive order stood at the moment because it would disadvantage the U.S. when it comes to our competition with China. This continues at this point, Kaylee, what has been months in the making of internal delays stalling this executive order from getting out. We know that some top tech CEOs were invited to the White House for this event today, but it doesn't seem like we're going to get it.
No, it does not. Of course, this event at the White House was with the EPA administrator focused on rolling back climate regulations when it comes to food refrigeration specifically. The administration arguing here that that is going to help lower food prices, maybe trying to address some of the price pressures that are dogging this administration right now and clearly are present in the polls. But it's absolutely fascinating to consider how all of this is feeding through to financial markets. As the president talks about not wanting to hold AI back in the U.S., you certainly are seeing the AI boom on display with NVIDIA's results, even if the market isn't all too impressed. That stock actually down about 2% today. So let's get a check on that and everything else in the broader markets as we turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ, all in the red right now. We've got stocks declining midday Thursday with the S&P right now down 28.7404. Drop there of just about 0.4%. Dow Industrials down 121 right now, down 0.2%. NASDAQ, the composite index, slumping 133 now, down 0.5%. The NASDAQ 100 index down 0.5%. Our Bloomberg Mag 7 index down 0.5%. You alluded to NVIDIA. That stock after earnings down now by just about 2%. The standoff between the U.S. and Iran over key issues lifting oil prices, that is dragging down stocks and bonds. The 10-year, the yield there 4.60% with the 2-year, 4.10%, the 30-year, right now at 5.12%. Gold down 0.6%, 45.16 the ounce, while West Texas Intermediate crude back above $100 a barrel, $100.43, up 2.2%. Barrel of Brent 106.83 now, up 1.7%, and Bitcoin down 0.8%, 77,080 on Bitcoin. We mentioned NVIDIA. Everybody's watching that stock trading today, again down 1.8% now. Walmart after earnings, the stock is down 7.6%. Also a major move in Intuit after earnings, down now by 21%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Back we go to Washington. Kaylee Lyons and Tyler Kendall. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thanks so much. As Charlie mentioned, I'm Tyler Kendall here in Washington alongside Kaylee Lyons, and we're tracking some developing headlines out of the White House as President Trump speaks to reporters in the Oval Office, including saying that the conflict in Iran will end soon. We did get some headlines earlier today from Iranian state media saying that Iran feels that the latest U.S. proposal has narrowed some of the gaps between the two sides, yet at the moment we haven't gotten any indication from the White House that we are approaching an agreement. To discuss more, we're joined now by Ian Marlowe, Bloomberg News national security editor here in our D.C. bureau. So, Ian, publicly the sides feel pretty far apart. What indications are you watching that maybe behind the scenes we're making some sort of progress? Because it felt like last week we may be getting a little bit closer to a phased agreement, open the Strait of Hormuz, then let's talk about the nuclear program. Where do these efforts really stand now?
Yeah, I think that's basically where we are. And I think you see markets and oil reacting to the sort of push and shove on these negotiations. I think the reality is that the U.S. has been pushing for a deal, and Trump really wants a diplomatic off-ramp to this rather than restarting the conflict. And you've seen a lot of threats back and forth as each side sort of positions themselves in these talks. But right now, I think a lot of people are looking at this base case scenario where there's a reopening of Hormuz at some point, and the thornier issue of Iran's nuclear program is punted to a later date. The problem with that is that the nuclear program was the eventual justification that Trump settled on for launching the war in the first place. So we are now in a situation where they're trying to resolve a problem, Hormuz, that was not an issue before the war, and the issue that motivated the war, according to the White House, is now being pushed to a later date with no clarity on whether there's actually going to be any meaningful solution there.
Well, so that doesn't necessarily sound that appetizing politically, domestically for the president, I'm sure, Ian, which raises the question of whether or not we are going to see kinetic action to try to get this into a place more advantageous for the United States. He suggested there that they may hit again in a nicer way. What is a nicer way if bombs are involved?
Yeah, it's really unclear. I think we've seen a lot of threats over since the ceasefire in sort of early April. We've seen a lot of it almost broke down several times, including when the U.S. military tried to facilitate a couple of vessels leaving Hormuz. Iran attacked them fiercely. The U.S. repelled those attacks. But basically the situation ended with Trump calling that operation off, and a lot of the merchant vessels kind of coming to the conclusion that Iran is not going to let them out of the strait without a fight, because that strait, the closure of Hormuz, is Iran's key piece of leverage in these talks. And so if they try and do something like that again, which the White House has said is a possibility, you could see, fights over merchant vessels. You could see some more clashes. I think a lot of analysts suspect that before this is over, we will probably see some more, kinetic action somewhere around that, either in the strait or nearby, as both of the sides sort of jostle for the best position in these talks. I think the reality, though, is that at least up until now, Iran has proved a tiny bit more resilient than the White House thought, and has not crumbled on some of the demands, even with this U.S. naval blockade that we've seen.
All right, Bloomberg's Ian Marlowe, thank you so much, helping us react to some of what we heard from President Trump on Iran specifically. But of course, we also heard from the president on AI and the tabling of an executive order for now that he felt might in part hold the U.S. back in terms of competing with other players like China. And we heard more about AI from the CEO of JP Morgan Chase, Jamie Dimon, when he spoke with Bloomberg's Haslinda Amin about what it would mean for jobs at his bank earlier. Listen.
I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, it'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy people.
So for more on how to think about artificial intelligence, whether you're JP Morgan or another investor, we turn to Chris Versace, Chief Investment Officer at Tematica, who is here with us on Balance of Power. Chris, thanks so much for being with us. You're obviously joining us on the day after NVIDIA's earnings, which by all accounts, once again, were pretty blockbuster, very solid results, clearly seeing a bunch of demand, yet still the market seems disappointed. And I wonder if you find yourself disappointed and if you too are questioning the sustainability of that demand.
No, not really at all. I would say that, when we take a look at what's unfolding with AI, it's very clear you have to watch not only adoption, but, usage across the enterprise, across consumers, across, other entities, be it, governments, sovereign nations, what have you. And all indications are that that's continuing to increase. And I think the issue with NVIDIA, candidly, is really twofold. First, the company has delivered beat and raise quarters in the past, and the market's kind of, used to that now. So in order to, really see a positive pop in the stock after NVIDIA reports, they really have to wow the market. And when you look at the consensus expectations, from a forecasting perspective for the quarter, some of the upper forecasts were around $96 billion. So yes, NVIDIA delivered a beat, but not quite the big beat that some folks were looking for. And of course, all of this is, juxtaposed against the significant run-up in the shares, which just fuels even more heightened expectations. So I'm not surprised by the post-market reaction to the corporate earnings, but I think typically we'll see a pullback in NVIDIA. We'll continue to mine positive data points, TSM, Foxconn, and the like. And I suspect NVIDIA shares, in 6 months, 12 months from now, will be higher.
I'm wondering what you're making of the CapEx guidance that we're getting from a lot of these AI companies, and if it seems plausible to you, if there are bottlenecks when it comes to semiconductors, when it comes to energy supplies that could maybe prevent companies from delivering on their investment goals that we know we're all closely watching.
Yeah, that is a great question. You know, folks are really focused in on the hyperscaler capital spending numbers, which are up significantly year over year. NVIDIA last night really talked about these AI cloud companies like CoreWeave and others that are also spending. In some respects, they're spending even faster on a quarter-over-quarter basis compared to the major hyperscalers. But you do raise a very salient point, which is, wow, capacity, you know, can it keep up with the ramping demand that we're seeing? And when we listen to companies like Arista Networks, they are seeing supply constraints. When we think about these big multi-year agreements that we're seeing from Meta, from Amazon and others, they're really shoring up capacity, whether it's for chips, whether it's for power, you know, or other things that they might need. So I do think that there is some, you know, over expectation in the market for what we'll get. Perhaps we need to throttle back how much can be delivered. But again, if we look at this as a multi-year build out, you know, I still think we have, you know, several legs to go.
Chris, we're expecting, obviously, an OpenAI IPO, potentially Anthropic in the not-so-distant future. SpaceX, we all saw the prospectus last night. Perhaps it's trying to cast itself as much more an artificial intelligence company than a space company at this point. But if we're going to have all these trillion-dollar-plus companies coming to market, I wonder if you think that that's going to mean you have to see selling pressure somewhere else, right? The money has to come from somewhere if people want to buy into this. What vulnerabilities could these giants coming to the public markets create?
Well, you know, you're absolutely right. And, you know, in order to buy something, at times we have to sell something, particularly if you think of mutual funds, hedge funds, that sort of thing. So I think folks are going to be looking for where are the sectors of the market that are not performing as well? Can I free up capital there, deploy where I see faster growth, faster earnings prospects? So if we just look around, take a look at, you know, the retail landscape today, right? You know, you're seeing Walmart down despite, you know, 4% comp sales, which are, you know, good, but there's some concern about the consumer, right? Where can they continue to spend? So I think that's going to be an issue.
All right. Chris Versace, Chief Investment Officer at Matica. Thank you so much for joining us here on Balance of Power. We'll be right back with some more, including updates when it comes to the war in Iran. Stick with us. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, all in the red right now. The S&P is down 28 to 74.04. That is a drop of just about 0.4%. Dow Industrials down 126 on the Dow, a decline of 0.3%, while NASDAQ is down 131. For NASDAQ, a drop there of 0.5%. The Russell 2000 index of small cap shares flat on the day, and the Bloomberg Mag 7 index down 0.5%. NVIDIA, a member of that index, NVIDIA after earnings down now by 1.8%. The 10-year 4.59%, with the 2-year 4.09%, the 30-year 5.12%. Gold is down 0.6%, $45.16 the ounce, while West Texas Intermediate crude holding above $100 a barrel. WTI now up 2.2%, $100.45 on WTI. So oil higher, inflation fears front and center, and a 30-year that's holding above 5%. Barbara Reinhard is Chief Investment Officer for Multi-Asset Strategies and Solutions at Voya Investment Management, and she was the guest this morning on Bloomberg Surveillance.
The fundamental change at the margin on the news out of the Middle East seems to be inching towards a resolution. Every time you hear a little bit of good news on a resolution, oil prices come down below 100. That tends to help the bond market and certainly helps the equity market like you saw yesterday.
Indeed, yesterday we saw the S&P 500 index surge 1.1%. Today, giving back some of that, the S&P down 28 now, a drop there of 0.4%. Keeping an eye on Deere & Company shares after earnings, the stock now trading lower by 5.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Back we go to Washington. Balance of Power continues. Once again, your hosts, here they are, Kaylee Lines and Tyler Kendall.
All right, Charlie Pellet checking on the markets for us. Thank you so much. I am Kaylee Lines alongside Tyler Kendall here in Washington, where President Trump just wrapped up some Q&A with reporters at the White House at an EPA-oriented event, rolling back some restrictions, climate restrictions around food refrigeration specifically, but speaking to reporters about a number of subjects, including the effort that is currently in Congress on budget reconciliation. Of course, Republicans on a partisan basis looking to approve $72 billion in funding, in part to fund ICE and CBP for multiple years, 3 years in particular. And it also initially, Tyler, included $1 billion for funding for Secret Service tied to the president's ballroom project. And we heard the president talk about that. He says he doesn't need money for the ballroom, but if Republicans don't approve the funds for security, the White House won't be secure. Of course, the rub is it doesn't seem like Republicans are going to approve that security funding, in part for parliamentarian reasons in the Senate. Not clear that it was eligible for the reconciliation process, but also because it's a politically toxic vote to ask some vulnerable members to take.
It's one of a few issues that have come up related to the reconciliation process, including that later today we are expecting what is known as a vote-a-rama, as Democrats try to put the pressure on Republicans and force a series of votes on amendments, essentially as a messaging tactic as we head into the midterms. And we like to joke that in Washington, there's nothing that lawmakers love more than a deadline or a recess, and we are getting up against one, Memorial Day, which could make the process tonight all that more painful. So for more, we want to bring in our political panel today to discuss all of it. That's Rick Davis, partner at Stone Court Capital and a Bloomberg Politics contributor, alongside Kristen Hahn, partner at Rock Solutions and a Democratic strategist. So Rick, we just outlined some of the perhaps more cautious things that Republicans have to factor in with this reconciliation vote. But all in all, is this considered a win for Republicans? Because at the end of the day, it might have been a process to get here, but they're voting on funding for the president's immigration priorities without having to institute any of the curbs that Democrats demanded.
Yeah, that's right. I mean, when you really go back to the expanse of this debate, we were talking about all kinds of changes to Homeland Security, masking policies, things like that. And the reality is we've come a long way since then. The agency itself is funded, which didn't result in any major reforms. And now that you're putting more money into the ICE bucket, you can see that there's no real compromise whatsoever. If anything, this vehicle, this new reconciliation bill, is going to be used for more of Trump's priorities than the Democratic Party priorities. And so it's really been actually a victory just to even have the debate we're having, because it all comes around Republicans not liking some of the Trump priorities and not even talking about Democratic priorities?
Well, on those priorities of Trump's that it seems even Republicans aren't too comfortable with, that includes the $1.776 billion weaponization fund. It seems that Republicans, Kristen, are going to be looking for some restrictions around who is eligible for those funds, making sure, for example, that January 6 defendants who assaulted police officers wouldn't be able to access them. How telling is it to you if you are seeing Republican pushback to this policy that was just announced days ago by the Trump administration and the DOJ?
Well, I mean, given Republicans' willingness to go along with pretty much anything that Donald Trump wants for fear of political reprisal, I think it's pretty telling that they know that it's not popular. And, you know, we talk about, you know, Rick was talking about this being a big win for Republicans and might be a big win for them today. But, you know, this is not an easy process, and it requires a lot of tough votes, and Democrats can force Republicans into positions that, you know, are going to be difficult for the party come November in the midterm elections. So, you know, I wouldn't celebrate too much. There's a lot in here that are policies that are just not popular with voters right now.
So, Rick, we have this anti-weaponization fund and also additional funding when it comes to the ballroom. I'm wondering if you think that these are politically hot topic issues for Republicans, because if you listen to the president's argument, as we just heard in the White House, this $1 billion supplemental funding for the ballroom, it doesn't all go towards the ballroom, but the amount that would go towards the ballroom is for security. So why aren't we seeing, what's the disconnect here between the White House and Republicans on Capitol Hill? Is this really going to be a major issue in terms of what voters are caring about?
You know, I think that it depends upon, you know, how off message Democrats want to get. I mean, if you're a Democratic campaign right now and you're running something other than sort of attacks on Republicans related to the economy, then you're probably off message, and that would include this, although there's a subset of issues that include like government spending, and if you did a laundry list of some pretty crazy spending items on behalf of this Republican Congress, you'd have a pretty good ad, and that would include obviously things like the DOJ fund and the ballroom. Look, I mean, there was a way to do this ballroom thing. It probably should have been done, you know, through the Intelligence Committee or something other than Homeland Security, because the last thing you want to do is advertise the fact that you're building a bunker. You know, does the president deserve a bunker that, you know, maybe Harry Truman wasn't also in? Yeah, probably does. But, you know, the process was so haphazard that it will catch up to the administration politically.
Well, and Kristen, as Rick contends that if Democrats want to talk about the ballroom, it's bringing them off message. Is the message not you Americans are dealing with these affordability challenge and the money is being spent on an ornate marble and granite, the president said, ballroom at the White House? Isn't that the exact message they want to be spreading?
You know what, I 100% agree with Rick. It's more about the other issues and the spending and people going back to being concerned about the ability to put food on the table. It's those pocketbook issues. My firm, Rock Solutions, recently did a survey because we were looking at these issues, like how much are people going to care about just a ballroom? And we found that, you know, of independent Republican and Democratic voters overwhelmingly blamed the administration partly for the increase in prices, but they also equally blamed corporate America and large corporations, which was really interesting to me. So I think, you know, a lot of these companies who are looking to get ahead of, you know, a potential Democratic takeover of the House, at least in November, should start thinking about that. And why are people blaming them for the rising prices, you know, and the cost of living?
Well, that's some of the issues as we look forward, but we're also getting a look backwards, considering today the DNC chair, Ken Martin, released the autopsy report on the 2024 election amid intense pressure. Kristen, if I can go back to you, it felt like this might have been a hard decision to put out this report. What more do we know about how Democrats are looking at the lessons from the election that they lost, and are they taking those lessons as they move forward?
You know, it's interesting. Having worked in politics for 25 years on the Democratic side, we love to do an autopsy. We love to look at all the things, that we've done wrong. And I'm not saying that we shouldn't have, but I think where we've really fallen down is just really relating to the American people, talking about what really matters to them rather than what we want them to see and what we want to talk about. We also know that we have to offer something other than just being against Donald Trump. We know that that does not work. We can highlight the things that we don't agree with him and the Republican Party on, but I think just being relatable, getting the right candidates in there that know their districts, and know how to talk to the people, and so that they can relate, they can see, okay, this is a viable alternative, because I don't think that we've done that too much in the past.
Well, on this autopsy, Ken Martin, the DNC chair, said he sincerely apologizes for it, Rick. He suggested that this unedited and unabridged report does not meet his standards. He says it shouldn't meet anyone's standards, but he's doing this because people need to trust the Democratic Party. But of course, Ken Martin's issues go far beyond just this report. If you look at the latest fundraising figures for April, Rick, the contrast between the DNC and RNC is pretty striking. The RNC raised $18.6 million, ended April with a whopping $123.9 million in the bank. The DNC only has $14.4 million in the bank after raising $11 million in April. That is a more than $100 million cash disparity. And I understand earned media is a thing. There are things that you can do with that. But are we looking at a DNC that is going to be at a serious financial disadvantage as we go into November?
Yeah, I really actually don't get it. I mean, sure, the president is always an advantage when it comes to wining and dining donors and raising money. He's got all these wonderful things he can do to sort of make donors happy. And of course, this president, he may have invented making donors happy in a new way. But like, he's one of the most unpopular presidents in modern time, right? The Democratic Party has a target as big as the sun to shoot at, and they can't get donors motivated on a weekly basis with all the things that the president gives them to talk about. It's stunning to me that there's this big a mismatch. I would expect the Republicans to be in the lead, but not by 10 to 1. So I think Democrats, the Democratic Party, this whole, silliness around, their autopsy. I mean, they've got some soul searching to do. And the worst thing you can do is search your soul in the middle of a midterm.
So, Kristen, is this a organization issue? Is this a candidate enthusiasm issue? Because some Democratic candidates are raising a lot of money. I was just catching up with somebody on Governor Josh Shapiro's team. He's given $1.5 million to other candidates to help propel them since he had a relatively easy primary. Is that the dynamic that continues? You have enthusiasm around candidates that then help propel and give money to the rest of the party?
Yeah, I mean, I think making no excuses for that cash disparity is pretty insane. But there is money that flows in a lot of different ways, right? You've got organizations like the House Majority PAC and the Senate Majority PAC that will be spending on a lot on all these races. You've got outside organizations. You've got the Democratic Congressional Campaign Committee, and you've got, like you said, some of these sitting members. They have leadership PACs that are sending money around. I'm not actually all that concerned about the amount of money that we'll be able to put into these candidates for the midterms, just based on that one number with the DNC. But that disparity should not exist.
Well, obviously, when we consider where Democrats are going to be spending money, a lot of it is likely going to be funneled to Texas, Rick, as they look for James Tallarico to potentially do what they've struggled to do and tried to do for many, many cycles in recent years in ousting a Republican seat. Maybe it won't be John Cornyn, though, that he's up against. Just in our final minute, Rick, to bring this around to the reconciliation question, the president declined to endorse John Cornyn. He successfully got Bill Cassidy in Louisiana primaried out of his seat. Has he created two new enemies and made even getting a partisan reconciliation bill across the floor much more difficult?
Oh, yeah, for sure. I think there are a lot of senators right now, not just because of the political activities of the president, as you described, but also really pressuring them on some of their own priorities, like, this GOJ fund and even the ballroom funds that we've talked about. I mean, these are all things that Republican senators are looking at and going, why in the world are we doing this today? They're really focused on trying to maintain power in the Senate and House, and this is not making it any easier.
All right, Rick Davis and Kristen Hahn, our political panel on this Thursday. They will be back for more in the second hour of Balance of Power, which starts in just a few minutes here on Bloomberg. I'm Kaylee Lyons alongside Tyler Kendall in Washington. Stick with us.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Iran is in talks with Oman over a permanent Hormuz toll system that President Trump says he doesn't want to see. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Tyler Kendall in Washington today. Joe Matthew is on assignment. And Tyler, we just heard President Trump speaking about Iran from the White House, suggesting that he wants the Strait of Hormuz to be open with no tolls. Of course, Iran suggesting they would like to continue charging tolls and control the Strait of Hormuz, essentially, which raises the question once again, and we ask it every single day, are these two sides getting any closer together.
Well, according to President Trump, we could be. He did say that the two sides are actively in negotiations, adding that the Iran conflict will end soon. We did hear from Iranian state media earlier today that seemed to frame the country's latest update is that the two countries are getting closer, but so far we haven't really seen indications that that deal is on the horizon.
Yeah, we're going to get the latest from the White House this hour as we check in with Bloomberg's Jeff Mason, who was in the Oval Office with President Trump a short time ago, asking him about the Strait of Hormuz issue. And we also have to talk about the reconciliation process underway on Capitol Hill right now. It's running into some issues in terms of trying to get all of the president's priorities through this partisan process. And we'll speak with the former chair of the House Financial Services Committee, Patrick McHenry, about that too.
And lawmakers are under a little bit of pressure to get this through. It would include funding for immigration priorities, but keep in mind we are up against a Memorial Day holiday, which means that Congress wants to get something done. It's something we're watching in Washington, as well as a check-in on what the markets are watching. So for that, we're going to head over to Charlie Pellet in World Headquarters in New York for the latest.
Hi, thank you very much, Tyler and Kaylee. We are looking at a down day. Kaylee asked the question, are we getting closer to a deal? And right now we have got oil higher, stocks lower, a standoff between the U.S. and Iran over key issues, lifting West Texas Intermediate crude back above $100 a barrel. That is dragging down stocks and bonds. We begin with the equity market. S&P 500 index off 24 at 74.08, drop there of 0.3%. Dow Industrials down 85 on the Dow, a decline of 0.2%. NASDAQ down 107 for the NASDAQ Composite Index, a drop there of 0.4%. The Russell 2000 Index, little changed on the day, turning higher, up under 0.1%. And the Bloomberg Mag 7 Index down now by 0.3%. NVIDIA, part of the index. NVIDIA shares down after earnings by 1.4%. Your 10-year at 4.59%, with a 2-year 4.09%. The 30-year remains above 5%, 5.11%. Gold down $24 the ounce to $45.19 for the precious metal, a decline right now of 0.5%. West Texas Intermediate crude $100.10 a barrel, up 1.8%. Brent, the global benchmark, 106.50 barrel of Brent, up now by 1.4%. Two earnings reports, one closely watched for AI, the other closely watched for inflation. NVIDIA shares lower after earnings. Indeed, the day's most actively traded stock, NVIDIA, right now down by 1.4%. And Walmart shares after earnings down 7.3%. Walmart warning that fuel costs are squeezing the company's bottom line and could lead to higher prices for shoppers. Bears repeating, Walmart today hard hit, down by 7.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Back we go to Washington. Balance of Power continues right now with Kaylee Lines and Tyler Kendall.
All right, Charlie Pellet, thanks so much. As Charlie mentioned, I'm Tyler Kendall here in Washington alongside Kaylee Lines. And earlier today, Iran's ambassador to France told Bloomberg News that the country is working on a formalized system with Oman to charge tolls through the Strait of Hormuz as Iran continues to grip on to its control when it comes to the waterway. President Trump moments ago in the Oval Office told reporters that he doesn't like that idea.
We want it open. We want it free. We don't want tolls. It's international. It's an international waterway. They're not charging tolls. Right now, they are losing $500 million a day is what it's projected. I don't know, it sounds like a lot of money, but whether it's 500 or 200 or 300, they're losing a lot of money. There hasn't been a ship that's been able to get through without our approval.
That was President Trump's response to a question asked by Bloomberg's very own Jeff Mason, who was in the Oval with the president and is now on the North Lawn of the White House, joining us here on Bloomberg TV and radio. So, Jeff, it seems that Iran is clearly on a different page than President Trump when it comes to this issue, but the president still maintains that this conflict is going to end soon. How is that going to happen if these two sides are still this far apart?
Well, that's a great question. He did say that he thinks it's going to end soon, but he obviously does not see the Strait of Hormuz in the same way that Iran sees it. And the big question will be whether or not that's a big enough sticking point to prevent them from receiving or getting to a peace deal, or whether that's something that the president is willing to table. And we don't know the answer to that. What we do know is Iran is using the Strait of Hormuz as a cudgel, and has learned over the last several weeks of this war that it has that it has the upper hand with regard to the Strait of Hormuz. And so the question is, does the rest of the world accept that, and in particular, does President Trump accept that, or does it derail a peace deal that they're currently working on putting together?
If you're joining us on Bloomberg Television, you can see the honor guard behind Jeff Mason on the White House North Lawn as President Trump gets ready to participate in an ambassador credentialing ceremony. That's also why you're hearing those horns blare there. It's a very busy day at the White House, Jeff. I also want to ask you about another sticking point that we know has come up in the negotiations, including the stockpile of already highly enriched uranium. I know that you brought this up in the Oval Office. Where does President Trump stand on how critical that is for a deal? And what do we know about how the U.S. is eyeing either retrieving or retracting that enriched material?
Yeah, Tyler, it certainly is another one of those sticking points. And I did ask the president about that, whether or not Iran can hold on to that stockpile. And he said no, that they would that would have to be taken out of the country. But he did not give details as to how that would be done. And Iran, in the latest reporting, is the Iranian supreme leader is saying that is not to be taken out of the country. So that seems like another potential big hurdle to a peace deal. And the question is, again, how firm is President Trump on this issue, and how much is he willing to compromise on it with Tehran?
And Jeff,
How about
finally,
that for
obviously,
music in the background, eh?
Yeah, the accompaniment of your report is really amazing.
Yeah.
We got some incredible horn and drum action going on, and you are doing a remarkable job working through that. We'll make you do that for just a minute longer, Jeff. I also want to ask you about Cuba after the indictment of Raul Castro yesterday. Do you see the White House as setting the stage here for an action like we saw in Venezuela with Nicolas Maduro, or is this more a pressure campaign to avoid having to turn to kinetic activity?
Well, also a good question, and he was asked about Cuba in the Oval Office again today. The president saying that the placement of a battleship or of U.S. assets there was not meant to intimidate Cuba, and yet he clearly has Cuba on his mind, and so does Marco Rubio, and so does this whole administration. The president has not wanted to give details, excuse me, about what they're planning, and he didn't give any additional details today. He has said previously, when we've asked him about it, that he would get to that basically after Iran. But they clearly have something in mind. What exactly that is, if it's comparable to Venezuela or something else, is hard. But the way he described it today was he wanted to help the Cuban people. I'm not sure the Cuban government will see it that way.
All right, Jeff Mason, Bloomberg News White House correspondent, one of the nicest hits that we've heard in a while. Jeff, thanks so much. And to continue the conversation, we want to bring in now Patrick McHenry, former Republican congressman from North Carolina, Bloomberg News contributor, as well as the former House Financial Services Committee chair. Mr. McHenry, thanks so much for being here. Nice to see you in studio. We have a lot that we want to get to, but I actually do want to start on foreign policy because we haven't seen the administration submit a supplemental funding request to Congress yet when it comes to Iran. We heard just yesterday from the House Appropriations Chair Tom Cole, who said that Pentagon is maybe months away for running out of funding when it comes to the conflict. Why do you think that we haven't seen that yet? Does this have to do with policy? Does this have to do with procedure? And when could we expect that to happen?
It's a prioritization on Capitol Hill. So what you heard from Tom Cole is roughly an August date that the Department of War would have some real challenges on funding the Iran war. For Chairman Cole to say this out loud in public is a significant thing, which means the private conversations have not resulted in a supplemental sent up to Capitol Hill. This is a couple of things happening at once. One, the first prioritization is to reopen the Department of Homeland Security and border security, and that is still work left undone. You have to have this reconciliation process, the budget process to go through, which is a complex months-long thing. That's not done, number one. Number two, here's some itchiness, I'm going to say itchiness, around policymakers on Capitol Hill about recent decisions the president's made. I'm sure we're going to talk about those things.
Oh, yes, sir.
And then three, you then have to have some sort of formulation of what the end game is, and are we near the end game at Iran? And this has been far more difficult than anticipated, at least at the outset of the war.
Well, just on the notion of some pushback we're seeing on Capitol Hill. We saw yesterday Senator Bill Cassidy, fresh off his primary loss, joining with 3 other Republicans and Democrats to advance a war powers resolution in the Senate. In the House, last time we saw this, it was tied. And I wonder if you think the next time a war powers resolution comes up to a vote in your old chamber that it might actually pass.
It's now up to sicknesses, absences. It is up to people having family issues on whether or not we have the president has the authorization to continue his strikes with Iran. This is not the way you run a great ship of state. And that's how close these votes are on Capitol Hill, both in the House and the Senate. And that's before the latest set of politics around primary elections and what that means. This is a very complicated beast. Before these latest votes on Iran, war powers generally, but specifically with Iran. Now, what you've heard from the administration in their testimony on Capitol Hill, both for the Secretary of War, the Joint Chiefs of Staff, is that there's a pause, and therefore these timelines don't matter because we have paused our actions with Iran. This is really a question of how do you give Congress enough time to process, but also how do you have clarity on the sort of course of action with Iran. These two things are in direct conflict, especially with diminishing dollars in these accounts necessary to go carry out the war.
But a war powers resolution is largely symbolic, right? Because even if this passes both chambers, it'd end up on President Trump's desk. He would veto it. We probably wouldn't see 2/3 majority to overturn it. Should we be expecting conversations around other ways that Congress could exert its authority? Would that be tied to the future of an appropriations process related to the war? Or at this point, is it a lot about trying to send a message to the president so that the executive branch can take its own action?
Well, Congress is going to have to step in with the supplemental. They will have to. You cannot get around it. These accounts are not big enough for the execution. You cannot replenish sufficiently, and people will go to jail for moving money between accounts if they do it inappropriately. This is serious stuff. And so the Department of War is expert at how to utilize those accounts, and that's what you heard from Chairman Cole, is that the end date is really close. Congress has very few days between now and the August recess to actually deal with this. And the canary in the coal mine are these resolutions. And it says that you have to go give a message, not just to the American people, but to policymakers on Capitol Hill, that you have an actionable plan to bring things to a resolution. And in the backdrop of this are really tough politics for the White House and for my Republican Party.
Well, let's talk more about tough politics. It's pretty tough politics to ask vulnerable members to not only fund a ballroom at the White House, but also essentially to bless a $1.776 billion weaponization fund that could, without restrictions, potentially go to people like attacked police officers at the Capitol on January 6th. How difficult would those votes be to take for your former colleagues? And do you expect they ultimately will have to? What's the consequence?
Well, in the Senate, Leader Schumer's already said he's going to put the slush fund, the DOJ slush fund, as a part of this reconciliation process. It will be a part of the votes. It will be symbolic, yes, but that is a vote that hurts if you're on the November ballot. If I was a sitting member of Congress right now, I would absolutely hate this vote. It is a no-win situation. You're in the crosshairs with a Republican president who's super popular with a base, and you need to have the base turn out in a midterm election, and then the rest of the American people think this is absurd. And so you're really put in crosshairs. I'd rather be the Democrats on that vote. I would rather be the Democrats on that vote. As far as the ballroom, I think this is blown up into something that people largely don't care about. The president's raised private money to go build something that most presidents have said need to happen. You need to have a secure facility. We just had an event with the president in the most secure large ballroom in Capitol in the nation's capital, and so it says something needs to happen. Now, this has all been, the notion was it's going to be privately funded. What we've then had is a lawsuit to say, actually, you can't do full funding of this through private donations. We have laws on the books that say you can gift the government certain pieces of technology, certain pieces of facilities. And so they do need authorization from Congress to actually go carry out the rest of the build for the ballroom. So both these votes, one, I disregard the ballroom as like a salient political thing other than a talking point. But the slush fund at the DOJ, when I was a member of Congress and President Obama did this, sue and settle with liberal and Democratic constituencies, we had a resolution in the House floor, which we passed with Republican votes and a handful of Democratic votes against a slush fund like this, sue and settle slush fund. This has been ramped up, and now you have a majority of the Senate speaking out against it and a majority of the House speaking out against it. This is really troublesome for the White House.
It is interesting to me that these two Republican-led policies are now causing these problems for Republicans on a day that I think it's fair to say this actually would have been a positive day for Republicans, right? Because they're getting through funding for immigration priorities without curbs from the Democrats that they had demanded. That's why we're in this reconciliation process, so that they can get this done with a simple majority. At a certain point, is this a messaging problem or a policy problem for Republicans, when you would have thought that the White House would have been touting that they're funding ICE and CBP?
Yes, but events overtake. And this is what happens when you're a governing majority. Events overtake your prioritization, your messaging capacity, and trivialities of the day can dominate the news rather than the substance of what you're trying to achieve. That's not new. It's just ramped up to 11 here in the Trump era because there's so much noise. Some coming directly out of the White House as a media strategy, but there's so much noise. Border security is still a winning issue for Republicans and President Trump. It has not been talked about as a great success of this administration. They should tout it more, and this should be a great sign of victory. Then you saw just this week as well, the president's priorities on housing came out of the House as well.
I'm so glad you raised this.
Yes.
I did want to ask you about it because the House tweaked the Senate's version, sent it back. It seems the Senate wants to tweak it back, and I wonder how you think this ultimately gets resolved.
I think, as a traditionalist, as a former legislator, right, for 20 years, the craft of legislation is this art of caring about policy, fighting tooth and nails about things of substance that do impact people's lives, that can make a difference, and then largely the body politic says, why are you fighting about that? It's like too specific, right? The specifics here are that you have a passionate group in the Senate and a passionate group in the House, and they're trying to compare who can get the bigger bipartisan majority to move their policy. I think that is a win for like traditionalism and like this process working in Washington. I love it. And French Hill and Maxine Waters, who I spent I spent most of my waking hours with these two folks in my final years in Congress. To see them work out a deal and get a bigger bipartisan majority in the House than in the Senate on this policy issue of housing, it shows that they have stick and they've got the support of the president. Maxine Waters is on a bill that the president would like to sign. Man, oh man, I think it's an awesome thing.
I haven't seen Patrick McHenry this excited in a while. Mr. Chairman, Bloomberg Politics contributor, thank you for joining us here on Balance of Power on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Major turnaround for the U.S. equity market. We have got oil trading lower right now. WTI, Brent both declining. WTI back below $98 a barrel. Barrel of Brent just above 104. Bottom line here, oil is declining. Stocks are advancing. Right to the numbers with the S&P up 13 at 74.45. That is a gain of 0.2%. Dow Industrials up 168, up now by 0.3%. We've got NASDAQ higher by 54, up by about 0.2%. The NASDAQ 100 index up by 0.2%. And the Russell 2000 index extending its gain now to 0.7%. All of this is oil declines. Again, WTI now at 97.86 a barrel. It is down by about 0.4%. The 10-year currently yielding 4.56%, with the 2-year 4.05%, and the 30-year 5.10%. Gold now down $2 the ounce to $45.41 for the precious metal. A drop there of 0.1%, but again emphasizing WTI just about $98 a barrel, falling back below 100, down now by 0.1%. Shares of Ralph Lauren are surging. Right now, the stock is up by 13.8%. It reported revenue and profit that beat analysts' expectations. Also, we're keeping an eye on a deal in the real estate world, specifically apartments. Avalon Bay Communities and Equity Real Residential have agreed to merge in an all-stock transaction that combines two of the biggest apartment real estate investment trusts. However, shares of both companies are trading lower. Avalon down by 2.4%, and Equity down now by just about 2.5%. Again, recapping here, Dow, S&P, NASDAQ, major turnaround. S&P 500 index flat on the day right now after earlier losses. The Dow up 0.2%. NASDAQ bouncing around, down by 0.1%. Balance of power continues right now. And back we go to Washington. Once again, your hosts, Kaylee Lyons and Tyler Kendall.
All right, Charlie Pellet, tracking the markets for us. Thank you so much. A turnaround indeed. The numbers are starting to head in the more positive direction, at least for U.S. equities, and we'll continue to keep you apprised of that here on Bloomberg TV and radio. The numbers, though, are trending in a less positive direction when it comes to President Trump and his approval, and that was borne out once again in a poll released by Fox News yesterday evening, which showed the president at 61% disapproval of that, 48% strongly disapprove of his policies overall. And fascinating, Tyler, that this isn't only the economy, although he is underwater on that issue, with 77% saying that the economy is worse. But foreign policy as well. If you look at the figures in this poll, only 38% approve of the president's foreign policy, 62% disapprove of it. And of course, this is as the president is right now navigating a number of foreign policy challenges, trying to find an endgame on Iran, dealing with the aftermath of Venezuela, and trying to decide, I guess, how involved he wants to get in Cuba.
Right, as we see the administration take some updated steps yesterday with this indictment against Raul Castro. We had the CIA director in Havana the other day. So things are definitely starting to mount. And the polling is interesting, too, because at this point, foreign policy and economic policy are dovetailing. And, of course, the economy is the issue that President Trump won on when it came to securing the White House last November. We'll see what happens when it comes to this November. For more, we want to talk about all of this with our political panel today. Rick Davis, partner at Stone Court Capital and Bloomberg Politics contributor, and Kristen Hahn, partner at Rock Solutions and a Democratic strategist. Rick, I want to start with you with some of the headlines that we're getting from President Trump earlier today when it comes to the conflict in Iran. He says he's not too happy about some plans that Iran may be mulling with Oman when it comes to tolls in the Strait of Hormuz. There's this analysis cited by the Wall Street Journal that finds it's going to be Gulf partners that end up paying the bulk of those tolls. I'm curious your view on how this administration has been working with regional allies and how that may temper what ends up happening when it comes to the White House's response in ending this conflict.
Yeah, it's really been a mixed bag. You've seen periods of time where even Donald Trump said, hey, maybe we'll get in on the act and charge a toll. So he's been a little inconsistent on this since day one. And you're right. I mean, he's getting lobbied by the Saudis, by the UAE folks, the Qataris, those folks in Oman who have that Musandam that would be the pinch point on the Strait of Hormuz. And really, there has never really been a real articulation of administration policy is to how ultimately the strait gets reopened and how ultimately it remains an open international body of water and not overtaken by Iran's economic interests, not even to mention their security interests. So it's right now a bit of a ping pong ball bouncing back and forth all over the GCC. And where that ball stops right now, I'd say nobody knows.
Well, nobody knows, and it doesn't seem Congress is going to be in the know on this either. They have been left with a lot of questions to this point, Kristen. We hear that consistently on this program. As the president mulls his options here, as openly he's considering what he calls a, quote, big hit on Iran to try to get them to come to the negotiating table or to acquiesce in a more meaningful way. I wonder how you think it factors into the calculus, what response might come from Congress if he were to choose that action, because his argument to them was the clock is no longer running on war powers because the kinetic part of this conflict is actually over. If it restarts, do you think something materially changes with even Republican majorities on the Hill?
I mean, I think that there are a lot of considerations here. I think a lot of the members and the public, but the members are frustrated with the lack of clarity on the direction of the White House and the president. It's certainly a ping pong. He's been going back and forth, and I think that you'll see frustrations continue to grow, not just with the fact that members on both sides of the aisle believe that they have a role to play here, and the president and the White House using semantics in some ways to describe what this actually is to get around Congress. But you will see frustrations. There's also the political calculation. I think that a lot of these members, particularly in the House, the ones that have to run every 2 years, are facing re-election, and there's an electorate that is not happy with being involved in a conflict like this, particularly when the president said that he wouldn't get involved in this manner when he was running for office. So I think that there's a lot that these members are going to have to consider, and it could change how they are operating.
Rick, one of the headlines that crossed when President Trump was addressing reporters in the Oval Office earlier was that gasoline prices will drop once Iran ends. He's repeatedly said that this is going to be a short-term disruption. I'm wondering, from your expertise when it comes to political messaging, how the White House should be messaging around this deal when you hear the president say that he is trying to prioritize making sure that Iran doesn't get a nuclear weapon.
Yeah, this is the classic, Gretzky rule. You want to be where the puck is going, not where the puck is. And so as he's talking about trying to make people feel better about $5 gas, what he's really wants to focus on is, September, October, the first week of November, where gas price is going to be. And by everybody's estimation that I've seen, it's going to still be elevated, maybe not as high as it is today, but all that depends upon what happens in the Gulf. And so I think I would be starting to create an expectation, to consumers that, we're in for a bit of a ride, and that this is part of our patriotism, and that this is okay to sacrifice for, a greater good and opening of the strait and stopping, terrorists from having nuclear weapons. I mean, at some point, he's going to have to create, at least he should, some kind of buy-in with the American public on this war. He can't just say, hey, we're taking care of it, don't worry, none of this will affect you. And a mistake that previous presidents have made, and George Bush made this himself after 9/11, he said everybody needs to just go back and start shopping in malls. And what he probably should have been saying is, we all have to start making some sacrifices to keep our country safe. Donald Trump could take a page out of that book.
Well, on this notion of buy-in, Kristen, we're about 3 months into this thing now. Is the time for buy-in past?
I mean, I think that Rick's exactly right, but setting expectations, but, what are those? And, I think in a lot of ways, the messaging war is well underway. You've had a number of different of the primaries, which the president has been actively involved in, motivating his base. And that's very different, though, than a general election. So I think in a lot of ways, a lot of money is going to be spent on both sides, but we're kind of down the line here. That said, 3 months is an eternity in politics, and a lot of people will start paying attention. I just don't think that the American public is going to shift and move that quickly on something like a war overseas.
We have some breaking news crossing the terminal as we speak. The Senate will leave for recess without a budget vote, according to Republican senators addressing reporters on Capitol Hill. Rick, we had been waiting for this reconciliation package to come up for a vote, but it appears that it could have been derailed by some of the tricky provisions that might have been attached to it, including money for an anti-weaponization fund that President Trump has been seeking. I'm wondering what your reaction is to this news. Is this going to hurt Republicans' priorities when we know that so far it's been tied to trying to get this funding done when it comes to the immigration agenda?
Yeah, as we know, Donald Trump said, I want this package on my desk by June. And there's no chance that that's now going to happen with the Senate leaving. And look, some of it is the art of the legislative. I mean, the parliamentarian ruled that they could not include the Secret Service funds in this package, and so the staff's been trying to figure out how to work around that. This is very artful work by professional staffers who are, very good at trying to find workarounds. But the clock ran out, and this Congress has not shown a willingness to stay in and work hard over weekends. And so it doesn't shock me a bit that they wouldn't want to take any hard calls, especially on issues that they know are unpopular. If this were something that the American public was going to applaud, they'd stick around and get it done. But in this case, the headlines isn't about immigration and stopping bad people. Yeah. It's about basements and payouts.
Well, as Rick alludes to the hard work here, Kristen, it's not going to get any easier with the passage of a few more days when they come back from the Memorial Day recess, is it? I mean, aren't they going to be faced with the same challenges, the same politically difficult votes around either the weaponization fund or the ballroom that Republican senators are still going to have to contend with?
Yeah, I mean, same difficult decisions, same issues. I'll just say that, in talking with my friends over in the Senate earlier today, jet fumes are strong. That's what they kept saying. These members wanted to get out of town. They had plans. And I think Rick's right. These are very difficult issues. And so it's not surprising at all that they would punt over the holiday weekend and try to deal with them when they come back. There's also work when members leave town. As a former staffer myself, a lot of work can get done on the staff level when members are not there to muck things up for you. So, that might be part of the calculus, too, that some of this work needs to be done at the staff level behind the scenes. So hopefully they will move the ball forward before they actually come back into town and vote.
All right, our political panel today, Rick Davis, partner at Stone Court Capital and a Bloomberg Politics contributor, alongside Kristen Hahn, partner at Rock Solutions and a Democratic strategist. Thank you both. Again, this breaking headline, Kaylee Lines, the Senate's leaving town without a vote on that reconciliation package.
Yeah, and we'll get real-time reaction from a Republican senator on Capitol Hill. Shelley Moore Capito of West Virginia is going to join us next, so don't miss that conversation here on Balance of Power on Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. Roughly 20 minutes ago, we told you about the turnaround in equities. We've got oil lower, stocks higher, hopes for a diplomatic way out of the war in Iran, spurring a bounce in stocks as oil trimmed its advance. Right now, West Texas Intermediate crude at 98.04 a barrel. WTI down now by 0.2%, have been trading above $100. Barrel of Brent right now at 104.29. Brent crude down by 0.7%. Bottom line, oil higher, oil lower, stocks higher. The S&P up 16 at 74.49. That is a gain of 0.2%. Dow Industrials back above 50,000, 50,220 now on the Dow, up 210 points. The Dow is up by 0.4%. Nasdaq up 0.2%. The Nasdaq 100 index up 0.3%, and the Bloomberg Mag 7 index up by 0.4%. As NVIDIA slumps after earnings by 0.8%. The 10-year at 4.55%. The 2-year is at 4.05%, and the 30-year 5.09%. Spot gold, little changed on the day, up under $1 the ounce to 45.45. Crude bears repeating, 97.77 now on WTI, down by about 0.5%. Eli Lilly shares up 2.1%. This after a new study on its obesity shot. Nearly half of patients who got a high dose of Lilly's next generation obesity shot lost the equivalent weight of bariatric surgery. Further evidence of the treatment could be the company's most potent weight loss medicine yet. Again, Lilly shares up now by 2.1%. Balance of power continues. Back we go to Washington. Once again, your hosts, Kaylee Lyons and Tyler Kendall.
All right, Charlie Pellet, thanks so much. As Charlie mentioned, I'm Tyler Kendall here in Washington alongside Kaylee Lyons, where we are tracking some breaking news that happened moments ago. Senators are now set to leave town without a planned vote on a $72 billion reconciliation package that would mostly fund some of President Trump's priorities related to immigration. But Kaylee, it appears that that effort has been derailed by some other priorities that were tacked on.
Including, of course, questions around the weaponization fund of $1.776 billion for those who feel that they have had the justice system weaponized against them. It seems that that is one of the hurdles to this package that, remember, President Trump wanted on his desk, passed by not just the Senate, but the House, and there for him to sign by June 1st. Now we're heading into the Memorial Day recess, and it looks like that timeline may be slipping. So we want to get real-time reaction from Capitol Hill now, as I'm pleased to say, joining us once again on Bloomberg TV and radio is Republican Senator Shelley Moore Capito of West Virginia, the chair of the Senate Committee on Environment and Public Works. Senator, welcome back to Bloomberg. A very simple question for you to start. What happened here?
Well, I think the $72 billion in reconciliation that covers the law enforcement, the border security, ICE, the original mission of this bill is something that's exceedingly significant. And it's too bad we're going to have to leave home here and go back home before those issues. You know, the Democrats just did not want to fund our law enforcement agents. And so, but on top of that, the president put some more priorities on there, the weaponization fund and other things, and it just became much more complicated. A lot of questions about what is this fund, who decides, who's eligible, how did it come about, why are we hearing about this now? A lot of uncertainty within the Republican caucus, which I shared, and so I think the leader decided the better thing is to get these questions answered and come back and deal with this when we come back in June.
It's our understanding that the acting Attorney General Todd Blanche was on Capitol Hill meeting with many Republicans earlier today. Senator, can you confirm, were you part of those conversations, and were any sort of potential compromises talked about that we could hear about once everybody gets back into town, like conditions on who would qualify for this anti-weaponization fund?
Well, yes, the acting Attorney General was at a meeting beginning at 11 o'clock. I was there. I also had a simultaneous hearing at the same time, but I was definitely in the room, and I can attest to the fact that there were a lot of deep questions and unanswered questions. The acting Attorney General did his best to answer those questions, but I still think there was some lingering doubt, and I think you see that reflected in the decision to stop the process, get the questions answered, and move on at a little bit later time.
Well, what kind of answers are you looking for, Senator? What kind of restrictions around the use of this weaponization fund would you support?
Well, I think the thing is, we were just made aware of this probably at the beginning of the week, as we're, now on Thursday. Is there a weaponization availability now under the DOJ? That's one of the questions. Has a fund like this ever been constituted? That's another question. Who would be eligible? What kind of parameters? Who makes the judgments? These are the kinds of questions in more specificity that we just didn't see at the beginning, and we haven't really had enough time to digest. So I think a lot of it is uncertainty as to what this is and how and who it impacts. And I think that in the end, as prudent lawmakers, we needed to know those answers to those questions.
So should we expect significant curbs to be put on this anti-weaponization fund? Should we expect it to not be attached to any legislation going forward? What happens here next? Where did lawmakers leave it? Considering, as Kaylee mentioned, we know President Trump wanted an entire bill on his desk by next month.
Well, I mean, the way I would look at it is the most important thing that the president wants is he wants his law enforcement entities under Homeland Security funded through the rest of his term. We know the Democrats will absolutely not fund our Border Patrol agents, which, by the way, now the border is pretty much sealed off. They will not fund ICE. And these are critical entities in terms of preserving and keeping security here domestically. I think that's the core of what we need to address first, and that's what the president wanted on his desk. And we could have probably gotten it there had we not had some extra things added that we just had questions about. So I don't know where this goes. I don't know that anybody really knows. I don't know that it can be tightened enough to satisfy enough people. I'm sort of in a category of I need to learn more here before I can make that decision. Also, there were questions about the extra money for the ballroom edition. What is that going to be spent for? What really the core Secret Service mission is. The parliamentarian you saw knocked a lot of that out, which created some questions as well. That was just at the beginning of the week. And so I think if you add all of these things together, we're going to lose that core mission, which is funding Homeland Security, which is what we really need to do. And maybe we come back with just that, or maybe we come back with a much more narrow focus on some of the other things.
Senator, we do want to talk to you about other issues as well, but would you be able to confirm that the Justice Department told Republican senators that you too could be eligible for these payouts? What was the messaging around that?
I didn't hear that in the meeting when I was there. As I explained, I wasn't there the entire time.
I did want to quickly mention the parliamentarian, since you brought up the Senate parliamentarian, Elizabeth McDonough, who has taken out some parts of the priorities when it comes to what actually would fit into a reconciliation package. President Trump has called for firing the parliamentarian. Is that something that you think that this Senate would get on board with?
No, I don't. I don't think that the Senate has a will to or a desire to fire the parliamentarian Elizabeth McDonough. She's a professional who's served under both Republican and Democrat leadership. And this always happens in reconciliation, that certain things don't make it all the way through because of jurisdictional issues, because of financial issues. It could be a whole myriad of reasons. And that's why we have a parliamentarian to be able to objectively look at these things. So it's not unusual for things to come out. Normally, you would reshape them and reform them, and then we were in the process of doing that on some of the things that the ballroom issue and things like that. So no, I don't believe anybody wants to fire the parliamentarian. I don't think that would be. I don't think that would be the direction that we would want to go.
Well, Senator, clearly the president hasn't been too happy with the parliamentarians' rulings. He also hasn't been adequately happy, it seems, with two of your colleagues. Senator Bill Cassidy, fresh off of losing his primary to a Trump-backed challenger, or not making the runoff that includes a Trump-backed challenger, failing to endorse your colleague John Cornyn in his re-election race and runoff in Texas. Has he made it harder on himself to even get enough votes for a partisan process like reconciliation?
I think time will tell whether those members that the president has not endorsed and actually worked against in Bill Cassidy's case. I think it remains to be seen what kind of posture they're going to take. They're both extremely good friends of mine and great gentlemen and have served our country very well. And I think Senator Cornyn's going to win next week, so I think we'll have him back.
I wanted to follow up on one thing that you mentioned related to the ballroom. Clearly posed an issue when it comes to this reconciliation package. Can you give us any insight into whether or not there were agreements that that number would be shrunk from that $1 billion figure? How should we be watching that particular issue? Because we heard President Trump in the Oval Office earlier today really saying how this is critical when it comes to security, since a lot of that funding would go towards Secret Service and securing the ballroom rather than construction of the ballroom.
Well, I think, you know, do I think it will shrink? I think in all likelihood, yes. I think that was the direction that we see it headed, and that's also the direction that would probably help us in terms of getting this through the parliamentarians' rulings and judgments. I think we need to look at this as this is Homeland Security, it is Secret Service, so what do they need? More technology, more training, more fortifications for that facility, safety, maybe they're building skiffs, and other things. So, I mean, I think the number would be quite robust in any event, but I'm not sure that it would be as expansive and large as what the president has asked for, but that, again, is not unusual. Many times the president and presidents all throughout the history have asked for certain things that the Congress then uses our will to make those decisions.
Yep, it all comes down to the appropriations process ultimately. Right. And you, of course, Senator, sit on the Appropriations Committee. The equivalent committee in the House, obviously led by Congressman Tom Cole. We got some interesting comments from Chairman Cole about the funding still available to the Pentagon to continue on with our operations in the Middle East. He suggested that could run out in a matter of months. And I wonder how quickly you need to have a supplemental funding request in hand to avoid the scenario of the Pentagon running out of funds to continue this, assuming that a deal is not reached in time.
Right. We do need a supplemental request from the White House. They've signaled that they are going to be putting that forward to the Congress. I think what I'm reading is that the Secretary or the Army and Navy are looking at curtailing certain training missions. I mean, we're in a precarious time here right now where we're utilizing a lot of our forces in a lot of different ways. So training is exceedingly important, along with technologies and ballistics and missiles and all these things that we are using daily. This is an important request that we want the president to come forward with on the supplemental, and then we can then look at the appropriations process to see how big a number. I personally think we need to fortify our Department of War, and we need to fortify our troops, and that would mean bumping that number significantly, but having a supplemental in front of it would help us determine what that figure would be.
The war in Iran, of course, bumping up consumer retail gas prices. The average in West Virginia today, $4.50. I'm wondering if you could give us any update on where President Trump's push for a suspension, or a temporary suspension, rather, of the federal gas tax stands, and if there's anything else that Congress could do that could help Americans when it comes to facing these higher fuel costs.
Well, this is a real issue. I'm from rural America, rural West Virginia. We travel far to go to the grocery store, to go to school, to go to church, to visit your relatives. We're in our cars a lot, and because of those hills, we're expending a lot of gasoline. And so this hits many people, the ones who can least afford it the most. And so I hear a lot of complaints. I hear a lot of calls into the office, really feeling the strain of high gas. What can we do? Well, first of all, I think the president is working to do this, and that's to bring this conflict to an end, open up the Straits of Hormuz, and then let global oil be flowing. I think that's number one. It has to be the right decision. It has to be the right agreement for the president. I understand that and fully agree with him, but I think expeditiously that's the best thing we can do. I think we can also work on holding the price down of other things like housing, mortgage rates are still way too high. The cost of food, which also is reliant on gas because you use diesel and fertilizer and everything else to grow food. So this is an issue that I think really hits at election time, but it hits everybody right now. We're going into the summer travel season.
All right. Senator Shelley Moore Capito, Republican from West Virginia and chair of the Senate Committee on Environment and Public Works. Thanks so much for joining us here on Bloomberg Television and Radio on the heels of this breaking news that the Senate is set to leave town without a vote on that reconciliation package. Kaylee, it comes after we saw the acting Attorney General Todd Blanche on Capitol Hill trying to sell lawmakers on this package.
Yeah, it seems he had some difficulty selling senators, including, it seems, Senator Capito, who says some of her questions still remain unanswered. So we will continue to follow this story and follow the turnaround in the markets as well, where it's session highs on stocks, oil prices, session lows. We'll have more on the late edition of Balance of Power here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg TV Radio, streaming on YouTube and Bloomberg Originals. It is a Bloomberg Business Week Daily. I'm Tim Stenovec. That is Emily Griffeo from the Bloomberg News credit team. She is in once again for Carol Masser. And Emily, we're seeing a little bit of buying in the S&P 500 today. We're going to have more from Charlie Pellet in just a second, but the S&P up 0.3% on a day where a lot of the focus is out of the latest when it comes to the war in Iran.
There's a lot of focus, too, on private companies. So we're not seeing them trade right now, but you are seeing the NASDAQ 100, that tech index, higher today on potentially some excitement about what else is coming into the public equity markets very soon.
Yeah, we're going to talk to Nancy Tangler over at Laffer Tangler Investments all about that excitement, the exuberance over a SpaceX IPO, a potential OpenAI IPO, and then the latest, our own Mark Gurman reporting just in the last couple of hours that the Aura ring maker is set to file for an IPO soon as well. In addition, I mentioned the Strait of Hormuz. Jenny Welch from our Bloomberg Economics team is going to join us to lay out some scenarios for how this war could end, including the possibility of a toll on the strait.
And those higher oil prices as a result of the war and associated inflation fears have sent rates climbing near the closest to the highest level since 2007. JP Morgan's Jamie Dimon said rates could climb even further. Katie Kaminsky of Alpha Simplex joins us very soon on the bond market.
And infrastructure, fair to say, it is really all the rage, especially data centers. We're going to be joined by the CIO of the Global Infrastructure Investment Manager, I Squared Capital, in just a few minutes. We're going to ask him all about where he is seeing investment and where he is seeing investment excitement. That more over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much, Tim and Emily. At the start of today's session, did not think I would be using the word record, but indeed right now on the Dow Jones Industrial Average trading at 50,316. That is an advance now of 0.6%. Major turnaround for equities last hour. S&P still below the old high, which was above 7,500. 74.57 on the S&P right now, up by 0.3%. NASDAQ higher by 95 for the NASDAQ Composite Index. That is a gain right now of just about 0.4%. All of this with the 10-year at 4.55%, the 2-year 4.04%, and the 30-year 5.09%. The catalyst for all of this, hopes for a diplomatic way out of the war in Iran. That spurred a bounce in stocks. Oil trimmed its advance on speculation that a deal will revive energy flows through the Strait of Hormuz. Right now, we have got spot gold trading higher by $4 the ounce, 45.48 the ounce, up 0.1%. A further retreat for West Texas Intermediate crude, now back below $97 a barrel. Got to recall that we began the day over 100 on WTI, down now by 1.8%. Barrel of Brent, 102.95. Brent crude down by just about 2.3%. Two major themes for stocks today, AI and inflation. NVIDIA lower after earnings. Right now we have got NVIDIA shares down by 1%. Also after earnings, Walmart. The stock is down by 6.8%. Walmart this morning warning that fuel costs are squeezing the company's bottom line and could lead to higher prices for shoppers. Recapping, West Texas Intermediate crude down 1.8%, the 30-year 5.09%, the 10-year 4.55%, S&P up 20, up by 0.3%. Tim and Emily, that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Appreciate it. Emily mentioned some exuberance about in the NASDAQ, private companies, and what will happen when these companies IPO. On the tech side of this, a company that has been a public company for a very long time, Big Blue, IBM shares extending their gain to 10%. This after a U.S. funding win. The Trump administration has agreed to award $1 billion to IBM to build a foundry for producing quantum computing chips. It's part of a broad strategy to bolster U.S. leadership in an emerging industry. We're going to have more on this, kind of a deep tease in our 4 o'clock hour with Ed Ludlow when he joins us a little later. But once again, a redhead crossing the Bloomberg. IBM has extended its gain to 10% higher today. Well, from the equity market to the bond market, because a standoff between the U.S. and Iran over key issues lifted oil prices. Earlier, JP Morgan Chase CEO Jamie Dimon sent a warning to bond investors that interest rates may climb higher from current levels. He spoke to Bloomberg's Haslinda Amin on the sidelines of JP Morgan's annual Global China Summit in Shanghai.
The notion that somehow people said they'll never go up is the wrong notion. And so companies like us prepare for higher rates, lower rates, and figure those things can happen. So.
The thing is, they're at the highest level in decades. I mean, that is where the surprise could be.
I think they could be much higher than they are today.
That, of course, was Jamie Dimon of JP Morgan Chase overnight in Shanghai speaking to Bloomberg's Haslinda Alim. Now we're going to pivot to Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex Group. She joins us from Boston. Let's get your reaction to the head of JP Morgan, because he likes to talk a lot about his macro views. What do you think of what he said about the direction of rates?
Well, I have to say that, as somebody who's unbiased in the fixed income market, I'd have to agree that we cannot discount that. The reason for this is, remember, we haven't had inflation and persistent inflation for decades either. And that is really a natural threat to the bond market. And that is exactly what we've seen for the past 2 months. 2 to 3 months almost, where bond stock correlation is positive and bonds are vulnerable with the risk of inflation.
How vulnerable are they? And where specifically are they vulnerable?
Well, I'd have to say particularly long-term bonds are vulnerable more to inflation, just given the time horizon and the level of uncertainty about the level of inflation.
So like what we saw earlier this week at the 30-year.
Exactly. And, if you look at and you think about how they've been trading, particularly on days like today, it's any chance that we might reduce some of the inflation uncertainty is generally positive for bonds. And in environments where we think that the inflation uncertainty could be higher, we see bonds selling off even further.
Katie, what's your view on just how, helpful a potential end to the war in Iran would be for bringing rates a little bit lower?
Well, I think there's a direct link. As soon as you see that there is a resolution, that will reduce some of the uncertainty about how long energy prices will be high and how much damage they can do in terms of increasing inflation. So I think that's just naturally a relief for the bond market. You would have thought something very different coming into a change in the Fed, that we would not be talking about slightly hawkishness. Given, where we are right now, it's definitely a concern.
I know, it's really incredible because Warsh was supposed to be very dovish. The Fed was supposed to have this bias to cutting rates, and it's definitely something that President Trump wanted. What do you make now of what we're going to see from the Fed, at least through this year?
I mean, what you have to think about is there is really very little chance that you need to cut rates when you have energy prices this high. So my view is this is going to buy Warsh time to kind of navigate that data and figure out the mechanism at which, how severe inflation impact this energy pop has been. And I think it's very different than what people expected, but really, when you get in this scenario where energy prices are this high and headline inflation is this high, it's just really difficult to cut rates, and he probably won't.
Hey, Katie, one of the most read stories today on the Bloomberg terminal, it's an opinion column from Bill Dudley, former president of the New York Fed. He's a Bloomberg opinion columnist. The headline is, "Ignore this bond market slump at your own peril." He says there are reasons for deeper concern: the U.S. remaining on an unsustainable fiscal path, concerns about the Fed's independence, the dynamics of higher deficits leading to higher interest rates. You talked a little bit about long-term inflation, but in terms of the points that he brings up, do you agree with all three of those?
I have to admit that I do, and I think a lot of people don't realize that we have generically a long bond bias, and that is because most of us have been around in a period where bonds have always been your friend. It's been something that, kind of diversifies equities. If you look through different periods of history where inflation, geopolitical risk, and other issues have been a nascent problem, actually bonds don't behave as well as you would like. And so I think that is something that a lot of people are just going to have to start pondering as a potential concern.
How do you square the path of rates with the fact that credit spreads are still near historical tights? And then when you look at the equity market, we just hit a record high at the stock market index level like last week. Where is the fear about persistent inflation, about higher rates playing out in markets?
Well, this is a good question because it seems like the market wasn't too concerned, particularly in April. They were trying to see through what was going on in terms of geopolitical risk. But this month, as bonds really started to sell off, equity markets finally started to react. And I think it's because as you start to see interest rates rising, at some point it does cause challenge and structural issues for companies. So I think it's going to be a tight balance of, if rates are higher, how much does that affect growth? At what point does inflation and geopolitical risk start becoming a growth problem, which we haven't seen yet? And so I think that's sort of the next phase that we have to worry about, that it's not just inflation, it's causing growth issues.
Well, we're going to have to be sure to get you on before we get to that next phase. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex Group. Appreciate your time this afternoon. That's a view of the bond market, on the equity market, and some companies that could be going public soon. We welcome in Nancy Tangler. She's CEO and CIO of Laffer Tangler Investments. She joins us this afternoon from Scottsdale. Nancy, just after noon on Wall Street time, Mark Gurman reported that the smart ring maker Aura has filed confidentially for an IPO. Comes after SpaceX dropped the big one yesterday. We also learned that OpenAI is preparing to file for an IPO in the coming weeks. This flurry of capital markets activity, what is it telling you about where we are exactly in this cycle?
Yeah, thanks for having me, Tim. I think, well, and don't forget, we're going to hear from Anthropic here pretty soon. So I think that one of the blow-off tops of any bull market is when the IPO activity gets nuts. In this particular case, I think there is still plenty of room for IPO activity, but we are paying attention. The Aura was interesting. I don't know if I count that as super important, but nonetheless, it's another IPO. This on the heels of last year when we were kind of stalled out. So I think it's interesting for some of the investment banking names like Goldman, Morgan, and JP Morgan, and Morgan Stanley and JP Morgan. But also we're paying attention because we think that that's something we should monitor as investors. But I will say one more thing very quickly. I think the SpaceX deal does something very important, which is validates the space trade. And we heard from Jeff Bezos this week where he talked about the total addressable market. SpaceX is claiming a $29 trillion TAM. So stay tuned. I think there's still a lot of room to run in many of these names.
The $29 trillion TAM getting a lot of attention today, Nancy.
Yeah.
Do you view that as realistic?
Well,
you're laughing.
I don't think most of what Elon says is realistic. You kind of have to look at the trend. You have to discount the timeline and maybe pare back some of the volume. But I do think we launched a thematic portfolio, Tim, about 9 months ago, and space is one of the themes, and we're pretty pleased with that as a contributor to total return, simply because it's not just SpaceX, but this does validate. It's Rocket Labs that came in much better than expected, $200 million in revenues, Planet Labs, and a number of other names that we own in that space. So I'm excited about the space option and the robotics, but yeah, I think it's grain of salt time.
Okay, I want to go back to space, but first, Nancy, you mentioned how you're kind of just watching very carefully how all of these private companies all seem to be filing and planning IPOs at the same time. Is there any reason to suspect that companies are trying to get ahead of a potential AI bubble bursting and coming to the market right now before it's too late?
Yeah, Emily, and or get ahead of a competitor. So I think, that clearly OpenAI had this ready to go as soon as the trial was over. I'm more interested in what Anthropic comes forward with, because we've heard Sam Altman has some of the same problem that Elon does in terms of projections, and we've already seen them cut their spend materially. And the question for OpenAI is, are they going to be able to continue to raise money in the market? I think the company is fraught for a whole host of reasons. So it could be AI bubble, it could be competitor.
Right. And when you're thinking about space, I mean, you've been a tech investor for a long time. A company like SpaceX, and we can also talk about OpenAI as well, but a company like SpaceX, they're always doing these very volatile projects, rocket launches. How do you see investors in the public market pricing that, like pricing a rocket failure? Is it going to be a very volatile stock?
I think it could be, Emily. I mean, I also think that what you're buying in this particular name, I mean, you've got Starlink, you've got XAI, but what you're really buying is Elon's vision. And so, you know, the company has continued to appreciate and value, depending on whose numbers you're using, in spite of rocket launch failures. And let's not forget, they've been able to launch hundreds of rockets and quite effectively. So yeah, that'll be an issue. It'd just be like a major recall on an auto company, but I don't think it derails the story. And I think what Bezos said was super important, simply because you know, he's a competitor. And what he's saying is, you know, it's better to have two in a very important industry like this. So I think we're going to see great things coming out of both, you know, Blue Horizon, Origins, and SpaceX.
Yeah, I guess the question is about the next, you know, a lot of people would say that SpaceX is much further along with certain parts of their capabilities than Bezos's Blue Origin is. I want to go back to what you said about Anthropic, because you do keep going back to Anthropic as being sort of the next company that we will hear from that's much anticipated when it comes to an IPO. Is it at a big disadvantage if it files and goes public after OpenAI?
I kind of think so, Tim. I think it's, you know, it's a matter of bandwidth for investors. And what will happen with the first mover advantage is they'll set the tone for the market, they'll set the tone for valuation, and then you have to come in. Now, in this case, I think Anthropic has most of the cards, so maybe timing is less important, but I would rather be the first to market than the second in this environment.
Tell us about those cards that Anthropic has before we let you go. What really stands out as a growth driver for them specifically?
Enterprise adoption, Emily. I think they're taking share from OpenAI. I don't hear anyone in my space talk about OpenAI. And unfortunately, Grok is losing share, and it's all going towards Claude and Gemini, but predominantly Claude and Codex. So I think they are the momentum player right now, just as we saw Google with Gemini just a few months back as kind of the momentum player. So it can shift, but they have really captured the attention of serious users of AI.
Just 30 seconds. When these companies do go public, how are you going to allocate capital from the portfolios that you manage to them?
We were just talking about that just right before I came on. We'll trim back some of the winners, like Planet Labs and Rocket Labs in our portfolio. So yeah, we'll use available holdings, but we aren't going to exit anything.
Okay. Nancy Tangler, always good to check in with you. Appreciate you joining us on this Thursday afternoon.
Thanks.
Nancy is CEO and CIO over at Laffer Tangler Investments. Hey, coming up next on Bloomberg Business Week Daily, our Bloomberg News team reporting that Iran is in talks with Oman over a permanent toll system in the Strait of Hormuz. Jenny Welch from our Bloomberg Economics team is going to join us with the latest on the Iran war. This on a day where we could see a new record for the Dow, up 0.6% right now, over 50,295. The S&P 500 up close to 0.2%. The NASDAQ Composite up 0.1%.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher. Oil is falling. All of this on hopes about a U.S.-Iran deal. Coming up in just a moment, we will have the very latest for you. The S&P right now trading higher by 19 points, 74.51, up by about 0.2%. The Dow at a record 50,354, up 344 points, up 0.7%. The old closing high was 50,188. That was set back in February. NASDAQ is advancing as well, up now by 0.2%. The Bloomberg Mag 7 index, of which NVIDIA is a part, up now by 0.3%. NVIDIA after earnings down 1.6%. The 10-year 4.55%, with a 2-year 4.05%. The 30-year 5.08% against the backdrop of a VIX right now just below 17. Spot gold up $5 the ounce, 45.49, up 0.1%. But the big story, West Texas Intermediate crude. Earlier today, we were above $100 a barrel. Right now at 96.72. Crude down 1.6%. Brent, the global benchmark, 102.83 a barrel, down now by 2.1%. SpaceX is set to launch its Starship rocket on its 12th major test flight this afternoon, debuting the third iteration of the rocket, dubbed Version 3 or V3, all part of a high-stakes mission as the Elon Musk-led company gets ready for the largest IPO in history. The launch window scheduled to open at 6:30 p.m. Wall Street time. Yes, we'll have it for you live when it happens. Recapping, S&P 500 index up 16, up by about 0.2%. The Dow trading at a record. And right now, back we go to Bloomberg Business Week Daily and your hosts, Tim and Emily.
Charlie, thanks for that update. Well, Iran said the latest proposal from the U.S. partly bridged the gap between the warring sides, but comments from the Islamic Republic's supreme leader about keeping Tehran's uranium stockpile and a dispute over tolls in the Strait of Hormuz clouded the outlook for a breakthrough. On those tolls, both President Trump and Secretary of State Marco Rubio addressing that earlier today.
We want it open. We want it free. We don't want tolls. It's international. It's an international waterway. They're not charging tolls. Right now, they are losing $500 million a day is what it's projected. I don't know, it sounds like a lot of money, but whether it's 500 or 200 or 300, they're losing a lot of money. There hasn't been a ship that's been able to get through without our approval.
No one in the world is in favor of a tolling system. It can't happen. It would be unacceptable. It would make a diplomatic deal unfeasible if they were to continue to pursue that. So it's a threat to the world if they were to try to do that. And it's completely illegal, by the way.
Well, there you have it, Secretary of State Marco Rubio in Miami. Before that, President Trump in Washington addressing the idea of a toll in the Strait of Hormuz. For more, we're joined by Jennifer Welch, Bloomberg Economics Chief Geoeconomics Analyst. She joins us from Bloomberg's Washington, D.C. headquarters, or studio, rather. Hey, Jenny, I want to start with the Strait and then get to how that could fit into some sort of deal. Could the Strait of Hormuz open even if there is not a deal?
I think we're unlikely to see a full reopening of the Strait absent a deal, and maybe even in the wake of a deal, depending on how durable it appears to be. And the reason for that is that there's still going to be this risk hanging over ships over, for example, attacks from Iran, Iran's proxies, or running into the U.S. blockade. The U.S. has said that countries should not work with Iran to pass through the Strait of Hormuz, even though Tehran is saying the only way they will get through is through coordinating with their military. So at the moment, we're seeing a trickle of ships passing through, including 3 pretty big tankers, and Iran has claimed that even more ships passed through over the last 24 hours. But that's quite a bit down from what we would have seen in the Strait well before the war.
So how are you thinking about, as Tim alluded to, the prospects for a deal? Are we any closer than we were a week ago?
You know, it's really hard to say because we've been here so many times before over the last month and a half since the ceasefire was put in place, where we seem like we're inching towards a deal only for it to fall apart at the last minute. It does seem like the two sides have been inching towards each other. You know, for example, the U.S. has seemed to relent on the idea of having a fully comprehensive deal and adopted the Iranian approach of sort of a phased deal where in the first part of it, it just focuses on ending hostilities and reopening the Strait. And then that unlocks a second phase focused on dealing with more contentious issues like Iran's nuclear program. My concern is that there are still a lot of risks to what we would consider to be a lasting deal that can, for example, give ships the confidence to return to the strait and a return to perhaps pre-war levels of traffic there. And that's because if there is this phased approach, I think there's risks of talks falling apart. If, for example, they reach a disagreement of those more contentious issues, or even if that doesn't happen, 30 days, which is the time frame that's been discussed for that second phase, is quite short considering that it took negotiators years to deal with those very contentious issues in prior rounds of negotiations.
Yeah, that's where I want to go and sort of go back to the nuclear issue here, because at the end of the day, that was, as the president laid out very early on, the whole point of this war. A Reuters report that the Supreme Leader issued a directive that the country's near weapons-grade uranium should not be sent abroad, that earlier in the trade actually sent oil prices higher. What would a deal between the United States and Iran look like, absent, certainly absent perhaps the Strait of Hormuz, but also absent perhaps movement on the nuclear program?
Well, I think there much depends on where President Trump specifically is on these issues. And I say President Trump rather than the United States because we've seen in the past that, for example, President Trump has appeared to take a harder line than some of his negotiating team on these issues. So, for example, in the first Islamabad round, U.S. negotiators were talking about a 20-year moratorium on Iran's nuclear enrichment beyond a few sort of civilian purposes. That was something that afterwards President Trump said wasn't acceptable to him, that he didn't want any enrichment under any time frame. More recently, he's walked that back and said he would be comfortable with the 20-year moratorium, although he indicated that he was still uncomfortable with certain levels of enrichment. So I think the key question is, what would he be willing to sign up for, especially because he was the president that tore up the 2015 nuclear accord, and so will want to say that he negotiated a much tougher deal than that agreement entailed.
So should we think about the benchmark being that 2015 nuclear deal?
I think that is probably the benchmark he is aiming for.
Okay.
Of course, all of this might be calibrated by his desire to bring an end to this war and the economic pain that it's causing in the United States, pain at the pump, especially before the midterms. At the moment, that doesn't seem to be exerting a tremendous amount of pressure on him. He is probably thinking about the midterms, but not overly preoccupied by it. He wants to end the war, but he doesn't seem in a rush to end it. But if, for example, we were to start to see real blowback at the pump and at the polls, that could potentially change his calculus. But yes, I think at the moment he's focused on kind of the legacy issue of not agreeing to a deal that is weaker than the one he said was a terrible deal.
We started the segment with some sound from Trump and Rubio talking about this idea of a Hormuz toll. What would the economic impact of that kind of toll be if one was implemented?
So I think much would depend on the amount, and in terms of the economic impact on shipping companies and importing countries, I think it would probably be acceptable for at least a certain period of time because it's better than the alternative of not getting that oil out and not getting that gas out. I think the ramifications in what, for example, Secretary Rubio and President Trump are especially concerned about is the precedent that it sets for setting up tolls in natural waterways. These are incredibly rare and illegal under international law, and I don't think they would want to create a precedent for other countries considering the same thing.
Let's play that out a little bit, because that seems to be an unintended consequence of this is that Iran now understands the power that it has over this waterway, and perhaps other countries could look and say, wait a second, we are very close to some key waterways here. If we think about the globe and shipping routes and sort of critical infrastructure, where else could we see tolls if this precedent is set?
So I would say that one of the other points that we would be really focused on is the South China Sea, and particularly a place called the Malacca Straits, which is where a lot of the, for example, oil and energy coming out of the Middle East transits through there to Asian economies. Actually, in the wake of Iran talking about these tolls in Hormuz, some of the countries adjacent to that strait started talking about applying a toll. Now, the difference there is that that strait is managed by a multitude of countries, several, so one doesn't have full dominance agreements over it. But that's another one where you could theoretically see the potential for complications. In other areas, obviously, there are canals like the Suez Canal, the Panama Canal that are controlled by countries, and they charge tolls. But that's quite a bit different from the idea of blocking off these natural waterways. And I think that's where, from an international law perspective, from an international geopolitical stability perspective, there would be concern about the precedent that a Hormuz toll would set, in addition to the potential deterrence effect it could have on companies and shippers looking to move through there.
What would the escalation risk be if we did see further progress on a toll? At least from the U.S. side, like U.S. escalation.
Yeah, absolutely. President Trump has threatened repeatedly over the last few weeks to re-engage militarily with Iran if it doesn't come to the table with greater compromises. He's followed through to that threat to a certain extent with some additional strikes during the ceasefire period, but he's threatening to do more. We think that would most likely look like strikes rather than a ground incursion, just given the risks of the latter that would pose to U.S. forces, but it's certainly not off the table. And I think the risk there and what Iran has been indicating is that they would look to escalate the conflict regionally. And I think their trump card there would be if they could get their partners, the Houthis, to re-engage in military activity in the Red Sea and shut down shipping there. That would really pose a challenge to, for example, all the oil barrels that are now flowing out of Red Sea ports in Saudi Arabia and helping alleviate the current energy crunch to a certain extent. If the Houthis were to start firing again at ships there, we could see traffic go way back down. And I think that to date, we haven't seen them engage in the conflict in part because they're kind of, waiting. They have their own relationship with Saudi Arabia they're interested in maintaining. But we think it's quite likely that if they think Iran is under existential threat or Tehran really presses for it, they might be willing to engage militarily.
We're speaking with Jenny Welch, Bloomberg Economics Chief Geoeconomics Analyst. Jenny, before we let you go, let's go from the Middle East to Cuba, actually, because yesterday the U.S. charged Cuba's Raul Castro with murder in that 1996 shoot-down. Is this, and then the president has said, no, there won't be, he's not going to do the same thing that he did in Venezuela with Cuba, for example. But I'm just curious how you're looking at what the U.S. could do when it comes to Cuba.
This certainly seems like an escalating pressure campaign. In some ways, it does mirror the Venezuela playbook, although we've been debating this internally, whether or not it would look exactly like the Venezuela playbook. For example, an extraordinary rendition of Raul Castro at age 94 might not have the same political effect as the capture of Nicolas Maduro. But I think what it underscores is that the U.S. is able to kind of walk and chew gum at the same time, that it's undertaking this major military campaign in Iran, but it still has plenty of levers that it can throw at Cuba. And indeed, for President Trump, this might be the opportunity to kind of distract attention and show success in one other part of the world, even as he's sort of caught in the quicksand in Iran.
Oh, that's an interesting idea. Okay, well, we'll have to get you back to talk more about that. Jenny Welch, Bloomberg Economics Chief Economics Analyst, joining us from our Washington, D.C. bureau. Hey, energy infrastructure, certainly important to the conversation regarding the Strait of Hormuz. Infrastructure is where we are going next. The co-founder, managing partner, and global CIO at the infrastructure investment firm I Squared is next. This is Bloomberg Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Oil lower, stocks higher. Secretary of State Marco Rubio noting, quote, some good signs of an agreement with Iran. This according to the FT. Meanwhile, Iran says the latest proposal from the U.S. has partly bridged the gap between the warring sides. Bottom line, stocks holding on to gains with the S&P 500 index at 7450, up now by 0.2%. Dow Industrials at a record, higher by 331 points now, up 0.7%. The Dow at a record 50,341. The old closing high on the Dow was 50,188. The Russell 2000 index of small cap shares outperforming, up by 1.1%. The Bloomberg Mag 7 index up 0.3%, even with NVIDIA down after earnings by 1.6%. The 10-year 4.55%, the 2-year 4.05%, the 30-year 5.09%. Spot gold little changed, up under 0.1%, 45.46 the ounce. West Texas Intermediate crude now with a $96 handle. It is down 1.8%. WTI 96.43 the barrel. Got to keep in mind, earlier today we had crude WTI above $100. Brent 102.77, selling off by 2.1%. Ralph Lauren shares are surging, up now by 14%. This after it reported revenue and profit that beat analysts' expectations, showing that the high-end apparel company's momentum with consumers is taking off in the face of ongoing tariff uncertainty. S&P, again, up 19, up 0.3%. Dow Industrials at a record. Tim and Emily, that is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Appreciate it. Well, fair to say that investing in infrastructure is getting a lot of attention right now. Just yesterday, we learned that Google is planning a $15 billion investment to build infrastructure in Missouri. The investment includes a new data center there. And our Bloomberg News team reporting that the infrastructure investment manager I Squared Capital was among firms that advanced to the second phase in a bidding process to acquire a $5 billion port in Brazil. For more, we're joined by Gautam Bhandari, co-founder, managing partner, and global CIO at the private equity infrastructure investment firm I Squared. The firm has $63 billion in AUM. It builds and buys infrastructure assets across the world. We're talking about power and energy, transportation, logistics, digital, environmental, social, and more. Gautam, welcome. How are you?
Thank you for having me. Pleasure being here.
Yeah, thanks so much for joining us. You play in a lot of different areas when it comes to global infrastructure: renewables, battery storage, pipeline, data centers, cellular, wastewater, elder care. The list goes on. Where are you seeing the biggest opportunity right now?
Look, I think the world is quite focused on AI and data centers, but I think risk-adjusted, we're seeing better returns on the energy side. It could be pipelines, it could be behind-the-meter power. We have a big play there, almost 6 gigawatts of behind-the-meter power. Last-mile transmission, is a very good play as well.
What about renewables?
So renewable is still a part of the energy mix. It's 90+% of what's waiting in the interconnection here, and will remain a part of that mix. And renewables with batteries, and certainly renewables is the solution in Europe and in Asia because they're energy deficit countries.
Is there a certain part of the world where energy infrastructure is more appealing to you than other parts?
You know, interestingly, there is a desire to get energy security globally. So, you hear in the news about AI, but I think what people forget is that the world had fragmented and really went after reindustrialization. It really started in COVID, right? So people thought the vaccine should be manufactured close to home, and then tariff war, Ukraine war, all meant that people want to reindustrialize. And so chemical plants started moving back. So you see power consumption in US, but also in Europe and Asia really go up. So energy is a theme. It's not the only theme there. And actually the energy demand, it means different things. So in Asia, it means renewables. In US, it means gas.
But maybe it could mean renewables under a different administration in the U.S.
Yeah, absolutely. And by the way, still even under the current administration, solar plants and others are getting connected to grids and supplying electrons.
We know that you're primarily a private equity firm, but you also lend as well. I'm wondering specifically, where are you seeing opportunities for credit investments in infrastructure?
Correct. So, if you think about it, a lot of infrastructure build is going on in the US as well as in Europe. And build generally happens in the middle market space. So we are lenders to those mid-market developers and entrepreneurs who are building that power plant or the fiber optic network or, the logistics facilities. And so we think that on that mid-market space, which traditionally was occupied by mid-market banks, I think many of them are stuck with some real estate exposure that they're trying to work through. So I think that's where there is a pretty big opportunity.
There's just so much. I mean, I know you're not just focused on AI, but the CapEx kinds of projections that we're hearing, the amount of money that's being raised to fund the infrastructure build out is quite staggering. Do you think we're in an environment where the investor kind of is still able to dictate terms of the deals that are getting done because there is kind of this surplus of supply that needs capital?
Yeah, so I think there is certainly a big demand cycle that is on, and I think it is coming from the fact that for 20, 30 years, U.S. pretty much relied on just-in-time inventory and optimized corporate profits, right? So a lot of the infrastructure that U.S. actually used, think of it as basically being borrowed from Chinese infrastructure, right? So now that build has started, capital is coming in, and the big difference is government is not funding it. So it's private balance sheets. And so it seems large, but infrastructure is very capital intensive. Average power plants are very, very expensive and going up.
I wanted to go and talk specifically about data centers because they're getting so much attention right now. Your chairman and managing partner told our team back in December that when it comes to data centers, quote, momentum is strong, but if this is irrational exuberance, investors will lose when the music stops. He said the firm is trying to be careful, caution that every deal has nuance, the fine print matters. Is that still the view at the firm, that these deals have nuance when so much money is being thrown at these data centers?
Absolutely, right? So whenever you have $700-800 billion being spent in a hurry, you will find fast and loose deals, and you'll find well-structured, thoughtfully priced deals, right? So we are, to be fair, we are investors in data centers, but more edge data centers, not LLM ones.
Why is that?
We lend to them. Well, I think the very large campuses that occupy a lot of the news are 20-30 billion. We tend to focus on middle market, which is, frankly, an area where we can get outsized returns. So edge data centers and all we do, we have liquid cooled chips in our premises. So you just have to be careful. And I think on the lending side, we are lenders to a lot of these large data centers.
There's been a lot of talk about investor retail exposure to private markets, private credit specifically. You have a study out, a survey out about how financial advisors feel about exposure to private markets. Tell us a little bit about the current kind of sentiment around investing specifically in infra for retail and advisors.
Right, so quite surprisingly, so we polled about 250 advisors to ultra-wealthy family offices and sort of high-wealth channels. And out of the 250, 75% wanted to increase their exposure to infrastructure. Remember, this was a backward kind of a asset class where nobody really paid attention. Everybody liked venture capital, real estate. So 75 is a big number, and out of which more than half actually wanted to put infrastructure as a ballast in their portfolio. So 7 to 10%, so meaningful from current exposures of zero, right? So that's a pretty meaningful jump. I was myself surprised with it. And then more importantly, about a third of that wanted growth. So they're not coming into it from an income perspective, they're coming into it from a growth and diversification perspective. The income number is only 17.
Just very briefly, 30 seconds. Is it what portion of a typical portfolio for a family office would be allocated to these assets?
So currently, for most families, it's zero. So they will have real estate at 10, 20%. And institutionally, the US average is closer to 5. It used to be 2.5, and then the big jump came about a year ago to try and get to a 5 target. So infrastructure, whether you look at institutional side, which have been historic allocators into this. Now, of course, the Canadians and the Aussies do 8, 10, 12, 18% also. But in the US, for some reason, I think it has always been very low.
Gautam Bhandari, co-founder, managing partner, and global CIO over at I2, $63 billion in assets under management in private equity. Gautam, thanks so much for joining us here.
Thank you for having me.
On set. Come back soon. Hey, coming up next on a Bloomberg Business Week Daily, on a day where the S&P 500 is up 0.1%, stocks on the move.